everyone, in today's class we are going to cover our SCM marathon in English, and this is going to be a full-fledged revision class for you so that you can refer this particular video in your last day revisions and you can prepare yourself for the upcoming exams. So let's start with our first chapter, and that is going to be decision making techniques, a chapter which is asked for around 30 marks in your exams. So we have to prepare this in a really good manner. So let's start with our first thing. In decision making techniques, the first thing which we have is the cost volume profit analysis. To understand how marginal costing is applicable, how decisions are taken, you have to first understand this cost volume profit analysis. So let's first revise this, what is going to happen here. So we have sales, and whenever we reduce variable cost from sales, we can get the contribution. And then after reducing the fixed cost, we can get the profit. Now, if you want to calculate break-even point, that is the point where there is no profit or loss or zero profit or loss, you can take your fixed cost and divide it by contribution per unit. Or else, you can also take your break-even point sales and divide it by sales per unit. Okay, what is break-even point sales? Break-even point, when calculated in amount format, is known as break-even point sales, and when we are calculating on the basis of units, we call it as break-even point units. So break-even point sales, if you want to calculate, you can take break-even point units and multiply it with the sales per unit, or else you can directly take fixed cost upon PV ratio for calculating it. You can also calculate cash break-even point by taking cash fixed cost divided by contribution per unit, or if you want to calculate in sales format, whenever we are calculating break-even point in sales format, we can take divided by PV ratio. So as we are calculating for cash, so we are going to take only cash related fixed cost, non-cash fixed cost will not be covered here. Now after this, we also can calculate contribution, and contribution can be calculated directly by reducing your variable cost from the sales, or else you can add your fixed cost to the profit to get your contribution. Or else you can also take your sales and multiply it by PV ratio to get your contribution. In the similar fashion, you can also calculate contribution per unit. Now the next thing is how to calculate this profit volume ratio. And what is this profit volume ratio? Profit volume ratio is a ratio of contribution upon sales into 100. Now to calculate this, you can directly divide contribution by sales, or else you can take contribution per unit divided by sales per unit. Or else you can take change in contribution upon change in sales among different scenarios. Or else you can also take change in profit upon change in sales into 100 to get your profit volume ratio. Now to calculate variable cost, you can take your sales and reduce your contribution to get the variable cost, or else you can use your PV ratio also. Multiply your sales with 1 minus PV ratio. Why 1 minus PV ratio? Because sales denote 100%, that is equal to 1. PV ratio denotes your contribution. So 1 minus PV ratio will give you this variable cost. Okay? That 1 minus PV ratio can also be called as variable cost ratio, because that is the ratio applicable for calculating variable cost with the help of sales. Now we are moving forward to how to calculate number of units or sales value to earn a specific target profit. Let's say if the question provides you a specific amount of target profit which you want to earn, that is 1 lakh rupees. Now how to find out the units which we have to sell to get this 1 lakh rupees as the profit? So you need to use your break-even point formula only. What is the formula of break-even point? Fixed cost upon contribution per unit if I want to calculate the number of units. Now as you want to earn this target profit over and above this break-even point, which is a zero profit, zero loss situation, you're going to add that target profit with your fixed cost and divide it by contribution per unit to get your number of units. Now if you want to calculate this in the sales amount, you can divide this by PV ratio. Okay? Done. Now after this, if the target profit is given to you as percentage of sales, now in that case, number of units to earn target profit can be calculated by using this particular formula, where you are going to take fixed cost upon contribution per unit minus percentage of sales per unit. Whatever is your sales per unit, take that, the percentage of that only. So let's say if the question is providing me target profit as 20% of sales. So I'm going to apply the percentage as 20% of sales per unit here, and reduce it from my contribution per unit and divide this particular thing with the fixed cost to get the particular value of your number of units to earn target profit. Now to calculate sales amount in this case, you're just going to multiply this particular value, which is the calculation of units, with the sales per unit. Okay? Now after this, there is margin of safety. What is margin of safety? Over and above break-even point, whatever sales you are doing, that is known as margin of safety. Now this margin of safety can be calculated in units For this, you're going to take your actual units sold minus break-even point units, or else you can also calculate in the form of sales. So you're going to take actual sales minus break-even point sales. So whatever is the difference between your break-even point sales and actual sales, that is what margin of safety denotes. Now, if you want to calculate this as a percentage of sales, divide this particular value with the actual sales into 100. And if you want to calculate as percentage of BP, divide your margin of safety sales with your BP sales to get your margin of safety as percentage of BP. Now, this margin of safety sales can also be calculated as profit upon PV ratio, and if you want to calculate in units, profit upon contribution per unit will also give you margin of safety units. Okay? Now, after this, there is something important, that is indifference point. What is indifference point? A point where if we have two different alternatives, let's say I can use machine A or machine B for making my products, but both of them have different fixed cost, different variable cost applicable. And if that is the case, then indifference point shows me a particular sales value or the sales unit for which both of them are going to have the exact same profit or exact same cost. Okay? So indifference point is a level of sales at which profit or cost under two different alternatives is exactly same. At this point, you are indifferent between two options. Why to calculate this particular indifference point? Why we want to know a situation where both the alternatives are equally likely? The thing is, with the help of this indifference point, we can know that, let's say, if my actual sales is lower than indifference point. At indifference point, I'm getting that if you are selling 10,000 units, both the options will give you exact same cost and exact same profit. Okay? So, if I'm, let's say, actually selling 9,000 units lesser than the indifference point, then in that case, the option which is having lesser fixed cost is going to be beneficial for us. But if I'm selling more than this 10,000 unit, let's say 12,000 units, then in that case, the option which has contribution per unit higher, that is the option which you are going to prefer. So indifference point helps us to find out that what particular alternative we should go for if we are selling lesser than indifference point and if we are selling higher than the indifference point units. Okay? So if sales is below indifference point, you're going to choose that particular option which is giving you lower fixed cost. And if sales is above indifference point, choose the particular option which is giving you higher contribution per unit. How to calculate this indifference point? So for this, you're going to take the fixed cost of both the options and find out the change between this fixed cost and calculate the change between the contribution per unit on for both the options. And this will give you the indifference point. See? Done. Now, after this, let's move forward to the next part, that is calculation of step fixed cost. Now, this is something important. Step fixed cost is what? A fixed cost which is not fixed completely. It is jumping every step by step. So, let me just give you an example to understand this. Let's say if I'm making from 1 to 10 units. If I'm making 1 to 10 units, then in that case, my fixed cost is 100 rupees. But if I make 10 to 20 units, my fixed cost becomes 200 rupees. If I am producing 20 to 30 units, my fixed cost becomes 300 rupees. So do you think that this is a kind of variable cost only? This is a variable cost which is increasing on a per unit basis. And if I calculate for 1 unit, this is 10 rupees per unit. And by 10 rupees per unit, this cost is increasing. Answer is no. Why? Because even if I'm not producing 10 units, I'm only producing, let's say, 5 units, then also I'm going to incur this 100 rupees. If I'm producing only 15 units, not 20 completely, then also I'm going to incur this 200 rupees. If I'm producing, let's say, 26 units, then I'm going to incur this 300 rupees. It's not like that you have to produce full 30 units, then only 300. And if you are producing partially, you will have partial cost. Answer is no. If you are producing any units between this range, your fixed cost is going to be 300. If you are producing any units between this range, your fixed cost is going to be this. That means my fixed cost is increasing on a step manner. For 1 to 10 units, it is 100. But if I increase the units to 11 to 20, it is going to be 200. And if I increase the units to 20 to 30, it is going to be 300. That means by step manner, this particular cost is increasing, and that is why it is known as step fixed cost, because for that particular step, the fixed cost is going to be completely same. Now, how to deal with this step fixed cost? Now, if you notice the scenario which I have given you, here the fixed cost is increasing with the exact amount, that is 100 rupees for every 10 units. Hai? For every 10 units, there is an increase of 100 rupees. That means whenever the jump is happening with an exact amount. Now, if that is the case, then how to deal with it? So for that, let's take this particular example. Let's say contribution per unit is given to you as 6G. Normal fixed cost is 2 lakh rupees and the step fixed cost, that is our delivery charge, is 480 for up to 10 meals irrespective of number of actual meals sent. So if you are sending only 5, 6, doesn't matter. For one delivery, you have to pay 480, but up to 10 meals can be sent with the help of one delivery. That means even if number of meals is in one delivery is less than 10, then also you are going to incur this 480 rupees. Now, if that is the case, then how to deal with it? How to find out that where I'll reach a break-even point? This is step fixed cost also. The questions are mostly about calculating the break-even point. So how to find out what is the break-even point here? So what is the formula of break-even point? Do you remember that? Break-even point is fixed cost upon contribution per unit. Now this tells us what is the units at which you are reaching the break-even point. Now if I multiply the units with the contribution per unit, your break-even point units with the contribution per unit is equal to fixed cost. That is what I'm going to get. What I have done, this contribution per unit I have taken to this side. So this will get multiplied with the units and here we have fixed cost. Now this gives us the total contribution is equal to fixed cost. So your break-even point is reached when your total contribution is equal to fixed cost. Now that is what I'm writing here. So at break-even point, your fixed cost is equal to contribution. Now with the help of this, we are going to calculate what is the number of deliveries. What is the number of step fixed cost quantity? As the number of deliveries is step fixed cost, it is increasing in a step manner. For 10 meals, you have 480. Then if I increase from 11 to 20, it is 480. So as this is a step fixed cost, we want to find out what is the number of step fixed cost quantity, that is number of deliveries which we have to do. For this, we are using our break-even point, at which our fixed cost is equal to contribution. Now, what is fixed cost? We have two different types of fixed cost in this question. The first one is normal fixed cost and the second one is step fixed cost. So, for normal fixed cost, we know the exact amount. But for step fixed cost, we only know that 480 is going to be charged for total 10 units. We don't know what is the number of units which we are transferring, which we are transporting. Okay? Contribution per unit is already known to us as 60 rupees. For calculating total contribution, we need contribution per unit into number of units. So contribution per unit is 60 and the number of units is what we don't know, we have to calculate it. Now, with the help of solving this particular thing, we are going to get the X, which is our number of units. And we got to know that our number of units is going to be 16,666.667 mils. Now, tell me one thing, can I transfer or can I provide 16,666.667 meals? Answer is no. And that is why we converted it to the next number. And now, after getting this, we already know that in one delivery, we can send 10 meals. So, if I divide this particular number with 10, I'm getting 1,666.67 deliveries. Now, if that is the case, then I'll not be able to do 0.7 deliveries, right? So, I have converted this to the next number and we are getting 1667 deliveries. Now, this is the number of deliveries which we got by solving our break-even point. So, this should be the deliveries which we are doing for break-even point situation. So, to know that, what we do is, now after getting this number of deliveries, I'm going to again calculate my fixed cost, keeping this particular deliveries in my fixed cost calculation. For step fixed cost calculation, I'm going to keep this 1667 there. So, your fixed cost can be normal fixed cost and step fixed cost. For normal fixed cost, we are going to take 2 lakh rupees and for your step fixed cost, we are going to take 1667 into 480. This is the number of deliveries which we got and this is the rate for every delivery. This is equal to contribution. Now with the help of this, we can know what is the number of units at which you are reaching break-even point, and that is 16,670. And your number of deliveries at this point is 1667. Okay? This is how we calculate if we have step fixed cost and the step fixed cost is jumping with the exact amount. Now, if jump is not happening with exact amount, there is a jump in the fixed cost, and that is why we are calling it as step fixed cost, but the jump is not happening with an exact amount itself. So what to do? So in this case, we are going to calculate the break-even point for the range at which we are currently working. So whatever is the range at which you are currently working, we are definitely going to see an example for the same. So whatever range you are currently working, you are going to calculate the BP at that point only. If your BP comes in that range itself, then that is the final answer, the final BP for you. But if it is not coming in that range, then calculate the BP for the range in which your break-even point related quantities has came in. Then again check what is the break-even point you are getting. If that is in that range only, then that is the BP. Otherwise, you are going to follow this continuously till the time your BP is coming in the same range for which you calculated it. Okay? So let's see and understand that how it is going to happen. This though I hope you got to understand that here first we are going to calculate the number of step fixed quantity, and then we are going to again check what is the exact number of meals or the units at which you are reaching your break-even point. Okay? Now, after this, let's see one question for your step fixed cost when the fixed cost is not jumping with the exact amount itself. Okay? So, following is the operating results of Premier Hospital for the year ended 31st March 2019. We have revenue of 1 crore 13 lakh, cost variable. Then bed capacity cost is fixed but varies with the number of beds. Staff cost is 35 lakh 10,000, profit is 7 lakh 20,000. The hospital charged each patient an average of rupees 650 per day, had a capacity of 60 beds, operated 24 hours per day for 365 days. So, we are going to charge 650 rupees to the patients on every day basis. Now, if that is the case, then can I find out that what is the number of patient days? Patient days means number of patients multiplied by number of days will give you patient days. Because for every patient, for every day, we are going to charge this 650 rupees. So, we have to calculate this patient days. How to calculate this? I already know the total revenue. I already know the revenue on a per unit basis. So, just divide this particular value, 1 crore 13 lakh 88,000 divided by 650 will give you 17,520 patient days. So this is the total number of patient days which we have, and for every patient, for every day they are paying 650 rupees. Had a capacity of 60 beds, operated 24 hours per day for 365 days. The hospital has minimum departmental personnel requirement based on total annual patient days, and following table gives the salary to be paid. So if your patient days is between 10 to 14,000, 32 lakh is the salary which we are going to pay to the staff. And if we have 14,001 to 17,000, then this is the salary. If we have 17,001 to 23,725, then this is the salary which we are going to pay. Now, as we have the number of patients as 17,520, this is the range we are coming in, and this is the salary which we are going to pay, and that is also you can see from here, because this is the only salary which we are paying here. Now, after this, compute the break-even point patient days for the year ended 31st March 2019. You need to calculate the break-even point. I already told you that when the fixed cost is not jumping with the exact amount, you're going to use the calculation which we learned later, right? But the thing is, how to find out whether the fixed cost is not jumping with exact amount or jumping with exact amount? You can refer this particular table to understand this. So we have 32 lakh as the salary for 14,000 at max patients. So 32 lakh is applicable for 14,000 patients. This is equal to 228.57 rupees is applicable. Now if I calculate here 33 lakh 80,000 for 17,000 patients. Now this is going to be 198.824. That means the jump is happening, but the jump is not with the exact same amount for every unit if I calculate with the maximum units which are there in that particular range. Now if that is happening, then what to do? You need to calculate the break-even point for the range in which you are in. So we are in the range of this. Your 17,520 is given in this particular range itself. So, and this is the salary which we are paying. Okay? So this is our step fixed cost which we are going to consider. So to calculate your break-even point, what do you need to do? You're going to take fixed cost upon contribution per unit. So what is the fixed cost applicable here? 45 lakh 30,000 is the fixed cost for bed, plus 35 lakh 10,000 is the fixed cost applicable for the staff, divided by contribution per unit. For calculating contribution per unit, I already know the revenue on a per unit basis, and 26 lakh 28,000 is the variable cost. Divided by 17,520 patients will give you 150. So 650 minus 150 is equal to 500. So 45 lakh 30,000 plus 35 lakh 10,000 divided by 500 will give you 16,080 patient days. Now tell me one thing. Am I getting this 16,080 patient days in this range itself? Answer is no. We are not getting this 16,080 in this range. So what to do? Check in which particular range this 16,080 is coming. So it is coming in this particular range, right? Now the salary paid for this range is 33 lakh 80,000. Now again calculate, because here the fixed cost is changing for you. So again we are going to calculate the break-even point. Now the fixed cost is 45 lakh 30,000 for the beds plus 33 lakh 80,000 for your salary of the staff, divided by contribution per unit, which is 500. No changes in that. 4530 plus 3380 divided by 500 is equal to 15,820 patient days. Now this 15,820 patient days I am getting in this range only, and this is the fixed cost which we have considered. Hence whatever you calculated as the break-even point is the correct break-even point, and this is going to be treated as the break-even point, not this one. Why not this one? Because for the particular fixed cost for which we calculated this is not coming in this range itself. If I am getting 16,080 as the break-even point, then this is coming in this range only. Hence we have to consider the fixed cost as this, and if I consider the fixed cost as this, then in that case I am getting break-even point as 15,820 patient days. Hence this is the correct answer. Now after this, the question says calculate the break-even point patient days for the year ended 31st March 2020 if the hospital capacity is raised to 80 beds. Now we are increasing the capacity of 80 beds, and this particular bed capacity cost is fixed but varies with the number of beds. So for the next year we are increasing the capacity to 80 beds. Earlier we had only 60 beds. Now if that is the case, then this fixed cost is also going to increase. Now 45 lakh 30,000 is applicable for 60 beds. I want to calculate for 80 beds. So what we will do, we'll divide this with 60 and multiply by 80, this particular value. Divide by 60 and multiply it by 80. This will give you 60 lakh 40,000 as the bed capacity cost. Now this bed capacity is not changing on the basis of patient days. This is only changing on the basis of what is the beds you are using. Now if I have 80 beds, then I'm not going to change that for the particular year. Now for next year we have 80 beds and we are going to continue that. No changes in that. Hence this is not a kind of fixed cost. This is step fixed cost. This is only a fixed cost, normal kind of fixed cost. Now if I have 60 lakh 40,000 and the question says patient demand is unknown, but assume that revenue per patient and cost per patient day, cost per bed and employee salary will remain the same as for the year ended 31st March 2019. So whatever was the situation in 31st March 2019, other things will remain as it is. Now if that is the case, then this 35 lakh 10,000 is what I am going to use as my fixed cost, step fixed cost. So 60 lakh 40,000 is the normal fixed cost and 35 lakh 10,000 is the step fixed cost for the staff. Divided by your contribution per unit is also not going to change because revenue per unit and variable cost per unit is not changing. So divided by 500. 60 lakh 40,000 plus 35 lakh 10,000 divided by 500 will give you 19,100. This 35 lakh 10,000 is applicable for this range. Am I getting the 19,100 in this range itself? Answer is yes. And if you are getting in the same range, then that is the BP which you are going to follow. Done. And this is our first question related to step fixed cost which we have considered. You can see the answer here also. And we are moving forward to the next part, and that is absorption costing and marginal costing income statement. First, we are starting with absorption costing income statement. What is absorption costing? Absorption costing is a system where your fixed cost and variable cost both are transferred to the cost of production. So whatever is the production cost, whether it be variable or fixed, doesn't matter. I'm going to take it to the cost of production under absorption costing income statement. Now, to calculate this, I need to first know the four things, that is opening stock, closing stock, units produced and units sold. So for calculating this, you can use this particular table where you can put your opening stock if you already know, put your units produced, this will give you units available, minus units sold will give you closing stock. So if you don't know any of this 4 values, you can calculate that with the help of putting this in this particular table. Now, after this, let's make our income statement, and whenever we make our income statement, we want to calculate the profit. And if we want to calculate the profit, we have to start with the sales. So we are starting with the sales, and then we are going to consider the production related cost. I already told you that in absorption costing, you're going to consider both variable and fixed cost. So direct material consumed. Remember that whenever we consider the direct material here, this is the direct material consumed for making the product. Now, one more thing, whenever I'm calculating sales, I'm going to calculate this on the basis of units sold. And when I'm calculating production cost, this is going to be on the basis of units produced. Okay? So let's say if you're selling 12,000 units, then 12,000 is the units which you're going to consider for sales. And if you are making 15,000 units, then that is the units which you're going to consider for production cost. Direct material consumed, then direct labor, direct expenses, variable factory overhead and fixed factory overhead or production related cost is considered here. Then opening stock of WIP minus closing stock of WIP, whatever is work in progress, that also you're going to adjust here itself. This will give you cost of production. Now, if you notice here, when we consider this fixed production overhead, we have written that this is going to be on a predetermined rate. Now, what is this predetermined rate and why we are not charging the complete fixed cost here? The thing is, in absorption costing, as we are taking the fixed cost to the cost of production, that means we are going to charge this on every unit whatever we produced. Now think of a normal fixed cost, like let's say I have a fixed cost of 1 lakh rupees. I have a fixed cost of 1 lakh rupees, and if I'm producing 10,000 units, then the fixed cost on every unit is going to be 10 rupees. And if I produce, let's say 20,000 units, then the fixed cost is going to be 5 rupees on every unit. That means whenever you change the number of units which you are producing, your fixed cost on a per unit basis keeps on changing. And in absorption costing, I understand that we want to consider the fixed cost for cost of production, but organization don't want this fixed cost to change on a per unit basis every time. And that is why what they do is they prepare a predetermined rate with the help of this fixed cost and the normal capacity or the normal units which they are going to produce. So let me just show you how to calculate this predetermined rate. For fixed production overhead, predetermined rate will be charged on actual activity level. So whatever is the actual units you are producing, you are going to charge a predetermined rate, which is going to be a rate per unit or rate per hour, whatever you have made. According to that, you are going to charge this on the actual units which you produce. So how to calculate this predetermined rate? Take your estimated or budgeted fixed overhead. So this predetermined rate is prepared by the organization beforehand. Let's say if my year is going to start now, I'm going to prepare this before starting of the year itself. And I'm going to apply this for all the number of units which we have produced in that particular year by a predetermined rate. Because we don't know the actual fixed cost and we don't know the actual number of units which we are going to produce at the start of the day. And that is why we are charging this predetermined rate. So estimated or budgeted fixed overhead divided by normal activity level or the normal number of units which you are going to produce. Okay? Now after getting this predetermined rate, multiply this with the actual number of units which you produced. Let's say if my predetermined rate is on the basis of hours, I'm going to charge this on the actual number of hours which I have used for making the actual output. Now after this, adjust your opening and closing WIP. This will give you cost of production. After getting your cost of production, adjust your opening stock and closing stock of finished goods also. So as we are charging fixed and variable both cost in the cost of production, your opening stock, which is the stock from the previous period, that is also going to have fixed and variable both cost in it. Plus with that, your closing stock is also going to have fixed and variable both cost here because we are using absorption costing. But the question is, this opening stock I can get from the previous year itself, but how to calculate this closing stock? For this, you're going to use your cost of production. So let's say there is no as such opening stock in this question. We have 12,000 units which we are selling and 15,000 units which we are producing. So our closing stock becomes 3,000. So for this 3,000, if you want to calculate the cost, you'll say that, let's say 1 lakh rupees is the cost for 15,000 units. Cost of production is 1 lakh. Okay? Now, we'll say that 1 lakh is the cost for 15,000 units, we want to know the cost for 3,000 units which are kept at the closing stock. And that is how we calculate the closing stock of finished goods. Now, after adjusting your opening and closing stock, you can reach to cost of goods sold and then adjust the under absorption or over absorption of fixed overheads. Now, what is this all about? So, I already told you that we are going to make a predetermined rate for fixed overhead. Now, what happens due to this? Let's say my fixed overhead, my budgeted fixed overhead was 1 lakh rupees and the budgeted units was 10,000 rupees. So, we are getting a rate of 10 rupees per unit. Now, my actual fixed cost was also 1 lakh rupees only. Okay? We budgeted for 1 lakh rupees as the fixed cost, and our actual fixed cost is also equal to 1 lakh rupees only. But what happened? We are producing 15,000 units rather than producing 10,000 units. But the predetermined rate has already been decided as 10 rupees. So what we are going to charge here, 15,000 into 10 rupees, that is equal to 1,50,000 is what we are going to charge here. Now think about it. Your fixed cost, your actual fixed cost which you have incurred was 1 lakh rupees only. But you have charged total 1,50,000. That means you have charged 50,000 extra as the fixed cost as compared to what you actually incurred. And whenever we absorb, this is known as absorption of fixed overhead. So we have absorbed higher fixed overhead as compared to our actual fixed cost. Now, if that is the case, then you have absorbed something higher, and that is known as over absorption of overheads. So as we have over absorbed the overheads, we have to remove that from the cost because this is not the actual cost. Our actual fixed cost is 1 lakh only. So the extra 50,000, I have to remove that. And for removing that, I'm going to write it as an over absorption of fixed overhead, and I'll write it as 50,000 rupees removed from here. Okay? Now, let's say that rather than producing 15,000 units, you have produced only 8,000 units. This is the rate applicable. Whatever units I produce doesn't matter. Whatever is the actual output which you produce, you're going to apply 10 rupees per unit only. Now, if that is the case, then I'm going to charge 80,000 rupees here as my fixed cost. Now think about it. Your actual fixed cost was 1 lakh rupees, but you have charged 80,000 rupees. That means you have absorbed lesser than what you actually incurred. Now, if that is the case, that means you have under absorbed the overheads. And whenever there is an under absorption, that means lesser overheads were absorbed as compared to what you actually incurred. So you need to add that here. Whatever is the under absorption or over absorption of overhead, that gets adjusted after you have already adjusted the opening stock and closing stock of finished goods. Okay? Now, after this, admin and selling and distribution, whatever is the fixed and variable cost, you're going to charge on actual basis only. Predetermined rate is applicable only for the factory related fixed cost. Other things are going to be charged on the actual cost which you have incurred. Now, this will give you the total cost or cost of sales, and then we can calculate the profit after reducing your sales from this total cost. Okay? Done. Now, moving forward, this was your absorption costing income statement where we consider the fixed cost in our cost of production. Next one is marginal costing income statement. Here, again, we need opening stock, units produced, closing stock and units sold. So, for calculating that, you can use this particular thing, and then we are going to write the same thing as we have done for marginal absorption costing. It's just that marginal costing says that we are not gonna charge the fixed overheads to our production cost. Fixed overhead is a kind of period cost. Why period cost? Because think about it, your rent. Rent is a monthly cost not dependent on what is the number of units which you are producing. Your depreciation is also the cost which is not dependent on the number of units you are producing. That is a yearly cost. Insurance is a yearly cost. That means whatever is your fixed cost, fixed production related cost, is not actually the cost which is incurred for the number of units which you are producing. It doesn't matter what is the number of units you are producing, you are going to incur the fixed cost. And that is, if that is the case, then fixed cost becomes period cost, and marginal costing says that we are not going to charge the period cost to our cost of production. So what they consider the production cost as, they are going to consider all the variable production related costs like direct material consumed, direct labor, direct expenses, variable factory overhead, opening WIP and closing WIP. That is how we are going to get the production cost. After getting this, as we calculated the production cost, we can calculate the cost of production by totaling all of them. and then we are going to adjust the opening and closing stock of WIP, opening and closing stock of finished goods. Now, as we have taken only the variable production costs, our opening stock will also have variable production costs from the previous period, and our closing stock will also have variable cost only. Now, how to calculate closing stock of finished goods value? So, you will take your cost of production divided by the number of units which you produced multiplied by the closing stock units. As we calculated for absorption costing, that is the same exact method you are going to calculate here also. After this, you will get your cost of goods sold. Now comes the most important thing in marginal costing. In the starting itself, when we were discussing our cost volume profit analysis, I showed you that we take our sales minus variable cost. This gives you contribution. Contribution minus fixed cost will give you profit. That is the exact same thing which is followed in your marginal costing detailed income statement also. So we have taken the sales. Now we are going to take the total variable cost. So as we have taken the production related variable cost, we are now considering the variable admin, selling and distribution related cost so that we can know the total variable cost which we incurred. Now take your sales, reduce your total variable cost. This will give you the contribution. Now you will take, after getting contribution, we reduce the fixed cost. For calculating fixed cost, you will take your fixed production overhead on actual basis only. No predetermined rate is applicable here, and fixed admin, selling and distribution on actual basis. Now, if you reduce your total fixed cost from the contribution, you will get your profit. And this is how we make our marginal costing income statement. And then we reconcile our marginal and absorption costing profit. Now tell me one thing, that the difference between, there will be the difference in your marginal and absorption costing profit. And the difference between your marginal and absorption costing profit is due to fixed cost, fixed production overhead, because there we were charging on a predetermined rate and here we are charging on actual basis directly. So is your fixed production overhead is the one which is going to create the difference between both of them? Answer is no. Why no? Because even if in your marginal costing I'm taking fixed overhead here, I take on actual basis only, and in your absorption costing here though I take on a predetermined rate, but then I adjust the actual cost at the end also. So if I'm recording 80 and 20 here, that is 1 lakh rupees, then on marginal costing also, if you are going to record on actual basis, that means you are going to write 1 lakh rupees only. So even if the recording is happening at different places, but the thing is, fixed cost is exactly same in both the situations, then what is the difference creator? The difference creator is your opening stock and closing stock of finished goods. Because here when we record our opening and closing stock, we record with fixed and variable cost both in your absorption costing. But in marginal costing, we record the opening and closing stock at variable cost only. And that is why there is a difference between the profits of absorption and marginal costing. Now think about it. If there is no opening stock, no closing stock, that means there is no difference between your absorption and marginal costing. If the number of units which are there in opening stock and number of units which are there in closing stock are exactly same, with variable cost per unit exactly same and the fixed cost predetermined rate is exactly same, then also there is no difference which is going to be there in your absorption costing and marginal costing profit which you calculated. Now, if these are the only thing which are going to create the differentiation, then whenever you are reconciling the marginal profit with the absorption profit, you are going to take your absorption profit and then adjust whatever overvaluation happened in absorption profit. And you need to understand this, that if I'm taking my fixed cost also in absorption costing to opening stock and closing stock, that means always overvaluation of opening and closing stock will happen in absorption costing only. And if that is the case, then let's say that in absorption costing I have recorded higher amount of opening stock and in marginal costing I have recorded lower amount of opening stock. Now what is opening stock? Opening stock is a kind of cost only. So your cost is increased due to opening stock, and if your cost is increased, your profit is going to get reduced. So in absorption costing, if I have recorded higher amount of opening stock, that means the profit is going to be reduced of your absorption profit and marginal is going to have higher profit. And if that is the case, and I'm starting with absorption costing for my reconciliation, then I'm going to take my absorption profit and add the opening stock, overvaluation of opening stock to absorption profit so that I can match my marginal and absorption costing profit. Okay? Now, if there is any overvaluation of closing stock in your absorption costing, then in that case, closing stock helps us to increase the profit. So, if closing stock is higher in absorption profit, your profit under absorption costing is going to be higher. But your marginal costing though doesn't have recorded any overvaluation. And if that is the case, your marginal will have a lower profit. Now to adjust both of them, to match both of them, I'm going to take it down. I'm going to take my absorption profit down and match it with the marginal profit. So I'm reducing the overvaluation of closing stock which has been done in absorption costing. And that is how we reach to our marginal profit. Okay? This is our income statement of absorption and marginal. We are not seeing any specific question about it. Why? Because there are less chances of asking this. But I have explained you this particular thing because this is helpful for your activity based costing also. This is helpful for your throughput accounting also. This is helpful here also if they are asking you a complete income statement related calculations. Now let's move forward to the next topic, that is relevant costing. Now think about it. Whenever we take decisions, we have two different kinds of decision. The first one is non-routine and the second one is routine related decisions. Let's say if you're having a shop, a general store kind of shop, and in this shop, if the normal customer is coming, then are you going to give them higher discounts without earning any profit? You're giving everything at the cost at which you bought. Answer is no. You will charge profit from the normal customers which are coming on a daily basis to your particular shop. And if that is the case, then that is known as a routine or regular decisions. For long-term basis, for repetitive orders, we charge our fixed cost, variable cost also, and we charge the profit also from the customers. But think about a situation. In your shop, your friend is coming and that friend is your bestest friend. Now in that case, are you going to charge the profits from him also? Answer is no. What you will do, you will give them discounts so that they are also happy and you are also satisfied that that was your friend and you have given them discounts. Now tell me one thing. I understand that you're going to give the discounts. But let's say that your friend is coming every 5 days to your shop and he is purchasing something or the other. I understand that he is your bestest friend. You will not charge any profit from him. But the thing is, you will at least charge the cost which is incurred due to that particular customer, that particular friend. Like let's say that shop rent. You're not going to charge any specific amount of shop rent from your customer, from your friend. Why? Because that is your friend and that this shop rent cost, you're going to incur even if your friend is not purchasing from you. So as it is a special order from your friend, you're going to charge only and only the cost which is incurred specific to him. So let's say he is buying Maggi from your shop and the Maggi actually has a MRP of 12 rupees, but for you, when you purchase from the wholesaler, you get it for 5 rupees only. So you are charging only 5 rupees from him. The cost which is incurred specifically due to that customer, that is the only cost which you are going to charge from him. And that is what relevant costing is all about. Relevant costing is about this non-routine decisions, this special order kind of decisions where you charge only the cost which is incurred due to that decision. If you are not incurring any cost due to that decision, you are not going to charge anything to it. Okay? Now, that is what we do in our relevant costing. Relevant costing is all about this non-routine decisions where we use this. In routine or your regular decisions, for your regular customers, you're going to charge all costs. Hence, you're going to use absorption costing where we charge fixed and variable both types of cost. Now, in this short-term or non-repetitive kind of decisions, we have different kind of situations which can happen. It is not like only special order decision is going to happen here. Your make or buy decision can also cover here. Make or buy means, should I make the product myself or should I give it to others? How I am going to decide this? On the basis of what is the extra cost which you are incurring by making the product in-house and the extra cost which you are incurring by buying that product from the outside market. That is the only cost I am going to compare. Nothing else, nothing extra. The cost which I am already incurring or which I have already incurred is of no use to me. Hence, for make or buy decision also, we are not going to charge that particular thing. For continue or shutdown, for split off or further process, for keeping old machine or replace with new one, for decisions where resources are limited, like key factor decisions, there also you are going to consider only and only the cost which is relevant cost. And all of these are covered in your syllabus. And all of them use relevant costing only. And that is why this becomes very important for you to understand what relevant costing is all about. So as I already told you, relevant costing is a costing where you charge only the cost which is incurred due to that special customer. Conditions for a cost to be relevant. So for any cost to become relevant, it should be a future cost. The cost which is going to be incurred in the future, that is the only cost which is going to be considered as relevant. Other costs are completely irrelevant. The cost which has already been incurred is considered as irrelevant because it is a sunk cost already incurred. You're not going to get that back. Hence, it is not at all a relevant cost. Relevant cost is only the cost which is going to be incurred in the future. It can be differential or incremental cost also. Let's say earlier I was paying a rent of 1 lakh rupees, but due to this particular customer, now I'm paying a rent of 1 lakh 100 rupees. Extra 100 rupees is the rent I am paying due to that particular customer. And if that is the hypothetical kind of situation which is happening with you, then in that case, that 100 rupees you can charge to that customer. Otherwise, you're not going to charge anything. So whatever extra you're paying due to that customer, that is what you're going to charge from him. Then cash flow. There should be a cash flow kind of situation. Cash inflow or outflow can happen. But the thing is, non-cash things will not be considered here. Only future cash inflow or outflow will be considered. It can be future economic sacrifice or future cash inflow or future cash outflow, which is happening due to that particular customer. That is what you're going to consider here. Okay? And all the three conditions should be satisfied, that your cost should be future, it should be an incremental or differential cost, there should be a cash flow, then only you are going to consider it as a relevant cost. Now let's move forward to the next part, that is types of relevant cost. We have differential, incremental and avoidable cost. Differential, incremental and avoidable are somewhat similar only. Differential is difference in cost, it can be increase or decrease, doesn't matter. Incremental talks about only the additional or the increase in the cost which is happening, and avoidable cost means the cost which you can avoid if you are rejecting that particular contract. So all the three of them are somewhat talking about the same thing only. So let me tell you one example to understand this in a much more better way. Option A has 5 lakh rupees as the cost. Option B has 3,50,000 as the cost. The difference between the cost between both the options is 1,50,000. And the difference is known as differential cost. If you are choosing option A, let's say, then your cost is going to increase by 1,50,000. And that is why it is known as incremental cost. And if you are rejecting option A, you are able to avoid that 1,50,000 cost. So you can call it as avoidable cost. So that exact 1,50,000 can be called as differential, incremental or avoidable if you see it from different perspectives. So all the three of them, differential, incremental and avoidable, are somewhat similar only. The next one is opportunity cost and imputed cost. Both of them are also considered as relevant if there is real economic sacrifice. Like what is opportunity cost? Leaving the next best alternative for choosing this particular one. So let's say I am teaching you. So I chose teaching over and above doing a job. I might have earned from job rupees 60,000 rupees, but I'm leaving that to do this particular teaching job. And if that is the case, then the opportunity cost of my teaching is that 60,000 rupees which I would have earned from doing a job. And that is what opportunity cost is all about. Imputed cost is also somewhat similar kind of thing only. Let's say that I have this particular space where I record the classes. Now, if I would have rented this particular space somewhere, I might have earned 5,000 rupees. Then that is a imputed cost, a hypothetical or a notional cost. But the thing is, if I don't have any kind of offer for a 5,000 rupees rent for this particular place, I'm not going to consider this as a relevant cost. Relevant cost will be considered only when you are doing a real economic sacrifice. I don't have any kind of offer for this particular room of 5,000 rupees. I'm not going to consider that. So if I have a real offer for a rent of this particular room, then only I'm going to consider it as relevant. Otherwise, it is not going to be considered as a relevant cost. Okay? The next one is replacement and out-of-pocket cost. What is replacement cost? So let's say I have this calculator and you want this calculator from me. You want this calculator from me. But if I give this calculator to you, I have to buy a new calculator for myself. And if I'm going to buy a new calculator, that is going to charge me 500 rupees. So if you are taking this calculator from me, I'm going to charge you 500 rupees for the same. Why? Because the next calculator which I'm going to get, that is going to charge me 500 rupees. So replacement cost is a current market price of that particular product. So whenever there is a product which is in regular use or a material which is in regular use, this calculator is in regular use with me. And if you take it, I have to buy a new one. And if I'm going to buy a new one, that is going to cost me 5,500 rupees. So I'm going to charge you 500 rupees for the same. Okay? That is what replacement cost is, and replacement cost is considered relevant only when the material is in regular use. Now let's say this calculator is of no use to me. It is just sitting behind me. I am not at all using it. And if you take it, there is no as such a loss to me. I don't have to buy a new one for myself. Then in that case, if you take this particular thing, I'm not going to consider replacement cost for it. Okay? Replacement cost is considered only and only when you are going to replace this particular thing with the new one. If you're not replacing, you're not going to consider the replacement cost. Next one is out of pocket cost. So whenever you are incurring some expenses directly in cash or with the help of bank also, it doesn't matter. Whenever you are incurring expenses, that means that is considered as relevant cost. Whenever there is a cash outflow happening, out of pocket expenses happening, that is going to be considered relevant. It's just that should be incurred for that particular order only. Okay? Now, types of irrelevant costs. So as of now, we have seen different kinds of relevant costs. Now we are seeing different types of irrelevant costs. The cost which is sunk. Sunk cost means the cost which has already been incurred in the past. Now whatever cost has already been incurred in the past, you can't get it back. And if you are not able to get it back, that is completely irrelevant. It doesn't matter whether you are doing that particular job or not. You have already incurred the cost. You're not going to get anything back from it. Hence, that is considered as irrelevant cost. So, sunk cost is always irrelevant for us. The next one is committed cost. Committed cost means the cost which has not been already incurred, but for that you have already committed to pay for. And hence, that is also an irrelevant cost, because if you have already committed, you need to do that. Otherwise, you need to face the legal actions. And the next one is unavoidable cost. The cost which can't be avoided is treated as unavoidable and hence irrelevant. Whenever the cost is avoidable or is not going to charge if I'm not taking that particular order, that is what we treat as relevant cost. Whenever there is an avoidable cost which can be avoided if I'm not taking this particular contract, that is when I'm going to treat it as irrelevant cost. But if it is unavoidable, it doesn't matter whether I take that particular contract or not, I'm going to pay the money for it. Then that becomes completely irrelevant cost. Absorbed cost, like your fixed overheads are absorbed under absorption costing. So whatever fixed overhead I already incurred or I'm going to incur, for sure it doesn't matter whether I'm going to take that particular contract or not. That is what absorbed cost is all about. Am I going to charge the absorbed cost in my special order? Answer is no. For special order also, I'm not going to charge this absorbed cost. Why? Because absorbed cost is a cost which I'm going to incur for sure. It doesn't matter I take that particular contract or not. Hence, it becomes irrelevant. Whenever you see any kind of absorbed cost, you're going to treat it as irrelevant, not at all relevant for your decisions. Now, let's come to the practical related calculations. So, we have this relevant cost can be calculated for material, labor, variable overhead, fixed overhead and machine cost, and for all of them the calculations are completely different. So let's first understand how to calculate for material. So material can be of two different types. The first one is material is in regular use. That means every time whenever the material is completely used, you're going to buy it again because you need it regularly for the regular customers also. Like let's say if you keep the Maggi in your shop, that means that Maggi is required every time for keeping it in the stock because the regular customers buy that. So even if your special customer, your special friend is taking that, you're going to buy that again. If you're buying that again, then whatever is the current replacement for price for buying the Maggi again, that is the price you're going to charge to your customer. Let's say the 12 rupees packet of the Maggi, you get it for 5 rupees when you're going to buy that again. Then that 5 rupees is what you're going to consider. Now remember that whenever we consider current replacement price, we are going to consider the purchase price plus all other buying costs which you're incurring for buying that material. You're going to consider all of that. Now remember that whenever material is in regular use, it doesn't matter whether it is in stock or not, you're going to consider the current replacement price. So even if the material is not in stock, your special customer has came and he wants Maggi from you. He wants Maggi from your shop. And if that is the case, then you have to buy that Maggi because you don't have any stock of it. And if you're buying it for the customer, then you're going to consider the current replacement price only. Now, let's say if the material is not in regular use. If the material is not in regular use, plus with that it is not in stock also. Not available in stock with you. And if it is not there in stock, that means you have to buy it for your special order. And if you're buying it for the special order, that means you have to incur the cost. And if you are incurring the buying cost, that buying cost becomes the relevant here. Okay? Even if the material is not in regular use, if you don't have it in stock, you have to buy it from the market for the special customer. That means that becomes our relevant cost here. Okay? The current replacement price becomes the relevant cost. That means it doesn't matter whether the material is in regular use or not. If it is not in stock, that means you're going to consider current replacement price only. Plus with that, if material is in regular use and you are using it regularly, if you already have it in stock, doesn't matter, then also you're going to consider the relevant cost. So for all the three different kinds of situation, you're going to consider material as relevant, the current replacement price as the relevant cost here. But if the material is not in regular use, plus you already have it in stock, in that case, am I going to consider the original purchase price? Answer is no. Original purchase price is completely irrelevant. Am I going to consider the replacement cost? This material is not in regular use. That means you're not using it regularly. And if you're not using it regularly, then that replacement price is also of no use. You're not going to buy it again if that is used for your customer, your special customer. Okay? So what happens in material is not in regular use and is in stock? Then we have three different alternatives which can happen. Let's say I have this chair. Okay? Let's assume that this chair is already there in stock and is not in regular use with me. I have bought another chair. So now this is of no use to me, not in regular use for me. Now if that is the case, then there can be three different situations which can happen. First, find out that can this be used as alternative or substitute of another material? Let's say I have to buy one more chair for an employee. Rather than buying, I'm thinking of giving this chair to that employee. Now, if I would have bought a new chair for the employee, that would cost me 5,000 rupees. But rather than buying, I'm giving this chair to my employee. So this saved me 5,000 rupees. But now what happened? A customer came. Now the customer wants this chair only. Now customer wants this chair only, which I was thinking of giving to my employee and saving 5,000 rupees. Then that 5,000 rupees is considered as the cost which you're going to charge to the customer. So whenever your material can be used as alternate or substitute of another material, relevant cost becomes higher of if you are able to use this particular material as substitute, then whatever substitute cost you would have saved. So I would have saved 5,000 rupees. That 5,000 rupees becomes relevant here. Plus with that, if you are incurring any cost to use that particular material as substitute, that cost will also be considered. Let's say to take this particular chair downwards because my employees are sitting on in the ground floor, and if that is the case, for taking this downwards, I have to incur 100 rupees. So that 100 rupees will be considered reduced from here to get your relevant cost, which is 4,900 rupees. So you would have saved 4,900 rupees if you would have not given this chair to the customer. Hence, you are going to charge this 4,900 rupees to the customer only. Okay? Now, I can use this particular material as substitute and save 5,000 minus 100, that is equal to 4,900 rupees. This is the one option which I can do. Or else, I can also give this particular chair on a scrap, and that scrap will lead to 3,000 rupees for me. I can gain 3,000 rupees. But for selling this particular chair as scrap, I have to incur 500 rupees also. That means 2,500 or 4,900, whichever is higher will be considered as your relevant cost. Okay? So whenever you can use your material as alternate or substitute of another material, you're going to consider that substitute cost saved plus your scrap value, whichever is higher, that is what you're going to consider as relevant. Now let's say this chair can only be sold as scrap. There is no as such substitute or use of this chair. So I'm thinking of selling it as scrap. By selling it as scrap, I'm going to get 3,000 rupees and I'm going to incur 500 rupees. Then 2,500 becomes your relevant cost. Because this is kind of opportunity cost which you would have earned, but you're not earning because you're going to use this chair for the customer. Okay? Next situation can also happen that can only be sold as scrap but no value for the same, plus no substitute use. There is no as a substitute use of this chair. Plus with that, if I'm selling it as scrap, then that scrap wala bhaiya is also asking me to give some money to take this particular thing. He says that I'm not going to give you anything for this chair. This chair is of no use to me. And if I'm taking it, I have to incur 500 rupees. Then for selling it as scrap also, I am going to incur. To remove this from my stock, I have to incur 500 rupees. Then that 500 rupees becomes relevant income, because what is happening now, the new customer which has came, he is asking for this chair. So as he is asking for this chair, I'm not going to incur that 500 rupees for selling it as scrap. Hence, that 500 rupees becomes the relevant income. Okay? And these are the different situations which can happen for your relevant material cost. What are the situations? First, material can be in regular use, not in regular use. If material is in regular use, doesn't matter in stock or not, you're going to charge the current replacement price. Material is not in regular use and not in stock, current replacement price. Material is not in regular use but in stock, then check whether you have substitute use of that material or not. If you have substitute use, compare it with the scrap value if you have any. Compare whichever is higher, that is what you're going to consider. If you have only scrap value available, consider that as relevant. If you are not getting any scrap value also, if you are selling that material, you have to incur some money, you have to incur some cost for the same, then that cost becomes relevant income here. Okay? Now let's see this particular example to understand this in a much more better way. X Limited has been approached by a customer who would like a special job to be done for him and is willing to pay 22,000 rupees for that particular job. The job would require the following material. A, B, C, D is the material which is required for completing the job of a customer. So total units required is 1,000, 1,000, 1,000 and 200. Units already in stock. We already have the stock of all this material, but we don't have this in stock. Now tell me one thing, if I don't have this material in stock, does it matter that is it in regular use or not? Answer is no. What you're going to consider? Directly consider the current replacement price. As the material is not in stock, directly consider the current replacement price. It doesn't matter whether it is in stock or not. Now, the next one, for this also think about it. Out of 1,000 units, 600 is in stock. But I need 400 extra that I have to buy. So for this 400, you're going to consider the current replacement price only. Similarly, for this material also, out of 1,000, I already have 700 in stock, but 300 is not there in stock. And if it is not in stock, you're going to consider the current replacement price for the same. Okay? Now, this was the thing which you're going to do for the material which is not in stock. For all the material which is not in stock, you're going to consider the replacement cost. Now, let's see what the question says for other materials. Material B is used regularly by X Limited and stocks were required for this job. They would need to be replaced to meet other production demand. So as this material B is in regular use, that means this 400 unit is going to be charged at replacement cost because that is not in stock. Plus your in stock material is also going to be charged at replacement cost only because even if it is in stock, we are regularly using it. Hence current replacement cost is relevant. Next, for material C and D, they are in stock as the result of previous excess purchase and they have a restricted use. No other use could be found out for material C, but material D can be used in another job as substitute for 300 units of material which currently cost rupees 5 per unit, of which the company has no units in stock at the moment. Now what is happening? The question says that for material C and D, they are not in regular use. They are already purchased for the previous customer, but now they are not in regular use for us. For material D, we have a substitute use. Plus with that, if you notice, there is a realizable value. Realizable value is nothing but your scrap value. Okay? So for material D, which we have in stock of 200 units and 200 units is what we want. This 200 units can be used as a substitute of a material for 300 units at 5 per unit. There is a material which is required for us of 300 units at 5 per unit. That means we have to incur 1500 rupees for that material. We can save that 1500 rupees by using this 200 units of material D. So this becomes our substitute cost saved. But with that, I'm also going to consider the realizable value. I already told you that whenever you have substitute plus scrap value also available, you need to compare both of them and whichever is higher is what you're going to consider as relevant. So 200 is the units of material multiplied by 6 per unit. That means scrap value is 1200. 1200 or 1500, whichever is higher is what you're going to consider. So we are going to consider 1500 as the cost for this 200 units of material. Okay? Now, as your material C is not in regular use and in stock of 700 units, for the 700 units, there is no as such substitute use available. Hence, we are going to consider the scrap value. that is 2.5. So 700 into 2.5 is 1750 is what we are going to consider as the cost for 700 units of material C. For 300 units of material C, 4 rupees the replacement cost because that is not in stock. For material B, for complete 1000 units, you are going to consider 5 rupees because this is in regular use. For A, you are going to consider 100,000 into 6, that is 6,000 as the cost. Okay? Now after that, question says, what are the relevant cost of material in deciding whether or not to accept the contract? So these are the material relevant costs, and then assume all other expenses on this contract to be specifically incurred beside the relevant cost of material is 550. Other than material cost, 550 is the extra cost which is relevant to this particular job. So this is also the cost which you are going to consider to decide whether or not to accept the contract at 22,000 rupees. So first, material A, all the 1000 units at 6 rupees because not in stock. For material B, as it is in regular use, you are going to consider the replacement price. For material C, 700 units which is in stock will be considered at realizable value because there is no asset substitute use available. Then for the 300 units which is not in stock, you need to pay the purchase price, that is realizable value, replacement price. Okay? Next, for material D, which is 200 units in stock, as substitute use is available, we are going to compare the substitute use cost and the scrap value cost, whichever is higher is considered as relevant. And then for other cost, as already mentioned as relevant, we are going to consider it as relevant. 16,000 is what you are incurring and 22,000 is what you are getting. So we should definitely accept the contract. Okay? Done. Moving forward to the next part. When raw material is key factor. Key factor means the limiting factor. So your raw material is limited or you have shortage of the raw material. Whenever you have shortage, that means for normal business also you have shortage. Let's take an example of your shop only. In your shop, shampoos are in shortage. Or else oil is the good example, I think. As of now, oil is also in shortage. So let's take an example that in your shop, oil is in shortage. You don't have much oil available and there is one Ramu, which is your friend, and as his friend, he is asking for that oil box. But what is happening is, as you already have this in shortage, that means for your normal customer also, this is in shortage. And the normal customer also buys this particular product. Then only we say that this is in shortage in regular use and in shortage. Okay? Now, if that is the case, then let's say, whenever I sell this oil bottle to the normal customer, I earn a contribution. Contribution is what? Sales minus my variable cost. I earn a contribution of 5,000 rupees by selling this oil bottle to my normal customer. Now, as I am going to give this to Ramu, I am not able to earn this 5,000 rupees because this material is limited. Think about it. As the material is limited, I will not be able to earn 5,000 rupees which I would have earned from the normal customer. And now I am giving this oil bottle to Ramu. So for Ramu, I am going to charge that variable cost also. The cost which is incurred for buying that oil bottle for the shop. Plus with that, I am also going to charge him the opportunity cost, that is 5,000 rupees. Because by giving this oil bottle to him, as the material is limited, I am not able to sell that particular bottle to the normal customer. Hence, this 5,000 rupees I will not be able to earn. This happens only in case of limitation. Think about it. If there was no as such limitation, you can sell to the normal customer also, you can sell to Ramu also. But as you have limitation, you are not able to sell to Ramu, to the normal customer. You are selling it to Ramu and hence you will not be able to earn 5,000 rupees. So to Ramu, you are going to charge the replacement price or the cost at which you are going to buy the new material, new oil bottle. Plus with that, you are also going to consider the opportunity loss of it. Okay? You are also going to consider the opportunity loss which you have incurred or which you are going to bear. Now let's move forward to the next situation, that is relevant labor cost. In relevant labor cost, we have 4 different situations. The first one is piece rate basis. When you are paying to the labor on a per unit basis, that means though your relevant cost will be whatever is the number of units which you are making for the special customer multiplied by the piece rate on a per unit basis which you are paying to the labor. Or else if you are paying to the labor on a piece rate plus minimum guaranteed wages, that means at least minimum, let's say 10,000 rupees you are definitely going to give to the worker. In that case, you need to see what is the amount of cost which you are incurring for the normal customer. To understand this in a better way, let's take an example that in our organization we make chairs. For making every chair, we have Ramu. Ramu is our employee who makes the chair for us, and for making every chair, we pay him 10 rupees. Now what is happening is, this 10 rupees per chair sometimes is not enough for the Ramu. Why? Because sometimes we don't have much order, so he's not getting much money. So what he wanted is, he wanted a minimum guaranteed wages. So we are offering him 1000 rupees per month as the minimum guaranteed wages, that at least 1000 rupees, so we are definitely going to give you. But if you're making more than 10,000 rupees of chairs, then you're going to get that also, that extra money also. Now in that case, let's say our normal customers has given us the order of 80 chairs. 80 chairs, that means for every chair 10 rupees is the per chair cost. That means total 800 is the cost which we are going to pay to Ramu. But the thing is, as we have already decided that we are going to pay 1000 rupees per month if the amount is lesser, hence we have to pay 1000 rupees. We can't pay the lesser amount, that is 800 rupees. Now what happened? Now there is a special customer. Now this special customer wants 20 chairs. For making this 20 chair, if I take this per unit rate, then 20 into 10, that is equal to 200 rupees. Now tell me one thing. When we have only the normal customer order of 80 chairs, at that time also we were paying 1000 rupees. Now due to special customer, now also I am paying 200 plus 800, that is equal to 1000 rupees only. I am not paying anything extra to the Ramu. And if we are not paying anything extra, that means there is nothing relevant here. Okay? So if your minimum guaranteed wages are there, then you are also going to consider that what is the amount which is paid for normal customer and what is the amount which is paid for special customer. If it is lesser than minimum guaranteed wage, or if it is equal to minimum guaranteed wage, that means you are not going to consider anything as relevant cost, because you were already incurring this 1000 rupees. Okay? Now let's take another example, that for special customer we have to make 40 chairs. Now if I have to make 40 chairs for the special customer, 40 into 10, that means total 400 is the cost which we are going to incur on a per unit basis, and 400 plus 800 for the normal customer, total 1200 it is. That means you have to pay over and above 1000 rupees, which was minimum guaranteed. And what is the extra you're paying? You're paying 200 rupees extra due to this special customer. Ma'am, for the special customer we are getting 400. But the thing is, even if you have your normal customer only, then also you were paying 1000 rupees. And now the extra amount which you're going to pay to the labor is only 200. Hence 200 becomes the relevant cost. This is what happens in your minimum guaranteed wages kind of situation, and that is what is written here. Now let's move forward to the next situation, that is per hour basis. So if I'm paying to the labor on an hourly basis and the hourly rate is only given to you, that 10 rupees per hour is what you pay to the labor, then in that case consider that rate and multiply the number of hours which you have taken for the normal customer. For the special customer, let's say 200 hours is what we take. So 2000 hours, 2000 rupees becomes the relevant cost for your special customer. Okay? Now if you have idle hours kind of situation also, let's understand what happens in idle hours kind of situation. Whenever employee is there in your organization, it's not like that when you are paying to him on an hourly basis, you're only going to pay him for the hours for which he is working. Answer is no. For all the hours which he is available in the organization, you're going to pay him. So let's say for 30 days, he is available in the organization, and for every day he is available for 8 hours. So total 240 hours is what he is available in the organization. And let's say for every hour we pay him 10 rupees. For normal orders, our hours taken is 160 hours. For completing the normal orders, hours taken is 160 hours. Now think about it. 160 into 10 per hour is equal to 1600 rupees, which you are going to charge for the normal orders. Then what will happen for the remaining hours, that is 80 hours. 80 hours is the idle hours in which our worker is not doing anything. And even if he is not doing anything, we are going to pay him 10 rupees per hour only. So as we are paying him 10 rupees per hour, for idle hours also we are paying him 800 rupees. Now let's say that we got a special customer order. And in this special order, you require 40 hours. Now think about it. 160 hours was what our worker was working. Now he is working for 40 hours extra. That means total 200 hours is what he is going to work. And you are already paying this 10 hours, 10 rupees per hour for this idle hours also. Now out of this idle hours only you have taken this 40 hours. Hence, you are not paying anything extra to him. You were already paying him 10 rupees per hour for the idle hours. You are not going to pay anything extra for this 40 hours. Hence, nothing is relevant. Okay? Now let's say there can be one more situation that for the idle hours, you are paying lesser amount. So you have already talked to your employee that whenever there is a work, we are going to pay to you 10 rupees per hour. But as the work is not there, we are also not earning. So we will not be able to pay you that higher amount. We'll only be able to pay you 5 rupees per hour. Now if that is the case, then think about it. As we are earlier, though we were working only for 160 hours for normal work. But due to this special work, now we have to work for 40 hours extra. For this 40 hours, you were already paying that idle hour rate, which is 5 rupees. Now you have to pay 10 rupees as the rate. That means you are going to pay 5 rupees extra as the hourly rate, and that 5 rupees extra as the hourly rate will be considered as your cost for your special customer. And that is the case which happens with your idle hours. Two different scenarios. Hourly rate for idle hours is same as hourly rate for working hours. Then so there is no as such relevant cost when the rate is exactly same. But if you have different rate for idle hours, then the rate which you are paying in total minus the rate paid for idle hours will be considered as relevant for your special customer. Okay? Now let's move forward to the next scenario, that is salary. If you are paying a monthly salary to your permanent employee, then in that case though, if you have a new order from your special customer, then in that case you are not paying anything to your employee. And if you are not paying anything to your employee, anything extra, then in that case the relevant cost is nil. So when the worker is available, as he is already paid on a monthly basis, we are not paying anything extra to him. Hence, relevant labor cost is nil. But think about a situation that worker is already busy doing this particular work, this normal work. That means he is not having any time to do the work of special customer. Then in that case, you can have the employee from another department of your organization itself. So in another department, if the employees are not doing anything, they are sitting idle, you can call them for doing the special work. Are you incurring anything extra? Answer is no. You are calling the employees which are already there in the organization. Nothing extra is incurred. Hence, for special customer, we are not incurring anything extra if we are calling the employees from another department. Now think about a situation where your other department's employees are also busy. Then in that case, you need to hire new employee for this special order. So whatever is the salary which you are paying to the new employee which you hired for this special order, that will be considered as relevant. Okay? And that is how you calculate when you pay for salary on a salary basis. If labor is also a key factor, so when material became key factor, that means the limiting factor, there was shortage of material. What we consider the replacement price of material plus the opportunity lost. Similarly, for labor also, if labor become key factor or the limitation of labor is there, then in that case, you are going to consider the labor cost which you are going to incur. Plus with that, whatever opportunity cost of lost production which you have from normal, you are not able to do the normal work as you are doing the special work. Hai? So whatever is the opportunity lost due to that, you are also going to consider that here. Okay? This is what we do for labors. Now let's move forward to the retirement benefits. So why are we discussing this retirement benefits? First understand that. So let's say my employee is going to retire at 60 years. But what happened? We got a new work, a special order for which we require this employee. Without this employee will not be able to do that work. That means for 1 year extra, you are making this employee to not retire as of now. So if you are making that employee stay for 1 year, especially for this special order, then the salary which you are going to pay to the employee becomes relevant for this 1 year period, because this 1 year period for which you are saying the employees to not leave the organization as of now, you are making them do this just because of your special order. Hence, the salary becomes the relevant cost here. Plus with that, if there can be some benefits also which organization can get under different scenarios. Like let's say if you were thinking of paying a pension to the employee and that pension was on a recurring basis. Recurring basis means that every month you were thinking of paying 30,000 rupees per month as the salary, as the pension to the employee after leaving the organization, and that pension is for a fixed period. Let's say for 20 years you were going to pay that. Now think about it. If the employee is leaving the organization at 61st year or 60th year, doesn't matter, we were going to pay him for 20 years that recurring pension. That is a fixed period for which we are going to pay the pension. That means if you are not paying the pension for this period, you are not able to save any pension or retirement benefit related cost. Why? Because after 61st year, you have to pay for 20 years this recurring benefit. Hence, there is no as such benefit which you are getting. But if this recurring pension which you are paying to employee is paid for lifetime of the employee. Now think about a situation that, let's say we already know that our worker was going to live after the 60 years, he is going to live only up to 80 years. That means you have to pay only for 20 years. Now what happened, as you have stopped his retirement, he is going to work for 1 year. You are definitely going to pay the salary for this particular period. But as from 61st to 80th year only you have to pay the benefit, because he is going to live for 80 years only. That means for 19 years only you have to pay the benefit. That means you are able to save the retirement benefit of 1 year. That saving will be reduced from the salary. So if it is for fixed period, you're not going to reduce anything, because even after stopping his retirement, you have to pay the pension for that particular fixed period. But if it was a lifetime pension, that means salary paid during the period minus pension saved for the period for which you are stopping the employee's retirement, that pension saved will be reduced from here, and that is how you are going to calculate the relevant cost. Okay? Now it can also happen that you are paying the employee on a lump sum amount for retirement benefits. Okay? A one-time lump sum amount, let's say 20 lakh rupees is what you are paying. Now this is happening on normal retirement basis, that after 60 years of age the worker is getting retired, and if that is the case, then benefit mostly will not get reduced. If you are stopping the employee for 1 year, you are not going to reduce the 20 lakh benefit which you were going to give to the employee, right? If you are going to reduce, then the employee can say that I'm not going to do the work again. I'm going, I'll not stop for your special order. So whatever is the lump sum benefit, you have to definitely pay that. You can't compromise on that. But it can happen that as the employee was, due to your special order, as employee decided that he will definitely stay for 1 year more, it can happen that you're paying something extra as the retirement benefit to him. And if that is the thing which is happening, you're going to consider the salary paid during the order period plus with that extra benefit which you paid during the retirement due to this particular order, that will also be considered here as your relevant cost. Okay? The next is voluntary retirement. Voluntary retirement is, let's say, after 40 years of age only, you are saying to the employee that if you want, you can leave the organization and we are going to pay to you for your remaining service period. That is, for your 20 years, we are going to pay you a lump sum amount as a retirement benefit. Okay? So if employee decides that he is going to accept that particular offer, then in that case, he can leave the organization at this time and he can get the benefit of 20 years of salaries. Okay? But what is happening is, a new order came on the 40th year, and for 1 year that order will be continued. And if that is happening, for this period you are going to pay the salary to him. Plus with that, the years of service left for this employee is now 41 to 60th year. That means only 19 years are left now. And if that is the case, then only for 19 years you are going to pay the benefit. That means you can save some retirement benefits if the employee is delaying his voluntary retirement. So salary paid during the period minus amount saved on lump sum benefit will be considered as relevant cost. Next comes your relevant variable overhead. For variable overhead, we can have three different situations. The first one is per unit basis. When you are paying to the labor on a per unit basis, then you are going to take your variable overhead rate per unit multiplied by number of units of special order. If you are paying on a per hour basis, per labor hour basis, then you can have two different situations, that you are paying on a per labor hour paid or you are paying on a per productive labor hours. So labor hours paid and productive labor hours are different. Let's say worker is paid for 200 hours or 240 hours. But out of this 240 hours, he is working only for 200 hours. Hence 200 hours becomes the productive hours and 240 hours becomes the labor hours for which we are paying. Now variable overhead can be applied in both the situations according to what the question is telling us. If the question is not mentioning anything, then you are going to assume that per productive hour labor is paid on. Okay? Now what is the relevant cost in this case? Whatever is the variable overhead rate per hour multiplied by number of productive hours for special order. Whatever is the productive hour incurred or required for special order multiplied by whatever is the variable overhead rate per hour. But if variable overhead is charged on labor hour paid, now in that case, variable overhead is completely irrelevant. Why? Because you're going to use the idle hours. Earlier, whatever was the idle hour is now going to become the working hours for the labor. Why? Because now we got a special order. Hence, as already we were incurring variable overhead for all the labor hours paid. So for this 40 hours of special order, we were already incurring variable overhead. Hence, no need to incur anything extra. And we are not going to incur anything extra as variable overhead. Hence, no need to consider anything as relevant. Okay? Next is percentage of direct labor cost. So, if your variable overhead is applicable on a percentage of direct labor cost, then charge the percentage of direct labor cost which is incurred for your special order. But this percentage of direct labor cost will be charged only when you have relevant labor cost. If the labor cost is not relevant, your variable overhead will also be not relevant. Okay? Now, let's move forward to fixed overhead. For fixed overhead, mostly we treat it as irrelevant cost only. If fixed overhead is given in total amount, as fixed overhead recovery rate, absorption rate, predetermined rate is given, you're going to consider as irrelevant because it is the fixed cost which we were already going to incur. There is nothing extra which is incurred for this order, hence not relevant. But it is going to be considered as relevant if you are incurring additional fixed cost for your order. There is an incremental or extra fixed cost which is incurred for special order. There is specific fixed cost or avoidable fixed cost. All are the same thing only. But if it is incurred specifically for your special order, then only you are going to consider the fixed cost as relevant. Okay? Next we have relevant machine cost. If machine is not in regular use, then though it's similar to that of material. If material is not in regular use, we consider the scrap value or the realizable value. That is what you are going to consider here also. If machine is not in regular use, you are going to consider the fall in realizable value. Now, what is this fall in realizable value? Let's say before the order, if I was selling this machine, I would have got 30 lakh rupees. But as I'm using this machine in this particular order, due to usage, your realizable value will also fall. Let's say it became 20 lakh rupees. That means there is a fall of 10 lakh rupees due to using the machine for this order. Hence that 10 lakh rupees becomes relevant. So whenever machine is not in regular use, you're going to consider fall in realizable value. But if machine is in regular use, you're going to consider the fall in replacement price of the machine after special order. Okay? Now, let's see one question where we are going to discuss all the costs, related costs in one question itself. So, Rontex Builders has been offered a contract by Exian Limited to build for it 5 special guest houses for use by top management. Each guest house will be an independent one. The contract will be for a period of 1 year and the offer price is 1 crore rupees. So, total 1 crore is offered to this Rontex Limited for building 5 special guest houses. Each guest house is going to be independent and this is built for Exian Limited. In addition, Exian Limited will also provide 2 grounds of land free of cost for the purpose of construction. The chief accountant of Rontex Limited has prepared an estimate on the basis of which he has advised that the contract should not be accepted at the price offered. His estimates was as follows. So what all estimates our chief accountant has made? That total 3 grounds are required at 20 lakh, that means 60 lakh rupees. Drawing and design, registration, material, cement and sand, bricks and tiles, steel, other, labor skilled, unskilled, supervisor salary, overhead, general depreciation and the total cost. The accountants also provide the following information that land, the total requirement of land is 3 grounds costing 20 lakh rupees per ground and Exian Limited has already provided 2 grounds free of cost. Now think about it. It is not like for building 5 different special guest houses, we require 5 different lands. We only require 3 lands. And out of 3 lands, 2 lands are already provided by the customer free of cost. Hence, your Rontex Limited only has to buy 1 land. So why are you considering 3 lands cost? Think about it. You only have to consider 1 land cost as the cost of this builder. The builder is not incurring the cost of 2 grounds. He is only incurring the cost of 1 ground. So 1 into 20 will give you 20 lakh rather than giving you 60 lakh. So this becomes your relevant cost, not the 3 land cost. Drawing and design, this has already been prepared and 50% of the cost has already been incurred. Now think about it. As the drawing is already prepared and 50% cost is already incurred, that 50% becomes sunk cost. Already incurred cost is a sunk cost. You cannot get it back. But the drawing and design is completely ready. Already prepared means completely ready. And if it is completely ready, that means the remaining 50% amount, you have to pay it. It is a kind of committed cost. You can't avoid it. You can't avoid it. Hence, that becomes irrelevant. This drawing and design is completely irrelevant for you. Next comes your registration cost. As you're building the buildings for this particular contract, then only you have to do the registration. If you're not building anything for SCM Limited, you don't have to do any registration cost here. Hence, this becomes relevant because this is an avoidable cost. If you're not doing this particular contract, you need not register the buildings also. Okay? Let's see the next thing. Materials. Cement and sand are already in stock and are in regular use. If used for this contract, they have to be replaced at a cost of 8 lakh rupees. So whatever is the replacement cost is considered as relevant. This is like original cost. Not relevant. Your 8 lakh rupees, which will be considered, which will be a replacement price for replacing the regular used material, will be considered as relevant here. Next. Bricks and tiles represent purchases made several months before for a different contract. And whenever we purchase several months before for a different contract and now we are using it in this particular contract, that is considered as not in regular use material. They could be sold readily for a net of 5 lakh rupees after meeting all further expenses. So we have a realizable value from bricks and tiles which can be 5 lakh rupees. So we are not going to consider this purchase price. We are going to consider the 5 lakh rupees which is a replacement cost. Next, others. Material worth 2 lakh relating to interior decoration are in stock for which no alternative use is expected in the near future. However, they can be sold for 1 lakh rupees. So in this others, we have interior decoration. So out of this 10 lakh rupees of others, 2 lakh is related to interior decoration. And out of the 2 lakh, only 1 lakh is recoverable. Hence, this 2 lakh is not relevant. 1 lakh is the relevant cost. Now, out of this 10 lakh, we have discussed about 2 lakh. The remaining 8 lakh rupees, they are not mentioning anything. If you notice, after this, there is nothing given for materials. Hence, for this 8 lakh, they are not mentioning anything. So, we will assume that this is a kind of relevant cost, which we have to specifically incur for this particular contract. Similarly, for steel also, which is a kind of material, they are not mentioning anything. So, this also will be considered as relevant here. So, again, assuming that we have to buy steel specifically for this contract. Now, let's see the next one, that is skilled labor will be transferred to this project from another project. The project manager claimed that if the men were returned to him, he could have earned the company an additional 2 lakh rupees in terms of profit. Now, these skilled workers are transferred from one project to another. As they are transferred from one project to another, that means we were already paying them something. Now, we are not going to pay anything extra for this special order. But the thing is, as they are transferred from one project to another, project manager is saying that we would have earned 2 lakh rupees if they were used for that particular project. Hence, this 2 lakh becomes our relevant cost. Nothing else is relevant for skilled labor. 12 lakh is not at all relevant. Only 2 lakh is the relevant cost because other costs of labor, for having the labor in the organization, we were already paying them. We are not paying anything extra. Okay? Next, unskilled labor. For unskilled labor, they are not mentioning anything. The next thing is for supervisor. Then we are going to assume that this unskilled labor is completely relevant, specifically hired for this particular contract. Then we have supervisor's salary. Supervisor undertake various tasks in the sites and his pay and continuity of employment will not be affected by the new contract. If the contract is taken, he is going to devote half of his time. Even if he is devoting half of his time, his employment is not gonna affected by new contract. If you have the new contract or not, doesn't matter, he is going to get his salary. And if that is the case, then this salary becomes irrelevant. Even if he is giving half of his time in the contract, we were already paying this 5 lakh. We were already going to pay this 5 lakh. Hence, this is irrelevant. Next, overheads. The equipment that would be used on the contract was bought 1 year before for 30 lakhs and is expected to last for 5 years. It can also be used on other contracts and the current replacement price is 32 lakh and in a year's time, it will be 25 lakh rupees. So this is the purchase price, original purchase price, not at all relevant for us. And we already talked about that whenever you have machine, we have a equipment that is a kind of machine, you are going to consider the fall in replacement price if it is in regular use. They have already mentioned that it can be used on other contracts, that means it is in regular use. And if it is in regular use, you are going to consider the fall in replacement price, which is 32 minus 25, 7 lakh rupees. So no depreciation will be considered because this is completely irrelevant. We are going to consider 7 lakh rupees for our equipment. Next, the general overheads include both specific and absorbed overhead. Absorbed overhead is irrelevant, specific overhead is irrelevant. If the contract is not undertaken, 4 lakh of the same can be avoided. Whatever is the avoidable cost becomes relevant. So out of this general overhead of 12 lakh rupees, 4 lakh becomes our relevant cost. Okay? We got to know all our relevant costs. Plus with that, they are also saying one more thing, that Rontex Limited has also on hand another project which would not be executed if the contract from Ixion Limited were to be accepted. The estimated profit on that project is 10 lakh rupees. So as we are taking this contract, we will not be able to earn 10 lakh rupees. That 10 lakh also becomes our relevant cost. So we have considered all the relevant cost here. Let's take the total of it. The first one is 20 lakhs. Drawing is completely irrelevant. Registration is relevant cost because that can be avoided if you are not doing this particular contract. For cement and sand, we have 8 lakh, then 5 lakh, then 10 lakh for steels. Then for others, if you notice, we are going to consider 8 lakh as relevant and 1 lakh as relevant. That means 9 lakh, then 8 lakh and 2 lakh and 4 lakh and 7 lakh and 10 lakh. That is equal to 93 lakh is what we are getting as relevant cost. Think about it. You are getting 1 crore rupees as the price and your cost is only 93 lakh. That means you are able to earn 7 lakh extra due to this particular contract. Hence, we should accept the contract. Okay? Draw inference from the information given supra and identify the relevant cost and irrelevant cost. You have to identify both of them. So, for relevant cost, we already know and have discussed that what all will be considered as relevant. And for irrelevant, you need to understand that you're going to consider only the cost which is completely irrelevant. Like drawing and design was completely irrelevant, supervisor salary was completely irrelevant, depreciation was completely irrelevant. But out of your overhead general, out of 12 lakh, 4 lakh is irrelevant, 8 lakh is irrelevant. So partial irrelevant cost will not be considered and shown when they are asking for irrelevant cost. Okay? Then you need to accept tell whether you are going to accept or not. So we are definitely going to accept because we are able to earn 7 lakh extra. Okay? Now let's move forward to the next question. Sontech Limited, a machine manufacturing company, had nearly completed a job relating to construction of specialized equipment when it discovered that the customer had gone into liquidation. So we were working for a customer and he had gone into liquidation. Now the job is at this position. Original cost estimated was 1,75,200. Estimated cost is of no use to us. Cost incurred so far, already incurred cost is kind of sunk cost. Hence, this is also irrelevant. Cost to be incurred, this is the cost which you are going to incur in the future. Hence, it can become relevant. Progress payment received from original customer. This payment has already been received from original customer of 1 lakh rupees. Hence, this is also irrelevant. Whatever is done in the past is already done in the past, hence becomes irrelevant. After searches, a new customer for the equipment has been found. Why we are finding out new customer? Because this customer has gone into liquidation. He is not able to buy our product. He is already paid 1 lakh rupees. He will not be able to pay us anything extra. So we are not giving him the machine and we are thinking of finding out a new customer for this machine. Okay? So after searches, a new customer for the equipment has been found. He is interested to take the equipment if certain modifications are carried out. After certain modification, he is ready to take this particular equipment. The new customer wants the equipment in its original condition only. If he wants an original condition, that means you have to incur this remaining 29,700 to make that particular machine complete. Okay? So this becomes our relevant cost. Then the new customer wants the equipment in its original condition but without its control device. He don't want the control device and with that he also wants some certain modifications. Direct wages, the cost of this additions and modifications are estimated as under. We have direct material, direct wages, variable overhead, delivery cost, fixed overhead, absorbed. Fixed overhead absorbed is of no use to you. I already told you the direct material required for the modification are in stock and if not used for the modification of the order, they will be used in another job. That means there is a substitute use possible for this material, and by substitute use you would have saved 2250. So that 2250 becomes our relevant material cost and not this one. Okay, next, the department is extremely busy. When department is extremely busy, that means we have labor as the key factor. Okay, its direct wages is 2500 and currently yielding a contribution of 3.2 rupees per direct wages, per rupee of direct wages. So we are paying 3500 to direct labor here, but they are telling us only about 2500 rupees. So I can say that out of this 3500 rupees which we are paying, 1000 rupee is paid to the labor specifically for this contract. But 2500 was paid for the labor which were extremely busy, and this 2500 rupees of labor are also able to earn 3.2 rupees per rupee of direct wages. So our contribution here is 2500 into 3.2 rupees per rupee of direct wages, which is equal to 8000 rupees. Now, tell me one thing, what all will become relevant here? As direct wages is extremely busy, we are definitely going to consider the direct labor cost. Plus with that, we are also going to consider the opportunity cost. But what about this 1000? Should I consider this or not? This will also be considered because this is incurred specifically for this particular contract. This workers, we were already paying 2500 rupees, but then also it is considered. Why? Because laborers were extremely busy. If the labor were not extremely busy or limited, then we would have not considered this, we would have only considered the opportunity loss. But as the labor is extremely busy, you are going to consider the labor cost plus with that opportunity loss also. Now variable overhead is 25% of direct wages. So what is the direct wages cost? Direct wages relevant cost is how much? 11,500. But actual direct wages cost is 3,500. So on what amount you are going to charge this direct variable overhead of 25%? You are going to charge only on the direct wages, not on the relevant cost. Okay? You are going to charge on 3,500 only, this 25%. So 3,500 into 25% is equal to 875 rupees. This is the variable overhead cost. Next, supervisory overtime payable for the modification is 1050. So this is payable specifically for the modification. Hence, this is our relevant cost. The cost of control device that the new customer does not require is 13,500. So customer has already mentioned that he do not require that control device, and the cost of it is 13,500. This is our original cost, no use to us, it is a sunk cost. If it is taken out, that can be used in another job in place of different mechanism. This later mechanism has otherwise to be bought for 10,500. The dismantling and removal of the control mechanism is 120 rupees. Now what is happening? This is something important. Okay? So the control device is there in the equipment, but we have to remove this because our new customer don't want it. By removing this, we can use this particular thing for another material in place of another material as substitute, and that we will be able to save 10,500 rupees from that substitute material, and 120 rupees will be the cost incurred for using it as substitute. So 10,500 minus 120 will give you 10,380. Now tell me, is this a relevant cost? 10,380 is a relevant cost? Answer is no. Why no? Because we are not gonna use this for our special customer. We are going to remove this, and by removing it, we are able to actually save 10,380. Hence, this 10,380 is our income, not our cost here. Okay? Next, if the conversion is not carried out, some of the material in the original equipment can be used in another contract in place of materials that would have cost 12,000 rupees. It would have taken wages of 240 to make them suitable for this purpose. The remaining material will realize 11,400. The drawings which are part of the job can be sold for 1,500. Now what is happening is, now they are providing the material which our customer wants in that product. So if that material was not used for that customer, we would have used it in another contract for 12,000 rupees. That means substitute cost saved will be 12,000 rupees, and 240 will be the cost incurred for wages. Now remember one thing, whenever we are incurring a wages, we we have to incur this variable overhead also. 25% of direct wages. Now this is something very important. Question is not going to tell you again and again that 25% of direct wages is your variable overhead. Whenever they are mentioning direct wages, you have to yourself consider your 25% of direct wages as variable cost. Okay? So here also, out of this 240, 25% is 60. That means 60 is also going to be reduced from here. We are getting 11,700 as our opportunity lost. As we are using this particular material in our equipment, we lost this opportunity of saving 11,700 rupees. Hence, this becomes relevant. Next, the remaining material will realize 11,400 as scrap. The other material which is used in the machine, if we would have sold it, we would have saved 11,400. This is also opportunity loss because we are using that in our machine itself. And the drawing, this can also be sold at 1,500 rupees. Hence, this is also a kind of opportunity cost. So, in your fourth point, we are having relevant income because control device is not required by the customer. But in your fifth point, we are having relevant cost because here whatever material is given, that is required in the equipment. Hence, that becomes relevant. Analyze the relevant cost of equipment in deciding at what minimum price that the company can afford to quote for the new customer. Now, if you notice, we have not discussed about delivery cost. Delivery cost specifically mentioned for this particular contract, hence relevant. Okay? These are the relevant cost. So, what all things to consider as relevant? 29,700. Then you are going to consider the direct material cost as 2250 because this is the substitute cost. Then for labor, you are going to consider 11,500. For variable overhead, 875, which is 25% of variable overhead. Delivery cost, you are going to consider completely. Supervisory overtime cost. Then control device not required is a saving for us. Hence, we are reducing it from the cost. Substitute use of material is relevant. And realization value is also relevant. Sale of drawing, if we would have sold it, we would have earned 1,500. Hence, that also is relevant. So, we are getting a relevant cost of 60,945 here. Second, the company should quote a minimum price of 60,945. Any price above this will result in additional profit. And with this, we are able to complete our relevant costing also. Now, we are moving forward to the next part, that is key factor analysis. Key factor analysis means we have some limiting factor. And with this limiting factor, we have to produce different kinds of products. So what should be the optimum product mix which we should have so that we can maximize the profit? That is what we want to do in this key factor analysis. So first situation is normal key factor situation where you have this machine. This machine is available for 5,000 hours only. That means the limiting factor here is the machine hours available. Then the fixed cost is also mentioned as 50,000 per annum. We are making 3 different products with the help of this machine. And the demand, which is the maximum demand for this product, is already given. Selling price minus variable cost gives you contribution per unit. Whenever we have any kind of limiting factor, we calculate contribution per limiting factor. So machine hours is the limiting factor here. So for calculating contribution per limiting factor, we also need machine hours per unit already given to you specifically here. Then we are going to calculate contribution per machine hour. Contribution per limiting factor is what we are going to calculate, because that is the limiting factor. On the basis of that, we want to know what is the contribution which we are earning. Now, whatever product is going to give you higher contribution per limiting factor, that is the product which you are going to prioritize. So, your business brochures is giving you higher contribution per limiting factor. Hence, this is our first rank product. Then the second rank product is the lower contribution amount, and the third one will have the least contribution per machine time. Okay? Now, after this, on the basis of this ranking, you are going to allot the machine hours. As this is the best product yielding higher contribution on a per machine hour basis, this is the product which you are going to prioritize and fulfill all the demand which is there for this product first. So 3,000 units are demanded, multiplied by, for every unit you require 0.3 hours. So the hours allotted for this particular product is 900 hours. The second rank product is also what we are going to prioritize. So 4,000 units multiplied by 1 hour, 4,000 hours are required here. So out of 5,000 hours which we have already distributed 4,900. Now we are left with only 100 hours. So the remaining hours will be given to your last product, that is notebook. So if I give 100 hours to this product requires 0.2 hour for every unit. So 100 divided by 0.2 will be able to produce only 500 units here. But for other products, we have given the full hours which is required by them. Hence 4,000 units and 3,000 units are completely produced here. On the basis of this, we can calculate total contribution by multiplying the units with the contribution per unit. or else you can take your machine hours and multiply it with your contribution per machine hour to know the contribution. Both of them will give you the exact same value. Units produced multiplied by contribution per unit, or else machine hours multiplied by contribution per machine hour. Okay? This is our total contribution. Take the total of it for all the products together and reduce your fixed cost from here, which is 50,000 rupees. And this will give you 3,67,500 as the profit. Okay? Now, it is not necessary to calculate your contribution per machine hour that you should have contribution per unit and machine time per unit. If you don't have both of them on per unit basis, both of them are for 2000 units, then also it is okay. But both of them should have the exact same units as the base. If it is 1 unit, then both of them should be on the basis of 1 unit. If both of them are on 2000 unit basis, that will also work because you are going to divide them to get this contribution per machine hour. It's just that their unit base should be exactly same. Okay? Now, next situation is when you also have minimum demand in the question. So, we have one maximum demand which we want to fulfill, and there is minimum demand which you have to fulfill. You can't compromise on this. That is why there is a minimum demand. So, if you have a minimum demand kind of situation, you are going to calculate contribution per limiting factor and the rankings. But before distributing the hours on the basis of rankings, you will first distribute the hours on the basis of minimum demand. And then whatever is the left hours, that will be used on the basis of ranking. So, we have calculated contribution per machine hour and rankings. Then hours allocated first to fulfill the minimum demand. First, not on the basis of ranking. You are not going to focus on the rankings first. You are only going to focus on the minimum demand first. So, 1500 into 0.2, that is 300 hours is allotted here. 1000 into 1, 1000 hours is allotted here. 500 into 0.3, 150 hours is allotted here. Okay? This is the hours allotted for minimum demand. After allotting the minimum demand related hours, the remaining hours will be distributed on the basis of your rankings. Okay? So, remaining hours is 3550. After distributing your minimum hours, we are having 3550 hours, which will be distributed on the basis of ranking. So, the first rank product, out of 3500 was the minimum, hence already produced. So, the remaining is 2500, which we are going to produce now. For this 2500, 0.3 hours is required. So, 2500 into 0.3, 750 hours is allotted here. Out of 4000, 1000 is already produced of the second rank product. So, we have to produce the remaining 3000 units. For 3000, we require 1 hour per unit. That means total 3000 hours. But we only are left with 2800. Hence, we have allotted 2800 hours here and no hours here as we don't have anything left. On the basis of this, you can calculate the total contribution and the profit. Okay? Next situation, only one product can be produced. Out of all the products which you have, you can produce only one product. Your fixed cost is same, but there is maximum demand situation. So, we have maximum demand for the products. If I calculate contribution per machine hour and give the ranking, on the basis of ranking, this is the product I should prioritize. But think about it, if I prioritize this product, what is the contribution I am going to earn? 3000 into 30, 90,000 only. Why? Because only one product has to be produced. And if you are deciding to produce business brochures, you will be able to earn only 90,000 rupees. Is it the maximum possible contribution here? Answer is no. Why? Because whenever you have only one product which you can produce, plus with that there is maximum demand also, you are not going to decide on the basis of ranking. These rankings are applicable. This contribution per machine hour is applicable only and only when you can produce any of the products in any of the quantity. There is no as such limitation. You can have maximum demand, but there is no as such limitation that only one product has to be produced. Okay? Then only you can use this rankings. But if your question says that only one product can be produced, then so this ranking is of no use to you. Why? Because this ranking gives you only 90,000 rupees as the contribution, but you can earn much more than that. 90,000 is the contribution from your business brochures. If I sell or produce notebooks of 6,000 units and the contribution is 15 per unit, I'm going to earn 90,000 here also. But if I produce wedding cards of 4,000 units, which is possible as I have 5,000 hours in total, 4,000 into 1 will give you 4,000 hours. If I produce only wedding cards, multiplied by 80 is the contribution per unit. 4,000 into 80 will give you 3,20,000. Now think about it. Your first rank product is giving you 90,000 only. Your second rank product is giving you 3,20,000. Why this is happening? Because we are producing only one product. And whenever you are producing only one product, you can't decide on the basis of rankings. You have to decide on the basis of total contribution which you have. We decide on the basis of total contribution only when fixed cost is same. But if fixed cost is also different, then for all the situations you have different fixed costs. So you can't decide on the basis of contribution. You need to calculate profit for all the different situations or all the different products you have. Because you can produce only one product, you are going to decide on the basis of profit which you are making, because fixed cost is different in different situations. Okay? So if only one product can be produced and maximum demand is there, we do not consider the rankings, rather we calculate the contribution or profit. Contribution in case of fixed cost is same, profit in case of fixed cost is different. And on the basis of that, whatever product is helping us to earn higher contribution or higher profit, that is the product which we are going to prioritize. If only one product can be produced, there is no maximum demand limitation. No maximum demand limitation is there. And fixed cost is same for all the products. As there is no maximum demand limitation, we are going to definitely prioritize the product which is giving us the first rank. Why? Because there is no maximum demand limitation. You can produce for full 5,000 hours, you can produce business brochures. And if I do that, think about it, 5,000 hours divided by 0.3 hours for 1 unit. That means total 16,667 units is what you can produce. For every unit, you are going to earn 30 rupees. Total 5 lakh rupees is what you can earn from here. But if I produce wedding cards as 5,000, why 5,000? Because 1 hour is required for 1 unit. So 5,000 hours are there. I can produce 5,000 units here. 5,000 into 80 will give you 4 lakh rupees only. Here you are earning 5 lakh. And here if I give all the hours, then 0.2 hours is required for 1 unit. 5,000 hours is available, 0.2. So I'll be able to produce 25,000 units. Into 15 rupees is the contribution. You are only able to earn 3,75,000. So if there is no as such maximum demand, only one product has to be produced and fixed cost is same, you can decide on the basis of ranking that what is the product you are going to prioritize. Okay? But if only one product has to be produced but fixed cost is different, maximum demand limitation is not there but fixed cost is different. But if fixed cost is different, then you have to calculate profit. You can't compromise on that. You have to calculate profit and then only decide which one is beneficial for you. Okay? Done. Now, the next case is fixed cost is different for different range. So here, this is a kind of situation of step fixed cost only, but with key factor analysis also. So we are going to discuss this in our make or buy situation, which is similar to fixed key factor analysis only. What happens in make or buy and how it is different from your key factor analysis? In key factor analysis, we take contribution per limiting factor. In make or buy, we take savings per limiting factor. What is this saving? Saving is calculated by taking cost of buying. So what we are comparing in make or buy? We are comparing the cost of buying with the cost of making. So cost of making. So cost of buying minus cost of making gives you savings. So we calculate what is the saving happening on a per limiting factor basis in our make or buy situation, because here we have buying and making both of them. But in key factor analysis, we decide on the basis of contribution per limiting factor, which is sales minus variable cost gives you contribution. Per limiting factor is what we do in key factor analysis. Okay? So make or buy. There can be two different situations. The first one is no capacity constraint. That means there is no limiting factor. If there is no limiting factor, there is no need of calculating savings per limiting factor. You can directly compare cost of making with cost of buying. Okay? Whatever is lower, that is what you are going to prefer. And whenever you are taking cost of making and cost of buying, you're going to take only and only the relevant cost which is applicable. Irrelevant cost will be not considered here. Okay? Now, capacity constraint, that means there is a limiting factor situation. And whenever we have limiting factor kind of situation, for your make or buy situation, we are going to calculate savings per key factor. What is savings per key factor? Cost of buying minus cost of saving will give you, cost of making will give you savings. And calculate this on a key factor basis. This will give you savings per key factor. Okay? If you have a capacity constraint under make or buy situation and outside purchase of more than one product is possible, then in that case consider savings per key factor. But if only one component can be bought from the outside, then in that case, we in key factor analysis itself we have seen that if you are able to produce only one product, then so you're not going to decide on the basis of contribution per limiting factor if there is maximum demand. What you have to do, you have to develop various options, and then on the basis of those options you need to decide which is the product which you are going to make and which is the product which you are going to buy from the outside market. Let's see what our question number 53 says. Chung Lee Limited manufactures 4 types of electronic products A, B, C and D. All these products have good market demand. The company supplied following data. We have 4 products and the material cost, machining cost on a per unit basis is given to you. Machining cost also is mentioned as 8 rupees per hour. So with the help of this I can find out what is the number of hours required on a per unit basis. Here we require 6 hours, 4 hours, 8 hours and 3 hours on a per unit basis. Variable expenses on per unit basis is given to you, selling prices are there and market demand, that is number of units, are also there. Fixed cost varies according to production level hours as follows. So these are the production level hours and these are the different fixed costs which are happening here. So according to different production level, our fixed cost is also changing. So this is a kind of step fixed cost category only. Is it like the step fixed cost is of exact amount or is it changing every time? So you can see that directly by comparing 10 lakh by 1,50,000 hours. This is 10 lakh divided by 1,50,000 is equal to 6.667 and 10,50,000 divided by 3 lakh is 3.5. So the hours, the rate which is applicable on per hour basis is not exactly same if I take the total amount. Hence this is not changing with the exact same amount. And if that is the case, what we do? We take a specific category at which we are and accordingly calculate. But the thing is here with step fixed cost, you have key factor, you have make or buy, all of them together. So we have to do something different. Current production capacity is 4,98,000 machine hours. That is not enough to fulfill the market demand. Production manager wants to increase the capacity. The capacity enhancement is likely to take some time and the company wants to avail the market sentiment and cater to its requirement. It can subcontract a part of its production. Subcontract price unit per unit is offered as follows. So we have current production as 4,98,000 machine hours. This is the maximum capacity which is available as of now, and this is not enough to fulfill the market demand. Production department wants to increase the capacity, but we don't have any, we will not be able to enhance as of now. We have to work with this capacity only. Okay? Plus with that, for different capacities, the fixed cost is also different. And if you notice, up to 6 lakh hours is the capacity given here. But the question has specifically mentioned that maximum we can have 4,98,000. This is the production capacity available as of now and will not be able to increase it. So at max here I am going to consider 4,98,000. You can also buy the products from the outside market, and this is the subcontracting price if you are buying from the outside market. Please advise the management for quantities to be produced and subcontracted so as to achieve maximum possible profit. Show the quantum of profit earned. Here if you notice, there is nothing given like you can produce only one product or you can subcontract only one product. Nothing like this is mentioned here. That means I have full power to do as we want to do. Hence what we are going to do is, as we have different step fixed cost. Before going into step fixed cost also, let's first calculate saving per key factor because there is a capacity constraint. And more than one product can be produced, more than one product can be purchased from outside. There is no as such issue with that. So what we are going to calculate is savings per key factor. To calculate this, you need to consider your cost of making, which is going to be the variable cost of making, and cost of buying. So cost of making is this and cost of buying is this. So for cost of making, you can take the total of all the variable costs which we have, which is 64, 48, 32. That is equal to 144. And 72, 32, 36. That is 140. 45, 64, 44. 153. 56, 24, 20. That is equal to 100. Okay? This is your cost of making. And cost of buying is this one. Compare both of them. 144. 140, 153 and 100. In this situation, if you notice, you are able to save 2 rupees if you are manufacturing in-house because subcontracting will lead to 146 rupees. Here you are not able to save anything, 140 minus 126. Here though you are having a negative situation. So if you are making, you are going to incur 140 rupees, but if you are buying, you are only going to incur 126 rupees. So for this product, I can directly say that this product should be bought from outside market. because making it in-house leads to lesser negative contribution for you, negative saving for you. It is better for you to buy this product from the outside market itself rather than making it in-house. Now, if you notice the next one, 155 minus 153, here also I'll be able to save 2 rupees. Here I'll be able to save 8 rupees. Now, this saving is on per unit basis. We want the saving on limiting factor basis, saving per limiting factor. So, our limiting factor is machine hours. Hai? So, we have only 4,98,000 machine hours, and machines hour is the limiting factor. What is the machine hour required on per unit basis? 6, 4, 8 and 3. So 2 divided by 6 will give you 0.333. This is the already negative, hence saving per machine hour will also become negative, hence no need to calculate as such because here you are not having any benefit. 0.25 and 8 divided by 3 is 2.67. So according to this calculation, your first rank product as per saving per machine hour is this. This should be made in-house only, and this is going to be the first priority when we are making in-house. This is going to be the second priority, and this is going to be the third priority. Product B, though we are not gonna make in-house because baking in-house is not at all beneficial for you. Okay? So this is the decision which we have taken. Now after this, I can make this other 3 products in-house. But what is the problem? We have only 4,98,000 hours available, and with that, for different capacity levels, you have different cost applicable. So what to do here? You need to calculate under different capacities what is the profit which you are earning, and according to that profit only we are going to take the decisions. So if I have only 1,50,000 hours available, the first priority is going to be product D. That is what we are going to manufacture first, and for product D there are 30,000 units which we have to manufacture, multiplied by 3, total 90,000 hours are required for making this, and as I have 1,50,000, 90,000 hours can be given to this product. Next is product A. Product A is going to be the next priority, and for product A we require 52,000 into 6, that is equal to 3,12,000 hours. 90,000 are already given here. Out of 150, we are only remaining with 60,000. Hence, for product A, I'll be able to give only 60,000 hours. And accordingly, we have calculated for other products also, other hours capacity also. Okay? So, if I have only 1,50,000, I'm going to prioritize first D and then A. And always, whatever is the hours doesn't matter. Your first priority is going to be D. Second priority is going to be A, and third priority is going to be C. Okay? And accordingly, we have manufactured the different products. And after knowing that what is the units which you are going to manufacture in different categories, we are calculating contribution by making in-house or buying from outside. What is the contribution you are able to earn? So selling price remains same in both the situations, whether you are making or buying doesn't matter. The thing which is changing is cost of making and cost of buying. So for cost of making, we are going to consider the variable cost, and for cost of buying, we are going to consider the buying cost, okay? Subcontracting cost. Then with the help of this, we can calculate contribution per unit for making by reducing your variable cost from the selling price, and by reducing your cost of buying from the selling price, we can get our contribution per unit of buying, okay? Now after getting this, just multiply it with the number of units which you are making. This cost of making, contribution per unit of making can be multiplied directly with the number of units which you are making, and the remaining units which you have to fulfill the demand of can be bought out from the outside market. So first we have written what is the number of units which we are going to make and which we are going to buy. So for making, I can directly take from here, and the remaining units we are going to buy from the outside market. And on the basis of contribution calculated above, we can calculate what is the contribution which we are earning from making and contribution which we are earning from buying from the outside market, and what is the total contribution, what is the fixed cost, and what is the profit. Why we are considering profit here to make the decision? Because profit is different under different situation. That is why we calculated all the alternatives. Okay? And the profit here is exactly same for these two scenarios and lower for the other two. So I can choose any of these, but it is beneficial for us to choose this one. Why? Because here the capacity is higher rather than depending a lot on the subcontractors. It is always better for you to depend on yourself. So if both of the situations are giving you exact same profit, you are going to choose this one. Okay? Done. Moving forward to the next one. Next is under capacity constraint. So this question was also of capacity constraint only, but with that we have step fixed cost also. Now there is one more scenario which can happen in your capacity constraint where outside purchase of more than one of the component is possible. Whenever outside purchase of more than one of the component is possible, you are going to calculate saving per key factor, give rankings accordingly, as we have done in the previous question. And after doing this, you can calculate units which you are going to bought from the outside market and manufacture in-house. That also we have done in the previous question. Next, there can be one scenario where the question says that as you don't have the availability of hours in your, there are limited hours in your first shift, there is a limitation in the first shift. So what you can do a second shift also in the organization. So they can ask you that is doing second shift viable for us or not? So for specific products which you are not able to make in-house with the available capacity, should you produce that in second shift or should you go for buying it from the outside market? So let me tell you one thing, if the saving is negative, we have calculated in the previous question also, saving was negative of a specific product. I think product B was that one. For product B, saving was negative. Saving negative means this product is not at all beneficial for us to make in-house, even in the first shift. So in the second shift also it is not going to be beneficial for you. Hence, for the product which is having negative saving, you are definitely going to buy it from the outside market. But the product which is having positive saving, but due to limitation of hours in the first shift, you are not able to produce all the units in the first shift, you can produce that product in the second shift also. But in the second shift, it can happen that your cost is increasing a little bit as compared to what it was in your first shift. And if that happens, it is necessary for us to compare these three scenarios. The first scenario will be buying all remaining units from the outside market, that rather than producing in the second shift, as I don't have in the first shift available hours, the hours was limited, I was not able to produce a specific number of units. So I am buying it from the outside market. Or else you can make all units in the second shift itself. Make all remaining units in the second shift. Or else you can compare partial make and partial buy. Why this partial make and partial buy comes and how to find out that what is the number of units which I am going to make and what is the number of units which I am going to buy. For this, you can refer this particular example. 2,900 units are remaining of product X and has positive savings. 2 hours per unit is required to make and fixed cost is 5,000 for every 1,000 hours or part thereof. So for second shift, they are providing us this information that let's say a product is there of which 2,900 units are remaining and the savings are positive. So you can produce in the second shift. Think of reducing in the second shift. 2 hours are required for every unit and fixed cost is 5,000 on every 1,000 hours or part thereof. So this is also a kind of step fixed cost only. Huh? So in this situation, what we will do, if you notice 5,000 is applicable for 1,000 hours. What is the number of hours required for making 2,900 units? 5,800 hours is required. Now out of this, for 5,000 hours, complete 5,000 hours are there. Huh? So 5,000 rupees multiplied by 5,000 hours are there. So this will lead to 25,000 rupees. Now comes this part of 1,000, which is 800 only. The question says that if it is 1,000 or part also, you need to incur 5,000 rupees. So is it beneficial for us to incur 5,000 rupees here? Even if we are having capacity of only 800, using capacity of only 800. So for this specifically, what we do is, we do a partial buying. For complete hours which is available, for which the complete rate is applicable, you can directly make it in-house. But for the remaining units or the remaining hours which is 800 hours, for this whatever units you can produce in-house, you are going to buy it from the outside market. Why? Because 1,000 hours is paid but utilizing only 800 hours, and that is why it is beneficial to buy it from the outside market. Is it beneficial or not? You can directly calculate this here and identify whether it is beneficial for you to buy this particular units or make all remaining units in-house only. Okay? So we are going to compare these three scenarios: buy all remaining units, make all remaining units, and partial make, where up to your full complete hours for which the fixed cost is applicable, you are making in-house. For the partial part, you are buying it from the outside market. Okay? Compare these three, whatever has the least cost, that is the one which you are going to prefer. Okay? Done. Moving forward. So for this, if you want to refer the question, you can refer question number 66 and 68 from your question bank. Okay? Chalo. Moving forward to the next part. Outside purchase of only one of the component is possible. Now this is what we are going to see, because more than one component we have seen with the step fixed cost calculation in the previous question. We are only left with the second shift viability related question, which you can definitely refer from the question bank. Now, outside purchase of only one of the component is possible. If only one component can be bought from the outside market, then what to do? Here also I am going to calculate savings per key factor and give rankings so that I can understand what is the additional capacity created by buying a particular component from the outside market. Now understand one thing, then when we say that outside purchase of only one of the component is possible, in this scenario we are not talking about different products. We are talking about one product having different components. Okay? Mostly when only one component is bought from the outside market is a case, then in that case you are making one product. For that you have different components which you are using for making the product. All of them you were making in-house, but now the production has increased, or the units which you are going to produce has increased, and that is why all of them cannot be produced with the limited capacity available. So any one of them we are going to buy from the outside market. Okay? That is what is happening. So if that is the case, then first calculate savings per key factor for all the components and give ranking. Then compute additional capacity created if a particular component is bought from outside market. To calculate this and to understand this, it is better for us to directly move forward to the question. So this is the question which we are seeing. Force Limited is a manufacturer of firefighting equipment which consists of 5 components, 3 of which are made using general purpose machine and 2 by manual labor. The data for the manufacture of the equipment are as follows. We have machine hours required on a per unit basis for 3 different products, and labor hours are required for 2 components. So 3 are made with machine and 2 are made with labors. Variable cost per unit is there, fixed cost per unit, apportioned one is there, total component cost, assembly cost per unit, all variable, selling price per unit is given to you. The marketing department of the company anticipates that 50% increase in demand during the next period is going to happen. General purpose machinery used to manufacture FO and R are already working to the maximum capacity of 9504 hours. Now think about it, our capacity, our production or our demand is going to increase by 50%, but the capacity available is 9504 hours only, and that is completely used as of now only. And there is no possibility of increasing the capacity during the next period. But labor is available for making component C&D and also for assembly according to demand. For labor hours, we have this labor hours available here, and available labor hours required for assembly also, we have that in sufficient quantity. There is no issues with that. There is no limitation of the labor. So the hours limited is of only and only of machine hours. Now, the management is considering the purchase of one of the components. Specifically in the question it is mentioned that either of the component F, O or R is going to be purchased from the market to meet the increase in demand. These components are available in the market at the following prices. Okay? So these are the prices at which these products are available in the market. Now what to do? We are going to first calculate savings per key factor even if we are producing only one product. Okay? This will help us to decide what is the product which we should buy from the outside market. So 160, 320 and 250 is the cost of buying, and this is the cost of making. For cost of making we consider only variable cost because this is fixed cost apportioned, hence not relevant. So 160 minus 64 will give you 96. 320 minus 108 will give you 212, and 250 minus 116 will give you 134. This is our savings per unit. We already have machine hours per unit available. We can calculate savings per machine hour. So 96 divided by 20 will give you 4.8. 212 divided by 28 will give you 7.57. And 134 divided by 24 will give you 5.583. Now this will help us to understand that what is the product we should definitely make in-house. So as this product has higher savings, this is the product which we are going to prioritize making in-house. This is the second rank product on the basis of savings, that this should be the second priority product for making in-house, and this is the third priority component which we are going to make in-house. So whatever is the third priority component for making in-house, that is the product which you prefer to buy from outside as compared to other two. Because here the saving is higher if you are producing in-house. For this, the saving is as compared to these two is lower. Hence, if I have to buy any component from the outside market, I'll prefer buying this one. Now, before preferring or before calculating what is the units which you should buy from the outside market, we should know that what is the demand which is going to be there in future. It will increase by 50%, but what is the exact number of units which is going to be there as the demand? So for that, I'm going to use this maximum capacity which is completely used as of now. So as of the current situation, your 9504 hours are there and that is completely used, are already working to the maximum capacity. So this 72 hours denotes machine hours which is required on a per unit basis, and this is the total hours available. With the help of this, I can very easily calculate what is the units which we are making now. 9504 divided by 72 is equal to 132 units is what we are making as of now. And the question says there will be 50% increase in capacity. So if I increase this by 50%, this is going to be 198 units. So in upcoming period, our demand will be 198 units and that is what we have to produce. All 198 units will require all these 5 components. For labor, so there is no as such issue, but material for machine we have issue, hence these 3 products are creating issue. Hence we have to decide what is the product which we are going to buy from the outside market. So let's see what is the capacity creation if I am buying this F from the outside market. F was taking 28 hours. Now it will not take any hours. Why? Because we are buying it from the outside market. Hence no need to give any machine hours here. 28 plus 24. Now total machine hours available with us is 9504 and total machine hours required for making one product is only required for O&R, and that is equal to 52 hours. 52 hours is required for making one unit. 9504 hours is available with us. So 9504 divided by 52 will give you 182.76. Now think about it. I understand that saving per machine hour is higher here, but the thing is, this product, this component, if I buy from the outside market, I'm only able to produce in total 182 units. But the demand is 198 units. So, buying this product from the outside market is not helping us to fulfill the complete demand. Hence, even if this product is giving me lesser saving per machine hour by producing in-house, I'll prefer to produce this in-house only rather than buying from the outside market, because it is not able to fulfill my complete 198 demands. Okay? Now what is happening? Now let's move forward to the next one, which is the second priority product as per saving, which is 5.583 rupees per hour. Now this product is good for producing in-house, but the thing is, as we need capacity for producing full 198 units, what we are doing is we are going to buy this product from the outside market. So the first scenario, we have seen that buying F product from the outside market, but it is not beneficial for us because it is giving you 182 units only. You require 198 units. So now we are moving forward to R. If I buy R from the outside market, then I require total 20 plus 40, 28. 48 hours for making one unit. 9504 divided by 48 hours per unit, which is equal to 198 only. So as you require 198 units, and by buying this R product from the outside market, you are able to create 198 units. Hence, we are going to buy this product from the outside market. And this is preferable also. As compared to this first rank product, this is much more preferable for you to buy from the outside market because this is having the highest saving. Okay? So, how to decide what is the product you are going to buy from the outside market if you can buy only one? You're going to decide on the basis of savings per machine hour plus whether you're able to fulfill the demand or not. Hence, we decided we are going to buy R from the outside market because with the help of this, we are also able to fulfill the demand. Let's see what is the question saying us. Profit made by the company from the current operation. Whatever you are doing now, on the basis of that, what is the profit you are earning? So, this is so very easy. You are going to consider all the variable costs applicable. Then you can calculate the total contribution, reduce the fixed cost which is applicable here and get your profit. Okay? Next. Then, if the company buys any one of the component FO or R from the outside market, what is the additional capacity created? So, if I buy F from the outside market, 182.76 is created. If I buy R from the outside market, 198 is created. If I buy O from the outside market, then what will happen? Then 20 plus 24. Total 44 hours are required. 9504 hours are available with us. So total 216 units can be created. The question wants us to calculate extent of additional capacity created. So this will be calculated on the basis of percentage. So let's start with this one. 182.76 units can be produced now. 132 was what we were able to produce before. So 182.76 minus 132, that is equal to increase in capacity is 50.76 divided by previous capacity, which is 132, into 100 is equal to, here 38% is created, 38.45. Here if I notice the change divided by base period into 100, 216 minus 132 divided by 132 into 100 is equal to 63.636%. Then if I compare for 198 minus 132 divided by 132 into 100, then this is 50%. 50% is the capacity created here. Okay? So we calculated the capacity created under different situations. For F 37, for R 50, for O 63.636. Okay? Next, the question wants us to find out that assuming 50% increase in demand during the next period, which component you are going to buy from the outside market? We are going to buy R from the outside market. Why? Because saving per machine hour is also lower, plus with that it is also able to fulfill the demand. Okay? Next, the question wants us to calculate the profit by buying R from the outside market, and we calculated it. Okay? This is the profit, and this is the new profit. We are able to increase the profit also. Now let's move forward to the next part, that is accept or reject. Whether we should accept the contract or reject it, this is dependent upon your relevant cost only. That whether to accept the special order or we have to reject this. But here they are not going to ask you specifically what is the relevant and irrelevant cost. They are going to ask you whether we should accept the contract or not. So for this, what we are going to do is we are going to either compare profit before accepting with profit after accepting. Whatever gives you the higher profit, that is what you are going to do. Or else you can decide on the basis of incremental revenue and incremental cost. If your incremental revenue from that accepting the contract is higher than the incremental cost incurred for accepting the contract, then you can accept the contract. Okay? So let's see one question to understand this in a better way. Green Sign Company Limited, a cement manufacturing company, produces 50 grade of cement, for which the company has an assured market. The output for 2024 has been budgeted at 1,80,000 units at 90% capacity utilization. The cost sheet based on output per unit is as follows. So in 2024, we are budgeted that 1,80,000 units is what we are going to produce, and producing 1,80,000 units takes our 90% of the capacity. What is the product which we are producing? 50 grade cement. The selling price for the same is given to you. Direct material component X, direct wages at ₹7. So if 7 rupees is the direct wages rate, with the help of this I can know that 4 hours is taken for making 1 unit. Then factory overheads is 50% fixed, that means 50% is variable. So out of this 24, 12 is variable cost and the remaining 12 is fixed cost. But for fixed cost, we prefer to write it in a total basis. So 12 multiplied by 1,80,000 will give you 21,60,000 as our fixed cost. Next, selling and distribution overhead, 75% is variable out of the 16 rupees. So 75% of 16 is 12 rupees. So 12 rupees is variable cost and the remaining 4 rupees is fixed cost. And for fixed cost, we prefer to write it on a total basis. So 4 into 1,80,000 will give you 7,20,000 as the fixed cost here. Out of this admin of 5 rupees, completely it is a kind of fixed cost. So 5 into 1,80,000 will give you 9 lakh rupees as the fixed cost here. Okay? So we calculated what all are the fixed costs here and what all are the variable part in this overheads. Next, the factory overheads are applied on the basis of direct labor hours. So on the basis of your direct labor hours which you incurred, the factory overheads are applied. Now when they are talking about applied factory overheads, they are talking about fixed cost only. So out of this 12 rupees, this is applied on an hourly rate. And if I calculate an hourly rate for the same, 12 divided by 4 will give you 3 rupees per hour as the hourly rate for applying fixed cost factory overhead. Okay, fixed factory overhead. To utilize the idle capacity and to improve the profitability of the company, we have an idle capacity. We are using only 90% of the capacity, 10% of the capacity is idle. The following proposal was put up before the board of directors for consideration. An order has been received from abroad 6,000 units of product 53 grade cement at 175 per unit. The cost data are as follows. So we are getting an order from the abroad for product 53 grade cement. We are producing as of now 50 grade cement, but this order is for 53 grade cement and the selling price is 175 rupees. Selling price 175. And the cost applicable for this particular order is direct material 56 rupees, direct labor 10 rupees, 10 hours per unit. And we already know that 7 rupees per hour is the cost of labor. So 70 rupees is the cost of labor here. Selling and distribution overheads applicable to this product is 14 per unit, and variable factory overheads are chargeable on the basis of direct labor hours. Okay, variable overhead is also chargeable on a direct labor hour basis. So if I calculate the variable overhead cost on direct labor hour basis, then this is also going to be rupees 3 per hour. So if 10 hours are what we are using of direct labor, variable overhead which we are going to charge is 10 hours multiplied by 3 per hour, which is equal to 30 rupees. Next, selling and distribution overhead is also applicable here of rupees 14. Now whenever there is a accept or reject kind of situation, we only consider the relevant cost, and your fixed cost is not relevant because it is absorbed cost. Hence, fixed cost will not be charged in this particular case. Selling and distribution are specifically applicable for this order, hence we have considered it. Now, the company at present manufactures component EX. Now they are providing us the information of component EX, but before that, let's calculate what is the profit which we are able to earn from this new contract. So 175 minus 56 minus 70 minus 30 minus 14. So we are able to earn rupees 5 on per unit basis from this new order. Okay? Now whether to accept this order or not is not only dependent on the contribution. It is also dependent on whether you have the full capacity of providing this units or not. So let's see what is happening next. The company at present manufactures component EX, 1 unit of which is required for each unit of product 50 grade cement. So if you notice here, they have added this component EX. For every 1 unit which you are making of final product, you require 1 unit of component EX, and they have charged 9.4 on a per unit basis. The company at present, okay, the cost details for 15,000 units of component EX are as follows. Direct material, direct labor, variable overhead and fixed overhead is also given for this 15,000 units. Now think about it. We are to producing 1,80,000 units of our final product, and for making each and every final product, you require 1 component EX. So they are only providing you the information of 15,000. You have to consider for 1,80,000 only, because 1,80,000 is required for making your final product. Direct material, direct labor, variable overhead and fixed overhead is given. Fixed overhead is absorbed on the basis of direct labor hour. So what is the direct labor hours used here? I can calculate that, but how to calculate it? Let's see next what is given to us. Total 1,41,000 is the cost incurred. So 52,500 is what we are paying to labor for this 15,000 units. So for every unit, you are paying 3.5 rupees per unit to the labor. Now think about it. For every hour, we pay to labor 7 rupees. Here we are paying 3.5 only. So 3.5 is paid for 1 unit and 7 rupees is paid for every hour. That means 0.5 hours are required for making 1 unit of component EX. And your factory overheads are absorbed on direct labor hours basis. So let's see what is the total factory overhead here. 15,000 units is what they are providing us the information for, and 0.5 hours is required for making every unit. So 7,500 hours are required for making 15,000 units, and this is the absorbed cost for 7,500 hours. 33,000 divided by 7,500 hours will give you 4.4 is the overheads absorbed on per hour basis. Now, with the help of this information, we are going to calculate the total cost of component EX for 1,80,000 units. Okay? So, your direct material is 30,000 for 15,000 units. Then what will be the cost for 1,80,000 units? This is equal to 3,60,000. Similarly, direct labor also 0.5 hours are required for every unit multiplied by, we want to calculate for 1,80,000 units multiplied by, for every hour we pay to labor 7 rupees. So 0.5 into 1,80,000 into 7 will give you 6,30,000. Then your variable overhead is 25,500 for 15,000 units. Then for 1,80,000 units, this is going to be 3,06,000. And at the end, we have fixed overheads also. fixed overheads is 33,000 at 4.4 per hour, right? So 4.4 per hour multiplied by 0.5 hour for every unit multiplied by 1,80,000 units is what we want. 4.4 into 0.5 into 1,80,000. The total fixed cost here is 3,96,000. So total of variable cost is 3,60,000 plus 6,30,000 plus 3,06,000, which is equal to 12,96,000. And the total of fixed cost is 3,96,000. Now think about it, how they would have calculated this 9.4. So 15,000 units, the total cost is 1,41,000. 1,41,000 divided by 15,000. They have calculated this 9.4 directly with the total cost. Can I take that total cost on a per unit basis? Answer is no. I should have taken variable cost on per unit basis and the fixed cost separately as the total cost. And the fixed cost total applicable for 1,80,000 units is 3,96,000. So when I'm considering the fixed cost of this product 50 grade cement, I'm also going to consider the fixed cost which is incurred for component EX, which is 3,96,000. This will also be considered as fixed cost. And out of this 9.4, I'm going to consider the variable cost of 12,96,000 divided by 1,80,000, which is 7.2 on per unit basis. Okay? So on per unit basis, you're going to consider 7.2 here. Now let's see what the question says. The component EX, however, is available for purchase at the market at 7.9 per unit. Now think about it. As fixed overhead is absorbed cost, that means it is not relevant for making the decision whether we are going to make component EX or buy it from the outside market. We are going to decide make or buy of this component EX only and only on the basis of variable cost which is incurred in making. So your buying cost is 7.2, your making cost of this component EX is 7.2 and the buying cost is 7.9. So which one is beneficial for you? You should definitely make it in-house because it is giving you 0.7 extra as per on a per unit basis to earn if you are making it in-house. Okay? Next, prepare a statement showing profitability of the company as envisaged in the budget. As per budget, you have to show profitability. Now, when you are showing as per budget, you are going to consider selling price as 130, direct material 30, component EX variable cost as 7.2, direct wages 28, out of factory overhead variable cost 12, out of selling variable overhead 12. This will be your variable cost. Reduce it from your sales amount. You will get your contribution on a per unit basis. Then calculate the total contribution. After getting your total contribution, consider all these fixed costs to reach to your profit. Okay? And that is what we have done here. We have considered our sales, all the variable costs to get our contribution on a per unit basis. Then the total contribution, reducing all your fixed cost. Dekho. Here also we have considered component EX related fixed cost and then you will reach to your profits. Now let's see what the next question wants to calculate. Evaluate the export order and state whether it is acceptable or not. Should I accept this export order or not? So as per contribution, if I talk about, I'm getting positive 5 rupees on a per unit basis as contribution from this export order. But I can't decide only on the basis of this. I also have to see whether I have full capacity available for reducing this or not. So how to check that? I already know that for making 1,80,000 units, we are using 90% capacity. And for making 1,80,000 units of 50 grade cement, what is the number of hours you require? 4 hours is required on a per unit basis. So 1,80,000 units multiplied by 4 hours per unit, that is equal to 7,20,000. Plus with that, we are also manufacturing this component EX in-house. For making 1 unit of final product, we are manufacturing 1 unit of component EX also. So for making 1,80,000 units of final product, we are manufacturing 1,80,000 units of component EX. And for making 1 unit, you require 0.5 hours of component EX and 1,80,000 units is what we want. So total 90,000 hours are used for making component EX. So the total facility or the capacity which we are using as of now is 8,10,000 for making your 1,80,000 units, and this denotes the 90% of the capacity. Because as of now, you are only using 90% capacity, and as of now, this much work you are doing. Now, how to calculate 100% capacity? If 8,10,000 is for 90%, what is the value for 100%? And we are getting 9 lakh hours. So 9 lakh is the total hours available with us, out of which only 8,10,000 hours is used for your normal business. You have remaining 90,000 hours available with you, which you can use for that special order. Let's see what is the number of hours required for your special order. For every unit you require 10 hours. and you are producing 6,000 units. So in total, you require 60,000 hours. 6,000 units into 10 hours per unit, 60,000 hours is required, and you have enough hours available with you. You have 90,000 hours available with you. So you can very easily do the 60,000 hours of work. Okay? So there is no as such limitation of hours or capacity here. We are only and only going to decide on the basis of what is the contribution which we are earning. And we are earning a contribution of 5 per unit. Hence, we should accept the order. Whatever is the export order with you, you should definitely accept it. And that is what is calculated here, that 5 per unit is the contribution. The total contribution is 30,000. Availability of capacity is there of 90,000. We only need 60,000. Hence, we can accept that particular contract. Now let's see what is the next point. Make an appraisal of proposal to manufacture the component EX and state whether the component EX should be manufactured in the factory or purchased from the market. Assume that no alternative use of spare capacity is available. We already have spare capacity of 30,000 when we are manufacturing component EX now. If you don't manufacture component EX, you'll also have 90,000 extra hours available with you and you don't have any use of it. Now think about it, making that component EX cost you 7.2 rupees, and when you're buying from the outside market, it is costing you 7.9. This itself shows that you should manufacture the component EX in-house itself, and that is what we are going to show. And this is our question number? This was question number 65. Okay? Very interesting, already asked in the question. That similar kind of question you can expect in your exam also. Now, this similar kind of question is also covered in your mock test paper of recent attempt. 7.2 and 7.9, we should definitely go for making it in-house because this leads to saving of 0.7 rupees on a per unit basis. Okay, let's move forward to the next question. This is also an interesting question. Tocon Limited manufactures plastic can of a standard size. The variable cost per can is 4 rupees and the selling price is 10 rupees. So, if the variable cost is 4 and selling price is 10, that means there is a contribution of 6 rupees per unit. Contribution per unit. The factory of the company has 8 machines of identical size. Any individual machine can produce 30 cans per hour. The factory works on 300 days per annum basic and the actual available hours per machine per day is 7.5. Now what is happening here is we have total 8 machines. Each machine can work for 7.5 hours in a day and there are 300 days for which we work. So what is the total hours available with us? 8 into 7.5 into 300, which is equal to 18,000 hours of work can be done from the machines. Okay? In 1 year. The company has, and with that we can make 30 cans every hour. Now think about it. If you have 18,000 hours, 30 cans can be made on 1 hour. Then what is the number of cans you can make? Total 5,40,000 cans can be made by using this 18,000 hours of capacity. The company has an order of only 4,20,000 cans from an oil company to supply. Now think that if you have 4,20,000 cans order, then what is the total number of hours required? 4,20,000 cans are there, divided by 30 cans can be produced on a per hour basis. That means you require only and only 14,000 hours if you want to make 4,20,000 cans. That means you already have an extra capacity of 4,000 hours available here. Okay? Next, the yearly fixed cost of the company is 20 lakh rupees. Yearly fixed cost is a cost which is not relevant for the decisions. Why? Because this is already going to be incurred, whatever decision you take doesn't matter. Tocon Limited has received an order from another company for supplying 60,000 numbers of plastic molded toys. The price of the toys is rupees 60 each and the variable cost is 50. 60 minus 50, that means here for this plastic toys, I can earn a contribution of 10 rupees per unit. Multiplied by 60,000 units is what we have to supply. Total 6 lakh is what we can earn as contribution here. Then while this order would be acceptable for supplying the total quantities only, you can't accept the partial order here. If you are accepting this toys order, you have to completely supply 60,000 units. You can't supply half of it. A special mold costing 2,25,000 would be required to be acquired to manufacture the toys. If you're manufacturing the toys by yourself, you have to incur 2.25 lakh rupees as the fixed cost, which is specific fixed cost specifically applicable for toys. Hence, we are definitely going to consider this. All the specific fixed costs are considered as relevant while taking the decisions. So 6 minus 2.25 will give you 3.75 lakhs as your profit. Now, even after considering this 2.25 lakh of cost, My profit is positive. Hence, we can accept the contract if we have the capacity of making the toys. The time study exercise reveals that 15 number of toys can be produced per hour by any of the machine. So out of 8 machine, I can use any of the machine and produce 15 toys on a per hour basis. Now, if I can produce 15 toys on per hour, I have to produce total 60,000 toys. 15 toys on a per hour basis. This will require total 4,000 hours. And if you notice, we have that excess capacity of 4,000 hours available, which we can use for making the toys. Let's see what the question says. Advise the company with reasons in the following situation, whether to accept the order of manufacturing molded toys in addition to supplying 4,20,000 number of cans or not. So if I'm producing 4,20,000 cans, I require 40,000 hours. We have remaining 4,000 hours available. So in this case, can I accept the order of the toys? Answer is yes. Why yes? Because you have that exact capacity available of 4,000 which you can use for making the toys. Okay? Now, whether to accept the order of manufacturing molded toys if order of cans increases to 5,40,000 or not. Now, this is something interesting. What is happening now? Now the capacity, now the production of cans which is required is 5,40,000. And for manufacturing 5,40,000 cans, we already know that we will require full 18,000 hours. So in this situation, should I accept the contract of toys? There is no as such option given to you that you can buy the toys from the outside market. That means if you are manufacturing toys in this case, you need to compromise with the cans. What will be the compromise here? You can manufacture only 4,20,000 pieces of cans with the 14,000 hours available with you, and the remaining 4,000 will be given for toys, because if I'm accepting the contract of toys, I have to completely accept it and produce 60,000 units here. Okay? So there are two options which can happen. The first one is use 18,000 complete hours for making this 5,40,000 units, or use 4,20,000 units, 4,20,000, make 4,20,000 cans with the 14,000 hours, and with the remaining 4,000 hours, produce 60,000 toys. Now, how to evaluate which one is beneficial for you? Can I evaluate on the basis of contribution per machine hour? Because machine hour is the one which is used for making both of them. So, should I calculate contribution per machine hour for both of them and then decide which one is beneficial? Answer is no. Contribution per machine hour, I already told you in key factor analysis that is applicable only and only when you can take partial orders also. Whatever product you are producing, you can produce partially also. But here, if you notice, for toys, I can't accept the partial orders. Either I can accept it fully or I can reject it fully. Hence, contribution per machine hour is not applicable here. Okay? So what we have to do, we have to evaluate this proposal separately. First, calculate the profit which you are earning by producing 5,40,000 cans. Then second, calculate the profit of these two scenarios together, 4,20,000 cans and 60,000 toys. Whichever gives you higher profit, that is the situation which you are going to prefer. Okay? So this is what we are going to do. So the first option, in the first option, we can definitely produce toys because we have the excess capacity available. For the second option, we can't use contribution per machine hour and can't give the ranking because of two different reasons. The first one is, if you're accepting the toys contract, there is specific fixed cost also applicable. So in the contribution per machine hour, so you don't consider the fixed cost. Plus, all or nothing condition is also there, that you can accept the toys order completely or you can reject it completely. You can't do partial order. Hence, we are going to calculate the profit of both the scenarios separately. 5,40,000 cans and profit when 4,20,000 cans and 60,000 toys are produced. Out of both the situations, what is the profit? Which one is the option which is giving us higher profit? Option number A. Hence, this is the option which we are going to prefer. Okay? Let's move forward to the next one. While a subcontractor is willing to supply the toys, now there is subcontractor which is ready to supply the toys, either whole or part of the required quantities at an all-inclusive rate of 57.5 each. What would be the minimum excess capacity needed to justify the manufacturing of any portion of the toys order instead of subcontracting? Now what they are asking us is, they are not asking us make or buy situation. They are asking that what is the minimum access capacity which you require if you want to produce the toys in-house. Now, how to calculate this? This I am going to decide on the basis of indifference point. What is indifference point? A point where both the alternatives are equally likely for me. So what are the two alternatives here? Making the product in-house or buying it from the outside. These are the two options available with us. So in the indifference point, first I'll calculate that what is the situation or what is the number of hours or units at which we are indifferent between both the options of making and buying. You'll understand this point. Let's first calculate the indifference point for this. If at indifference point, what we do, I already told you in the start that you're going to compare the fixed cost of both the options. Fixed cost in option 1 with your fixed cost in option 2 divided by contribution per unit in option 1 and contribution per unit in option 2. So what is the fixed cost applicable when you're making the toys in-house? If you're making the toys in-house, you're going to incur 2,25,000. But when you're buying from the outside market, you are not going to incur any fixed cost. Next, contribution per unit. When we are making in-house, 60 minus 50, we can earn a contribution of 10 rupees from the toys. But when we are buying from the outside market, we are going to get it for 57.5. So 60 minus 57.5, you will be able to earn only 2.5 as the contribution. So 2,25,000 divided by 10 minus 2.5 will give you 7.5. 2,25,000 minus divided by 7.5 will give you 30,000 units. At 30,000 units, you are indifferent between buying it from the outside market or making it in-house. Let's see what is the number of hours which you require for making 30,000 units. We already know that 15 toys can be made in 1 hour. So 30,000 toys divided by 15 will give you 2,000 hours. That means if you have excess capacity of 2,000 hours or more, why or more? Because here the contribution is higher. I already told you in indifference point that wherever the contribution is higher, that is the option which you are going to prefer if you are going above indifference point. If you are going below indifference point, you are going to choose the option which is having lower fixed cost. So if you have an excess capacity of 2,000 or more than 2,000, you can go for making the toys in-house. But if your excess capacity is 2,000 or less, you can go for buying the product from the outside market. Why I'm including 2,000 in both the situations? Because at 2,000, your profit under making and buying from baking in-house or buying from the outside market is going to be exactly same. Okay? Now, so what they were asking, minimum excess capacity needed to justify manufacturing of any toys. So minimum you should have 2,000 hours, and if you have more than 2,000 hours also, that is the situation where we are going to manufacture the toys in-house. Okay? Now the last part of this question is, the company had an understanding that the orders of the can will be increased during the year on negotiation and plans and manufactured 4,50,000 cans during the year. So company had thought that the demand is going to be increased for the cans. So rather than making 4,20,000 units, we are producing 4,50,000 units of can. What is the total hours required for making 4,50,000 cans? 30 cans can be produced per hour. So total 15,000 hours are required here. So we are left with 3,000 hours, and I already told you if the capacity, excess capacity is 2,000 or more, you can make the toys in-house. So 3,000 hours is what we have. So from this 3,000 hours, what is the number of toys you can make? 15 toys every hour. So total 45,000 toys can be made in-house. So we have decided to make 4,50,000 cans. For utilizing the excess capacity, they also accepted the toys order and subcontracted only 15,000 number of toys. As 16,000 toys are required, out of that 45,000 we are producing in-house. So 15,000 we have subcontracted. At the year end, however, it was revealed that the order of the cans could be 4,80,000 numbers. You have manufactured only 4,50,000, but the cans order can be of 4,50,000 numbers if it was properly negotiated. How much loss has been suffered by the company due to improper prediction of demand and negotiation? As we have predicted improperly that 4,50,000 will be the cans order, we are manufacturing 45,000 toys and outsourcing for 15,000 toys, but we are not able to capture the 30,000 cans related order. Then what is the loss you are making? Now, how to know that loss? What I'm going to do is, I'm going to compare the situation where I'm making 4,50,000 cans, 45,000 toys, and 15,000 I'm subcontracting from the outside market. And the second situation where I'm making 4,80,000 cans and the remaining capacity, let's calculate what is the remaining capacity. If I'm making 4,80,000 cans, 30 cans per hour, so 16,000 hours are already used. I'm left with only 2000 hours. I can either use just 2000 hours for making toys in-house, or I can also buy the toys from the outside market, because 2000 hours is the indifferent point where buying and manufacturing will cost you exactly same. Hence, let's buy all the 60,000 toys from the outside market only, because the remaining then you have to buy from the outside market. So the calculation will increase. So what we are going to do, we are going to manufacture 4,80,000 cans and buy 60,000 toys. So there are two scenarios which we are comparing here. With prediction error, we are manufacturing 4,50,000 cans, 45,000 toys and 15,000 subcontracted. We calculated what is the hours required for the same and what is the profit which we are earning. Then without prediction error, we might have made 4,80,000 cans, and as the capacity is only 2,000 hours, we can completely buy all the toys from the outside market. And hence we are getting 10,30,000 as the profit. So if you would have not made that prediction error, you might have earned 67,500 rupees extra, which shows that your prediction error cost you 67,500 rupees. And this was our cans and toys related question. And now we are moving forward to our next topic, that is transfer pricing. Now, what is this transfer pricing all about? Let's say that in our organizations, we have two different departments. One department is making the parts of the bicycle, and the second department is assembling all the parts and selling the product in the outside market. Now, as the organization wants to evaluate the performance of both the departments, what organizations are doing is, organizations are making these departments responsible for their own cost, responsible for their own revenue. But the thing is, this part division is the only transferring the parts to this assembling division. Then how they will be able to earn profit? So what they will do, they will charge the profit, or they will charge a specific price from this division so that they can also earn profit. So whenever organizations are judging the departments on the basis of what is the revenue they are earning or what is the profit they are earning, all the divisions have to charge the profit with each other. And that is why there is a need of transfer pricing, so that we can evaluate the performance of both the departments in a much more better way. Okay? So for getting an understanding, for evaluating the performance of the divisions better, to improve the performance of the organization as a whole, we use this transfer pricing in between. Okay? This transfer pricing will not at all affect the profits of the organization specifically, but the thing is, it is actually going to help you to evaluate the performance of the divisions or the departments inside the organization. Okay? Now, how to set the transfer price? There are different methods with the help of which you can set the transfer price. The first one is cost-based transfer pricing method. Cost-based transfer pricing method means you're only and only going to charge the cost which you are incurring for making the product. So if our bicycle parts manufacturing department is transferring the parts to the assembly department, they are only going to charge the cost which they are incurring. And in this also we can have different scenarios. The first one is marginal cost method, where you are only and only charging the variable cost which is incurred for making the bicycles. Now think about it. If this which one is this? This is parts making department. So if parts making department is transferring the parts to the assembly department at variable cost only, so that they are not able to earn anything. And if they are not able to earn anything, how you will be able to evaluate the performance of them? So this variable cost related transferring happens in the organization only and only when if you have any excess capacity in the department. If this parts manufacturing department has any excess capacity, then only they are going to transfer that to at variable cost only. When they will have the excess capacity, when they are transferring their own parts in the outside market, their own business is only about transferring the parts in the outside market. But what happened is, this assembly department requires some of the part. So they are transferring some of the part to them also from their excess capacity. In that case, they can transfer on variable cost. Otherwise, so this department will not at all accept this situation where they are also not able to recover the fixed cost also. Okay. Next, absorption costing method. Here, you charge your variable and fixed cost, whatever you incurred in your transfer price. So whatever is your transfer price is set by charging your fixed and variable cost both. But here also we are not charging any kind of profit. The next one is standard costing method, where the preset standard is there. Now, whenever we transfer on the cost basis, there is no motivation for this transferring division to reduce their cost. Why? Because whatever cost they are going to incur, they are going to get that exact same amount. Hence, there is no as such motivation for reducing it. But when we set a standard cost method, we have pre-set a standard at which you are going to transfer the units. Let's say for transferring the parts to assembly division, we have set a price of 500 rupees. So if this transferring division are able to reduce the cost below 500, let's say 450 or 430, they are going to earn higher profits. But if they are increasing the price over and above, increasing the cost over and above 500, they are the one who is going to bear the losses. So this at least helps them to reduce the cost which they are incurring. Okay? Cost plus markup. Here the transferring division will charge the whatever cost they are incurring, plus with that they are also going to charge a specific percentage of that cost as the profit. Now think about it, if they are incurring a cost of 500 rupees and their margin is 10%, that means they are going to charge 50 rupees as their profit. But think about a situation where their cost is 600 rupees. 10% of it is equal to 60 rupees. That means whenever they are incurring the higher amount of cost, they are going to get higher margin. So what is the motivation here to reduce the cost? They'll to definitely try to increase the cost, because whenever the cost increases, their margin also increases. Okay? So even if cost plus markup gives the profit to the transferring division, but it doesn't motivate them to reduce the cost. They'll not reduce the cost, they'll definitely try to increase the cost, because there is a higher number of margin you're getting by increasing the cost. Next is two-part tariff method. What is two-part tariff method? If the departments are not able to negotiate a good amount of price, so what they can do is they can set the transfer price on the basis of variable cost only. So whatever is the transfer happening between the departments is happening at variable cost. But with that, our assembly division will also pay a fixed annual fee to this particular department, so that they are able to recover their fixed costs and earn some amount of profit. Okay? This is also a kind of situation which you can have under transfer pricing. Now, the next one is market-based transfer pricing. This is actually a good and better situation as compared to that of cost-based. Here, there is the motivation with the department to reduce the cost. Market-based transfer pricing, what it is, you're going to take the market price and that will become the transfer price between the department. Now, this situation is much more better as compared to cost-based. Why? Because this department is able to earn the profits, plus this department is getting the units at the same price at which they were getting it at the market. But the thing is, there is one more thing. Think about it, when they are transferring this department, transferring department is transferring the units to this department. In that case, they are not incurring any specific selling related cost. No marketing related cost is incurred for selling the units to your own organization's department. So can they charge that selling related cost also as already included in the market price from them? Answer is no. They will not accept it, and that is why in the market price you can have two different kinds of market price. You can either take the current market price directly, or else you can adjust the market price. Take the market price and reduce the selling expenses not incurred in the transfer. When you are transferring to your own departments in the organization, there is no as such selling expenses incurred, hence you can reduce that. Okay? The last one is negotiation based transfer pricing, the best one among all the three. In the negotiation-based transfer pricing, both the department's manager are going to sit together, and then on the basis of negotiation, they are going to find out a price which is beneficial for both of them. And that is how negotiation-based transfer pricing works. Here, the autonomy is higher with the departments, because in the other two methods, the top management is going to get involved to decide what is the transfer price which is going to be there. But in negotiation based, the full autonomy is there with the departments. They are the one who are going to decide what is the price at which they are going to transfer the units. Okay? Now, let's see our range of negotiation, that in which range we can negotiate while negotiating the prices among the transfer and transferee divisions. Okay? So, there is one transferor, the transferring division, and there is one transferee, the one who is going to receive the units. So transferor is the selling division and transferee is the purchasing division. Whenever range of price is decided, this selling division who is selling the units is going to decide the minimum price. Why minimum price? Because he is so ready with whatever maximum you want to give. You want to give 1,000, 10,000, 5,000, 50,000, give it. So he is not going to set a specific maximum price, because whatever maximum you want to give to him, he is ready with that. He is going to set a minimum price. Why? Because he will say that if this purchasing division will offer me anything less than this minimum price, I'll never accept the offer. Okay? So we are going to consider this minimum price. And how to calculate this minimum price? You'll consider all your relevant costs, because the relevant cost is the cost specifically incurred for transferring the units to the purchasing division. Hence, we are going to consider all the relevant costs here. Whether it be variable cost of manufacturing, opportunity cost which you have incurred by selling the units to the purchasing division rather than selling it in the outside market, You can consider that opportunity cost also, and the specific fixed cost incurred by transferring the units to the purchasing division. Okay? This is how you're going to set the minimum price. Now your purchasing division is very happy with whatever lowest amount you want to give the products to. But purchasing division will set, before going in the negotiation, he will decide what is the maximum amount I'll be ready to pay. Because over and above this maximum price, he will not at all pay a single penny to this particular department, to our selling department. So what is the maximum price he is going to decide? The maximum price will be decided on the basis of purchase price from the market plus cost of buying. Whatever units he is getting from this selling division, if he buys from the outside market, what is the price he has to pay? Plus for the cost of buying, what is the cost he has to incur? Let's say including both of them together, we are getting 550 rupees. So he will say that the maximum price which I will pay is only 550 rupees. But that is not the only thing which he is going to see. He is also going to see what is the ability of pay which is available to him. Let's say the bicycle which our purchasing division is manufacturing, that bicycle can be sold only for 1000 rupees. And to sell this bicycle, this assembly division is assembling the units. So for assembly also we might incur some cost, and the cost incurred by this division is itself 500 rupees. They are incurring their own variable cost as 500 rupees. So they are left with the margin of only and only 500. Now think about it. Their own margin is only 500. And if they give you 550 rupees as the transfer price, this will lead to negative 50 for them. They will incur a loss. Negative contribution will be there for them of 50 rupees. Will they accept the offer? Answer is no. They will say it is better for stopping the business itself. Let's do nothing. Because by doing something, we are incurring negative 50. It is better for us to do nothing. That is what is going to happen. So what this purchasing division will do, they are going to see what is the purchase price of that material in the outside market. Plus with that, they are also going to see what is the ability to pay with themselves. What is the ability or the margin available for themselves. So selling price minus their own variable cost will tell you what is the margin available. Whichever is lower is what they will be ready to pay. So 550 or 500, whichever is lower will become the maximum price. So here 500 will become the maximum price. There can be, why we are saying this whichever is lower, that let's say my margin available with me by considering my selling price and my own variable cost, I'm getting 600 rupees. But if I buy from the outside market, it is going to cost me that particular material which we are buying from the transferring division. This is going to cost me 500 rupees. Now think about it. Will I be ready to pay this complete 600 to the selling division? Answer is no. If the market is providing me the same product at 500, at max I'll be ready to pay 500 rupees, not at all more than that, anything else. Hence, you're going to consider only this. Whichever is lower is considered as the maximum price from the purchasing division's point of view. So selling division calculates the minimum price, purchasing division calculates the maximum price. This is something very important for you. Now let's move forward. What is the characteristics of transfer pricing? Goal congruence. It is very important for the organization to have a goal congruence between the division managers and the top managers. Sometimes the transfer pricing is so defective that the goals are not congruent. The goals are not aligning. Whatever this division is doing, that is helping them to increase their profit. But due to that, the profit of the next division is reducing a lot. And the profit of the organization as a whole is reduced a lot. So even if this division is getting benefit, and the whole organization is suffering due to that. So will that transfer price will help? Answer is no. We are setting the transfer price to improve the performance of both the divisions. And by improving the performance of both the divisions, we want to improve the performance of the company as a whole. But if it is not helping us to improve the performance of the company, that transfer price is a defective transfer price, not at all useful for us. Evaluation of divisional performance. We want to evaluate the performance of the division, but there should be no as such biasness that according to the situation, our top manager is setting the price such that this department is getting the benefit, but this department is incurring the loss due to the benefit given to that department. That will also not help you to evaluate the performance properly. Motivation value. It is important that whenever there is a transfer price set between the departments, it should lead to motivation for both the departments. If you are telling this department to transfer the units at variable cost only, they'll not at all get any benefit, or they'll not get any motivation to transfer the units, because they are not earning anything. Whatever is the cost which they are incurring, they are transferring it at the exact same amount. Hence, there is no motivation available to this department. Autonomy, freedom to select the transfer price for divisions. They should have autonomy to decide what is the transfer price they want to set for their own divisions. Okay? These are the characteristics of transfer pricing. Now let's move directly to the question, because now we are ready to see the question. Let's see what is happening here. X Limited is a diversified corporation with separate and distinct operating divisions. Each division performance is evaluated on the basis of total profits and return on divisional investment. The Division A manufactures and sells tabletop air cooler units. Division A currently produces 15,000 units. So let's try to draw what is happening in the question. Okay? We have Division A, which is manufacturing tabletop air cooler. And as of now, we are manufacturing 15,000 units. Division A managers believes that sales can be increased if the unit selling price of the tabletop air cooler is reduced. So a market research study conducted by an independent firm at the request of the manager indicates that a 15% reduction in selling price, that is total rupees 60, can get reduced in the selling price, and this will help you to increase the volume by 16% or 2,400 units. The reduced price applying to all the units, whatever is the reduction in the price which is happening, this is going to apply to the all units. So as of now, we are selling 15,000 units. If I'm able to increase 16% of 15,000, 15,000 into 16% will give you 2,500 only. So we will be able to increase the units by 2,400, and 17,400 units can be sold. But whatever is the selling price is going to be reduced by 15% for this particular situation. Okay? And they are saying that the reduction is going to happen of 60 rupees. From here to here, there is a reduction of 60 rupees. Let's see what is happening next. Division A has sufficient production capacity to manage the increased volume without increase in fixed cost. As such, there will be no increase in fixed cost if you are increasing the units. At present, Division A uses a filter in each of its units that is purchased from the outside supplier at a cost of 70 rupees. So for air coolers, we require filter. That filter is bought from the outside market at rupees 70. Next. The manager of Division A has approached the manager of Division B regarding the sale of a filter to Division A. The Division B currently manufactures and sells exclusively to outside firms a filter that is similar to the one used by Division A. So there is one Division B also. What Division B is doing? Division B is the one who is manufacturing filters. But whatever filters he manufactures, this division sells all of them in the outside market only. But what Division A is thinking, that we should buy the filters from our own division itself. So this Division A is reaching out to Division B for filters, so that filters can be transferred from Division B to Division A. The specification of Division A filter are slightly different, which would reduce direct materials cost of Division B by rupees 5 per unit. So for making the filters for this particular division will require lesser material cost. There will be reduction in material cost by 5 rupees per unit. In addition, the Division B would not incur any variable selling cost in the unit sold to Division A, as we are selling inside only. We are not incurring any as such selling cost for this particular transfer. The manager of Division A wants all the filter it uses to come from one supplier only, and has offered to pay 50 rupees for each filter to B. So as Division A wants filter for all the units which they are producing, but they want all the filters to come from one supplier only. They don't want to buy half from outside and half from inside. So what they are offering is, they are offering 50 rupees as the price to Division B. They are buying it from the outside market at 70. They are offering only 50 rupees to Division B. Plus with that, Division B is also not going to incur any kind of selling cost when they are transferring the units inside. Division B has the capacity to produce 75,000 units and currently sells only 65,000 units in the outside market. So in the outside market, 64,000 units are sold out of the total capacity available with the B, which is 75,000. So the extra capacity available here is 11,000 units. Next. Selling price is given for Division A and B. Division A is selling coolers in the outside market at a price of rupees 400. Division B is selling the filters in the outside market at rupees 100. Manufacturing cost, filter to division A is buying from the outside at 70 rupees, and the other manufacturing cost and marketing cost applicable to division A is 112 and 18. 112 and 18 is the manufacturing and marketing cost applicable for division A, and 30 and 6 is the cost applicable for division B. Should division A go for the increased volume of sales from a financial perspective? Justify your recommendation with appropriate figures. So should we go for the 17,400 units? Increasing volume is a good choice, but the thing is selling price is also getting reduced. What was the selling price earlier? 400 was the selling price applicable. Now it is reducing by 15%. 400 into 15% is reduction of 60 rupees. So earlier the price was 400 rupees. Now it is getting reduced by 60. That means only 340 rupees is what you are going to get the selling price. So if this is the selling price and this are the total costs incurred by the organization, 112 plus 18 plus 70 for the filter. So 112 plus 18 plus 70 is equal to 200 is the cost incurred by the organization and the division. So 400 minus 200 will give you 200 as the contribution here on a per unit basis, and 340 minus 200 will give you 140 as the contribution on a per unit basis. And the total contribution is 17,400 into 140 will give you 24,36,000 as the contribution, and 15,000 units multiplied by 200 rupees per unit will give you 30 lakh as the contribution. Okay? So here when you are selling 15,000 units, you are earning 30 lakh. But when you are increasing the units, your contribution as a whole is reduced. Hence that is not at all beneficial for us. For division A, selling 15,000 units is a better option. So first part of the question is done. Now let's see what is happening in the next part. If B should supply the entire requirement of A after considering one above, what is the minimum transfer price that B will agree? So you have to set a minimum transfer price when all the units required by A. What is the number of units required? As A is making 15,000 units, so division A will require 15,000 coolers, 15,000 filters also. So that filters will be bought from division B. And if that is what is happening, then what is the minimum price division B will charge? Let's calculate that. So the first thing that division B will charge is I already told you that whenever division B is the selling division will set the minimum price, and minimum price is decided on the basis of relevant cost. What is the relevant cost? The cost incurred specifically for this division A. First we are going to incur the variable cost. What is the variable cost here? 30 rupees is incurred by division B for manufacturing the product, and 6 rupees is the marketing cost. The question already told us that there is no selling cost as such incurred for transferring inside. Hence 6 rupees will not be incurred. Only thing which you are going to incur is manufacturing cost of 30 rupees. But in that 30 rupee also, your direct material cost of 5 rupees will get reduced. Hence only 25 rupees is incurred as variable cost on every unit, multiplied by we have to transfer 15,000 filters. So this is the variable cost which we are going to consider here, and the total is 3,75,000 rupees as the variable cost. The next thing which you are going to consider is the fixed cost. Now what is the fixed cost amount you are going to consider? There is no as such fixed cost incurred here. Think about it. Is division B incurring any specific fixed cost for division A? As per the question, there is no as such fixed cost mentioned. Hence no need to consider this. So what to consider next? If you notice, as per division B, they have excess capacity of only 11,000 units. But as division A wants total 15,000 units, they have to take some of the units from the outside market and sell it to the division A. They'll not be able to sell 64,000 units in the outside market. They will only be able to sell 60,000 units. Why? Because out of 75, 15 will be transferred in-house and remaining 60 can be transferred outside market. That means division B is going to lose 4,000 units of outside market. Okay? So if division B is losing 4,000 units of outside market, they'll definitely charge the opportunity loss for the same. They'll definitely charge the opportunity loss. And what is the opportunity loss of the same? 4,000 units multiplied by whatever contribution they were earning from the outside market. So 100 is the selling price in the outside market and 36 is the cost incurred for the outside market. 100 minus 36, they would have earned 64 rupees per unit for 4,000 units as the contribution. But they are not able to earn that just because of transferring the units in-house. Hence, the 64 rupees of opportunity loss will be considered here. 64 into 4,000 will give you 2,56,000. Okay? So total variable cost plus opportunity loss of 2,56,000, total 3,75,000 plus 2,56,000, which is equal to 6,31,000 is what we are going to charge as the minimum transfer price from purchasing selling division's point of view. Now 6,31,000 is charged for total 15,000 units. That means for every unit we are going to charge minimum 42.067. Okay? This is the minimum price which division B will accept. Now let's see what is happening next. So first the question says you need to find out what is the minimum price for transferring the units to division A. Given that single transfer price is applicable for all the units, we calculated a single transfer price, that is 42.067. Is B likely to accept A's proposed transfer price? What is the price A is proposing? A is proposing 50 rupees as the price. 50 rupees is much more higher as compared to 42, the minimum price for division B. Hence, division B will definitely accept the order at 50 rupees per unit. Okay? Done. Now, in the interest of X Limited as a whole, now you have to think from the company's perspective, what should be the best strategy in terms of sourcing and selling the filters. Work out a suitable transfer price for the management to convince A and B. Assume that X Limited is not constrained about avoiding partial supply. A Limited was saying that I'll not accept any partial supplies. If I'm buying filters, I'll buy all the filters from one market itself. But your company itself is saying that partial supplies is allowed. No one will listen to division A. We will accept partial supplies. So partial supply is going to be accepted now. And if that is the case, then we have to evaluate three different scenarios. What are the three scenarios? The first scenario is division B is selling in the outside market. Division A is buying from the outside market. No one is having any transaction between each other. This is the first scenario. Second scenario, division B is selling 64,000 units in the outside market. Remaining 11,000 capacity they are transferring inside, and the remaining 4,000 units which is required by division A will be bought from the outside market. Third situation, division B is selling 60,000 units in the outside market and remaining 15,000 units are transferred to division A. So these are the three situations which we are going to evaluate. We are going to consider all the three related costs and then we are going to decide which one is beneficial for us. Okay? So for the first, I already told you that out of these two options, which one is beneficial? 15,000 units is beneficial because here we are earning higher contribution. Then the minimum transfer price was 42, and as A is offering 50 rupees, hence it is beneficial for B to accept the offer. Now we are going to evaluate on the basis of company as a whole. Hence, we are taking different alternatives. The first one is division A is buying 15,000 filters from the outside market. Division B is selling 64,000 units in the outside market. So this is the contribution which we are running. If division A is buying 15,000 units directly from division B and division B is selling 60,000 units in the outside market, this is the contribution which we are going to earn. And the third strategy, partial buy is allowed. So 11,000 filters are bought from inside and remaining 4,000 are bought from the outside market. Then this is the profit which we are going to have. And the highest profit among all the scenarios is this one. Hence, this is the strategy which we are going to follow. Okay? So the best alternative for the company X Limited is to go for a situation where partial buy is possible. A is buying 11,000 inside and 4,000 from the outside market. Okay? Done. Moving forward to our next part. And this is the only question which we have seen for transfer pricing, and this much is enough. You might have got an understanding about what is happening in the transfer pricing. Now let's move forward to target costing. Now what is target costing? Target costing says that the traditional way was design the product, develop the product and calculate the cost, add whatever profit you want to earn and then decide the price. But as of now, as of current situation, there is huge competition. The customer is price sensitive and companies cannot increase the prices freely. They have to accept the price which is applicable in the market as a whole. So let's say the market sets a price of 100 rupees. My product and similar kind of products which I am selling is sold at 100 rupees only. I can't charge more than that. So this is the price which is decided by the market. Then comes the profit. Profit is decided by the investors of the organization. They are going to decide what is the profit which we want to earn. Let's say 30 rupees is the profit. So 100 rupees is the selling price, 30 rupees is the profit which you want to earn. That means 70 rupees is the only remaining cost with you. Hence, you can have a target cost of only 70. If you increase the cost, you're going to suffer with your profit. You'll not be able to earn the profit which you want to. ठीक है, because selling price तो you can't compromise as of current situation. You have to charge whatever the market will accept. ठीक है, hence the only thing which is going to get compromised if your cost is increasing is your profit. Hence, we have to control the cost. We have to set a target cost which we have to definitely achieve. That is what target cost is all about. Setting a target cost on the basis of what is the selling price applicable and what is the profit which we want to earn. Okay? Let's directly see one question related to this. And before the question, this practical summary is actually very helpful for you. Computation of target time required to achieve target profit. In this situation, your target profit will be given to you, but you have to calculate what is the time required on total basis, which you have to, let's say labor hours are required for making the product. Then what is the target time in which you have to produce all the units to earn this particular target profit? That is what you have to calculate. So you're going to start with the target profit which is already given to you, the fixed cost which will be mentioned in the question itself, and this profit plus fixed cost will give you contribution. Then with the help of this contribution, as we already know the number of units, we are going to calculate the contribution which we have to earn on a per unit basis. Okay? Now, selling price will be given to you in the question, minus contribution per unit will give you the variable cost per unit. If you reduce the direct material cost per unit from here, you'll get your variable conversion cost. Conversion cost is what? Converting your material to your final product requires some conversion work, and that is done by labor and the overheads. Hence, your variable overheads and labor is considered as variable conversion cost here. Now, after calculating your variable conversion cost, we are going to subdivide this into labor cost and variable overhead cost. How labor cost is made up of number of hours required for making one unit multiplied by labor rate per hour. And number of hours required for making one unit multiplied by variable overhead rate per hour will give you variable conversion cost. So, this amount we already calculated here. And the labor rate per hour, variable overhead rate per hour, the question will already provide you. So the only thing which is left to calculate is number of hours. Hence, you can calculate the number of hours with the steps. So what to do here? First, calculate your contribution, the total contribution divided by the number of units to know your contribution on a per unit basis. Then calculate conversion, variable conversion cost. For calculating this, take your selling price, reduce the contribution. This will give you variable cost, minus direct material will give you variable conversion cost. Now, conversion cost is made up of labor and variable overhead. So, with the help of labor rate per hour and variable overhead rate per hour and the total contribution per unit, you can know what is the number of hours required for making one unit. Multiply it with the number of units which you want to manufacture. This will give you the number of hours in total required for making the whole units to earn the target profit. Okay? Next, computation of cost gap or cost reduction required to achieve target cost. For this, first calculate what is the target cost, how to calculate target cost. Take your selling price which is applicable, reduce it from the target profit to get your target cost. After getting your target cost, see what is the current cost applicable for you. What is the current cost which you are actually incurring. Then your current cost minus target cost will give you the what is the cost reduction which is required in your case. Okay? Let's move forward and see one question related to target costing. Cello company has the capacity of producing 80,000 units and presently selling only 20,000 units at 100 rupees per unit. The demand is sensitive to selling price, and it has been observed that for every reduction of 10 rupees in the selling price, the demand is doubled. So what is happening here? We are selling 20,000 units as of now. 100 rupees is the selling price. Now, if I double the demand, if I want to double the demand, that will become 40,000. But for doubling it, we have to reduce the selling price by 10 rupees. So our selling price will become 90. And if I double it again, then 40,000 will become 80,000. And your selling price will again get reduced by rupees 10 and will become 80 rupees. Okay? Why stopped at 80? Because this is the maximum capacity available with us. Hence, stopped at 80. What should be the target cost at full capacity if margin on sales is 25%? So for this full capacity, we already know that the selling price is going to be 80. And margin, we want to earn 25% on sales. So 80 minus 25% will give you a target cost of 60 rupees. So if you are selling 80,000 units, your target cost becomes 60 rupees. What should be the cost reduction scheme at full capacity? Whenever they want to calculate cost reduction scheme, they want us to compare our current cost with the target cost and calculate what is the cost reduction required. Okay? So what should be the cost reduction scheme at full capacity? At full capacity, so your target cost is 60. If at present, 40% of the cost is variable and total fixed cost is 36 lakhs. So total fixed cost is already given to you as 36 lakh. And as per your current capacity, what is the current capacity? 20,000, they are providing us that 40% of the cost is variable. So I already know that 100 rupees is the selling price as of now. This is selling price and we have to calculate 40% of cost. If 100 rupees is the selling price and 40% of cost is going to be your variable cost, how to calculate 40% of cost? I don't know the cost itself, but you already know what is the margin you are going to earn. That is 25%. As specifically for present level, they are not providing any margin. We will assume that 25% margin is applicable for current situation also. Okay? So 100 minus 25% will give you 75 rupees as the cost. Okay? So 100 rupees was the selling price, 25% was the margin, hence 75 rupees becomes your cost. Out of this 75 of total cost, 40% of cost is going to be variable. So 75 into 40% will give you 30 rupees as the variable cost on per unit basis. So you already got your 30 rupees per unit as the variable cost. You already know your fixed cost. For full capacity, you need to calculate the cost reduction scheme, right? So for full capacity, what is the variable cost you are going to incur? Full capacity is 80,000 units multiplied by 30. As the variable cost on per unit basis. This will give you 24 lakh. So 36 plus 24, that is equal to 60 lakhs is the total cost, which we are incurring currently for our 80,000 units. And what is the target cost for 80,000 units? 60 rupees. 80,000 into 60 will give you 48 lakh is the target cost. So current cost is 68. And target cost is 48. So we have to reduce the cost by 12 lakh rupees. Hence, this is the cost reduction target. Okay? 12 lakh rupees. And if you calculate on a per unit basis, this is going to be 15 rupees. Now, let's move forward to the next part. If the rate of return desired is 16%, what will be the maximum investment at full capacity? Rate of return is 16%. Okay. So at full capacity, they want us to calculate the maximum return. I already know that we are making 80,000 units and 80 rupees is the selling price. 25% is the profit. So 80 into 25% will give you 20 rupees as the profit multiplied by 80,000 units. The total profit which you are earning at full capacity is 16 lakh rupees. They are saying that our return on investment is 16%. What is return on investment? Whatever is the return or the profit which you are earning, divide it by investment, you will get your return on investment as 16%. Now in this question, I already know what is the return which we are earning, and that is 16 lakh rupees. I don't know the investment. I already know the 16%. Okay? So 16 lakh divided by 16% will provide me the investment. So investment is going to be 1 crore rupees. Done. That is what you need to calculate. So, if rate of return is desired is 16%, what is the maximum investment? You have to invest 1 lakh rupees for earning 16% rate of return. Okay? Done. With this, we completed our target costing related question also. And now we are moving forward to product life cycle. What is product life cycle costing? We are going to consider the life cycle cost related to product. When we say product, we are meaning the product which we are manufacturing. Let's say I'm manufacturing calculator, and this calculator, I can sell this particular calculator for 10 years. The exact same calculator can be sold for 10 years. Then what is the units, number of units you can sell? What is the selling price at which you can sell? What is the total cost incurred from the starting, from the research and development of the product till the time you are scrapping the units which you are held, which you are left with the stock, the machines are scrapped for making this calculator, the whole cost. Consider all the cost, consider all the sales which you are going to have for the whole life of this product, and then calculate what is the profit which you are going to earn from the whole life of this product. That is what product life cycle costing is all about. Okay? So what is the steps followed here? First, estimate the total units over product life cycle. That what is the number of units you are going to sell. Let's say the product which we are manufacturing is going to work for 3 years. So for the 3 years, this is the number of units which we are going to sell. And the total number of units is 45,000. Then calculate the revenue for full life of product. What is the total revenue which you are going to earn for the full life? Total units which you are going to sell for the full life multiplied by the selling price per unit. Now it can happen that for every year your selling price is different. And if for every year your selling price is different, then for every year separately you have to multiply the selling price. But mostly it is going to happen that for every year the selling price is exactly same. And if it is exactly same, you can take the total units and directly multiply the selling price. Okay? Next, Identify and accumulate all costs. After calculating your total revenue, you're going to calculate total cost. For this, you're going to consider the pre-production cost, the cost which is incurred before production, like your research and development, design cost, testing cost, prototype cost, all the pre-production costs will be considered here. Then the production related cost, your material, labor, manufacturing, overhead, processing cost, post-production cost. After producing the units, you're going to do marketing and advertisement, distribution, customer service, warranty, and after sales service, admin cost, whatever cost you're incurring after production, consider that. And end of life cycle cost. After the end of life of the product, there is a disposal cost of the product itself, the machine, then product withdrawal cost, withdrawing the product from the market, that is also a kind of cost. Consider all of these costs and this will give you the total life cycle cost incurred. If the question wants us to calculate cost per unit, you can take the total life cycle cost and divide it by the number of units, the total number of units you are selling for the life. Determine profit over life. How to calculate profit? Total revenue minus total life cycle cost will give you the profit. Okay? Now, so if the question is asking us product life cycle cost, then remember that you are making only life cycle cost related information. You are not preparing the revenue and calculating the profit. Calculate only, show product life cycle only. If they are specifically asking us the operating income or life cycle cost and profit statement, then you can consider the revenue, cost and profit, all of them in the statement. Fixed expenses given as per annum or per year. Now this is something important. They can make you they can confuse you on this fixed cost. Remember that if the fixed cost is given on per annum or per year basis, you are going to multiply this with the number of years of life cycle which you have. Calculation of batch related cost. Total number of units sold of the product divided by units per batch into cost per batch. If you are having batch related cost, you need to first calculate what is the number of batches you are going to produce. So total number of units divided by units per batch will give you the total number of batches which you are producing, multiplied by cost per batch will give you the total cost applicable for the batches. Okay? When year wise information is given separately in question, consider making life cycle cost statement with year and total. They can give you for year 1, for year 2, for year 3. They are providing you for all the years separately. Like in every column, they are giving you information for year 1, what is happening for year 2, what is happening for year 3, what is happening. Then it is beneficial for you to also make year 1, year 2, year 3 column, and then there is a total column for calculating the total life cycle cost and income. Okay? Commission given in percentage should be separately calculated because this can change due to change in selling price. This is something very important, and for this we are also going to see one question. Let's see question number 148. RRS Limited has developed a new product which is to be launched soon. The company anticipates to sell 1,25,000 units at a selling price of 400 per unit over the product life cycle of 3 years. So in the 3 years, we are going to sell a total 1,25,000 units at a price of 400 per unit. Then they are providing us the research and development cost, manufacturing cost on a per unit basis. So for calculating the total cost, I'm going to multiply this with the number of units. Then this fixed cost is applicable on a per year basis. Multiply it with the number of years, that is 3. Marketing cost per unit, here they have commission. Commission has to be calculated separately. Okay? So 4% commission on sales is applicable. So our selling price is 400. 4% of it is equal to 16. So out of this 90, 16 is the commission. So 74 rupees is the other marketing cost. This is very important to differentiate or separate both of them. Okay? Multiply this also with the 1,25,000 units and multiply this also with 1,25,000 units. Then fixed marketing cost is on per year basis multiplied by 3. Here also you are going to multiply it by 3. Warranty expenses, 4 replacement parts for every 50 units multiplied by 30 per part. So 4 replacement parts is required for 50 units. Then for 1,25,000 units, what is the replacement part required? This will give you the total number of replacement part, and every replacement part will cost you 30 rupees. Okay? This will give you the total cost. Now, in the question they are mentioning only to assess the life cycle cost. They don't want you to calculate the profit. They want only and only the cost. Hence, consider only the cost calculated here. Okay? So you are going to consider this 3250, 175 into 1,25,000, 12,75,000 into 3. This and this. This will give you the total life cycle cost. And we are getting 444,96,000. Okay? Let's move forward to the next one. Evaluate the revised life cycle cost if the company increases sales by 12% through 5% reduction in sales price along with increase in fixed manufacturing cost by 1,20,000 per year. Now let's see what is happening. Okay? I will not remove everything. I'll remove only the things which are not required. That is, the units are changing. Hence, I should remove the units related information. Here also, I'll change the units related information. Now, so what is happening? We are increasing the sales by 12%. So the units which you were selling earlier was 1,25,000. Now you are increasing it by 12%. So this will become 1,40,000 units. For doing this, you have to reduce the selling price by 5%. So your selling price of 400 will get reduced by 5%. We are getting 380 rupees as per unit selling price. Okay? Now, if I calculate the cost now, this will remain exactly same. Research and development will not change. For 1,40,000, your manufacturing cost will be 175 into 140. Now, as your selling price has changed, you have to take 4% of commission. Your commission cost will also change. 380 into 4% will give you 15.2. Now you're going to consider 15.2 rather than considering 16, and this will remain 74 only. No changes in this. The changes are happening only and only in your commission. Okay? Now multiply this with 1,40,000 and this with 1,40,000. Okay? Next. And yes, with that, for your fixed manufacturing cost, this is going to increase by, fixed manufacturing cost is increasing by 1,20,000 on a per year basis. So I'll first increase this by 1,20,000 and then multiply the whole amount with 3 years. Okay? Next, fixed manufacturing cost and admin cost. And for selling warranty also, you're going to consider 1,40,000 units here. Okay? Next, consider this cost, and this will give you the total cost applicable for your this scenario, second scenario. Then advise whether the company should go for reduction in sales price or not. This is not only dependent on the cost, but as of now, in both the two scenarios, we are calculating only the cost. So in the third scenario, I'm going to calculate the profit or revenue of both the situations, cost of both situations, and profit of both situations. Whatever situation is giving us the highest profit, that is what we are going to refer. So first, we calculated the second scenario related cost by considering 1,40,000 units and your commission as 380 into 4%, other variable cost as 74, and other things remain exactly same. Now, so we are going to consider the revenue in both the situations and the cost in both the situations and the profit in both the situations. Whichever situation gives you higher profit, that is the situation which you are going to prefer. Okay? Done. Now let's move forward to the next scenario, that is asset life cycle costing. What is asset life cycle costing? Here we'll calculate the life cycle cost of asset. What is asset? Let's say we have bought a printer for our organization. Printer is an asset. But before buying the printer, I have two alternative options available, that I can buy this printer A or printer B. So whenever we have two different alternatives, we evaluate the cost of both the alternatives. And whenever we evaluate the cost of alternatives which are assets, we evaluate full life cycle cost to understand in the whole life of the asset, which asset is going to cost me higher. And then according to that, we are going to decide which asset to buy for. Okay? Asset lifecycle costing means calculating total cost of owning an asset. From the day it is purchased till the day it is disposed of, we are going to consider each and every cost here. So asset lifecycle cost is all about buying cost, using cost of the asset, maintaining cost of the asset, and removal cost. All the costs will be considered here. Used for selecting the most economical asset, that out of the two assets available, which one is best for us, which one is leading to lesser cost, by considering total life cycle cost and time value of money. Why here but not in PLCC? If you notice here, we are also considering time value of money. What is time value of money? Considering your present value factor, present value annuity factor will happen in this case. But we are not considering that time value of money in product life cycle costing. Why? Because in product life cycle costing, our main aim is not to evaluate two different alternatives. We only want to see what will happen with this product on the basis of what is the revenue this product is earning in the whole life and what is the cost this product is having in the whole life. So as such, in product life cycle costing, there is no as such concept of time value of money. Mostly for evaluating the alternatives which have different lives. It can happen that your printers can have different lives, different types of cost, incurred at different time periods. Hence, everything is going to be different for these two alternatives. Hence, it is important for us to consider time value of money. And we are going to consider time value of money when the question is providing us that. If the question itself is not providing us that, we won't be able to calculate. How question will provide you time value of money? They'll provide you any type of percentage, plus with that, they'll also provide you the time period at which the cost is incurred. Okay? So, That percentage can be written as present value factor, cost of capital, discount rate, required return, NPV basis, or percentage cost of capital. They can use any name. Plus with that, they'll also provide you time period at which you are incurring the different kinds of costs and the time period for earning the different kinds of revenue. Okay? Now, let's see what are the steps applicable for your asset life cycle costing. First, read the question and identify the objective, that whether we are comparing two different assets or not. Then list all relevant cost over entire life. Whatever cost you are incurring, whether it be purchase or acquisition cost of asset, installation cost or transportation cost, operating or running cost, maintenance cost. Now understand that your purchase and acquisition, installation and transportation is a one-time cost incurred once when we are purchasing the asset. Then your operating and running cost, maintenance cost, repair cost. Repair is also every year kind of cost. All of them are incurred on every year basis. Then your labor cost. It's not necessary that repair is happening on every year. This can be like repair is happening whenever the machine is not working, right? So whenever machine is not working, we are going to go for repairs. Okay? But maintenance and operating and running cost is incurred every year. Then labor cost related to operation is going to be every year. Then fuel, power, electricity is going to be incurred every year. Disposal cost or scrap value, you're going to get at the end life only. One time type of thing. Overhaul cost, if any. What is overhaul? When you are restoring your asset or improving your asset, this is done once in the lifetime. And if you are doing that once in the lifetime, you're going to consider that particular time period at which you are going to do it. And any terminal cost at the end of the project life cycle, there can be some cost which is incurred. That cost is a one-time cost which you are going to consider. Include only relevant cost. Only those costs which differ between alternative is the one which you are going to consider. Other things are completely irrelevant, hence not to be considered. Arrange year-wise cash outflow and inflow. Now something very important. Whenever you are comparing these two assets, you are going to compare only and only cash related things. Cash inflow and cash outflow. No non-cash things will be considered here. No depreciation is considered here. Why? Because you are already considering the full cost. Why to consider the depreciation again? Think about it. So we are going to consider only and only the cost and the cash outflow and inflow related thing. No non-cash things will be considered here. Okay? Now, write the particulars. Write your year at which you are incurring that particular cost or getting some revenues. Then, what is the cash flow which you are having? The present value factor of the cash flow applicable and the present value which you are getting. Now, how to calculate this present value factor? Let me just show that to you so that you can get an understanding. This is also applicable for some questions of your make or buy, accept, reject. Hence, I have included that in the summary also. Here we have. So, present value factor. Number used to convert one future cash flow into today's value is known as present value factor. Like, let's say if you are going to receive 1000 after 3 years and the interest rate applicable is 10%, then what is the present value of this 1000 after 3 years? Now for if you are getting 1000 after 3 years, that means if I would have got 1000 today, I would have earned 10% for the 3 years. But the thing is, as I'm getting 10,000 after 3 years, if I calculate the present value of it today, then that is going to be lesser than 1000 rupees because the interest is also applicable on that amount, right? So, for this, first we calculate the present value factor by taking 1 divided by 1.1 in your calculator. This will give you the first year's, if you press equal to, you'll get first year's present value factor, then press equal to second year, press equal to third year. Third year is equal to 0.7513. Now this 0.7513 shows that if you are getting 1 rupees after 3 years, then the present value of that today is 0.7513. And if I want to calculate for 1000, I am going to multiply this with 1000. This will give me 751.3 rupees as the present value of this 1000 rupees received after 3 years. Okay? Then there is one present value annuity factor. Present value factor is applicable when you are going to receive or going to incur a cost only once in a particular year. But if you're going to have recurring cost or recurring income of an exact amount, then we use this present value annuity factor. So number used when same amount of cash flow is happening every year, this type of cash flow is known as annuity. For annuity, use present value annuity factor. Okay? So if 1000 rupees received every year for 3 years, you are receiving 1000 every year for 3 years and 10% is the interest rate applicable. How you are going to calculate present value annuity factor? by saving the values in the memory. So first clear the memory and take 1 divided by 1.1, press equal to, this will give you the first year value. Save it in the memory. Second year value, press equal to, you will get second year value, save in the memory. Press equal to, you are going to get third year's value, save it in the memory. So for the 3 years together, our present value annuity factor applicable is 2.4869. So this is what we are going to consider, 2.4869, or else you can also convert it into 2 points as 2.49 and then directly multiply this with your 1000 rupees. This will give you the amount of money, of present value money of the 1000 rupees you are receiving on the 3 different years. This is present day, this is after first year, after second year, after third year. You are receiving 1000, 1000, 1000. That means in total you are receiving 3000 rupees if I talk about the exact amount. But if I take all of them to the present value, then their total present value is 2486 or 2490. Okay? This is the present value which we are getting. So there are two things. Present value annuity factor used when you have recurring expenses or recurring income of the exact same amount. Present value factor is used when you have the one-time expense or one-time income. Okay? Let's see what is happening next. So we were discussing about asset lifecycle costing, right? And here we have already seen up to this point. So we have to arrange the cash flows by particulars, write the year in which you are incurring that expense, write the cash flow, take the present value factor or present value annuity factor, calculate your present value by multiplying the cash flow with the present value factor. Okay? If revenue earned from the machine or project is also given with cash outflows of machine, calculate net present value. Now here if you notice, I am only considering the cost. But the thing is, if the question is also providing you revenue which you can earn from the help of machine, consider that revenue also. And on the basis of net present value, you are going to decide which one is beneficial. So if the revenue is different from the two alternatives, I have to consider revenue also. So present value of cash inflow which you have minus present value of cash outflow will give you the net present value. If running or maintenance cost is same for every year, rather than using present value factor, what you are going to use? Present value annuity factor. Okay? Discounting factor can be given like this, but remember that if there is percentage plus time, then only discounting can be used. If you don't have time, if you don't have percentage, where you will apply discounting factor. Okay? If discounting factor is given, calculate present value, otherwise total cash flow will be taken. If they are not at all present providing you this percentage, how you will calculate present value? You will not be able to calculate it. Then consider the total cash flow which is happening on year basis without considering the present value. Okay? Plus with that, if the years are different for the machines, let's say one machine is for 10 years, the life of the machine is 10 years and the second machine has a life of only 5 years. I can't compare these two machines with each other because their lives are completely different. And if the lives are different, we calculate cash flow on a per annum basis and then we decide which machine to go for. Okay? Now something very important, the exact same thing is applicable for present value also. If both assets have exact same life, compare the total present value cost. Whichever has the lower present value, that is the one which you are going to refer. But if both assets have different lives, then in that case you are going to calculate equivalent annualized cost, which is also known as annualized life cost. How to calculate this? Here though, whenever you have different lives, what you do to calculate cash flow per annum, let's say my one asset has 10 years of life. Take the total cash flow of that asset divided by 10 years. Second asset has 5 years life. Take the total cash flow divided by 5 years. This will give you cash flow per annum. But the thing is, if I am calculating on a present value basis, when I am calculating annual cash flow, I will not divide by the exact number of years. I will divide by the present value annuity factor of that particular year. Because the value which you are writing above, the total cost is also present value. Hence, the value which you are going to write in the denominator, that is also going to be present value. So, to denote the life, you are going to take the present value factor of that particular life to calculate your equivalent annualized cost. And this is calculated when the lives are different. Okay? Now, there can be a situation where depreciation and tax rate is given. I already told you that depreciation is a non-cash thing. But tax rate, if they are providing you tax rate, and the first situation is no revenue or contribution as such is given in the question, they are only providing you cash running or maintenance expenses. Then in that case, you are going to compute operating cash flow, effective operating cash flow. For this, you are going to take both the machines which you have, their operating expenses which is given to you, and then reduce the tax saved on the running and maintenance cost. You need to understand one thing. Whenever we earn income, we have to pay the tax for it. But whenever we have some kind of expenses, that helps us to save the cost. So here, save the taxes. So here, as we are having cash running or maintenance expenses, that expenses are helping us to save the taxes. Okay? Plus with that, even if your depreciation is non-cash expense, but depreciation is considered for calculating the taxes, hence depreciation is a cost which is considered for taxes. Hence, that will help you to save some taxes. So you're going to reduce that tax saved on depreciation also. This will give you effective operating cash outflow. Use this as your per annum cost applicable. Rather than using directly cash running or maintenance expenses, use this effective operating cash outflow as your per annum cost. Okay? Now, if the question is also providing you revenue and contribution related information, all other expenses are also there, then you're going to start with revenue. Consider all the expenses, including depreciation, to calculate your profit before tax. In this profit before tax, charge the taxes. Why we consider depreciation? Because depreciation will help us to reduce the taxes. Hence, we have considered depreciation for calculating profit before tax and reduce the taxes. Now, after reducing the taxes, we can get profit after tax. In this profit after tax, add your depreciation again. Why? Because it is a non-cash expense. For operating expenses or for evaluating the assets, we are not going to consider the non-cash expense. Hence, we have added it back. So, why to reduce and then to add? We reduce because we want to calculate the tax, including this. And we are adding because this is a kind of non-cash expense to get our operating cash inflow. Okay? After getting your operating cash inflow, this will be considered for every year calculations. Done. Moving forward, to years are different for each project or machine alternator. So if years are different and one time or one-off investment is mentioned. Now if the question says that I am doing two different projects, project 1 and project 2. This is a very rare kind of situation, but if it happens, then they are mentioning you project 1 and project 2. Here the life is 10 years, here the life is 15 years. If they are specifically mentioning that this is a kind of one-time project, we are not going to do this projects regularly. Okay? In that case, we are not going to decide on the basis of number of years. We are only and only going to decide on the basis of total profit which we are having from these different projects. Okay? If it is a one-time situation, specifically mentioned in the question, then you are going to consider the total present value only. You are not going to consider the years, even if the years are different between alternatives. Only when they are mentioning that the project is repeatable, you are going to do it on every regular basis. Then in that case, calculate equivalent annualized cost if the years are different for the situation. If the question doesn't mention anything, you are going to consider it as a repeatable situation. Okay? Now let's move forward to our questions. Question number 154 is what we are seeing now. Pawson Limited supports the concept of lifecycle costing for new investment decisions covering its engineering activities. The company is to replace a number of its machine and the production manager is to decide between the BX machine, a more expensive machine with a life of 12 years, and the SW machine with an estimated life of 6 years. If the SW machine is chosen, it is likely that it would be replaced at the end of 6 years by another SW machine. The pattern of maintenance and running cost differs between two types of machine and relevant data are shown below. So the lives are different. And the question is specifically mentioning that it is going to be replaced with a new machine when 6 years is completed. That means it is a kind of repeatable situation. And if you are not able to find anything that whether it is repeatable or one time, not mention anything, you are going to consider repeatable only. Okay? So if it is repeatable and the life is different, that means you need to consider equivalent annualized cost. So BX and SW is the machine given to you. Purchase price, trade-in value. What is trade-in value? Scrap value at the end of the life. Then we have annual repair cost, overall cost on a per annum basis. Estimated finance cost averaged over machine life on a per annum basis is 10% and 10%. And then they are also providing you present value interest factor is your present value factor. And then present value interest factor annuity. This is your annuity factor given to you. Okay? Analyze and recommend which machine should purchase. So purchase price is going to be paid currently, right? So if you are paying today anything, then that is the at present value only. Hence directly multiply it with 1. Present value factor will be considered as 1 here. Okay? So this is the cost which you are going to incur. Trade-in value is like an income which you are getting at the end of the life. Hence this income will get reduced. But this trade-in value you will get at the end of the life. So this particular is BX machine has a life of 12 years. So for this 6 lakh rupees, you are going to consider the present value factor. Trade-in value is a one-time thing which you are going to receive only one time, right? So 4 lakh is going to be received one time. So 0.32 is what we are going to consider here. Here, the 6 lakh is going to be received one time, but here the life is 6 years. Hence, for the 6th year, you are going to consider the present value factor as 0.56. Now, this annual repair cost is 4 lakh rupees, have to be incurred annually for every year for 12 years. Hence, consider the present value annuity factor for 12 years, which is 6.81. Okay. Next, here this is also an annual cost, but has to be incurred for 6 years as the life is 6 years. So 4.36 is what you are going to consider here. Then overall cost is a cost which is like a one-time cost incurred at a specific time when you are improving the asset. So they are mentioning that this overall cost is incurred at 8th year. So for 8th year, the present value factor is 0.47. And here on the 4th year, present value factor is 0.68. Okay? Done. Now after this, calculate all of them and remember that you need to reduce trade-in value from the calculations which you are doing. And this will give you the total cost of both the machines. But as we have to calculate equivalent annualized because the years are different, we are going to divide this by the present value factor. Here you are going to divide by 4.36 and here you are going to divide by 6.81. Okay? Done. So 6.81 for BX machine because the life is 12 years. And the scrap value is reduced, other costs are added with the applicable present value factors and annuity factors. Here we are going to consider 4.36. And these are the cost and the scrap value. Done. So we are getting an equivalent annualized cost as 9 lakh and 11 lakh. So which one is beneficial? This one is beneficial. Done. Moving forward to our next question. Sunrise Prakashan Limited is in the business of publishing a leading newspaper which has wide customer base. It measures quality of service in terms of print quality, on-time delivery, number of damaged and unsold paper. To improve its business prospect and performance, the company is considering installing a scheduling and tracking system which involve an annual additional cost of 3 lakh rupees beside equipment cost of 4 lakh rupees needed for the installment of system. So what is happening? We want to improve our scheduling and tracking system. So we are going to incur an additional annual cost. This has to be incurred annually, 3 lakh rupees. And then there is an equipment cost of 4 lakh rupees needed for the installment of the system. To purchase the equipment, the company is planning to utilize the proceeds of an investment fetching an income of 9%. So this investment which we are doing, this was fetching an income of 9%. Now we are taking that money and investing it in our business for the equipment. On-time delivery is happening 80% presently, but expected situation after having that equipment is going to be 95%. We are going to become better. Variable cost per unit for newspaper damaged and unsold is 40. Fixed cost is 60,000. Number of lots of paper damaged. Earlier it was 6,000. Now it is going to be only 1,000. It is expected that each percentage increase in on-time performance will result in revenue increase of 35,000 per annum. So for every percentage increase, you are going to earn extra 35,000 as the revenue. So here if you notice 15% is the increase happening. So for every percent 35,000, that means for 15 percentages, 15 into 35,000, you are going to earn 5,25,000 as the extra revenue. Okay? Required contribution margin is 40% only. This, even if we are earning this much revenue, but this is not our income. Here we also have to incur cost, variable cost. Hence the margin will be considered as 40%. 40% will give you 2,10,000 is the extra contribution which you are able to earn by increasing the on-time delivery. Okay? Next, draw inference from the information given above and evaluate whether Sunrise Prakashan Limited should install the new system or not. Now, if you notice, they are not providing us any information of what is the number of years for which we have these two different scenarios which we are comparing. And here, if you notice, we are not evaluating different alternatives. Like we don't have two machines which we are evaluating. We only have one machine option. Either I can have it or I can not have it. Plus with that, they are also not providing us the year related information. So what to do? I'll not be able to calculate that present value factor, present value annuity factor. So what to do with this percentage? As this is applicable specifically for the investment money of 4 lakh, directly multiply it to know what is the yearly opportunity loss which you are having due to investing here. The 9% is the rate applicable, right? So for every year, you are losing 9%, that is equal to 36,000 rupees by investing this 4 lakh here. If you would have invested it somewhere else, you might have earned this 9% as the returns. Okay? And plus with that, you are also incurring this 3 lakh rupees as the additional cost. So if I talk about the cost, then the increase in cost is happening of 3,36,000. Plus you are able to save 2,10,000 here, and you are also able to reduce the damaged inventory of 5,000 multiplied by, for every damaged you were incurring 40. So you were able to save 5,000 into 40, that is equal to 2 lakh rupees here. So total 4,10,000 is extra saving which you are having. 3,36,000 is the extra cost which you are having. 4,10,000, 3,36,000 will give you 74,000 as the net benefit here. So as the benefit is higher, hence we should go for having this equipment in our organization. And this is what we have done. Calculation of net benefit. Done. Moving forward to our next part, and that is the last part of this chapter, that is decision making using probability. Technique used when outcomes are uncertain but their probabilities are already known to you. Whenever there is uncertainty, we use probability. So outcomes are uncertain, that what will be the situation or what will be the output, we don't know that specifically, but we know what is the probability of different scenarios. Each possible outcome is assigned a probability where total probability of all outcome together should be equal to 1, and the decision is taken based on expected value. What is the total expected value? On the basis of this we take the decision. So in our questions we are going to follow certain steps, and to understand these steps you can directly move to this question. This question will help you to understand all the steps applicable here. So One Limited, a manufacturing company, is preparing a budget for 2025. The parameters relating to sales price and cost are given to you. This is the sales price, variable cost. Reducing variable cost from the sales price will give you contribution on a per unit basis, which is 80 rupees. Okay? And the fixed cost applicable is 20 lakhs. Then they are providing us the sales forecast have been prepared, which discloses the following. We don't know what will be the specific units which we are going to sell. Hence, we used probability for the same. If you take the total of all the probabilities together, this is going to be equal to 1. Analyze the break-even quantity. What is break-even quantity? Break-even quantity is break-even point units. Okay? So, how to calculate that? Fixed cost upon contribution per unit. We studied about this in the start itself. So, 20 lakh divided by 80 will give you 25,000 units is the break-even point units. Then analyze how many units must be sold to earn a target profit. This also we studied in the start itself. The target profit of 6 lakh is what we want to earn. So for units to earn target profit of 6 lakh, how to calculate this? Consider fixed cost plus target profit. Fixed cost is 20 lakh plus target profit of 6 lakh divided by contribution per unit of 80 will give you 32,500 units is what you have to sell to earn a profit of 6 lakh rupees. Now you have to earn a target loss of 5 lakh rupees. To earn target loss, we use a formula of, for profit what we use? Fixed cost plus profit upon contribution per unit. So whenever they are providing us target loss, you are going to take fixed cost upon minus losses and upon contribution per unit. So fixed cost is 20 lakh minus loss of 5 lakh divided by contribution per unit is 80. So we are getting 18,750 units should be sold if you want to have a loss of 5 lakh rupees. Okay? Based on the sales forecast, identify the probability that the company will break even. You have to find out the probability of breaking even. Breaking even units are 25,000. That means if you are producing 25,000 units or higher than that, then only you will be able to reach break even point at least. So if you are producing 25,000 units or higher than that, then only you are going to reach the break even. Hence, consider the probability of all these situations. Okay? So 0.1, 0.2, 0.3, 0.1, 0.1 will give you 0.8. That means 80% chances are that we will reach at least break even point. Okay? Analyze the probability of achieving sales volume involved in part 2. So in part 2, whatever sales units you calculate the probability of reaching the same. So first we calculated 32,500 to earn a profit of 6 lakh rupees. So 32,500 is not specifically mentioned here. So you are going to go for the next higher number, which is 35,000. So 35,000 or higher will give you at least a profit of 6 lakh rupees. Hence, you are going to consider all these probabilities, which is equal to 50%. 50% chances are there that you are going to earn 6 lakh rupees. Then, what are the chances of incurring at least 5 lakh rupees of loss? 5 lakh is the loss which is applicable for 18,750 units. Okay? So if you are making this units or lower than that, then only you can have 5 lakh as the losses. Think about it. If you are making higher than this units, then your loss will get reduced. If you want 5 lakh or lower than that as the losses, then you are going to go for 15,000 situation, which is lesser than 18,750. So whenever they are talking about losses, you are going to go for the previous units or the exact same unit and the lower probability. Let's say if they are specifically mentioning her here as 18,750 and 0.1 is the probability for the same. So I'm going to consider both of these probabilities and 20% will become the probability of the same. But here, as there is no 18,000 as such, we are going to consider this 0.10 only as the probability. So 10% chances are there to have a loss of 5 lakh rupees. Okay? With this, we completed this question also. Now we are moving forward to the next chapter, and that is chapter number 5, evaluating performance. So what is this evaluating performance all about? So here we are going to discuss our standard costing and variance analysis only. So we are going to discuss mainly this particular topic is asked to you for 14 marks in your exam. So here you have to discuss about your standard costing, like your material, labor, variable overhead, fixed overheads, sales variances, profit variances and their reconciliation. And then we have investigation of variances, planning and operating variances. All of that is covered in this particular chapter. Okay? So let's see them one by one. First, we are starting with direct material variances. Material variance, when you are calculating, you are calculating for a cost. Hence, you are going to compare the cost here. For material cost variance, we compare our standard cost with the actual cost. We first write the standard cost and then write the actual cost. Why? Because standard cost, if it is higher than actual cost, it is a beneficial situation of us. Hana? So, to get a favorable situation when your standard cost is higher than the actual cost, we write standard cost first and actual cost later. Okay? Next, material usage variance. This cost variance can be subdivided into two parts. That is usage, what is the quantity of material you are using, and what is the price applicable. According to that, you can have two different variances. So first, usage related variance. Here you are going to compare the quantities. And whenever you are comparing the quantities, you are going to take the standard price. And for material price variance, you are going to compare the prices, keeping your quantity as the actual quantity. Whenever we say actual quantity here, we are meaning that the actual quantity used of raw material for producing the actual output. Whenever we say standard quantity here, we mean that standard quantity of raw material for actual output. Whatever actual output you produce, what is the standard quantity of material we should use for producing that actual output is known as standard quantity. What is standard price per unit of raw material? Actual price per unit of raw material. Okay? Material usage variance can also be subdivided into two different parts. That is material mix variance and material yield variance. Mix variance is the proportion related difference, that even if you used whatever actual quantity you used, but that should be used as per the proportion mentioned in the standard. If you change the proportion, this mix variance will arise. To calculate the mix variance related proportion difference, you are going to take revised standard quantity. Revised standard quantity is calculated for actual input. For actual input, we calculate this revised standard quantity minus actual quantity into standard price. This will give you material mix variance. Then for calculating material yield related variance, what is yield related variance? How efficiently you use the material. So as per standard quantity, let's say you have to use 10,000 units, but you use 12,000 units. That means you were not efficient. So to see your efficiency about usage of material, we calculate material yield variance, which can be calculated by comparing standard quantity with revised standard quantity into standard price. Now remember one thing, when we are calculating yield variance, we assume that there is no as such mix variance available. When we are calculating mix variance, we assume that there is no as such yield variance available, and then we calculate this separately. Now, material yield variance is related to output, that how efficiently you produce the output. And for that, you can also use a output related formula, which is actual output for actual material minus standard output for actual material. For actual material, what is the actual output you can produce? And by using that actual material only, what is the standard output you can produce? Multiply this with the standard rate on a per unit basis. As you are comparing the output, the rate should also be on a per unit basis. Okay? And then we are going to get the yield variance. By calculating from any of these formula, you are going to get the exact same value only. Whenever we calculate material variances, we are going to write first our actual price, actual quantity, standard quantity and revised standard quantity. And then always, whenever you are calculating this total values, your actual will be multiplied with actual only, but your standard price will get multiplied with standard quantity, actual quantity, revised quantity, all the quantities. Okay? So whenever we have standard price, that will get multiplied with all the quantities, but actual price will get multiplied with the actual quantity only. Now, put the values calculated in this step number 2 in your formulas and you will get your final values. Okay? There can be one more situation, this is also important. Whenever we calculate this actual quantity, this is actual quantity of raw material which is consumed for producing the actual output. Okay? But in questions, sometimes it happens that question mentions that you need to calculate your material price variance at the time of purchase. And if the question is mentioning that you need to calculate material price variance at the time of purchase, rather than considering actual quantity consumed, you are going to consider actual quantity purchased for price variance. But the usage variance is all about what is the quantity of material which you actually consumed. Hence, here you are going to consider actual quantity consumed only. Now, if that happens, then here we are considering what is the actual quantity consumed for making the final product. And here we are considering actual quantity purchased of the material. And due to this, now comes the question that what should be the actual quantity considered here? Should I consider actual quantity purchased or actual quantity consumed? Because both of them are different. Hence, for calculating your cost variance, rather than calculating it using this formula, we just add this usage and price variance to get our cost variance. Do this only and only when there is the material price variance is calculated at the time of receipt of material or at the time of purchase of material. Now, as your usage variance is calculated with the help of actual quantity consumed, your mix variance will also be calculated with the help of actual quantity consumed only. Okay? So, but if question wants to calculate material price variance at the time of purchase or at the time of receipt, then actual quantity consumed and actual quantity purchased both has to be calculated. Use actual quantity consumed for material usage variance and actual quantity purchased for material price variance. You can refer this question also. We have already discussed about this in the class. Now, let's move forward to direct labor variance. Labor cost variance is calculated. So here also we are going to compare our standard cost with the actual cost. This labor cost variance related formulas are exactly same as that of your material cost variance. But it's just that for material we use actual quantity. Quantity is used. For labor we use actual hours. What is the hours for which the worker is working? For material we use actual price. For labor we use standard actual rate. For material we use standard quantity. For labor we use standard hour. For material we use standard price. For labor we use standard rate. This is the only difference, and other things will remain exactly same. All the formulas are exact same. Labor cost variance can be subdivided into efficiency and rate. Rather than calling it as usage variance, here we call it as efficiency variance. Rather than calling it as price variance, here we call it as rate variance. Then efficiency variance can be subdivided into mix and yield, exactly same as we do there. And then you can also calculate with the help of output. Here actual output for actual labor hours, standard output for actual labor hours, and standard rate per unit of output can also be used for calculating your yield variance. Okay? Now, there is one more situation of labor, and that is when idle time variance is there. What is idle time? Idle time means the worker is sitting idle. Let's say out of the 8 hours available, the worker is not working for 2 hours. He is only working for 6 hours. That means actual hours paid and actual hours worked are different. Whenever actual hours paid and actual hours worked are different due to abnormal reason, now this is something very important. There can be 2 reasons of idle time. The first one is normal reasons, that you have given the breakfast, lunch, tea break. This kind of thing is normal thing which is done in the organization. Whatever normal idle time is there, we assume that it is already included in the standard also. Hence, no need of calculating any actual hours paid, actual hours worked separately. Okay? We calculate actual hours paid mostly for whatever time the worker is available in the organization. That is the hours for which we pay to him. But whatever time he is working, that is the hours which we call as actual hours worked. Okay? So we are going to calculate actual hours worked and actual hours paid. Not in the case of normal idle time. Only and only in the case of abnormal or unexpected idle time. So question will specify you whether the time is normal, whether the idle time is normal or abnormal, or expected or unexpected. If it is abnormal or unexpected, then only you are going to consider the actual hours paid and actual hours worked separately. Okay? If the question is not saying anything, whether it is abnormal, normal, expected or unexpected, then you are going to assume that the time period given in the question is abnormal. Okay? The idle time which is given in the question is abnormal. And accordingly, whenever you have abnormal idle time, you're going to calculate this idle time variance also. So first, labor cost variance is calculated on the basis of standard cost and actual cost. For this actual cost, you're going to consider actual hours for which you made the payment. Because as you are calculating cost variance, you have to consider all the costs which you incurred. Okay? Next, for labor efficiency variance, efficiency is all about how efficiently worker was working. Hence, you have to consider actual hours for which the worker was working. Okay? So, actual hours worked will be considered here. Standard hours will be compared with actual hours worked into standard rate. Then labor idle time variance will also be calculated for comparing your actual hours worked and actual hours paid into standard rate. Idle time variance is always going to be adverse. Adverse means not favorable for us. Why? Because actual hours worked, let's say worker is working for 6 hours but paid for 8 hours. So this will also always give you a negative value, and this should be negative only because idle time is not favorable for the organization. Okay? Next, we have labor rate variance also, where we are comparing the rate, keeping our actual hours as actual hours paid, because rate is paid or the amount is paid on actual hours paid only. Hence, we are going to consider actual hours paid here. Okay? Then efficiency variance can be subdivided into mix and yield, and as efficiency variance is calculated on actual hours worked, your mix and yield, wherever you require actual hours, you're going to use actual hours worked only. Okay? Then labor yield variance, if you want to calculate it using output, actual output for actual labor hours minus standard output for actual labor hours worked. Remember that actual labor hours worked is what you're going to use here. Okay? Multiplied by standard rate per unit of output will give you labor yield variance using output. If the question is not mentioning anything, you're going to assume the idle time as abnormal only. Okay? Let's move forward to our questions. First question which we are seeing is related to material. Zindan Limited, using the standard costing system, produces an article by blending two basic raw materials. The following standards have been set up for the raw material. We have material A and B, and the standard mix is 40 and 60% is the ratio in which we use these two materials. And the standard price per kg is given to you as 5 and 4 rupees is the per kg standard rate. The standard loss in processing is 10%, and during March 2023, the company produced 2250 units of finished goods. By knowing what is the actual output, I can calculate what is the standard quantity and standard price going to be there, because all the standard related information is already available with me. So, I already told you what is the way you're going to make the table. First, calculate actual price, actual quantity, standard quantity, and whenever you have more than one material, then only you can calculate your revised standard quantity for your mix and yield variance. So mix and yield variance can be calculated only and only when you have more than one material. Okay? So as in this case we have more than one material, we are going to consider revised standard quantity also. Okay? Material A, material B. We don't know as of now what is the actual price, but we know the standard price on a per kg basis of material, which is 5 and 4. Then for actual quantity also I don't know. Whatever is the actual quantity and standard quantity used of material will give you the total input of material used minus whatever losses you are doing will give you the output which you are producing. And the question has already provided us the output, and I already told you that the actual quantity and standard quantity, both of them are going to be for actual output. What is the actual output? 2250. 2250 kg is the actual output in both the situations. As I already know the actual output and I already know what is the standard processing loss going to happen. So, whatever material you introduce, let's say as per standard I'm introducing 100 units of material, then 10% is the loss which you're going to have. So 100 minus 10 will give you 90 as the output. Okay? So if you introduce 100 material, you're going to get 90 as the output. I already know what is the output here. I can calculate the total actual material, standard material. So 2250 is the output, which denotes 90%. After reducing the losses, I want to know what is the input which we are going to introduce. So 2250 divided by 90 into 100 will give you 2500 is the input which you are going to introduce to get an output of 2250. That means the losses are 10%. 250 is the losses, and we are getting an output of 2250. And the question has already mentioned whatever input you are introducing, that is going to be 40-60 distributed between material A and B. So 2500 into 40% will give you 1000 units. And 1500 units if I calculate the 60%. Okay. So we got all the information related to standard quantity. Let's see what the question is mentioning about revised standard quantity and the actual quantity related information. So the position of stock and purchases for the month of March 2023 is as under. They are providing us the stock related information, that the opening stock was this one, closing stock was this one, this is the quantity which we are purchasing. Assume FIFO method for issue of material, opening stock is valued at standard price. Now, should I consider actual quantity purchase? Because we have understood that actual quantity purchase of material can also be used for calculating material price variance. But the thing is, that will be used only and only when the question is mentioning you specifically that calculate material price variance at the time of receipt. Are they mentioning anything about it? Answer is no. Hence, you are not going to use it. So what to use? You are going to use actual quantity consumed. And what price I should use? Should I use the purchase price only? Answer is no. For actual quantity consumed, the price can be different. And for calculating the price, they have mentioned specifically that you need to assume that FIFO method is applicable. Now, let's see what is FIFO method. FIFO method is first in, first out method, where your raw material which has come first, that is the raw material which you are going to use first. Okay? So, let's see how to calculate this. We have two different types of material, A and B. First, let's calculate the quantity, that what is the quantity of material which we need. Okay? So, how to know what is the actual quantity consumed? You're first going to consider the opening stock which you have, that is 40 kgs and 50 kgs. 40, and let me just calculate this first. So what I'm thinking is, rather than making all this table, I'll first make the table of this consumption related. Okay? So 40 and 50 kg is the opening stock available with us, and then the purchases which we made during the period is 800 and 1800. This will give you the total quantity available with us, which is 840 and 1850. Okay, this is total quantity available, and then the remaining quantity is closing stock. After using the material, we are left with only 20 and 50 kgs. So if I had this material but we are left with only this, that means the remaining was consumed material. What is the consumed material here? 840 minus 20 will give you 820, and 1850 minus 15 will give you 1835 is the quantity which we are consuming. Okay? So after knowing what is the quantity you consumed, now we are going to see what is the price applicable for this consumed unit. Okay? So we have A and B. Now, so for this consumed unit, we have to use first in, first out method to calculate what is the price applicable here. What is first in, first out method? Whatever material you got first, that is the material you are going to use first. So what is the material we got first? We got opening stock first. So that is the material we are going to use first. 40 kgs and 50 kgs will be used first. At what price? So the question has specifically mentioned that your opening stock is valued at standard price. So 5 rupees per kg. And here we have 4 rupees per kg. Okay? After using this, I need total 820 units for A. I have already used 740. So the remaining is 780 which I have to use. How to get this 780 units? As the opening stock is completely used, now I'm going to use purchases. So in purchases, I have 800 units, out of which 780 is going to be used. And the rate applicable here is 6 rupees. 4800 divided by 800, 6 rupees is applicable for this units. Similarly, for B also, as opening stock is completely used, the remaining units is 1835 minus 50. 1835 minus 50 will give you 1785 units is what we require. For this, I'm going to use the purchase price. 7560 divided by 1800, 4.2 is the purchase price applicable for 1785 units. Then you got the actual quantities and the actual price applicable. Let's use this here. Now, as the actual quantity, we have two different actual quantities, two different actual prices. Here also the same thing. I have to change somewhat things. So what I'm changing here is I'm adding some space for writing the two different quantities for A and B. This much is enough. So for A, we have two different prices of 5 and 6 applicable. For A, we have 5 and 6. And the actual quantity is 40 and 780. Okay? Then for B, we have 50 and 1785. And the rate applicable is 4 and 4.2. Okay? Done. Now there is no as such use of this, so I'm removing it. Now, what is the total actual quantity which you are using? 40 plus 780 plus 50 plus 1785. So total 2655 is what we are using, and we are getting our output of 2250. That means 405 is the losses here. Okay? Revised standard quantity is for actual input. For actual input, you calculate the revised standard quantity. What is revised standard quantity? Distributing the actual input in the ratio of standard is revised standard quantity. So whatever is your actual input, distribute this in the standard related proportion. Standard has a proportion of 1:1.5. है ना, or else I can say 2:3. So distribute this 2655 also in the 2:3 ratio. So 2655 into 2 by 5 will give you 1062, and 2655 into 3 by 5 will give you 1593, and the total amount is 2655. Done. Now, after making this table, we are going to calculate the total amounts for all of them. The actual price into actual quantity amount, standard price into standard quantity. I already told you actual price is going to get multiplied with actual quantity only. Standard price is going to be multiplied with all the quantities, whether it be standard quantity, whether it be actual quantity, whether it be revised standard quantity, doesn't matter. Okay? Now, let's consider the materials A and B. So, actual price into actual quantity. For A, I have two different actual prices and actual quantity. So multiply both of them and take the total of it. 5 into 40 will give you 200. 6 into 780 will give you 4680. So total 4880 is what we are getting for A. Similarly for B, 4 into 50 will give you 200. 4.2 into 1785 will give you 7497 plus 200 is 7697. Plus 4880 is equal to 12577. Then standard price into standard quantity. 5 into 1000 will give you 5000, and 4 into 1500 will give you 6000. Total 11,000 is what we are getting here. Then standard price into actual quantity. This standard price is applicable for all the A related quantities. So I can take the total of A, which is 820 units, multiplied by 5 will give you 4100. Then we have 1785 plus 50. 1785 plus 50 will give you 1835 into 4 will give you 7340 plus 4100 is equal to 11,440. Next, standard price into revised standard quantity. 5 into 1062 is equal to 5310, and 4 into 1593 will give you 6372 plus 5310 is equal to 11682. Now after this, calculate your material cost variance, material price variance, material usage variance, material mix variance, and material yield variance. Okay? How to calculate cost variance? For cost variance, you're going to compare your standard cost, which is standard price into standard quantity, with the actual cost, which is actual price into actual quantity. So 11,000 minus 12577 will give you 1577 inverse. Remember that in the exams, at least write this SP SQ minus AP AQ and whatever is the value while calculating this cost variance. Okay? Next. For calculating price variance, you're going to compare the prices, that is standard price with actual price, and whenever we compare the prices, we keep the quantity as actual quantity. So standard price into actual quantity, actual price into actual quantity. 11440 minus 12577, which is equal to 1137 adverse. Whenever you get the negative value, that means it is going to be written as adverse. Next, material usage variance is comparison of quantities keeping price as the standard. So standard price into standard quantity and standard price into actual quantity. 11,000 minus 11,440 will give you 440 adverse. Next, material mix variance is comparison of proportion. Whenever we say proportion, that means we are saying that even if we used the exact actual output, it doesn't matter, but that should be used in the proportion of the standard. Why we use the proportion like this? So what we are comparing our revised standard quantity, which is the correct proportion, with the wrong proportion, that is actual quantity. Okay? So revised standard quantity is compared with actual quantity, and whenever we compare the quantity, we keep the price as the standard price. So standard price into revised standard quantity will be compared with your standard price into actual quantity. 11,682 minus 11,440 will give you 242 favorable. Positive value means favorable. Then material yield variance. Yield variance is a comparison of why you change the input. You should use 2500, why you use 2655. So we are not seeing the mix related variance because here there is no as such mix. We are directly comparing our standard quantity with the revised standard quantity. Okay? So whenever you are comparing the quantity, you are going to keep the prices as standard price only. Okay? So standard price into standard quantity and standard price into revised standard quantity is what we are going to compare. 11,000 minus 11,682 will give you 682 adverse, and we are done with this question. Okay? Let's move forward to the next part, and that is question number 16. Okay? This is related to labor. We have already discussed what is going to happen with the labors. 18 workers, 12 type 1 worker and 6 type 2 workers are there. Working in a production process of Ront Limited during a month of 25 working days is what we are available with. Each type 1 worker is expected to produce 8 units per day and type 2 worker is expected to produce 10 units per day. Whenever the question is saying expected, that means as per standard. Okay? They work on the regular shift from 9 to 5 p.m. and have a tea break between 10:30 to 10:45, 3 to 3:15, and also have a lunch break from 1 to 1:30. The actual production was 2000 units by type 1 worker and 1200 units by type 2 worker. The standard wage rate per hour were 80 and 90 for type 1 and type 2 workers respectively, and the corresponding actual were 90 and 100 respectively. During the month, 16 hours were lost actually for both type of worker, which is also as per expectation for waiting for material and inspection. Normal waiting and break time are included in standard hours for production. Now, something very important, as your 16 hours lost were as per expectation only, that means it is normal. And whenever we give this normal kind of break of half an hour for lunch and tea break, this is also considered as normal. And the question has also specifically mentioned that normal time and break times are included in the standard hours. And that is what we assume whenever there is a normal idle time. So as normal idle time is already included, that means you need not calculate any actual hours worked and actual hours paid. You can directly use your normal labor variances which you do. That means assume that this is not there. Okay, you need to assume that this is not at all there. You have to see this and make it unseen for you. You have to see this and assume that this is not at all given to you. And then calculate your labor related variances. Okay? How to calculate labor variances? For this, I need, for labor, what all things you need? We need actual rate, actual hours, standard hours, and I can also calculate revised standard hours for calculating my labor mix variance and labor yield variance. Okay? Now, so 18 workers is what we have, and type 1 and type 2 worker is given to you. Type 1 and type 2 are the workers which we have. So what happened here? So what is the actual rate applicable? 90 and 100. What is the standard rate applicable? 80 and 90. Then what is the actual hours? Actual hours for which we are working. So the question also itself says that 25 working days are there and 8 hours of work is done every day. So that can be considered as actual hours because there is no as such actual hours paid or work. So 25 days of working and 8 hours per day. Okay? 9 to 5 is 8 hours per day multiplied by what is the number of workers, because every worker is going to work for 25 days 8 hours. So 12 type 1 workers are there. For type 2, 25 days 8 hours multiplied by 6 type 2 workers. 25 into 8 into 6 will give you 1200, and 25 into 8 into 12 will give you 2400. So in total we are getting 3600 hours of labors which we are using. Okay? For standard hours calculation, they are providing us that 8 units can be produced on every day by type 1 worker, and every day we have 8 hours. So 8 units per day, 8 hours per day, that means 1 unit per hour can be produced. Okay? And what is the number of units which we are producing actually? 2000 units. 2000 units are produced, 1 unit per hour is produced. That means total 2000 hours are required for producing this units. Okay? Now, 2000 hours by type 1 worker. Similarly for type 2, 10 units can be produced in 8 hours. 10 units in 8 hours. That means for producing every unit, 1.25 units can be produced in 1 hour. So total type 2 workers are producing 1200 units, 1.25 units every hour. 1200 divided by 1.25 will give you 960 hours applicable. So 960 is applicable for type 2. 2960 is the total hours here. Then your revised standard hours is for actual input, which is 3600. Distribute this in the ratio of standard. So standard is 2000 is to 960 is the ratio, and that is how you are going to distribute this 3600. So we'll say that 2000 is given to type 1 when 2960 is the total. We want to know for 3600. This is going to be 2432.432. Similarly, 960 is given for type 2 when 2960 is the total. So for 3600 it is going to be 1167.568. Okay? If you take the total of both of them, you're getting 3600 only. Okay? Next, calculate actual rate into actual hours, standard rate into standard hours, standard rate into actual hours, standard rate into revised standard hours. Okay? So actual rate is multiplied with actual only, standard is multiplied with all the hours available for type 1 and for type 2. What is actual rate? 90. Actual hours is 2400. 90 into 2400 will give you 2,16,000. and 100 into 1200 will give you 1,20,000. So in total we are getting 3,36,000. Then standard rate into standard hours. Standard rate is 80 into 2000 will give you 1,60,000. Then 90 into 960 will give you 86,400 plus 1,60,000 is equal to 2,46,400. Then standard rate into actual hours. 80 into 2,400 will give you 1,92,000 and 90 into 1,200 will give you 1,08,000. So in total we have 1,92,000 plus 1,08,000 will give you 3 lakh. Then standard rate into revised standard hours. 80 into 2432.432 will is equal to 194,594.56. Then 90 into 1167.568 is equal to 105,081.112. So plus 194,594.56 will give you 299,675.68. Now if you want to calculate labor cost variance, compare your standard cost with the actual cost. Standard cost with the actual cost. 2464,000 minus 3,36,000. 246400 minus 3,36,000 is equal to 89,600 adverse. Then your labor rate variance is comparison of rate keeping the hours as actual. So standard and actual. 3 lakh minus 3,36,000 will give you 36,000 adverse. This is also adverse. Next, comparison of hours is labor efficiency variance keeping your rate as standard. So 2,46,400 minus 3 lakh. 2,46,400 minus 3 lakh will give you 53,600 inverse. Now if you want to calculate labor mix variance, you're going to calculate it by comparing revised standard hours with the actual hours. So 299,675.68 minus 3 lakh will give you 324.32 adverse. Next, labor yield variance is comparison of standard hours with the revised standard hours. So 246400 minus 299,675.68 is equal to 53275.68 adverse. Now the total of mix and yield will give you efficiency. Total of rate and efficiency will give you labor cost variance. If you want, you can check the total also. Okay? With this, we calculated all the variances. Let's see what the question was asking. Question wanted us to calculate standard labor cost for the month. Standard labor cost is nothing but this value. Standard rate into standard hours give you standard cost, and that is 2,46,400. And they want us to calculate labor cost variance, which we already calculated. Then labor efficiency variance already calculated. Then they want labor idle time variance. As the idle time is normal, there is no idle time variance going to be there, because actual hours paid and actual hours worked is exactly same. Standard hours already include the actual standard hours already include the normal time. Hence actual hours paid and actual hours worked is exactly same. Hence your idle time variance becomes 0. No idle time variance is there. Okay, done. So these are the values which we are getting, which we already calculated above. Mix and yield is already also calculated. For practice only, the question was not asking us the same thing. Now we are moving forward to the next variance, that is variable overhead variance. For variable overhead, that means indirect cost, but it is also a kind of variable cost only. So it is going to react in the same fashion as your labor variances react. The values and the calculations are exactly same. Okay? But the standard rate and actual rate applicable is going to be different, but the hours related calculation as we do for labor variances, the exact same thing is going to be done for variable overhead variances also. So first we are calculating variable overhead cost variance. How to calculate? Compare your standard cost with the actual cost. Standard rate into standard hour minus actual rate into actual hour. That is how we are going to calculate. And if you want to calculate on the basis of units, that also is possible here. What you are going to do? Take your standard rate per unit, multiply by the actual output. Whatever is the standard rate multiplied by actual output will give you standard cost, because standard cost is for actual output only, minus your actual variable overhead. Actual rate into actual hours gives you actual variable overhead only. So standard rate per unit multiplied by actual output minus actual variable overhead will give you variable overhead cost variance. Now for calculating efficiency and expenditure variance, you need your hours or days, with the help of which you can calculate this. If the question provides you days, then in place of standard hours, use days, and the rate should be on a per day basis. Okay? Now, this can be subdivided into efficiency and expenditure, similar to that of your labor variance. Labor variance is subdivided into efficiency and rate. Here, rather than calling it as rate, we call it as expenditure. How to calculate labor efficiency variance? You're going to compare your standard hours with the actual hours multiplied by standard rate as you do for labor. Then variable overhead expenditure variance is also exactly same as that of labor, standard rate minus actual rate into actual hours. But for labor, we to divide that into mix and yield variance also. For variable overhead, you don't divide that. Why? Because when we calculate mix and yield, when we have more than one type of labor or more than one type of material. But for variable, we assume it as a lump sum cost which is incurred in the organization, and hence for them we don't have different types of labor variable overhead category. But if you notice in activity based costing, which we are definitely going to see today also, in activity based costing, we to have different categories of overheads, on the basis of if it is setup related, inspection related, if it is, let's say, material receipt related, we have different kinds of variable overhead bifurcation. But for absorption costing, we don't do any bifurcation. That means whenever we calculate variable overhead and fixed overhead variances, we assume that we are calculating for absorption costing if the question is not mentioning anything else. If the question has specifically mentioned for absorption, calculate for activity based costing, then for activity based costing, though, rather than using hours here, we use whatever is the cost driver. Let's say if my cost driver is batches, then I'm going to use batches here. If you want, you can see the questions. We have discussed the question related to activity based costing. I have already marked that as important in your question bank. Okay? Now, let's move forward. So no mix and yield variance because there is no as such lump sum cost involved here. Now let's move forward to the fixed overhead variances. Fixed overhead variance is like the different among all the variances which we are going to see. Very different. The calculations are different as compared to whatever you have done till now. So fixed overhead cost variance, the cost variance is similar to all of them. You are going to compare the standard cost with the actual cost. Standard cost is standard rate into standard hours. Actual cost is actual rate into actual hours, and standard rate per unit into actual output will also give you standard cost, and actual minus actual fixed overhead can be done in place of actual rate into actual hours. Now this is going to be subdivided into fixed overhead volume variance, that what is the difference coming due to output. Whenever we are seeing the difference due to output, we call it as volume variance. Okay? And then fixed overhead expenditure variance to see what is the difference in the expenditure. As fixed overhead is a kind of fixed cost which is not dependent on the number of units which you are producing. Hence, when you are calculating the expenditure variance, directly compare the budgeted fixed cost with the actual fixed overhead. No need to calculate anything like on the basis of hours what will be the cost. Nothing like that. Directly compare budgeted fixed cost with budgeted actual fixed overheads. Now this budgeted fixed overhead can also be calculated as budgeted hours into standard rate, and actual fixed cost is denoted as actual hours into actual rate. Here also we have denoted actual fixed cost as actual rate into actual hours. Now fixed overhead volume variance, that means comparison of output. And whenever we compare the output, we write the actual units first, because having actual output higher than the budgeted output is always better for us. So actual units minus budgeted units into standard rate per unit will give you fixed overhead volume variance. Or else you can take in place of actual units, standard hours can be taken because standard hours are for actual output, and in place of budgeted units you can take budgeted hours because budgeted hour denotes budgeted output multiplied by standard rate per hour. Whenever you are comparing the hours, take your standard rate per hour. Whenever you are comparing the units, take the standard rate on per unit basis. Now this fixed overhead volume variance can be subdivided into two different parts if you don't have any working days related information. The question is not providing us any working days. That means you're going to divide the fixed overhead variances into fixed overhead volume variance into two parts. The first one is comparison of standard hours and actual hours. So we have standard hours and budgeted hours here. Whenever we are subdividing this volume variance is standard hours and budgeted hours comparison. So whenever we subdivide this volume variance into two parts, that is efficiency and capacity, we have actual hours also in between. Whenever you are comparing standard hours with the actual hours, that is going to be efficiency variance. And if you notice, efficiency variance, whether you have calculated it for labor, for variable overhead or for fixed overhead, the exact same formula is used everywhere for calculating efficiency variance. Standard hours minus actual hours into standard rate per hour. Okay? Now, for capacity variance, you are going to compare your actual hours with the budgeted hours multiplied by standard rate per hour. Now, why here we are writing actual hours first and budgeted hours next? Because here we are seeing what is the usage of capacity. If you are using higher capacity as compared to budget, it is going to be a good situation for you. So, if I use 20,000 hours, but as per budget, I would have used only 15,000 hours. That means you are using higher capacity. And if you are using higher capacity, then the capacity variance will become favorable. Okay? And that is why compare actual hours with the budget hours into standard rate per hour. Then if the working days are given in the question, that means they are providing that as per budget the working days was 20, as per actual the working days are, let's say, 23. If that is the case, then your fixed overhead volume variance can be subdivided into 3 parts. So when we calculate fixed overhead volume variance, we compare our standard hours with the budgeted hours. Now I'm going to calculate actual hours. I'm also going to calculate revised budgeted hours. So first, for your efficiency variance, you're directly going to compare standard hours with actual hours. No changes in your efficiency variance. For your capacity variance, you're going to compare actual hours with the revised budgeted hours. Now, what is this revised budgeted hours? If you notice, our budget was made for 20 days, but in actual, we are working for 23 days. So, how can I compare the budgeted hours, which is only for 20 days, with the actual hours, which is for 23 days? I can't compare directly to calculate the capacity variance. Hence, we calculate the budget for 23 days, and that is known as revised budgeted. So, let's assume that my budgeted hours was 10,000. or 1000 hours, ठीक है? And I have to calculate revised budgeted hours. So I'll say 1000 hours was there for 20 days. Then for 23 days, what should be the hours applicable? This is equal to 1150. This is what our revised budgeted hour becomes. So whenever we compare our actual hours with the revised budgeted hours, this becomes our capacity variance when you have the working days here. So what to do with the difference between revised budgeted and budgeted hours? This will be compared with the help of calendar variance, because if you notice between these two, the difference is only due to days. Nothing else is different. Hence, here the difference is due to calendar variance. Okay? So revised budgeted hour minus budgeted hour into standard rate per hour is calendar variance. Actual hours minus revised budgeted hours is capacity variance, and standard hours minus actual hours is efficiency variance. And we are done. We have understood how to calculate our fixed overhead variances also. Now, let's move forward to the question. A question which will help you to understand variable overhead and fixed overhead variances together. Okay? OSS Limited has furnished the following information. Standard overhead absorption rate on a per unit basis is 20. Standard rate per hour is 4. Budgeted production is 12,000 units. Actual production is 15,560 units. Actual working hours is 74,000. Actual overheads amounted to 2,95,000, out of which 62,500 are fixed. So, for actual, I already know that this is the total, and out of which fixed is 62,500. So, I can know what is the variable overhead applicable. 2,95,000 minus 62,500 is equal to 23,000 to 2,32,500 is the variable overhead here. Okay? Next, we have actual working hours. So, let's directly make the table applicable for variable overhead and fixed overheads. Variable overhead and fixed overhead. Okay? What all things I need? First, though, I need standard rate per hour. If you don't have actual rate per hour, doesn't matter. Why? Because I can directly take actual rate into actual hours, which is the actual cost here. And I already know that the actual cost for variable overhead is 2,32,500. Okay? Similarly, for fixed cost also, if you don't know the actual rate, no need to calculate it as such. You can directly take actual rate into actual hours, which is the actual fixed cost, which is 62,500. But we need standard rate per hour. Here we need actual hours and standard hours. But for fixed overheads, you only need actual hours. You also need actual hours, standard hours, and budgeted hours also. Because for volume variance, we compare the standard hours with the budgeted hours. So we need budgeted hours here. Okay? Now, if you notice, for actual, though they are providing different fixed overheads and variable overheads. For budget, though they are not providing as such, they have provided the rate also, and that rate is standard overhead rate. That means applicable for fixed and variable both together. And this standard rate also is applicable for fixed and variable together. Now I know what is the actual production which we are doing, and actual hours are already given. So 74,000 is the actual hours. Okay? And then after that, they are providing us overheads are based on the following flexible budget. So for your budget, the overheads are based on this flexible budget. Now how to calculate with the help of this flexible budget what is my variable overhead and fixed overhead? So if you notice, whenever there are units, whenever the units are changing, your total overheads is changing. Here also, whenever the unit is changing, your total overheads is changing. And whenever, due to change in the units, the change in cost is happening, that change happens due to your variable cost only, because fixed cost will remain same in all the situations. So, whatever is the change in cost happening is happening due to change in units. And whenever cost changes with the change in units, this will give you variable cost per unit. Okay? So you can compare any of the units, like there is a high-low cost method which says that directly compare the highest units with the lowest units. So 14,000 minus 8,000, if I compare, the units change in units is 6,000, and 2,70,000 minus 1,80,000, this is equal to 90,000. So 90,000 divided by 6,000 will give you 15 rupees per unit applicable. Or else if you want to check that this is the exact same variable cost applicable here also or here also, you can check by comparing these two with these two, these two with these two. Okay? You are going to get this 15 per unit only. There are no as such changes in this question. So after getting your variable cost on a per unit basis, I also need fixed cost. How to calculate that? Take any kind of production units level. Let's say 10,000 is what we are taking. Multiply this with your variable cost per unit, which is 15. So this will give you 1,50,000 as the variable cost. So out of the total overheads, 1,50,000 is variable. That means fixed is 2,10,000 minus 1,50,000 will give you a fixed cost of 60,000. So I got to know what is my fixed overheads as per budget. So what is fixed overhead as per budget? Standard rate into budgeted hours is your fixed overheads as per budget, which we got to know as 60,000. And we also got to know that our variable cost is on per unit basis 15. Okay? Now, I already know what is the budgeted production applicable for our cases. This different flexible budget which is given to you was given for calculating variable cost and fixed cost. Now for comparing our actual with the budgeted information, our budgeted units is 12,000 units. So if I calculate what is the fixed cost and variable cost on total basis applicable for budgeted production, then variable cost is 15 per unit. 12,000 into 15 per unit will give you 1,80,000. Fixed cost will remain same, that is 60,000. So we are getting 1,80,000 plus 60, that is equal to 2,40,000 as our total fixed overhead as per budget. Okay? And I already know that standard overhead absorption rate, or else I should take the standard rate per hour. So our standard rate per hour, I already know that this is 4 per hour. Okay? So 2,40,000 is the total overheads, and this standard rate is also applicable for total overheads because they are not mentioning that whether it is applicable for fixed or variable. Hence we are going to assume that it is applicable for the total overheads. So 2,40,000 is the total overheads and standard rate per hour is 4. So 2,40,000 divided by 4 will give you 60,000 hours. Now what is this hours for? This hours is for budgeted units. Hence, this is our budgeted hours. We got to know our budgeted hours as 60,000. Now think about it. If you know your budgeted cost, if you know your budgeted hours, standard rate can be calculated. Because standard rate for standard hours and standard cost, standard rate for budgeted hours and budgeted cost is exactly same. Okay? So 60,000 divided by 60,000 will give you a standard rate applicable for fixed overheads as 1. Now think about it. 1 rupees per hour is applicable for fixed overheads. We already know that the total standard overhead rate is 4 rupees per hour. 1 per hour is for fixed overhead. Then the remaining 3 per hour is for variable overhead. Okay? Now, if you know that 60,000 is the hours applicable for 12,000 units, which is your budgeted units, you can calculate what is the hours applicable for 15,560 units, which is your actual units, and standard hours is for actual output. So, we are saying that 60,000. I can't write it here. I'm writing it here. Okay? We'll remove this particular thing. 60,000 hours is for 12,000 budgeted units multiplied by for 15,560 unit. What is the hours applicable? We are getting 77,800, and we calculated our standard hours also. As standard hours and actual hours are going to be exactly same for fixed overhead and variable overhead. So here also you can write 77,800. After getting this, for variable overhead, we need standard rate into standard hour and standard rate into actual hours. So 3 into 77,800 will give you 2,33,400, and 3 into 74,000 will give you 2,22,000. Next, for fixed overheads, we need actual rate into actual hours, standard rate into budgeted hours. I already told you, standard rate gets multiplied with all the hours. I've already got standard rate into budgeted hour. Now I'm going to multiply this with actual hours. Standard rate into standard hours. So 1 into 74,000 will give you 74,000 only. 1 into 77,800 will give you 77,800 only. After getting this, we can calculate our variances. So variable overhead cost variance is comparison of standard cost with actual cost. 2,33,400 minus 2,32,500 will give you 900 favorable. Variable overhead expenditure variance is comparison of rate keeping the hours as actual. Comparison of rate keeping the hours as actual. So 2,22,000 minus 2,32,500 will give you 10,500 adverse. Then variable overhead efficiency variance is comparison of hours keeping rate as standard. Okay? So 2,33,400 minus 2,22,000 is equal to 11,400. 11,400 favorable, 10,500 adverse will give you 9,100 favorable. Next we have fixed overhead cost variance is comparison of standard cost with the actual cost. So 74,000 minus 62,500 will give you 11,500 favorable. Okay? Standard cost minus actual cost. Next, fixed overhead expenditure variance. I already told you expenditure variance is comparison of directly budgeted cost with the actual cost. So budgeted cost is standard rate into budgeted hours and actual cost is this one. So 60 minus 62,500 will give you 2,500 adverse. Then fixed overhead volume variance. Okay? Volume variance is comparison of standard hours with the budgeted hours. So standard hours with the budgeted hours. 77,800 minus 60,000 will give you 17,800 favorable. Total of your expenditure and volume will give you cost variance. Next, fixed overhead efficiency variance is comparison of standard hours with the actual hours. Standard hours with the actual hours. 77,800 minus 74,000 is equal to 3,800 favorable. Then fixed overhead capacity variance is comparison of the capacity, that is actual hours and budgeted hours. 74,000 minus 60,000 will give you 14,000 favorable. And we are done. We have calculated all the variances applicable here. Okay, done. They were asking us only this variances, but we have already calculated all the variances. Okay, 900 favorable, 10,500 inverse, 11,400 favorable. Then the same is calculated here also for fixed overheads. Now we can move forward to the next variance, that is sales variance. Sales variance calculation is now exactly same as you do for material variances. It's just that for material variance we calculate standard quantity for actual output. But as for sales variance, I am directly going to compare the actual output only. Think about it. Revenue is on the basis of output. So I am going to directly compare the output. So I'll directly compare my actual output with the budgeted output. So we call here actual output as actual quantity of the finished goods and budgeted output as budgeted quantity of the finished goods. Okay? And this is the difference, that there your material variance have standard quantity and here we have budgeted quantity. Plus with that, in your material variance, as it was a cost variance, we first write the standard and then write the actual. In your sales variance, as it is a revenue variance, your actual revenue, if it is higher than the standard or the budgeted, will be happier, will have a favorable variance. Hence we write actual first and then write the budgeted or the standard values. Okay? So let's see. Total sales variance is going to be comparison of actual and budgeted. So actual quantity into actual price will give you actual sales. Budgeted quantity into standard price. Mostly for standard price, so we write it as standard price only rather than writing it as budgeted price, because standard price and budgeted price is exactly same. So budgeted quantity into standard price will give you budgeted sales. Sales volume variance is comparison of quantities. Your outputs, actual output will be compared with your budgeted output into standard price, and standard price, sales price variance is comparison of prices keeping your quantity as actual. Then sales mix variance, volume variance can be subdivided into two parts, mix, and rather than calling it as yield variance, we call it as quantity or sub-usage variance. So actual quantity minus revised standard quantity into standard price, revised standard quantity minus budgeted quantity into standard price. Okay? This is how you are going to calculate your sales variance. Then we have profit variances also. Profit variance is exactly same as how you calculate your sales variance. For sales variance, we use actual and standard selling price. For profit variances, we use actual margin. Margin is your profit only, and for standard margin. So wherever you are using the prices, you are going to use margins. Quantity will remain exactly same. Okay? Now how to calculate this actual margin and standard margin? For calculating, first let's talk about the standard margin. I am going to take the standard selling price minus standard cost. Whatever is the total standard cost on a per unit basis, I'll take that and reduce it from the standard price. This will give me the standard margin on a per unit basis. Now how to calculate actual margin? I'm going to take the actual selling price minus actual cost. Answer is no. We are going to take the standard cost only. Actual price minus standard cost will give you standard margin, actual margin. Now, why we are doing this? The reason is this sales margin variances which we are calculating is calculated for sales department. And sales department is not gonna be judged on the basis of actual cost. Think about it. They are not the person responsible for actual cost. They are only responsible for the standard cost only. On the basis of standard cost, their margin should be this much. But on the basis of standard cost, they are getting this much margin. Okay? So whenever you are calculating actual margin, you're going to take actual price minus standard cost. Now comes the important part, that this margins, it is not necessary always to calculate the profit. You can calculate the margin of contribution also. So if you want to calculate margin of contribution, then the formula will be for standard margin actual price minus standard variable cost. For standard margin, you're going to take standard price minus standard variable cost will give you contribution, and actual margin will be actual price minus standard variable cost will give you actual contribution. Okay? So there are two different ways for calculating margin, on the basis of net profit, on the basis of contribution. So on the basis of contribution, you are only going to reduce the variable cost. On the basis of profit, you are going to reduce full standard cost. Okay? Done. So this is your margin variance related formula. And I already told you about net profit and contribution related thing, which is already given here. Okay? Done. Moving forward to the most important part of this chapter, that is reconciliation of actual profit with the budgeted or the standard profit. So we can reconcile the standard profit also. We can reconcile our actual profit with the standard profit also. We can reconcile our actual profit with the budgeted profit also. But before that, understand what is actual profit. Actual profit is actual output multiplied by actual rate per unit. What is budgeted profit? Budgeted output multiplied by standard rate per unit. What is standard profit? Standard profit is standard rate per unit, but the output is on the basis of actual. So standard profit is nothing but standard rate for actual output. Okay? Done. Reconciliation of standard profit with actual profit. Whenever you are reconciling your standard profit with actual profit, it doesn't matter whether you have calculated margin variances or not. And if you have calculated margin variances, whether you have calculated that sales margin variance on the basis of net profit or contribution, it doesn't matter at all. You can directly take your standard profit. You can take your, if you're not calculating margin variance, doesn't matter. You can directly take your sales price variance, because sales margin price variance and sales price variance is exactly same. Even if the sales margin variance is calculated on net profit, on contribution, doesn't matter. Your sales margin price variance is going to be exactly same as that of sales price variance. So if you're not calculating margin variance, if you're calculating margin variance on the basis of net profit, contribution, doesn't matter. You can directly take sales price variance, sales margin price variance, whatever you get, you can put it here. Okay, from whatever basis you are calculating. Then consider all the cost related variances. Okay, because in all the costs which we have, we directly compare the standard cost with the actual cost. We directly compare the standard cost with the actual cost whenever we calculate the cost variance of any of the cost. Okay? So you can directly take it. But whenever we make reconciliation, it is beneficial for us. It is always preferable for us to divide this into different categories, like expenditure efficiency, expenditure volume, whatever categories you can subdivide, you should divide it. Then only you will get the full marks. Okay? Then for price variance, why only price variance is calculated? Because if you notice, whenever we calculate sales related price variance, what we are comparing? We are comparing actual price with the standard price, keeping quantity as actual only. That means actual price into actual quantity. This shows you actual profit or actual revenue, and standard price into standard quantity. Standard price into standard quantity is what? Standard related information for actual output. Hence, your sales price variance directly helps you to reach from your actual sales to your standard sales, or from your standard sales to your actual sales. Okay? And other cost related variances will help you to reach from standard cost to actual cost. If you reach from standard sales to actual sales and actual cost, standard cost to actual cost, you can reduce both of them to get your actual profit. And that is how we are reaching from standard profit to actual profit. Now there is something very important, that whenever you want to reach from standard to actual profit, whatever is the adverse variance, you're going to reduce it, and whatever is the favorable variance, you're going to add that. Because favorable variances helps us to increase the actual profit, and adverse variances leads to reduction in actual profit. Okay? Now, reconciliation of budgeted profit with actual profit. Now, whenever you are reconciling your budgeted profit with the actual profit, then in that case, it matters how you have calculated your margin variance. Are you calculating margin variance on the basis of net profit, or are you calculating on the basis of contribution? There can be two different types of calculations. So if we are calculating on the basis of net profit, then I can use directly sales margin volume variance. So in budgeted profit, if I consider sales margin volume variance, I can directly reach to standard profit. Your margin volume variance helps you to reach from budgeted profit to directly standard profit. Okay? Then consider all the things which you have considered to reach from standard profit to actual profit directly here. Because you have already reached to standard profit, now you can consider your sales margin price variance, cost related variances to reach to your actual profit. And whenever you have adverse variances, you are going to reduce it, and whenever you have favorable variances, you are going to add it for reaching from budget to actual profit. Okay? Next, if you have contribution variant of profits, margin variance is calculated using contribution as the margin, then in that case, things will change somewhat. What are the changes? You are going to consider sales margin volume variance here, and the other things will remain exactly same, but your fixed overhead variance, rather than calculating fixed overhead cost variance, we are going to calculate fixed overhead expenditure variance, because expenditure variance helps you to directly go from the budget to actual. Hence, directly consider fixed overhead expenditure variance here. This will make you to reach to the actual profit. Okay? Done. After understanding all of these, we can refer our question number 69. The budgeted output of a single product manufacturing company for 2014-15 was 5,000 units. The financial results in respect of the actual output of 4,800 units achieved during the year were as under. So, we have budgeted and actual output. For actual related information they are providing us. The standard direct wage rate is 4.5 per hour and the standard variable overhead rate is 7.5 per hour. The cost accounts recorded the following variances for the year. We have material price variance, wages related variances, variable overhead variances, fixed overhead efficiency variances there, and selling price variances given to you. Prepare a statement showing the original budget. So with the help of actual information and the variances given to you, you have to reach to the budgeted results. That means budgeted profit. How to reach that? So this is your actual information. Okay? And actual is for 4,800 units. Now from actual, you can reach to standard with the help of variances given to you. Okay? Because all the cost related variances helps you to reach from standard to actual. So from actual to standard, if you want to go, we are going to use the variances related to cost. Okay? Standard profit or standard related calculation is done on actual output only, and the actual output is 4,800. Then we are going to reach to budget, and budget is calculated for budgeted output, which is 5,000 units. Now for standard and budget, the rate applicable on per unit basis is exactly same. So what I'm going to do is I'm also going to calculate the rate per unit here when I'm calculating the standard, so that I can directly multiply the rate per unit with the units to get my budgeted information. Okay? Now first thing which we have for actual is material 29,700. Your standard and actual material has a difference of material cost variance, and material cost variance can be subdivided into price and usage. They are providing us 300 and 600 adverse, that means 900 adverse. Now if your material variance is 900 adverse, that means what? Whatever actual cost which you incurred for material is higher as compared to that of standard. Okay? So if it is higher, that means I can directly reduce this adverse variance to reach to my standard. So 29,700 minus 900 will give you 28,800. So your standard was lower, your actual was higher, then only you get adverse variance for the cost. Okay? 28,800 is the cost applicable for 4,800 units. That means 6 rupees per unit is the material cost for standard. Okay, this is the standard rate applicable. Now here as per budget, so standard rate is only applicable, but the units are budgeted output. So multiply the standard rate of 6 with the units of budgeted output. 6 into 5,000 will give you 30,000. Okay. Similarly for direct wages also, the difference between actual and standard is due to direct wages cost variance. Cost variance can be subdivided into rate and efficiency. Rate is favorable, efficiency is adverse. So 750 favorable minus 2250 adverse will give you 1,500 adverse. Again the same thing, if you have labor cost variance, actual labor cost higher than the standard cost, then in that case only you get adverse variance. So we have to reduce this to reach to our standard. 44,700 minus 1,500 is 43,200. It's not like that always if you are seeing adverse, that means you're going to reduce it. Okay? There are situations whenever we see adverse, then we have to add it. Like if I show you one situation, then if you are reaching from actual profit to budgeted profit, then though you have to add adverse variance and remove favorable variance. From budget to actual, you remove adverse and add favorable. But if you want to reach from actual to budget, you're going to add adverse and remove favorable. Okay? Just opposite of what is done here. Similarly for standard and actual also. Standard to actual also. Okay? If I reach from standard to actual, I'm going to reduce adverse and add favorable. But if I'm reaching from actual profit to standard profit, I'm going to reduce favorable and add favorable. So it is always beneficial for you to use the concept, not to remember that always adverse means minus. Okay? So use concept always. Now, for variable overhead also we compare the standard and actual to get the variances. Variable overhead variance can be subdivided into expenses and efficiency, already given to you as 3,000 favorable and 3,750 adverse. That means 750 adverse is in total the variance of variable overhead. 72,750 and we are getting 750 adverse. That means your actual cost is higher than the budgeted, and 72,000 is what we are getting here. 72,000 is applicable for 4,800 units. On per unit basis it is 15. Similarly for labor also we can calculate. This is 9 rupees. 9 into 5,000 will give you 45,000 and 15 into 5,000 will give you 75,000. Done. Next, fixed overhead is given as 39,000. Now the difference between fixed overhead actual and fixed overhead standard is the fixed overhead cost variance. Or else if you want to reach directly from fixed overhead variance to budgeted, you can use fixed overhead expenditure variance to compare your actual with the budget. So let's see what the question says. Question is giving us fixed overhead efficiency variance. It is not providing us fixed overhead cost variance or budget variance. So I can't use it directly. So what to do? With the help of this, I'm going to calculate what is the fixed overhead expenditure variance. But for that, for calculating fixed overhead expenditure variance, I should have standard rate per hour of fixed overhead, actual hours, standard hours, and the budgeted hours. I don't have any of it. No actual hours, no standard hours, no budgeted hours is available with you. So how to calculate? So they are providing us the standard direct wages rate and standard variable overhead rate applicable. I can use any of it for calculating, because for variable overhead and the wages, the rates, the hours applicable is exactly same. So you can use any of the rate given to you. Okay? How to use this and how to calculate the hours with the help of this? So if I already know that my standard variable overhead rate is 7.5 per hour. Let's use standard variable overhead rate. Okay? So if I know that 7.5 per hour is the rate applicable and I'm using 72,000 hours as per standard. 72,000 is the cost paid for variable overhead. 7.5 is the rate applicable and 72,000 is the cost. So 72,000 divided by 7.5 will give you the hours applicable for standard, and that is 9,600. Similarly, I can calculate the budgeted hours also. Budgeted variable overhead cost is 75,000 and the rate applicable is 7.5. That means 10,000 budgeted hours are there. Okay? Now, how to calculate actual hours? For actual hours, though, I don't know the rate applicable. So, what to do? So, now what I'm going to do is, I can either use variable overhead efficiency variance or labor efficiency variance for calculating my actual hours. You can use any of that because you have the hours available with you. Your standard hour is already there. Your rate applicable for both of them is already there. Okay? So if I use labor efficiency variance, what is the formula? Standard hours minus actual hours into standard rate. What is efficiency variance of labor? 2250 adverse. Standard hours we already know as 9,600. Actual hours is what we want to calculate, and standard rate for labor is 4.5. Okay? So 2250 divided by 4.5 will give you 500, and this is an inverse. So we are getting 500 inverse means 500 negative is equal to 9,600 minus actual hours. So actual hours is equal to 9,600 plus 500, which is equal to 10,100 is your actual hours, and we got to know all our hours. Now we have to know what is our standard rate per hour for the fixed overheads. Okay? Then only we'll be able to calculate fixed overhead variances. So for fixed overheads, how to calculate standard rate per hour? Now I'm going to use fixed overhead efficiency variance. So here also for efficiency variance, your formula is exactly same. Standard hour minus actual hour into standard rate is equal to 1,500 adverse. Standard hours I already know. I already know the actual hours also. The thing which I don't know is standard rate is equal to 1500 adverse. 9600 minus 10100 will give you negative 500, and 1500 adverse means this is also negative. So 1500 divided by 500, both of them are negative, so negative will get crossed. We are left with standard rate as 3 per hour. Okay? So we got all our values which are needed for calculating fixed overhead variances. Now with the help of this I can calculate all the fixed overhead variance, whether it be cost. But for that I need one more thing, that is standard rate into standard hour, standard rate into actual hours, standard rate into budgeted hour, and actual rate into actual hour also. Actual rate into actual hour is your actual fixed overhead, which is 39,000. Others I can calculate with the help of formula. 3 into 9,600 will give you 28,800. Then 30,300. Then 30,000. So fixed overhead cost variance is standard minus actual. 28,800 minus 39,000. 10,200 adverse. After getting this also I can solve this particular question. So fixed overhead cost variance is the difference between your actual and standard. So 89,000 is high, 39,000 is higher by 10,200 rupees. So 39,000 minus 10,200 will give you standard hours, standard cost, which is 28,800, and this is for 4,800 units. So 6 rupees is the rate applicable. 6 into 5,000 will give you 30,000, and we got to know our fixed overheads also. Okay. Now how to calculate sales related variance? So sales price variance will help you to reach from your standard sales to actual sales. Okay. So if you want to reach from actual to standard, then also you can use the sales price variance, which is 6750 favorable. Now what does favorable mean? Favorable means for the sales that your sales is higher as compared to your standard. That means if I have to reach my standard sales, I have to reduce this. Okay. So 2,22,750 minus 6750 will give you your standard sales, which is 2,16,000 for 4,800 units. So 45 is the rate applicable. 45 multiplied by 5,000 units will give you this budgeted sales, which is 2,25,000. And then I can calculate very easily the budgeted profit. Reduce your sales with the cost and you can get your profits. So 45 minus 6 minus 15 minus 9 minus 6 will give you 9 rupees as the profit on a per unit basis. And 9 into 4,800 is equal to 43,200. And 9 into 5,000 will give you 45,000. Okay? Done. We calculated each and everything related to your budget and standard. So with the help of this, we have made our original budget sheet and we have also prepared the standard cost sheet on a per unit basis. Okay? Now, prepare a statement showing reconciliation of original budgeted profit with the actual profit. So how to reconcile? If we want to reconcile our budgeted profit, which is we already know as 45,000, with our actual profit, then what all things you need to consider? I'm taking that net profit variant because I think that is much more easier. Okay? So for this I need sales margin volume variance on the basis of net profit. How to calculate sales margin volume variance? You require actual quantity minus budgeted quantity into standard margin. What is the actual quantity? 4,800 minus budgeted is 5,000 multiplied by standard margin. How to calculate that standard margin? This is your standard margin. Standard price minus standard cost gives you standard margin of 9 rupees. Okay? So minus 200 into 9 will give you 1800 adverse. So the first thing which we consider for reaching from budgeted profit to actual profit is sales margin volume variance, which is 1800 adverse. By considering this, you can reach to your standard profit. Okay? So what is the standard profit which we are getting? 45,000 minus, whenever you are reaching from budget to actual, adverse means minus only. So 1800 will give you 43,200. Okay? And 43,200 was the profit of standard. After getting this, you're going to consider all your, first to consider sales price variance, and that though we already know as 6750 favorable. Then consider all your cost related variances. For material, we are going to consider material price variance and material usage variance. For labor, you're going to consider labor rate variance, labor efficiency variance. For variable overhead, you're going to consider variable overhead rate variance, which is expenditure variance, and efficiency variance. For fixed overhead, also you're going to consider fixed overhead expenditure and fixed overhead volume. So material price variance is 300 and usage is 600 adverse. Labor rate and efficiency is 750 favorable, 2250 adverse. Then fixed overhead expenditure variance. First, the variable overhead expenditure variance is 3000 favorable, 3750 adverse. 3000 favorable, 3750 adverse. Then your fixed overhead expenditure and volume. We can calculate it here. Fixed overhead expenditure. For this, you're going to compare your budget with actual. 30 minus 39 will give you 9000 adverse. Then fixed overhead volume is comparison of standard hours with the budgeted hours. So 28,800 minus 30,000 will give you 1,200 adverse. So 9,000 adverse and 1,200 adverse. Okay. With this, we can reach our actual profit. So 43,200 plus 6,750 minus 300 minus 600 minus plus 750 minus 2,250 plus 3,000 minus 3,750 minus 9,000 minus 1,200 will give you 36,600 as the actual profit. And this is the actual profit given in the question also. So we reached our actual profit with the help of our reconciliation statement. And with this, we completed our reconciliation also. And now we are going to see the last topic of this chapter, that is your planning and operating variance. How to calculate planning and operating variance and what it is all about. So, whenever we say planning and operating variance, this is calculated when we are comparing for cost I'm talking about. So whenever you are calculating for cost, what you do? You compare directly your standard cost with the actual cost. But there are some situations where we have to change our standards. Whatever standard we have set, that standard is not working out for us. We need to update the standard. Okay? Standard is to for actual output only. So that will be calculated on the basis of actual output. But what is going to change? The standard rate, the standard price, that can change, right? So if you are changing the standards, then what will happen? If you are changing the standards, you will have a revised standard. No, this is the thing which is going to happen. So whenever we change the standard, we will get a revised standard. And as directly comparing your standard with the actual gives you a lot of variance. But that variance is not only because of our operations related inefficiency. The variance can also arise due to inefficiency in the setting of standard. So whatever is the inefficiency in your setting of standard, that is the comparison of standard with the revised standard. And whenever we compare our standard with the revised standard, this is known as planning related problem, planning variance. Due to our planning related problems, this is the variance which we are getting. And whenever we compare our revised standard with the actual, that is known as your operating variance. That due to operation, this is the only difference which is happening. Okay? So don't make your departments or the workers responsible for planning variance. For planning variance, managers are the one who are responsible. For operating variance, our employees who are operating or doing the work, they are the one responsible. Okay? And that is why we divide this into two different parts. Okay? This is what we are going to do with the help of this question. Let's see what it says. Director Operations of ABC Limited is of the view that the standard costing has little to offer in the reporting of material variances, and then he's saying some of the things. After this, during the last accounting period, to produce a unit of gamma, ABCL could use either 5 kg of EXC and 5 kg of Y. So we are producing gamma. This is our final product. For producing this product, we can either use EXC or WYE. So call it as X and this is our Y. Okay? So I can use either of them. No need to use both of them. You can use X or Y as your material and 5 kg is required for making one unit for both of them. Okay? Use any one of them. Then ABCL planned to use EXC. We decided that we are going to use EXC as it appeared that it is going to be cheaper of the two, and plans were based on a cost of EXC of 3 per kg. So when we made standard, at that time the cost of EXC was 3 per kg. So they are providing us the standard price applicable as rupees 3. Then due to market movement and the actual price change, and if ABCL has purchased efficiently, the cost would have been EXC would cost you 4.5 per kg and Y would cost you 4 per kg. So there is change in the actual price in the market itself. So if you would have efficiently purchased, this is the price which will get applicable. That means that there is a change in the standard itself. Think about it. If the actual price itself changed in the market, then what a purchaser will do? What our purchase department will do? Hence, this is going to be considered as revised standard. Now comes the question that when you are revising the standard, you already got to know that now EXC is not cheaper for us. For us, Y is the cheaper one. So, should I change the plan now? Should I go for Y? We should definitely go for Y now if I'm revising the standards. But the thing is, our book says that if at the end you're using EXE only, then take your revised standard also as per EXE. So even if Y is beneficial while making the revised standard, I'm going to take 4.5 only. That is though not at all beneficial, but let's do it because if institute says that is what we have to follow. So the revised price applicable for EXE is 4.5. There is no as such change applicable or given to us on the quantity. Hence, there is no revised quantity given. So, not considering it. Production of gamma was 1000 units. This is our actual output. And usage of EXE amounted to 5400 kgs at a total cost of 25,920. So, if I divide 25,920 with 5400. So, we purchased the material at actual price of 4.8. Okay? And actual quantity used is 5400 kg. What is the standard quantity for actual output? Actual output is 1000 units and we already decided that we are going to use 5 kg for every unit. Okay? 5000 kg. So 5 kg into 1000 unit will give you 5000 kg. After getting this, we can calculate our variances. So first though, I am calculating that normal variance of material, that is material cost variance. How to calculate material cost variance? For material cost variance, take your normal things. That is standard price into standard quantity, which is 3 into 5000 is 15,000 minus actual price into actual quantity is 4.8 into 5400, 25920. So this gives us 10,920 adverse. After getting this, we can subdivide this into planning and operating variances. For planning variance, what is the difference? Standard and revised standard is what you're going to compare. Okay? So standard planning variance. So standard price into standard quantity minus there is a revision in the price only. So revised price into if there was a revision in revised quantity also. So I would have considered revised quantity, but if there is no as such changes in the quantity, I'm going to consider standard quantity only. Okay? For operating variance, we are going to compare our revised with the actual. So revised price into standard quantity minus actual price into actual quantity. Okay? So what is the standard price into actual standard quantity? 15,000 minus revised price into standard quantity. 4.5 into 5,000 will give you 4.5 into 5,000 is equal to 22,500. Next, 22,500 minus actual is 25,920. So here we are getting 3420 adverse, and here we are getting 15,000 minus 22,500, which is equal to 7,500 adverse. And that is how you calculate your planning and operating variance for material. Similar calculation can be done for labor also. Whenever for your cost, whenever there is a calculation of planning and operating variance, you're going to do the same exact thing every time. Okay? But if let's say they want us to calculate for material price variance also, they want the subdivision of material price variance into planning and operating. How you will do that? So material price variance is calculated as standard price minus actual price into actual quantity. If I have to subdivide this into two parts as planning and operating, then I already told you planning is comparison of standard with the revised standard. So whatever is written in the bracket, that is what you're going to change. Standard will be compared with the revised standard. Into actual quantity will remain as it is. And for operating, you're going to consider revised and compare it with the actual multiplied by actual quantity. Okay? If you want to calculate for material usage variance, you're going to how you calculate material usage variance? Standard quantity minus actual quantity into standard price. So if you're dividing this into planning and operating variance, as per our institute, we calculate this as by changing whatever is there inside the bracket only. Okay? So standard is going to be compared with the revised quantity multiplied by your standard price only, no changes in the price. Okay? And revised quantity will be compared with your actual quantity multiplied by standard price. This is how you calculate for material. Similar calculations will be done for labor also. For sales, you need to understand that things will change. Why sales things will change? Because for sales we compare, the first thing is we compare actual with budget, not budget with actual. Okay? Actual is compared with budget. First we write the actual, then we write the budget. Actual minus budget is what we do for sales. Okay? So here we have revised budget. So the first thing is you are going to compare your actual with the revised budget. This will give you operating variance. Due to operating, what is the difference happening? You will compare your revised budget with the budget. This will give you planning variance. That due to planning, what is the variance happening? So actual price into actual quantity minus revised price into revised quantity is what you are going to consider here. Okay? And for your planning variance, you are going to compare revised price into revised quantity with your standard price into budgeted quantity. This is how you're going to write this. Okay? And with this, we completed our planning and operating variances. Also, whatever we calculated is already shown here. Now we can move forward to the next chapter, and that is going to be your quantitative techniques part, that is linear programming problem. I understand that we are left with one more chapter, that is activity-based costing, and some questions related to quality cost management also, but that we are going to cover a little later. As of now, we are going to move forward to quantitative techniques. So let's start with linear programming problems. In this particular chapter, we have lot of categories of questions like your LPP formulation, then your graphical method for solving LPP, simplex method for solving LPP, and there is duality also. But out of this, only LPP formulation and duality is what is asked by the institute in the previous attempts. Hence, for exam, for last moment, we should refer to that part only. Okay? So question number 3, a manufacturer of medicine is proposed to prepare a production plan for medicine A and B. There are sufficient ingredients available to make 20,000 bottles of medicine A and 40,000 bottles of medicine B. But there are 45,000 bottles into which either of the machines can be filled. See, whenever you are solving your LPP problems and you are going to formulate only, you have to write the objective function, that what is your objective, which can be a maximization of the profit or minimization of the losses. Then you are going to write the constraints which are applicable to achieve those objectives. Okay? So in this question, whenever there is a question, I prefer to make a table, because with the help of table, the things become much more easier and your calculations and your calculating of constraints and objective function become easier. So we have two different types of medicines which we are producing. There are sufficient ingredients available to make 20,000 and 40,000 bottles of medicines. So at max, the amount of medicines which I can make for A is 20,000 and for B I can make 40,000. But there are 45,000 bottles into which either of the medicines can be filled. There is a limitation of these bottles. Let's say that the number of bottles is not given to you, that what is the number of bottles you are going to make for A and B. Let's assume that it is going to be X and Y. Okay? This is our number of bottles which will become our decision variable, which we will use for our LPP formulation. Next, further, it takes 3 hours to prepare enough material to fill 1,000 bottles of medicine A. So 3 hours for 1,000 bottles. That means for every bottle, what is the number of hours taken? 3 divided by 1,000 will give you 0.003. This is the number of hours taken for producing every bottle. And 1 hour to prepare enough material to fill 1,000 bottles of medicine B. So here also, 1 hour divided by 1,000 will give you 0.001. And total number of hours available is 66 hours available for this operation. The profit is 8 per bottle for medicine A. This is the hours. And now the profit is given to you as 8 per bottle for medicine A and 7 per bottle for medicine B. You need to solve this, and here our objective is what? Not specifically given in the question, but what will be your objective? Our objective, whenever we see profit, is going to be profit if the question is not mentioning anything else. So how to write our objective function? We are going to write maximize Z. What to maximize? We have to maximize the profit, but this profit is on per unit basis. Multiplied by number of units will give you the total profit. So 8x plus 7y is the profit which we want to maximize. Subject to there are constraints. The first constraint is that number of bottles of X cannot be more than 20,000 because we have 20,000 amount of medicine only. So X should be less than equal to 20,000. It cannot be more than 20,000. Then similarly for Y, it should be less than equal to 40,000. Next, for X and Y together, the number of bottles is only 45,000. So X plus Y should be less than equal to 45,000. Then the number of hours available is 0.003 The number of hours required is 0.003 for x and 0.001 for y. So 0.003 x plus 0.001 y. Why to multiply with the number of units? To get the total hours, because there is a limitation of the total hours that we have only 66 hours available. Done. All the conditions are already written. We have covered this part, this. So there are 4 conditions, and now as x and y are the number of units, hence they can't be negative. So x and y should be more than equal to 0. This is how we form our LPP. Very simple, and this can give you complete 7 marks. So it becomes important for you also. Now, let's move forward to the next part, that is, a farmer has a farm with 125 acres. This is also an interesting and an important question. So 125 acres is the total farm available with the farmer. And he produced carrots, beetroot and potato. Carrot, beetroot and potato is what we are producing. So let's say the number of acres which I am giving for carrot is x, for beetroot is y, for potato is z, and the total acres available is 125 acres. Now, whatever he produces is fully sold in the market. He gets 5 per kg for carrot, 4 per kg for beetroot and 5 per kg for potato. He gets, that means this is the revenue which he is earning. The average yield is 1500 kgs of carrot per acre, 1800 kgs of beetroot per acre and 1200 kgs of potato per acre. So yield is given to you that every acre we are able to produce 1500 here, 1800 here, 1200 here, and I already know what I get. That means this can be contribution or the revenue. This can be revenue, I think, because the cost is already given to you. So 5 per kg is what we get here. 1500 into 5 per kg is 7500. 1800 into 4 will give you 7200, and 12 into 5 will give you 6000. This is what we get. This is our revenue. Okay. Next, to produce each 100 kg of carrot and beetroot and 80 kg of potato, a sum of 12.5 has to be spent on manure. So there is a cost, manure cost given to you as 12.5 is incurred for 100 kgs of carrot, multiplied by what is the kgs of carrot which you can create in 1 acre? 1500. Similarly, for beetroot also 100 kg, 12.5 divided by 100 kg into 1800. For potato, it is 80 kgs. For 80 kgs we require 12.5 of manure. 80, right? Multiplied by number of units is 1200 per acre. Now, after considering this, there is labor required also for each acre to raise the crop is 6 man days for carrot. So, for carrot, labors, right? 6 man days for carrot. Then, and potato also, this is 6 man days. For beetroot, it is 5 days. Multiplied by 40 per man day is what we pay. 40 per man day is what we pay. So the total payment here is 240, 200 and 240. Okay? Next, develop a LPP to maximize the farmer's profit. So by reducing all the cost, I can know the the profit which we are having. So 12.5 divided by 100 into 1500 will give you 187.5. Then 12.5 divided by 100 into 1800 will give you 225. And then here also I am getting 187.5. Now if I take the profit, 7500 minus 187.5 minus 240 will give you 7072.5. Next, 7200 minus 225 minus 200 will give you 6775. And the last one is 6000 minus 187.5 minus 240 will give you 5572.5. And we are done. We got the profits. But we are not completely done as of now. We have only calculated what is the profit. Now we have to find out the objective and constraint also, right? So, for carrot, beetroot and potato, the number of acres allotted, we don't know that. Hence, we allotted it as XYZ and total acres are 125. And the profit which we want to maximize is per acre only. We have considered the kgs on the basis of 1 acre. Hence, the profit is on every acre basis. Next, the question provides us the man hours also, that the total man days available with you is 550. This is also kind of limitation. 550 is the man days available, and required man days for carrot is 6, for potato is 6, for beetroot we have 5. Done. Nothing else is there as the limitation. Hence, your objective function will be maximize the profit. So profit is 7072.5 every acre multiplied by x acres, 6775 multiplied by y acres, 5572.5 multiplied by z acres. Okay? Subject to your constraints. What are the constraints here? The first constraint is that the number of acres which we have, x, y, z, should be less than equal to 125 because we have only 125 acres. Then your man days, 6 is required for every acre multiplied by number of acres, 5 multiplied by number of acres, 6 multiplied by number of acres should be less than 550 because we have only 550 man days. And at the end you can write x, y, z should be more than equal to 0 because they are acres that cannot be negative. And with this we completed this question also. Okay? Done. Moving forward to the next question. This is also an interesting question. Coffee provided is made by a shop by blending different flavors of coffee seeds. 520 grams of plantation A seeds and 510 grams of plantation B seeds are ground to yield 1000 grams of special blend powder. 520 grams of pea berry seeds and 560 grams of plantation A seeds are ground to yield 1050 grams of special pea berry powder. So there are different kinds of powders which we are preparing, and for that different kinds of materials are required. For special blend powder you require 520 gram plantation A, 510 gram plantation B. For pea berry you require plantation A 560, pea berry as 520. And the output which is generated is also given to you here 1000, here we have 1015. Similarly, for the next one, 500 grams of plantation B and 510 grams of robusta, the total output generator is 980 grams. Okay? The contribution is given on a per kg basis for all the three as 100, 120 and 140. Now think about it. If the contribution is on per kg basis, then the output should also be on kgs, rather than being on gram. And with that, the output should also be similar, then only I can compare these three situations. Here if you notice, here I am getting 1000 grams, 1050, 980 grams. So we have to convert the output in 1 kg only. Then only I'll be able to compare the situations. Okay? So 1000 gram is equal to 1 kg only. Hence this 1000 gram of output is 1 kg. And if I convert this grams of input into kg, then this is going to be 0.51 kg. And this is going to be 0.52 kg just divided by thousands. Okay? Next, if I have to convert this is going to be 0.56. This is going to be 0.52 and the output is 1.05 kgs, but the output should be 1 kg. So what I am doing is I am converting this 1.05 kgs into 1 kg. How to convert that? On the basis of your raw material. So we will say that 0.56 kg is required for 1.05. 0.56 divided by it is required for 1.05 multiplied by we want to know for 1. This is going to be 0.533 kgs. Similarly, 0.52 is required for 1.05. We want to know for 1. This is going to be 0.495 kgs. Okay? Similarly, for the next powder, this is 500. So this is going to be 0.5 kg and 0.51 kg. The output is 0.98 kg. We want the output to be 1 kg. Hence, material will be calculated proportionately. 0.5 is for 0.98. We want to know for 1. This is going to be 0.51. And 0.51 is for 0.98 multiplied by 1 will give you 0.52. Okay? So this is the kgs which we are going to use. This is the values which you are going to use now. Okay? So that is what I have calculated here. And then after calculating this, there is maximum availability given for the materials. Plus with that, it is also mentioned that what is the contribution which you are earning on per kg basis for all the materials. Okay? There is maximum availability and contribution given. Then with that, the grinding capacity is also there, that we have a limited grinding capacity of 500 kgs. That means all the materials together, all the outputs which we are generating together can be grinded at max for 500 kgs. So if I make my objective and constraints with the help of this information, then that is going to be, first we have to maximize our contribution here. So maximize the contribution, identify the variable and give the constraints. So how to maximize contribution? Just multiply this contribution with the number of kgs of powders which you created. So let's assume here we have x, y and z. So 100x plus 120y plus 140z. is what we want to maximize. Subject to our constraints. What are the constraints applicable here? The first constraint is related to plantation A, that remember that for this and this we assigned x, y and z. So 0.52 is required multiplied by number of units, which is x, 0.533 multiplied by y, and there is nothing required for normal brand. Okay, is less than equal to 200 kg. 0.52 x 0.533 y is less than equal to 200 kgs. Next, similarly we can calculate for this also. 0.51 x 0.51 z is less than equal to 300 kgs. Next, 0.495 y only. 0.495 y is less than equal to 250 kgs. And then 0.52 is less than equal to 0.52 z is less than equal to 51 kgs. 52 z less than equal to 51 kgs. Done. And then there is one more constraint, that at max you can grind 500 only. So x plus y plus z should be less than equal to 500. Done. After this, x, y, z should also be more than equal to 0, because they are the number of kgs which we are going to produce of these different products. Okay? We got all our calculations. This is an interesting question. And if you want to see, you can see here also. And it is preferable for you to write like this, that what is the constraint applicable for what particular thing. Okay? Done. Moving forward to the next question. SCML, a mutual fund company, has 20 lakhs available for investment in government bonds, blue chip stocks, speculative stock and short-term deposits. Types of investment is given to you, and the percentage return annual expected return is also given. The risk factor is also there. Mutual fund is required to keep at least 2 lakh in the short-term deposits and not to exceed average risk factor of 42. Risk factor should not exceed 42, and you have to keep in short-term at least 2 lakh. Speculative should not be more than 20% of the total amount invested. How should the mutual fund invest the fund so as to maximize its total expected annual return? Formulate and this as a linear programming problem. So you need to maximize the total expected return. Okay, so this is what we want to maximize. The return is given in percentage. Hence, let's assign that the amount invested for this is x, here y, here. Okay, we have 3 different products now. So what I'm going to give is PQRS. And the total amount which I can invest is 20 lakh. So first I'm writing the objective, which is maximize z is equal to, we need to maximize our returns. So 0.14, 14% can be written as 0.14 for P, then 0.19 for Q, 0.23 for R, 0.12 for S. This is what we want to maximize subject to our constraints. The first constraint is this, that total amount which you are going to invest in PQRS should be less than equal to 20 lakhs. Next is, we have to deposit in short-term deposits minimum 2 lakh. So your short-term deposits should be minimum. That means it should be more than equal to 2 lakh rupees. Next, your risk factor should not exceed 42. The total risk should not exceed 42, right? The average risk is specifically mentioned here. So what I'm going to do is 12P plus 24 is the risk for Q, 48 is the risk for R, and 6 is the risk for S. This divided by the amount invested, which is PQRS. This will give you the average risk. Okay? This is the total risk divided by total number of investment will give you the average risk. Should be less than equal to, right? Should be less than equal to 42. Or else if I want to write, I can write it like 12P plus 24Q plus 48R plus 6S is equal to is less than equal to 42 P plus Q plus R plus S. Rather than keeping it here, I have taken it in multiplication. Okay? Now you can open the bracket, take all the PQRS values here and then calculate the values. So every value here is multiplied by 42. If I take all the values here, I'm going to get negative 42P, negative 42Q like this. So negative 42P plus 12P is already here. Then negative 42Q plus 24 is already here. Then negative 42R plus 48R is already here. Then negative 42S plus 6S is already here, is less than equal to 0. It is always better to show the equations like this, where you are taking on the right side, you have only the constant number, and on the left side you have all the variables. So 42 minus 12 will give you minus 30p. Then 42 minus 24 will give you minus 18q. Then 42 minus 48 will give you 6r. And then 42 minus 6 will give you 36s is less than equal to 0. Okay? After this, there is one more constraint that 20% of the total amount should be at most 20%. That means less than equal to 20% is what you're going to invest in speculative stock. So speculative stock is denoted by R, should be less than equal to 0.20 whatever you're investing in total. So in total, we are going to invest in PQRS, whatever is the total amount, you're going to take it. Okay? Now let's take all the values here. R minus 0.20P minus 0.20Q minus 0.20R minus 0.20S is less than equal to 0. This will give you minus 0.20P minus 0.20Q, and then R minus 0.20 will give you plus 0.80R minus 0.30S is less than equal to 0. Done. This is what we are getting. And with this, we have completed this particular question also. These are the answers which we are getting here. Okay? Now we can move forward to the next part of this LPP, and that is duality. Duality is also a very important thing. What to do in duality? So whatever you formed now, that is known as your primal answer, your first answer or first formulation of LPP. You can create a mirror image, exact mirror image of this, and that mirror image is known as dual. Okay? So any of them can be known as dual or primal, doesn't matter. So the first one you created can be called as primal. The second one which you are going to create is known as dual. How to create dual? So there are certain rules which you need to follow. The first thing is whatever primal you already have. So whatever you already have will be known as primal. Whatever primal you already have, first convert the same thing into standard format. What is the standard format for primal? If you are having minimization primal, then all constraints should be more than equal to except non-negativity. If your primal is of maximization, then all constraints should be less than equal to except your non-negativity. If not, multiply with minus 1 to convert more than equal to less than equal to, or less than equal to more than equal to. You can do that just by multiplying minus 1. So let's try to solve with the help of this particular example only. So what I'm doing is, in this example, whatever is the final answer, I'm taking that only here. Then we have every other primal is going to have one dual. Okay? So whatever is the question you have for primal, you have solved for primal today, you can solve all of them for dual also. You can find out dual for any of them. This is the third one. And then we have fourth and fifth one. Okay? The first condition is that your primal should, if primal is of maximization, all the constraints should be of less than equal to except non-negativity. Okay? Now if you notice here, this particular constraint is of more than equal to, others are already less than equal to. So I have to convert this into less than equal to. How to convert that? Just multiply it with minus 1 and this will get converted. So minus x4 is less than equal to minus 2 lakh. Just by multiplying minus, you can convert the sign which is there in between. Okay? So these are the values which we are getting. Now let's see what is mentioned next. Maximization primal should have all more than equal to sign. Minimization primal should have all more than equal to sign. Maximization should have all less than equal to sign. So as it was maximization, we have converted everything to less than equal to. Now, if they are not there, then you can multiply minus 1 to convert as you want to. Then right hand side of constraint should be a fixed number and left hand side of the constraint should have all the variables. So all the variables should be there on the left hand side and your right hand side should be a constant number, and that is happening with all the constraints which we have. Next, all the variables should be present in objective function in every constraint. If not, write 0 as coefficient but include them, all the variables. So we have 4 different variables here which is included in your objective function which is there in this constraint, but in this constraint if you notice we have only one variable, so others have to be included as 0, 0x1, 0x2 and 0x3. Then for this we have x1, x2, x3, x4, all of them are there. Here also all of them are there. So now we've reached our standard format of dual. What to do to reach? First, minimization more than equal to, maximization less than equal to. Right hand side only constant number, left hand side all the variables. All the variables should be present in objective and constraints. If it is not there, include 0 as coefficient but include them. Okay? Now we are going to convert it to dual. For converting to dual, if your primal is minimization and constraint is of more than equal to, your dual is going to be of maximization and all constraint will become less than equal to. If your primal is of maximization, all constraint will be of less than equal to, and if you are converting it to dual, it will become minimization problem with all constraints of more than equal to. So our problem is going to become a minimization problem. And all the constraints will become, and minimization will be written as z dash, because maximization was z, so you have to assign a different name, hence we are assigning z dash. Now comes the question, what should I write as objective function? This is going to change. Plus with that, what is the number of constraints I am going to have here? Whatever is the number of variable which you have is the number of constraints you are going to have in your dual. Number of variables in primal is equal to number of constraints in dual. Number of constraints in primal is equal to number of variables in dual. As here everything is 4 and 4. Here we have, yes, everything is 4 and 4. Your variables are also 4. Your constraints are also 4. Hence, here also your variables is going to be 4 and constraint is going to be 4. But remember that whatever is the number of variable here, that is the number of constraints you are going to have here. Whatever is the number of constraints here, that is the number of variable you are going to have here. Just opposite. Okay? Now, and that is what is mentioned in this line. Then they are saying that right hand side of constraint primal will become coefficient of objective function in dual, and coefficient of objective function in primal will become right hand side constraint of dual. So there is also a change in the size, a change in the places of what? Your right hand side of constraint will become the coefficient in objective function, and your coefficients in objective function will become right hand side of the constraints. So let's change the places, and with that you are also going to use the new variables. The variables will change from what you used for your primal. So let's say I am using y1, y2, y3, y4. Okay? So this 20 lakh, I am assigning it as y1 plus, next so we have minus 2 lakh. Minus 2 lakh y2, then we have 0 plus 0 by 3, then we have 0, 0 by 4. You don't have to take anything from non-negativity, you have to take from the main constraints only. Okay? So this is our objective function subject to your constraints. So all less than equal to will become more than equal to. What is the number of constraints you are going to have? The number of variable which we have in our primal, that is the number of constraints we are going to have. So here we have x1, x2, x3, x4, hence 4 constraints is what we are going to have. Now what is going to be there in the right hand side? Whatever was written as coefficient of objective function will become right hand side of the constraint. 0.14, then we have 0.19, then we have 0.23 and 0.12. Now comes the question how to calculate this left hand side values. So right hand side of constraint primal, coefficient of objective function, and coefficient of objective function will become right hand side. Then they are not mentioning that what to do with the right hand side, left hand side values. So let me tell you how left hand side values will get created. So 0.14 is for x1, right? And we have assigned this for the first constraint. Hence, first constraint will get created by x1 values in the constraints which you have for primal. So the first value of x1 is 1. No value, that means 1 only. So 1. And now I am going to assign the new variable, the first new variable, which is y1. Then from the second constraint, I am taking 0 x1. So 0 x1 will become 0 with the second variable, which is y2. Then minus 30 x1, we are going to write minus 30 with the third variable, which is y3. And then we have minus 0.2 x1. This will become minus 0.2 with the fourth variable, which is y4. Okay? Similarly, 0.19 is coming from x2, hence take all the values of x2 to create the second constraint. So here we have 1 x2, that means 1 y1. Then 0x2 will become 0y2. Then minus 18x2 will become minus 18y3. And minus 0.2x2 will become minus 0.2x by 4. Okay. Next, from the x3 we have taken 0.3. So with the help of x3, create next constraint. 1 y1. Next, 0 y2. Next, plus 6x3 will become plus 6y3. And next, 0.8x3 will become 0.8y4. Next, 0.12 came from x4. Hence, from x4 create the next constraint. 1 y1 minus 1 y2 minus 36x4 will become minus 36y3, and minus 0.2x4 will become minus 0.2y4, and we got all our constraints. And then you can write y1, y2, y3, y4 is going to be more than equal to 0, and we are done. Okay, chalo. The next thing is they are giving us the exceptions. These are also important. I don't have the specific question for it here, but this is important for you to understand that what is happening. Equality in primal constraint. Whenever you see equality as your constraint in primal, then it is going to get converted to unrestricted variable in dual. What is unrestricted variable? A variable which is not going to be more than equal to 0. More than equal to 0 are known as non-negativity variables, the variables which are not negative. But unrestricted variable can have positive, negative or 0, any of these values. Hence it is known as unrestricted variable. So how to reach from equal to unrestricted in dual? So for this, first convert your primal into standard format, and whenever you have equal to, whatever constraint is given as equal to, let's say 2x plus 3y is equal to 5 is given as your constraint. Then to convert it into a less than or more than equal to, you're going to write it as 2x plus 3y is more than equal to 5 and 2x plus 3y is less than equal to 5. Okay? So in place of equal to constraint, these two constraints will be written. The exact same constraint is just that we are using more than equal to in one place and less than equal to in one place. Okay? So, and as for maximization or minimization, we need only specific one kind of more than equal to or less than equal to. For maximization, you need less than equal to. For minimization, you need more than equal to. So convert any one of them by multiplying minus 1 to another sign, whatever you want to convert. Then formulate dual. Find two variables with same coefficient but different signs. Take them common. You will find this, definitely find this in your dual, that you will have two different variables with the same coefficients. Because here if you notice, x has same coefficient, y has same coefficient. So you will find in your dual also that there are two different variables with same coefficient, and then just take them common as y2 minus y3. Just take them common like this and introduce one unrestricted variable in its place. In place of y2 minus y3, like if you have two different variables like x minus y or y2 minus y3, you can introduce an unrestricted variable in its place, and that is how we reach to unrestricted variable starting from an equality constraint in your primal. Now, if you have unrestricted variable in your primal, you can reach to equality in dual. So, just opposite of this situation. Introduce two non-negative variables in place of unrestricted variable. Whenever we have unrestricted, we introduce two non-negative variables which are more than equal to 0 only, but they are written as minus in between. Okay? Convert primal into standard form, convert primal to dual, and find two exact similar constraint. One is going to be positive and second one is negative. Just multiply minus 1 with negative constraint. This will give you two exact similar constraint, but one will have more than equal to and second will have less than equal to. As one has more than equal to, second is less than equal to, that means exact same constraint with different signs can be converted to equality constraint. Okay? And that is how from unrestricted variable we reach to equality. This we have discussed in detail in the class, but as of now this is a fast track kind of thing, hence we won't be able to do this now. Okay? I made you understand. I'll suggest you, if you want to get better clarity, just refer the question of the same from the class notes. As of now, we are seeing one question which was already asked in your recent attempt. Let's see what it says. So we have selling price, direct material, 50 rupees per kg, direct labor, painting, variable overhead, fixed overhead, total cost and profit is given to you. In any month, the maximum availability of input is also there. That your direct material is only 960 kg available. 800 hours of labor and painting has 400 hours. So let's calculate what is the kg required of material, hours required for labor, hours required for painting on per unit basis. So 50 rupees is paid for per kg and 200 is paid for 1 unit. That means 200 divided by 50 will give you 4 kg required for 1 unit. Here also 4 kg is required for 1 unit, alpha and beta, and the total available is 960. Similarly for labor, here we are paying 160 and 40 is paid for 1 hour. That means 4 hours is required. Here we require 2 hours and we have total 800 hours. Then painting, 60 divided by 60 1 hour, 120 divided by 60 2 hours, and 400 hours is the maximum capacity available. Okay? What to maximize? Maximize the contribution. So for calculating contribution from selling price, I have to reduce all the variable cost. So 1000 minus 200 minus 160 minus 60 minus 380 will give you 200 as the contribution. Next, 900 minus 200 minus 80 minus 120 minus 350 will give you 150 as the contribution. Okay? So after getting this table, so the question becomes easier. You need to maximize Z is equal to 200. Let's say assign A or B. So 200A plus 150B is what we want to maximize, subject to our constraints, which is 4A plus 4B should be less than equal to 960 because 960 is what we are available with. 4A plus 2B should be less than equal to 800 and 1A plus 2B should be less than equal to 400 and A and B should be more than equal to 0. Okay? Now, after getting this, you need to convert this to dual also. How to convert? Your maximization is the objective and all the constraints are already in the less than equal to format. So for converting into minimization, what to do? Take your right hand side of the constraints as the coefficient of objective function in the second dual which you are creating, and you need to use new variables. So as I have 3 constraints, I am going to use 3 variables here, and the 3 variables are x, y and z. So 960x plus 800y plus 400z. Subject to, what are the constraints available? So constraint will be made with the help of your variables here. So this more than less than equal to sign will get converted to more than equal to, and as here you have 2 variables, 2 constraints will be there in your dual. 200 will be written here and 150 will be written here. Your coefficient of objective function became right hand side of the constraint. Now 4a, which is 4x, plus next also we have 4a will become 4y, 1a will become 1z is more than equal to 200. Similarly from b we can make the second constraint, 4x 2 by 2 z is more than equal to 150 and x y z is going to be more than equal to 0, and that is how we get our dual. Okay? You can see here also we have created the exact same thing here. Okay? Done. Moving forward to our next chapter, and that is transportation model. So what happens in transportation problem? In transportation problem, there is a transportation cost involved in transporting your products, right? So we have to transfer our products from our origin to our destinations. What are the origins? Our factories are the origin from where we have to transfer to the distributors, retailers, or our own warehouses. And this involves cost. We have to reduce those costs by fulfilling the demand of our destinations with the help of supplies which we have for the origins. And that is what we do in our transportation model. Okay? So let's see first that how to balance an unbalanced transportation problem. What is unbalanced transportation problem and what is a balanced transportation problem? Whether your transportation problem is balanced or unbalanced, it is going to be decided on the basis of what is the supply and demand given to you. If your supply and demand is exactly equal, that means it is a balanced transportation problem. If your supply and demand doesn't matches, then your transportation problem is known as unbalanced transportation problem. As here if you notice, our supply is 100 and our demand is 90. That means they are not matching. An unbalanced transportation problem cannot be solved. You first have to balance it. How to balance? Wherever you have deficiency, you are going to introduce one row or column. So as my demand is lower, I am introducing one column here. All the cost related values, whatever is written inside the table is known as cost, which is incurred for transferring one unit from one place to another. All the cost related values will become 0 because this is a kind of dummy column. And then here in your demand place, I'm going to write the difference which is there. So 10 was the difference, hence I'm writing it here. let's say if unbalanced situation is happening from your supply side, my supply is, let's say 90, and or else let me make it as 80. So here I have 90, here I have 80. So now my supply is lower. So here now I have to add my one supply related row. So whenever supply is lower, you're going to add the row. Whenever demand is lesser, you're going to add a column. Okay? And remember that always you're writing demand here and supply here. On the basis of that, whoever is supplying is going to be here and whoever is demanding is going to be here. Okay? Now, after balancing, how we balanced? As the demand was lesser, we introduced one column, which is a dummy column, by adding zeros. Okay? So this is how your new table will look like. First, you need to balance an unbalanced transportation problem and then only you can solve it. Okay? So this is the summarized steps which we have prepared for transportation model. First, balance the unbalanced transportation problem. For this, your supply and demand, if it is not equal, you need to make it equal. How to make it equal? By adding dummy row or column with cost or profit is going to be equal to 0. Then identify the objective. Whether your objective of your transportation problem is minimization or maximization. If the objective is minimization, good enough. If the objective is of maximization, then you have to convert the profit matrix into loss matrix. How to convert a profit matrix into loss matrix? By reducing the highest profit value from all other values. So let's take an example of this particular situation only. Rather than providing cost inside the table, they are providing us profit. Okay? We are assuming that. And if that is the case, then you have to find out the highest profit value, which is 10. Reduce this 10 from all the profit values given inside the table. So your 10 minus 2 will become 8. 10 minus 3 will be 7, 10 minus 4 is 6, 10 minus 0 is 10. Then 10 minus 5 is 5, 10 minus 7 is 3, 10 minus 9 is 1, 10 minus 0 is 10. 10 minus 10 is 0, 10 minus 2 is 8, 10 minus 5 is 5, 10 minus 0 is 10. Okay? Only whatever the value is inside in the table, that is what you're going to change. And this becomes your loss matrix. After making this, so you're going to solve as you're solving your minimization or maximization. Steps become exactly same. It's just that whenever you have profit question or maximization question, the question will specify that whether you have to minimize or maximize. So if it is a maximization question, you first have to find out the highest profit and reduce it from all the values to get your cost values or loss matrix. Okay? Now, after making this, then the steps will become exactly same. First, you need to find out initial basic feasible solution. That can be found out with 3 different methods. First is northwest, second is least cost, and third is Vogel's approximation. If the question is not mentioning any method, you have to use Vogel's approximation method only. Okay? Let's see what will happen under different methods. So this is the table which I am going to use. This is how your matrix looks like. So first we are solving this with the help of your northwest corner method. So in northwest corner method, you start with the northwest corner. This is your northwest corner, where we are going to start with. So after crossing this, find out what is the supply and demand given to you for this particular value. Here we have supply of 700. Here we have demand of 400. Whichever is lower is what you are going to assign here. And as 400 is already assigned, you can cut this 400 completely. And out of 700, 400 is assigned. Hence, we are left with 300. As the value of the demand here is completely used, hence you can cross all the values of this particular row. Okay? Now, let's move forward to the next northwest corner, which is this one. So, cross this particular one. Then again, find out 450 or 300. Whichever is lower is what you're going to assign here. 300 is crossed. Out of 450, we have already used 300. So, we are left with 150. Hence, we can cross this particular value because all the values here in the supply column has already been reduced. Hence, this row can be crossed. Okay? Next, northwest corner is this one. We can cross this and 150 or 400. 150 will be assigned here. 150 is completely used. Out of 400, we are left with 250 only. Hence, we can cross this value also. Now, this is our northwest corner. 250 or 350. 250 is assigned here. Out of 350, we are left with 100 only. And as 250 is assigned, I can cross this particular one. Then 600 or 100. 100 is assigned here. Out of 600, we are left with 500. And 500 is assigned here. 500 is crossed. Okay? This is how you are going to do the allocations. Okay? The values which you allocated is known as allocated values. Okay? Now, after getting this particular value, we check whether our m plus n minus 1 is equal to number of allocations or not. What is the number of allocations? 1, 2, 3, 4, 5, 6. So 6 number of allocation. What is m plus n? M is number of rows, n is number of columns. So 3 rows, 4 columns, 3 plus 4 minus 1. 3 plus 4 is 7, 7 minus 1 is 6. So our number of rows and column minus 1 is equal to number of allocation. This means our solution is non-degenerate basic feasible solution with the help of which we can achieve optimality easier. Okay? This is our northwest corner method, where you start with the northwest corner to find out the basic feasible solution. This is our basic feasible solution only. To calculate the total cost under basic feasible solution, you can take your cost, multiply it with the allocated values. So 4 into 400, 6 into 300, 5 into 150, 2 into 250, 6 into 100 and 5 into 500. Wherever you have not done any allocation, no need to calculate the cost of it. Okay? Let's move forward to our least cost method. Under least cost method, we start with the least cost as the name suggests. So the least cost is 2. This is where we are going to start. 400 or 350, whichever is lower is what you're going to assign here, and we are left with 50. And as 350 is completely crossed, I can cross this column. The next least cost is 3, and we are getting this least cost in two different places. And if that happens, then you need to find out the place where you can do higher number of allocations. So if I select this 3, I can allocate 50 or 400. 50 can only be allocated here. But if I select this 3, 400 or 600, I'll be able to allocate 400. So if the cost is exactly same, select the particular cell where you are able to allocate higher number of allocations. So 400 or 600, 400 is allocated here. Out of 600, we are left with 200. So I can cross this particular column as 400 is completely allocated. Now again, if you notice, the least cost is at 3 different places. We are getting 5. So select the particular one where you are able to do higher number of allocations. So 500 on 200, here I can allocate 200. Then 500 or 50, I can allocate 50. 450 or 50, I can allocate 50. So out of all of them, this is the beneficial one where you can allocate higher number of quantities. So out of 500, we are left with 300. Now as this 200 is completely crossed, I can cross this particular row. Now again we have 2 5s. So again we have to see what is the allocation. Here 450 or 50, I can allocate 50. 300 or 50, I can allocate 50. So in both the places, I am able to allocate 50 and the cost is also exactly same. Hence you can allocate in whatever value you want to do. So 50 or 450, I allocated 50, and out of 450, we are left with 400. So as 50 is completely allocated, I can cross this. Now 6 is left. So any of the 6 you can select. On the basis of if you want to do allocation basis, then 600, here 400 or 700, 400 is going to be allocated. 300 or 700, 300 is going to be allocated. So I'm selecting this one. 400, 300, 300, 300 and 300 is crossed. Done. Whenever you complete the allocation, all the supplies and demand should be crossed. All the values should get allocated. Okay? Done. Here also 1, 2, 3, 4, 5, 6 is the number of allocation, and m plus n minus 1 is equal to 6. Hence non-degenerate basic feasible solution is reached. Now the last scenario is Vogel's approximation method. What happens in Vogel's approximation? Let's see that. So in Vogel's approximation method, we calculate the penalties. And to calculate the penalties, you have to draw the rows and columns like this. See? So let's see what will happen. So first, whenever you are calculating the penalty, you are going to calculate on the basis of least cost and the next least cost. So 6 minus 4 will give you 2. Then least and the next least. 3 minus 2 will give you 1. Then 3 and 5. 5 minus 3 will give you 2. Then 3 minus 3 will give you 0. 5 minus 6 will give you 1. So remember that whenever you have exact same small cost, you are going to take the difference of both of them only. 3 minus 3 will give you 0. You are not going to go for 4. Okay? 3 minus 3 is what you are going to consider. Then 2 minus 6 is equal to 4. Then again we have 5 and 5. So 5 minus 5 will give you 0. The highest penalty is what you are going to consider. This is the penalty which we calculated. Out of this penalty, select the highest penalty, which is 4. And after selecting the highest penalty, wherever you are getting the highest penalty, whether it is in column or row, you are going to select the lowest cost of that particular row or column. So this is the lowest cost. Here we are going to do the allocation first. 350 or 400, 350 is allocated. Out of 400 we are left with 50. Okay? As 350 is completely allocated, I can cross this particular column. Now again calculate the penalty. After doing first allocation, after every allocation we do calculate the penalties. So least cost and the next least. 4 minus 6 will give you 2. Then 3 minus 5 will give you 2. Then 3 minus 5 will give you 2. Next, 3 minus 3 is 0. 5 minus 6 is 1 and 0. Here though we have already crossed, hence no need to calculate penalty here. Okay? Now if you notice, the highest penalty is there in this 3 different scenarios. 2, 2 and 2. Out of this 2, which one to select? So if I select this 2, first to see where you have lowest cost. If I select this 2, this is the 4 where I'm going to do the allocation. If I select this one, I'm going to allocate at 3. If I select this one, I'm going to allocate at 3. So you have to select a particular penalty, the highest amount of penalty. If you have highest penalty in different places, you're going to select the option which has lowest cost. So this option got rejected. Now we are left with these 2 options. Out of this, you're going to choose the one where you can do higher number of allocation. So if I choose this one, 400 or 600, I can allocate 400. And if I choose this one, I can allocate 400 or 50. 50 is allocated. So 400 or 50, which one is higher? 400 is higher. So allocate 400, cross this 400, and out of 600, we are left with 200. Okay? This values can be crossed completely as 400 is allocated. Now again, you are going to calculate the penalty. 6 minus 6 gives you 0. 5 minus 5 is 0. 9 minus 5 is 4. Then 6 minus 5, 1 and 0. Out of these penalties, 4 is the highest number. And out of the cost here, you are going to select the lowest cost, which is 5. 200 or 500, 200 is allocated. Out of 500, we are left with 300. And this can be crossed completely. Now again, we are going to calculate the penalty. 6 minus 6 is 0. 5 minus 5 is 0. 6 minus 5, 1. 6 minus 5, 1. So we are getting 1 in 2 different places. We can select any of it on the basis of smallest cost. Here we have smallest cost as 5. Here also the smallest cost is 5. And if the cost is exactly same, see the allocation. 300 or 50, 50 is allocated. 450 or 50, 50 is allocated. As the allocation is exactly same, you can select any of the 5. I'm selecting this one. So 50 out of 300, 250 is left. So this 50 can be crossed and this can be completely crossed. Now, okay, so we have crossed 50 here now. So I'm going to cross this particular value. Your row values are completely crossed because we are left with 250 here. Now, this 450 I can allocate here. Out of 750, we have allocated 450. So we are left with 250. And then here we can allocate 250. Done. 1, 2, 3, 4, 5, 6 allocations are there. And after doing this is not enough. This is just your basic feasible solution which we calculated. Question wants us to reach to the optimal solution. And for optimum solution, first you have to check the degeneracy. See, whenever the question is asking you to reach to the optimal solution, it is always beneficial for you to refer Vogel's approximation method because this gives us the best answer in the first step itself. So this is always preferable over and above any other method. Then after getting your initial basic feasible solution, you have to check for degeneracy. If your number of allocations is equal to m plus n minus 1, you have reached non-degenerate basic feasible solution. If allocation is less than m plus n minus 1, this is known as degenerate basic feasible solution. And if you reach degenerate basic feasible solution, then we have to again reach non-degenerate. How to reach? You're going to introduce epsilon in the least valued unallocated cell where there is no closed loop formation and make allocation equal to m plus n minus 1. So if it is lesser than m plus n minus 1, you're going to use epsilon in the cell which is least valued, which is unallocated. There should be no allocation in that place. Plus with that, there should be no closed loop formation. How to form closed loop? How to check for closed loop? We are going to see that here. Here we already have the steps for making the closed loop. So here we are going to discuss that. But before that, you need to remember that if your allocations are less than m plus n minus 1, you're going to introduce epsilon. But as of now, in our question, allocations are exactly equal to m plus n minus 1. 1, 2, 3, 4, 5, 6. Okay? 6 allocations are there. M plus n is 7. Minus 1 will also give you 6. So here in our question, m plus n minus 1 is equal to number of allocations. And if that happens, you have reached our non-degenerate basic feasible solution. Now after reaching non-degenerate basic feasible solution, we can check whether this answer which we got is optimal or not. If it is not optimal, then how to reach optimality, that also we are going to see. Let's first check whether the answer which we got is optimal or not. For that, first I have made the exact same table, and now I'm putting the allocations only. No crossing should be there so that you can calculate it easily. 450, 250, next is 350 and 50. Put the values at the correct places only. 400 and 200. Done. These are the values which we allocated. Now, with the help of your allocated cells, we are going to calculate the value of U and V. U1, U2, U3, V1, V2, V3 and V4. So for rows, you are going to allocate U1, U2, U3, and for columns, you are going to calculate the values for V1, V2, V3, V4 with the help of your allocated cells. Okay? So this U and V is the total of the cost which is written here. But for calculating the values of U and V, we should have one U or V as 0. So this you can do on the basis of number of allocations which you have done. So higher number of allocations is 3. Here we have allocated 3 different values. Here we have allocated only 2. Here also only 2. Here also only 2. Hence, I can select V4 as 0. Or else, if you don't want to select or find out what is the one where I should do the allocation, you can take any U1 or V1 as 0. It will also work. There is no issues with that. As of now, I'm taking V4 as 0 because this makes the answer convenient. How convenient? Because here you already have 3 values. So this 3 values will help you to calculate these 3 values directly. How to calculate U and V? So U and V are made up of the cost which is there in the allocated cells. So U1 plus V4 will give you the cost of 6. So if I already know that my V4 is 0, then what should be the value of U1 to get the 6 value? It should be 6. 6 plus 0 will give you 6. Similarly, 0 plus what value will give you 5? 0 plus 5 will give you 5. Then 0 plus what value will give you 5? 0 plus 5 will give us 5. Okay? After getting this, 5 plus what will give you 3? 5 plus what will give you 3? 5 minus 2 will give you 3. Similarly, 5 plus what will give you 2? 5 minus 3 will give you 2. Then 6 plus what will give you 6? 6 plus 0 will give you 6. And done. We got all the values of U and V. So, the total of U and V is the cost which is there in the allocated cell. Okay? After getting the value of U and V, we are going to calculate opportunity loss for our unallocated cells. So, for all the unallocated cells, we are going to calculate this opportunity loss which is denoted by triangle. So, what are the unallocated cells? In the first row, I have first column and third column. First row, first column, first row, third column. In the second row, I have first and second. In the second row, I have first, second row, second. Then in the third row, second and third. Third row, second, third row, third is the unallocated cell. Now write the cost of the unallocated cell. 483596. 483596 minus your U and V value for that particular unallocated cell. So in this unallocated cell, I'm getting U as 6 and V as minus 2. So write that in the bracket. 6 plus minus 2. Okay? U plus V is what we are writing in the bracket. Next is this value. Here your U is 6 and V is minus 3. 6 minus 3. Then 2, 1. For this particular one, 5 and minus 2. 5 and minus 2. Next, 5 and 0. Next, 5 and 0 again. Next, 6. For this particular 6, we have 5 and minus 3. So 5 minus 3 is 2. 6 minus 2 is 4. 9 minus 5 is 4. 5 minus 5 is 0. And then 3. 5 minus 2 is 3. 3 minus 3 is 0. 6 minus 3 is 3. 8 minus 3 is 5. 6 minus 2 is 4. 4 minus 4 is 0. And if you got your opportunity loss as more than equal to 0, hence you reach the optimality. Okay? So whenever you get your opportunity loss more than equal to 0, you reach optimality. And if you reach optimality, that means whatever answer you got here, that is your optimal answer. You can't improve it. This is the best solution which can happen in this situation. And whenever we get the best solution, what we do? We calculate the total cost. So if it is a loss matrix, remember that. If it is a loss matrix, I can directly take the value from here. This is the cost multiplied by allocation, cost multiplied by units allocated. For all of them, I can directly take it from here. But if it was a profit matrix, in profit matrix, we convert it into loss matrix by reducing the highest profit value. Hence, you can't take the cost from here. What to do? For cost, you're going to take from the main table which is given to you in the question. So whatever is the main table given to you, for profit related questions, you're going to take it from the question itself. Whatever is the profit value, and allocation you can take from the last table. Okay? Remember this step. If you do this wrong, your final answer will get wrong. And if the final answer is wrong, institute will cut higher number of marks for getting final answer as the wrong answer. Okay? Now, let's calculate the total cost applicable here. As it is a cost related question, I can directly calculate the total cost by seeing what is the allocation which we have done. For X, we allocated to B and D. X is allocated to B, X is allocated to D. Y is allocated to C and D. Z is allocated to A and D. Now, what is the cost? 662,535. I am seeing only the cost of allocated cells. 662535. 450, 250, 350, 50. 450, 250, 350, 50. Next, 400, 200. Then multiply these values and this will give you the total final cost applicable. So 6 into 450 is equal to 2700. 6 into 250 is equal to 1500. 2 into 350 is 700. 5 into 550 is 250. 1200 and 1000. So this is equal to 7350 and this is our total cost. 7350 is the total cost applicable here, and we reached our optimal scenario. Now it can happen that you're not reaching the optimal scenario, and when will this happen? If your opportunity loss is having any negative value, that means you're not reaching the optimal solution. And if you're not reaching the optimal solution, then what to do? If your opportunity loss is less than 0, that means it is negative. And if it is negative, you need to start from the cell having the highest negative value. Whatever is the cell having the highest negative opportunity cost value, let's say here I'm getting -4. This is the highest negative value here. This is where I'm going to start. And I'll check whether the loop formation is happening or not in that particular cell. Okay? So, if opportunity loss is negative, start from the cell having highest negative opportunity cost value, and you're going to form a closed loop. How to form a closed loop? For this, you'll put plus sign on the starting unallocated cell. As we are starting with highest negative opportunity cost value related cell, that cell will be marked as positive. Then you're going to move only and only with the help of horizontal and vertical lines. And this lines, whenever you're moving, let's say if I go from here to here, then I'll take a change, I'll take a turn. I can only turn when I have allocated cells. With the help of unallocated cells, you can't take turn. Okay? So wherever you have allocated cells, that is where you're going to take the turns, and you have to form a closed loop. So after forming a closed loop, put plus sign on the starting unallocated cell and assign alternate negative and positive signs to the corner cells of the loop. Find minimum allocation among negative cells. So if let's say this is my loop with the help of allocated cells and horizontal and vertical values. So wherever I started, I'm going to assign positive, then negative, then positive and negative on the alternate cells. In the cells where I assigned negative value, see what is the allocation which you have done in this negative valued cell. If the allocation is smallest, whatever is the allocation, smallest allocation out of these two allocated cells, take that smallest allocation and reduce it from the negative cell values and add it in the positive cell values. Okay? So after doing this, you'll get an improved matrix, and in this improved matrix, again calculate U and V values and calculate the opportunity loss for unallocated cells. If the opportunity loss is positive, that means you reach the optimal solution. If it is not positive, then you need to do the improvement again and again. And this will happen again and again till the time you're not reaching the optimal solution. And that is how we use our Modi method. Okay? And whenever you reach the optimal solution, you can find out your final cost which is there. And we are done. Now we can move forward to the next part, and that is going to be assignment. Okay, we have understood everything about transportation. That much is enough. You should know what are the steps to be followed and how to do the improvement. That is very important. If they are asking, it can happen that they are giving you the question where optimal solution is not reached in the first step itself. You have to at least do the improvement once. So you need to have clarity about how to do the improvement. I have already told you the step. If you want more clarity, I'll suggest you to refer the questions. At least one question, that will be enough for you to get the more understanding. Now let's move forward to the next topic, that is assignment. Now what is assignment? Here we have different kinds of worker to whom we have to assign to different works. Now remember one thing, whenever we do assignment is done of one job to one worker. And one worker is assigned to one job only. Okay? From both the sides, you are going to assign only one job to one worker. But in transportation, that is not the case. I can assign two plants to different outlets or one outlet to do different plants. It can happen in transportation. But the thing is, this is not going to happen in assignment. Assignment says that you can only assign one job to one worker and one worker to one job. How to do assignment? We are going to understand this with the help of the steps. So as we have seen in transportation, that the first thing which you are going to do is balance the unbalanced transportation problem. Same thing is applicable for assignment problem also, that you first have to balance the unbalanced assignment problem. But how we used to balance in transportation problem? On the basis of supply and demand. But here, on the basis of numbers of rows and columns, we balance our unbalanced transportation problem. So if your number of rows and columns is equal, that means it is a balanced assignment problem. But if your number of rows and column is not equal, that means it is an unbalanced situation. And whatever is lower, just introduce that with the cost as 0. Okay? Now, check whether the question is of maximization or minimization. That we do in transportation also. Huh? If it is a question of minimization, you can move directly to the next step. But if it is a question of maximization, that means you have profit matrix in the question. You need to convert it into loss matrix in the same manner as you used to do for transportation. Take the highest profit value, reduce it from all the values which is given in the table, and then you will get your loss matrix. After getting your loss matrix, the values or the steps which are followed is going to be exactly same. The first step is row operation. What is row operation? You need to find out the smallest cost element from each row and subtract it from other elements, all the elements which are there in that row, to get a reduced cost table. Similarly, the column operation is find the smallest element from each column and reduce it from all the column values to get your reduced table. Okay? After getting your reduced table, you are going to reach to optimality. For checking for optimality, first you need to do row scanning and column scanning. How to do row scanning? See whether your row has only one 0 or not. If your row has only one 0, put square around the 0 and cut the column where the 0 is. If I am scanning the row, I'll see whether 1 0 is there or not. If I have 1 0, good enough. If I have 2 zeros or no zeros, skip that row. But if you have 1 0 in the row, just mark that with square, and as you are scanning the row, you are going to cut the column. Okay? Now, you are going to do this same step till the time you are reaching to the last row. After doing this, check whether all the zeros are crossed or not. If all the zeros are crossed, you can directly check for optimality. But if all zeros are not crossed, you need to go for column scanning. What is column scanning? Here also you are going to check whether in a column there is 1 0 or not. If the column has 1 0, good enough. If it has more than 1 zeros or no zeros, you are going to skip that particular column. If the column has 1 0, you are going to put the square around the column, and as we are scanning the column, we are going to cut the row. Okay? While doing column scanning, you are going to cut the row. Now, after putting or after crossing all the zeros or putting square in the zeros, check whether all the zeros are crossed or not. If all the zeros are not crossed, you need to continue this step again and again till the time all the zeros are crossed. If all the zeros are crossed, then you can check whether you reached optimality or not. How to check for optimality? If number of zeros with square is exactly equal to number of rows or column, then the solution is optimal. Otherwise, you need to improve the matrix. How to improve the matrix? find out the smallest uncovered cost element, subtract it from all the uncovered cost elements, add it to the intersection of any line, and the other element should remain same. How to do this improvement we are definitely going to see with the help of example. Okay? So these are the steps which we follow. After improvement also you need to again do row and column scanning, check whether optimality is reached or not, and if again you didn't reach optimality, you need to follow this step continuously till the time you are not reaching the optimal situation. Okay? So let's see this particular question to understand how to solve these questions. ABN City Corporation has decided to carry out road repairs on the main 4 arteries of the city. The government has agreed to make a special grant of 65 lakhs towards the cost with a condition that the repairs must be done at the lowest cost and quickest time. The corporation has floated tenders and 5 contractors have sent their bids. In order to expedite the work, one road will be awarded to only one contractor, and that is what happens in assignment. So we have 5 different contractors but only 4 roads. That means we need to introduce the dummy. See, whatever you are doing, you first have to check whether it is balanced or not. If it is not balanced, balance it first. So we are introducing a dummy column here because the number of columns are lesser and the cost which is going to be there is 0. And as the question is providing us the cost here, we have to minimize the cost. Okay? And as it is a cost matrix, no need to convert highest 5 profit value and reduce it. No need to do as such. We can directly move to row operation. What is row operation? Find out the smallest value from each row. So if you notice, after assigning dummy, all the row has 0 as the smallest value. Hence, everywhere in row operation, I am getting 0. And if you are getting 0, that means if I reduce this 0 from all the values of this particular row, I am going to get this exact same value only. 0 minus anything gives you that anything value only. Now, after getting this, after performing row operation also, I am going to get this exact same table. Now what to do? Perform column operation. For column operation, find out the lowest value from each column, which is 10, 20, 10 and 20. After finding this out, you need to make a new matrix. So, if I reduce this values, whatever I am going to get, I am going to write this directly in the new matrix. And remember that we have dummy also. If I find out the lowest value here, that is going to be 0 only. Okay? So, we have 5 different contractors, C1, C2, C3, C4 and C5. And 10 minus 50 will give you 40, 40 minus 10 will give you 30, then 50, then 30 minus 10 is 20, 10 minus 10 is 0. Then 40 minus 20 is 20, 30 minus 20 is 10, 20 minus 20 is 0, 30 minus 20 is 10, 20 minus 20 is 0. Then 60 minus 10 is 50, 40 minus 10 is 30, 30 minus 10 is 20, 20 minus 10 is 10, 10 minus 10 is 0. Then the last one, 20 minus 20 is 0, 30 minus 20 is 10, then 20 minus 20 is 0, 30 minus 20 is 10 and then 10. Then to 0 minus 0 will give you 0 only. And this is the new table after performing row and column operation. Okay? So the first thing is balance the unbalanced problem. Then check for maximization or minimization. If it is minimization, you can directly move forward to row operation and then perform column operation. After performing row and column operation, you need to do row scanning. So for row scanning, check whether you have 1 0 or more than 1. More than 1, hence skip the column, skip the row, move forward to the next row. In this row we have 1 0. We are going to mark the 0, and as we are scanning rows, we are going to cut the column. Then we have 2 zeros, skip, no zeros, skip, 3 0, skip. Then here we have 1 0, mark and cut the row. Here we have 1 0, mark, and as we are scanning column, we are going to cut the row. See, after scanning all the rows, we move forward to column scanning. Okay? And that is what we should do. If all the zeros are not covered, you need to move forward to column scanning. So in this column, we found out 1 0, hence cut the row. In column, 1 0, cut the row. No zeros, skip, 1 0, put the square and cut the row. Now, after this, you need to check whether you reached the optimality or not. When optimality is reached, when your number of zeros with square, which is 1, 2, 3, 4, is equal to number of rows or column. Number of rows and columns is 5. So they are not equal. As they are not equal, we have not reached the optimality. And if you are not reaching optimality, you need to see, whenever you are checking for optimality, you are going to check only and only when all the zeros are covered. And if you notice, all the zeros are already covered, hence I can check for optimality. As we have not reached the optimality, we are going to improve the matrix. How to improve the matrix? On the basis of uncovered cells. So these are the uncovered cells where you have not crossed anything. Now in this uncovered cells, find out the lowest cost value, which is 10. So 10 is the lowest cost value. Now I'm going to reduce this particular value from all the cells which are uncovered. So uncovered is 30. 30 minus 10 is 20. 10 minus 10 is 0. 30 minus 10 is 20. 10 minus 10 is 0. Then here also we have uncovered cells. 20 minus 10 is 10. 10 minus 10 is 0, 0 and 0. Then after this, you're going to check what all are the values where the lines are crossing. So here one line is from here and here. So there is a crossing here. Here also we have a crossing. Here also we have a crossing. Wherever you have crossing, you need to add that least valued cell amount which you decided. So 10 is the least values which you decided. So you're going to add this particular value in zeros. So all are the zeros. So I'm adding this value here and I'm getting 10. After this, wherever you have only one line crossing the values, you're going to write the values as it is. So 40, 20, 50, 0. Here also we have 0 with one crossing, 0 with one crossing. Then 50, 0, 20, 0. Then 0, 0, 0, 10. Done. After this, we got our new table. Now in this table, again do row and column scanning and check whether you reached optimality or not. Only 1 0, mark and cut the column. When you are scanning row, you are going to cut the column. 2 0, skip. 1 0, mark and cut the column. 2 0, skip. 2 0, skip. As I have checked all the rows, now I am moving forward to checking column. I have 1 0, mark and cut the row. Column scanning, mark 1 0, cut the row. Again column scanning, mark and cut the row, and we are done. 1 2 3 4 5. 5 are the number of zeros with square and 5 are the number of columns and row. Hence we reached optimality. After reaching optimality, we have to calculate the cost. Now if you notice, this is a reduced matrix. We can't use this. Whenever you have to calculate the value under assignment, you are going to use the final question related table only. You can't use this value which you got at the end. You are only going to take the allocations from here and the values you are going to take from your main table which is given in the question. Okay? So C1, C2, C3, C4, C5. C1 is allocated to the, this is LPMS. LPMS, and this one was the dummy. So C1 is allocated to S. C2 is allocated to dummy. That means we are not going to allocate any contract to C2 if it is allocated to dummy. C3 is P, C4 is M, and C5 is L. Okay? So let's see the values. C1S is 20. C2 dummy is 0. C3 P is 20. C4 M is 20. C5 L is 10. So the total cost is 20, 20, 20, 10. That is equal to 70 lakhs. Okay? Done. So find the best way of assigning the repair work to the contractor and their cost. The cost is 70 lakh rupees. And we are done. This is the allocation which we have done. Okay? Chalo. Let's move forward to the next question, that is question number 24. So here we are going to see a situation of assignment problem where there are preferred routes given in the question. So this question is already asked in your December 25 attempt. Let's see what is happening here. A state municipal corporation has decided to carry out road repairs on 4 main roads in the city, and you have been asked to advise them the least cost allocation. It is learned that the state government has agreed to make a special grant of 114 lakhs towards the cost with the condition that the repair should be carried out at the lowest cost. 5 contractors have sent their bids. Only one road will be allowed to one contractor. So we have different 5 contractors available, but only 4 repair works are there. So we need to introduce dummy here. So dummy is going to be 0, 0, 0, 0. You are informed that now there is a preferred situation which is given to you in the question itself. That you are also informed that contractor C1 should get R1. They are saying that your C1 should get R1. So already your C1 is allocated to R1. Then your C5 should get R2. So C5 is already allocated to R2. That means no other allocation will be done for R2, no other allocation for C5, no other allocation for C1, no other allocation for R1. Okay, because they are already allocated, no other allocation can be done now. By applying the principle of assignment, assess the minimum cost of allocation. So for calculating the minimum cost of allocation, we are going to evaluate only these three options because the other two is already allocated. You can't do anything for that. Okay, because question itself says you need to prefer, so you will not do anything else for the same. So let's write the remaining part. This is the remaining part, R3, R4 dummy and C2, C3, C4. Now out of this, first what we have to do, after balancing it, it is a balance situation, 3 here and 3 here. After balancing it, you need to first do the row operation. In the row operation, you are going to find the row least values, and the least value for all those rows is 0 only. Hence, you are going to get this exact same value after performing row operation also. Then the column operation, for this, the least value here is 36. Here also 36, and here we have 0. So we will get a new table by reducing the column operation related values. Then C2, C3 and C4. 36 minus 40 will give you 4. 42 minus 36 will give you 6 and the 0 value. Then 36 minus 39 is 3. 36 minus 38 is 2. 36 minus 36 is equal to 0. And 0 minus anything will give you 0 only. 0 minus 0 will give you 0 only, because here we have all the values as 0. Okay? After getting this, we are going to perform row scanning and column scanning, because row and column operation is done already. So from row scanning, I got that here we have 1 0. We are going to cut the column, and then no 0, 2 0, skip. Then we are going to column scanning, 1 0, mark and cut the row. Now if you notice, we are not left with any rows, any zeros, but only 2 zeros are marked with square. We have 3 different columns and rows. So what to do? We need to improve the matrix. So our improved matrix will be made with the help of not crossed cells. So these are the cells which are not crossed. Out of this, you need to find out the least cost, which is 2. 2 will be reduced from all the uncrossed values, which is 4 minus 2 will give you 2, 3 minus 2 is 1, 6 minus 2 is 4, 2 minus 2 is equal to 0. And then wherever you have intersection, which is happening at this place, you're going to add the least value, which is 2. So add it here, and the other values will remain exactly same. Okay? After getting this, now we are going to again do row and column scanning. So here we have 1 0, just mark and cut the column. Then again we have 1 0, mark and cut the column. Again we have 1 0, mark and cut the column. So we got the allocation for R3, R4 and dummy, and C2, C3, C4. And for C1, to the already allocated cell is R1. For C2, we allocated it to dummy. For C3, we allocated for R4. For C4, we allocated to R3. For C5 also, the allocation is already done to R2. Okay? Now, so by adding this, we can get our minimum cost. So let's see what are the values here. For C1 R1, it is 18. For C2D, for C2 dummy is 0. For C3 R4 is 38. Next, C4 R3 is 36. C5 R2 is 30. So by adding this, I can know what is the cost which we are incurring. 18 plus 38 plus 36 plus 30. So total 122 is the cost which is incurred here. Calculate the minimum discount that the eliminated contractor should offer for meriting a contract. So who is the eliminated contractor? C2 is the eliminated contractor. Now if you notice, this is already allocated. This is already allocated. So we are left with this particular part which we have done the allocation of. This part was already allocated in the question itself. So we are not going to do anything about it. Then out of this, the allocation has happened to C4 with 36 lakhs, and here by 38 lakhs. Why we have not allocated to C2? Because the cost of C2 was higher as compared to C4 and C3. Okay? So what is the higher cost here? 4 lakh is the cost by which C2 is higher here, and here 1 lakh is the cost. So if C2 wants to take the contract R3, C2 should offer 4 lakhs reduction in the cost, and if he wants R4, then the reduction should be of 1 lakh rupees. That is what the question wants from us, and that is what we calculated. Okay? 1 lakh is the reduction for one contract, and for the second contract the reduction should be 4 lakh rupees, and the total minimum cost which we are getting is 122. And we are done with this question also. And now we can move forward to the next question, which is traveling salesman question. This is also an interesting question here. A salesman has to visit 5 different cities A, B, C, D, E. The intercity distances in kilometers are tabulated below. Note the distance between two cities need not be same both ways. And that is what is happening here. From A to B, if you notice, if we are going from A to B, the distance is 12. But if we are going from B to A, then the distance is 6. So the distance between two cities from both the ways is not exactly same. If the salesman starts from city A and has to come back to city A by applying the principle of assignment, which route would you advise him to take so that distance traveled by him is minimized? Now remember that he has to visit all the 5 cities starting from A, and he has to come back to A again. And with that, you can travel to one city once only. Why to travel again and again? This will increase the cost, right? So you have to start from A, come back to A by covering all the cities. Now if you notice here, this is given as dash. Why? Because there is no travel as such going to happen from A to A, from B to B, from C to C. So they are prohibited routes. For prohibited routes, we assign a highest amount of penalty, that is M. Okay? This is like infinity. We are assigning infinity here so that no allocation happens in that particular places. Okay? After doing this, you need to follow your normal row and column operation and the normal assignment method which you do, and then we have to improve to reach all the cities. So the first step is going to be exactly same as you have done till now. First, check whether the problem which is given to you is balanced or not. It is balanced because we have 5 cities in both the places. Now you can perform your row operation. For this, find out the least value in the row, which is 12. Then we have 6. Then we have 10. Then we have 14. Then we have 12. Reduce this value from all the cells to get your new table. A, B, C, D, and E. A, B, C, D, and E. So, M minus 12. M is infinity. Infinity minus 12 will give you infinity only. 12 minus 12 is 0. 24 minus 12 is 12. 25 minus 12 is 13. So, as we have to minimize, hence it is not a question of profit matrix. We can directly do the calculation. If it was of profit matrix, you need to reduce the highest value from all other values. Okay, now let me tell you one most important thing here. That if it was a question of profit matrix, then before assigning M, I'll first convert it to loss matrix and then I'll assign M. This is something very important, huh? So if for traveling salesman or for any prohibited question where you need to add prohibitions like M, before assigning M, first find out the highest profit value, reduce from all other values, and then only assign M. Otherwise, you're not gonna assign M till that time. Okay? Chalo. So as it is not a question of profit matrix, I can directly assign M and calculate the values. 15 minus 12 is 3. Next, 6 minus 6 is 0. Then we have M. 16 minus 6 is 10. 18 minus 6 is 12. 7 minus 6 is 1. Then 10 minus 10 is 0. 11 minus 10 is 1. Then M. 18 minus 10 is 8. 12 minus 10 is 2. Then 14 minus 14 is 0. 17 minus 14 is 3. 22 minus 14 is 8. Then M. Then 16 minus 14 is 2. Next, 12 minus 12 is 0. 13 minus 12 is 1. 23 minus 12 is 11. Then 25 minus 12 is 13. And the last one is M. After this, you are going to perform column operation. For this, find out the least value from all the columns. Here we have 0. Then we have 8. The next one is again 8. Then we have 1. So, we have 0, 0, 8, 8 and 1. Okay? So, here if I reduce from 0, I am going to get the exact same value only. Then we have 0. So, this will also remain exactly same. Then we have 8. So, 12 minus 8 is 4. 2. M. 8 minus 8 is 0. Then 3. Next we have again 8. 13 minus 8 is 5. 4. 0. M. 5. Then 1. 3 minus 1 is 2. 0. 1. 1 and M. This is your new table. After performing row and column operation, here we have A, B, C, D, E. Here also we have A, B, C, D and E. Let's perform row and column scanning. Here only 1 0 is there. I can mark and cut the column. 2 0 skip, 2 0 skip, 2 0 skip, 1 0. Mark and cut the column. Then we have 1 0, mark and cut the row. Again we have 1 0, mark and cut the row. Again we have 1 0, mark and cut the row. Done. All the allocations are done. 1, 2, 3, 5, 4, 5 are the allocations and 5 are the rows and columns. Do I reach the optimal solution? Answer depends on whether you are able to cover all the cities or not. So if I am starting from A, I am going to B first. This is where we have allocated. Then from B, we are going to E. And then from E, you are going back to A. That means you are not able to cover C and D. And if I see for C, from C we are going to D. And from D we are going to C back. So from D we are going to C back. So in these two different routes, both are not applicable because you are not able to start from A and you are not able to cover all the cities. Hence this is not your optimal solution which is able to fulfill the requirement of the question. So what to do? We need to improve this. How to improve this? For improvement, first I am going to calculate something. This is interesting. This will help you to find out what is the correct route which you should definitely take. Okay? So I'll check what is the next highest value after this particular allocated value. Next one is this 2. Then here we have 1. So 2 plus 1 is 3. This is what I'll write as penalty. Okay? So if I see for this particular row, here we have 0 and here we have 1. 0 plus 1 will give you 1. Next, for this particular value, here we have 4 and here we have 0. 4 plus 0 will give you 4. Next, for this cell, 0 and 2 will give you 2. Next, this one, 1 and 0 will give you 1. Okay? After knowing this penalty, remember that wherever you have higher penalty, you are not going to move this. At least if you are able to do without moving it, that is the best solution you can reach for. Okay? So I'll not move these two at least. Then let's try to move this one because here the penalty is lower. So can I take this from this 0 to this 0? You have to take the allocation from one place to another where you are getting the least cost. So can I take it from this 0 to this 0? If I take it here, then I'm going from A to B and then B to A. You will not be able to cover anything. So I can't take it to this place. So the next highest number is 2. After 0, I have 2. So can I take this 0 here? If I do this, I'm going from A to B. I'm going from B to C. I'm going from C to D. I'm going from D to C again. So this also will get changed. So for this though, I'm at least choosing this one. And if I choose this one, I have to cross this one. I'll not be able to use this because one allocation can only be done in one place. Okay? So if I'm going from A to B, B to C, this is crossed. So from A to B, B to C, C to D, and from D, can I go to A? Because here we have 0. Answer is no. Why? Because you are not able to cover E then. So what to do? The next least cost, which is 1. So can I go from A to B, B to C, C to D, and D to E, and then E to A? Answer is yes. With the help of this, you'll be able to cover all the cells. And this is what we are going to do. Okay? You need to decide on the basis of least cost and then try to move only to the places which are leading to your least cost only. Okay? I don't want to change this 3 and 4 because they are leading to highest penalty. Hence, we have changed other places to get our final value. Now, it can happen in some situations that you have to change this. Without changing this, you are not able to reach the final value. Then you can definitely change it. But this should not be your priorities. You should first try to change in other places. Then only if it is not working out, then change for this higher penalty related values. Okay? So with the help of this answer, I am able to cover A, B, C, D, E, all of them. From A to B, from B to C, from C to D, from D to E, and from E to A. Okay? So our allocations are A is allocated to B, B is allocated to C, C is allocated to D, D is allocated to E, and E is allocated to A. And what is the cost in different places? For A to B it is 12, then 16, then 18, then 16, and then 12. Take the total of it. And we are getting 74, and this is our final answer. Okay, done. And that is the exact same value which we are getting here also. Moving forward to our next part, and that is going to be game theory. So we have completed our assignment also, and now we are moving forward to game theory. Let's see what it says. So to understand game theory, I have made some summary which will help you to understand this in a much more better way. Let's see what is happening here. So we have a payoff matrix. In game theory, we make this kind of payoff matrix. What happens in game theory? There are two different players who are playing the game. This game, inside this table, whatever is given to you is the profits of player A, and whatever is the profit of player A is going to be the losses of player B. So whatever value is inside this table, player A wants to maximize it because it is the profit of player A. Hence he is known as maximizing player. And whatever is the value inside the table is the profit of player A but losses for player B. Hence player B is going to minimize the benefits of A because whatever is the benefit of A is going to be losses for B. Hence he is known as minimizing player. Okay? This particular matrix is known as payoff matrix, and these are the different strategies available with player A. These are the different strategies available with player B. Now after this, as player A is a maximizing player, he already knows that whatever strategy he chooses, player B is going to choose the strategy which is giving player A the least profit, and that is what player B will do. Whatever strategy player A is choosing, B will choose the strategy where A is getting least profit. So first, player A wants to know what all different scenarios or what all least cost he can have under different strategies. So first he calculated what is the least cost here. Here we have 30, then here 10, here though we have minus 50, here we have minus 20. So first maximizing player will calculate least cost because he already knows that whatever strategy he is going to choose, player B is going to choose the one which is leading to the least profit to player A. So after choosing this, as he got to know that these are the profits which at minimum he is going to earn under different strategies which he follows, out of this he is going to choose a particular strategy where he is getting the maximum profit. So out of all these strategies, this is the only place where he is getting the maximum profit from the minimum profits. Hence, this is the point which he will choose. This is the strategy which he will choose. And this point is known as maximin. Maximin means calculate the minimum and then calculate the maximum of those values. Minimum, maximum. Okay? So maximin is nothing but maximum of minimum values. As it is a maximizing player, it is going to calculate maximin. Maximizing player, maximin. Okay? Now, for minimizing player, he wants to minimize the profits which A is earning. So, he will choose the strategy. Whatever strategy he is choosing doesn't matter. A will choose the strategy where A is able to maximize the profits. So, what B is going to do, under his own different strategies, he first want to know what is the maximum profit A can have under different strategies of B. Okay? These are the maximum values which A can have under different strategies of B. Now B wants to minimize this maximum values, hence he will choose the option where A is getting the minimum profit. So for minimizing player, we calculate mini-max. What is mini-max? Minimum of maximum. First calculate the maximum and then take the minimum of it. That is mini-max. Okay? So for maximizing player, we calculate maximin. For minimizing player, we calculate mini-max. Now remember one thing, that whenever you have any maximizing player in your question, you're going to write it in the row and the minimizing player will be written in the column always. Make sure you're first doing this and then only calculate everything else. Okay? So in game theory, the first thing what we do is we calculate this minimax and maximin. After calculating this, check whether your maximin and minimax value is exactly same or not. And as your minimax and maximin values here are not exactly same, hence this particular strategy is not having any saddle point. No pure strategy is possible here. Okay? Whenever your maximin is equal to minimax, that is the final answer. You need not do anything else. Okay? If your maximin and minimax are equal, that will become your final answer. Your saddle point exists, pure strategy exists, and value of the game will become whatever is the maximum or minimax value, because that will become exactly same. So that will become your value of the game. But in this particular situation which we are seeing, the maximum and minimax value is not matching. And if it is not matching, you first have to check whether it is a 2 by 2 matrix or not. 2 by 2 matrix means there should be 2 rows and 2 columns. So if you don't have 2 rows or 2 columns, in our situation we are not having it. So we are going to move to this scenario. But if you have a 2 by 2 matrix, you can directly use odds method to solve this particular question. But if you don't have 2 by 2 matrix, you are going to use dominance principle. What is dominance principle? We already know that in the column who is sitting? Minimizing player. So he wants to minimize the benefits of player A. So he will remove the strategies. Player B can remove his own strategy only. He will not be able to remove the strategies of A. So player B will remove that particular strategy which is giving higher benefits to player A. So in column we have a minimizing player. So he will delete the large or equal columns. Large or equal columns can also be deleted. If you have equal values in 2 different columns, you can delete one column because that strategy is not giving you any benefit as such. Okay? In row we have maximizing player. Maximizing player wants to maximize the benefits. So he will remove the particular strategy at which player A is not getting maximum benefits. Okay? So how to find out that? In our scenario, we are not able to reach our pure strategy or saddle point because maximum and minimax is not equal. So we are going for dominance principle because our matrix is also not 2 by 2 matrix. Okay? Now, in dominance principle, first we are starting with column to find out which column to remove. Because it is a minimizing player, he will remove the column which is giving maximum benefits to A. To find out which column to remove, first take the total of all the column values. So 70 plus 20 plus 60 plus 0 will give you 150 here. 40 plus 10 plus minus 50 minus 10 will give you minus 10. 30, 50 is 70. Minus 60 will give you 10. So out of all these scenarios, which one is giving maximum benefits to A? This is the particular strategy which is giving maximum benefits to A. So after knowing the total amount, that which one is giving maximum benefits, next you have to check for all values also. It's not like after knowing the total amount is higher, you can directly cross. Answer is no. You have to check all the values, that all the values should be higher than any of the other column values. So 70 is higher than 40, 20 is higher than 10. 60 is higher than minus 50, 0 is higher than minus 10. Hence, I can cut this. Out of any of the columns available, if this particular column is giving you higher value, you can cut this particular column because minimizing player will never want to have maximum benefits for A. So you can remove this. So let's remove this particular column. Now again, we are going to see the same thing. So here we have 10 value which is positive 10 and it is minus 10. So let's check whether we are able to remove this also or not. So 30 is lower than 40. So I'll not be able to remove this because here we have lower value. Can I remove this one? 40 is higher than 30, but 10 is lower than 50. Hence, you will not be able to remove this column also. Both the columns cannot be removed. Now what to do? Now go for A. For A also check the same thing. Take the total first. As this strategy is already crossed, A cannot take any values of this. Now he has to choose between these two values only. So 4 plus 30 will give you 70. Then 50 plus 10 is 60. Then here we have 90 negative and 30 negative. Out of this, player A wants to maximize the benefit. So he'll try to remove the one which is giving him least benefit. That is minus 90. So minus 90 is lower than 10. Minus 40 is lower than 50. Hence we can cross this because A is never going to choose this particular strategy, which is because this is not at all beneficial for him. Then here also we have lesser values. This also can be compared with the other one. Minus 10 is lower than 10. Minus 20 is lower than 50. Hence we can cross this one also. Okay? So the two strategies are crossed. Now let's see whether we are able to cross this one also because this is also giving us lesser benefits. So 10 is lower than 40 but 50 is higher than 30. I'll not be able to cross this. So we are left with 2 by 2 matrix. Mostly this is going to happen that whenever you apply dominance principle, you will get a 2 by 2 matrix. See, sometimes what happens is the question specifically says that apply dominance principle. Whenever the question is mentioning that apply dominance principle, you're not going to apply maximum and minimax because it can happen that maximum and minimax will give you direct values. ठीक है. So what to do if the question specifically mentions that apply dominance principle, directly apply dominance principle. And if after dominance principle it is a situation of pure strategy and maximum and minimax is equal, at the end of dominance principle you will get a 1 by 1 matrix, and 1 by 1 matrix is nothing but one strategy for A and one strategy for B only. So this will become your value of the game, pure strategy case, and saddle point will exist. Okay. But if you have already checked for maximum minimax, then it can happen that out of these three, any of the situation is incorrect. First is 2 by 2 matrix, second is 2 into n matrix, that means 2 into higher than 2 values here, and m into 2 matrix, which is m is higher than 2 value into 2 matrix. But these two situations, this is going to be a very rare situation because here graphical presentation is required. So the chances of happening is this situation where 2 by 2 matrix will be there and you have to use odds method. So in our scenario also we are left with 2 by 2 matrix. Here we have to use odds method. So before using odds method, first I am making this matrix again. We are left with A1, A2 for A, and for B we are left with B2 and B3. And the values are 40, 30, 10 and 50. Okay. After getting these values, now we have to calculate odds. In the odds method, the first thing which we do is calculate the odds. For calculating odds, we are going to take the difference of these two. 40 minus 30 will give you 10, and this 10 will be written here. Okay. Just opposite to what particular cell you got the value, you're going to write that particular value. Then 10 minus 50 will give you 40. 40 is what we are going to write here. No minus sign as such is shown here. Okay. Next, 30 minus 50 is 20. We are going to write it here. And 40 minus 10 is 30. We are going to write it here. Remember that whenever you calculate the odds, the total which you are getting here, 40 plus 10, will be always equal to 20 plus 30. So 50 is what we are getting. Okay. After getting this, you are going to calculate the probabilities. How to calculate probability? The odd which you assigned here divided by the total odds which you got. So 40 by 50 is 4 by 5, 10 by 50 is 1 by 5, here 20 by 50 is 2 by 5, 30 by 50 is 3 by 5, and these are the probabilities which we got. Now after this we calculate the value of the game. How to calculate value of the game? Always whenever we are solving our game theory questions, we have to calculate at the end the value of the game. How to calculate it? You can either use these two values and these two probabilities, value multiplied by probability plus value multiplied by probability, or else these two values with these two probabilities. Okay? Or else you can use these two values with these two probabilities or these two values with these two probability. In all the situations you are going to get the exact same value of the game. So 40 into 4 by 5 plus 10 into 1 by 5. 40 into 4 by 5 is 32. 10 into 1 by 5 is 2. 32 plus 2 is 34. Similarly, if I calculate with these values, 30 into 4 by 5, which is 24. 50 into 1 by 5. 50 into 1 by 5 is 10. 24 plus 10 will give you 34 again. If I calculate with this values now. So 40 into 2 by 5 plus 30 into 3 by 5. 40 into 2 by 5 will give you 16. 30 into 3 by 5 will give you 18. 16 plus 18 is also equal to 34. So from all the scenarios, whatever you calculate doesn't matter. You're going to get the exact same value. After understanding this, we are ready to solve the questions. Let's see what our question says. I already told you that always keep the maximizing player in the row and minimizing player in the column, always. Now let's see what this question number 18 says. A and B play a game in which each has 3 coins, a 5 rupee coin, 10 rupee coin and 20 rupee coin. Each selects a coin without the knowledge of the other's choice. What other one is selecting, we don't know that, and without knowing that, we are going to select the coin. If the sum of the coins is an odd amount, A wins B's coin, but if the sum is even, B is going to win A's coin. So first though we have to draw payoff matrix also, because in this question they are not providing us the payoff matrix. So we have B and A. We are going to assume that A is the maximizing player, B is the minimizing player. We have 5 rupee coin, 10 rupee coin and 20 rupee coin for B, 5 rupee coin, 10 rupee coin and 20 rupee coin for A. Okay? If whatever coin they chooses, the total of that is going to be odd number, then A is going to win. But if the total is even number, B is going to win the A's coin. Okay? So 5 plus 5. If A is choosing 5, B is also choosing 5. So 5 plus 5 is 10, which is an even number. Who is going to win? Even number if happens, B is going to win A's coin. So A's coin is also 5. So B is going to win A's coin, 5 rupees. And as we are calculating for A is going to lose 5 rupees. Okay? Next, 5 plus 10 is 15. 15 is an odd number. If odd number happens, A is going to win. What A is going to win? Whatever is the coin of B, that is what A is going to win. So 10 rupee is what A is winning here. Okay? So whenever A wins, we are going to write it positive. Whenever A loses, we are going to write it in negative value. Okay? 5 plus 20 is 25. Again, an odd number. If it is an odd number, who is going to win? A is going to win the coin of B, which is 20 rupees. Next, 10 plus 5 is 15. Again odd number. A is going to win B's coin and B is having 5 rupee here. Then 10 plus 10 is 20. Even number. So who is going to win? B is going to win. What B is going to win? A's coin. So as A is losing, A is going to write it as negative 10. Then 10 plus 20 is 30. Again even number. So again B is winning A's coin of 10 rupees. So A is going to lose 10 rupees. 20 plus 5, 25 is an odd number. Odd number happens, then A is going to win. And as B's coin was 5 rupees, so A is going to win only 5 rupees. Okay? Next. 20 plus 10 is 30. Again an even number. So who is going to win again? B is going to win again. What is the amount B is winning? 20 rupees. Because A is choosing this 20 rupees, right? So next, 20 and 20, 40, again even number. Again B is winning. What B is going to win? 20 rupees. Hence A is going to lose this 20 rupees. And this is our matrix ready for us. After making the matrix, then find out the best strategy for each player. What is the best strategy for both of them? How to find out? So for that, first, always whenever they are saying best strategy, you are first going to start with maximum, minimax. For this maximizing player, you have to calculate maximin. What is maximin? Minimum of maximum. So first calculate the minimum. Minimum is minus 5, here minus 10, here minus 10, 20. Out of this minimum, what is the maximum? Maximum is minus 5. Hence, this is what A will choose. Then for B, you're going to calculate minimax. Minimax is maximum first. Maximum is 5, here 10, here 20. And then find the minimum of maximum, that is 5. Now, as 5 and minus 5 is not exactly same, we are not reaching pure strategy and there is no as such saddle point available. So what to do? You need to apply dominance principle as there is no 2 by 2 matrix here. We have a 3 by 3 matrix which is higher than 2 by 2. Hence, you are going to use dominance principle. Okay? So for dominance principle, first take the total of the columns. Minus 5 plus 5 plus 5 will give you 5. Minus 10 plus 10 minus 20 will give you minus 20. 20 minus 10 minus 20 will give you minus 10. So out of all the strategies, which one is giving A higher profits? This strategy is giving A higher profit. So what we will try to do, we will try to remove this particular strategy. How to remove this strategy? First check whether all the values in this strategy is higher than the other values of the table or not. If you notice, minus 5 is lower than 10. Hence, I will not be able to remove this because here I got one smallest value. Even if 5 is higher than minus 20, 5 is higher than minus 10, 20, I will not be able to remove this. Minus 5 is also lower than 20. Hence, you will not be able to reduce this. So let's try to remove this one because this is also not beneficial for B as such. This is the most beneficial one. So 20 is higher than 10. Minus 10 is exactly equal to minus 10. Minus 20 is exactly equal to minus 20. If you notice, these two values are exactly equal and this is giving highest profit to A. So what we will do, we will first remove this particular strategy because this is not at all giving any benefits to B. So this strategy is removed by B. Now let's try to remove this one also. This though B will not at all try to remove. This is higher, I understand, but this is lower from this. This is lower from this. Hence this cannot be removed. And this though we already understood that cannot be removed. Now let's try for A. For A, if I calculate minus 5 plus 10, this is giving us 5. 5 minus 10 is minus 5. 5 minus 20 is minus 15. So this is the one which A will definitely try to remove. 5 is exactly equal to 5, but minus 20 is lower than minus 10. Hence, A can remove this strategy. Now let's try for the next one, which is this. 5 is higher than minus 5. and minus 10 is lower than 10, hence we will not be able to remove any of these two. So we are left with a 2 by 2 matrix, and whenever you are left with 2 by 2 matrix, what to do? Use odds method. So for A we have 5 rupee, 10 rupee, and for B also we have 5 rupee, 10 rupee, minus 5, 10, 5 and minus 10. Now we have to calculate odds. Here also we have to calculate odds. Minus 5 minus 10 will give you minus 15. No need to write minus sign, just write the 15 here. 5 minus 10 will give you positive 15. Directly write the positive 15. We are getting the total as 30. 10 minus 10 will give you 20 positive. Minus 5 will give you 10 negative, but you are going to write the positive values only. So minus 5 minus 10, even if it is giving us minus 10, we are going to write it positive 10 only. After getting this, we are going to calculate the probabilities, which is 15 by 30, which is 1 by 2, 15 by 30, 1 by 2, 20 by 30, 2 by 3, 10 by 30, 1 by 3. We can calculate value of the game also, which can be calculated from any of the ways I already told you. I can take these two values and these two probabilities. So minus 5 into 2 by 3 plus 1 by 3 into 10. So minus 5 into 2 by 3 is minus 10 by 3 plus 10 by 3 will give you 0. Hence value of the game is 0 here. Value of the game is 0. And we are done. This is a fair game. Whenever you get value of the game as 0, this becomes fair game. No one has any advantage over the another one. Let's move forward to the next chapter, that is simulation. Now what is simulation? Creating an artificial or fake version of our real life systems is all about simulation. So rather than testing everything in your real life situations, we create a model and do all the testings there, and whatever works perfectly for us, that is what we apply in our real life situations. Okay? And that is how your simulation helps us. Now let's see how to solve the questions related to simulation. First, you need to create random number range or random number intervals or random number allocations. For this, whatever x value is given to you, you are going to write that here. Then the frequency is written here. Frequency, if they are providing you, you will write the frequency, and with the help of frequency, you will calculate the probability. But sometimes the question themselves provide the probability, use that probability only. Then calculate cumulative probability. How to calculate probability with the help of frequency? Take the probability of that particular value divided by the total probability. 30 divided by 100 will give you 0.3. 20 divided by 100 will give you 0.2. The total of all the probabilities should be equal to 1. How to calculate cumulative probability? Take the total of probabilities. This will give you the cumulative probabilities. Like 0.10 is the only value here. Then I'll add 0.30. This will give me 0.40. Then again add 0.30. This will give you 0.70. Then add 0.20, 0.90. Then 0.10 will be added and we are getting 1. Always your total of cumulative probability, the last value of cumulative probability is going to be equal to 1. Then it can happen that the random numbers which is given to you are only 1-digit random numbers, or 2-digit random numbers, or 3-digit random numbers. So whatever is the range or whatever is the digit of random number, that is the digit we are going to create for the range also. Okay? So depending on the random number given in the question, you are going to create the range. So if it is 1-digit, create 1-digit random number range. If it is 2-digit, create 2-digit range. If it is 3-digit, create 3 different digits of range. Now how to create this different kinds of range? So if you want to create 1-digit range, multiply your cumulative probability with 10. Whatever value you get, minus 1 will be the last value of that particular range. So 0.10 into 10 minus 1. This is equal to 1. 1 minus 1 is equal to 0. Hence, always we are going to start the range with 0. But as the starting and the end value of this particular range is 0 only, hence 0 only is what we have written. Now the next range will get started with the next number. So here we have ended at 0. The next range will start at 1. Now what is the number where we are going to end this? So 0.40 multiplied by, for 1 digit you are going to use 10. We are getting 4. 4 minus 1 will give you this 3. Similarly, the next range will start at 4. 0.70 into 10 will give you 7. 7 minus 1 will give you 6. Next range will start at 7. Okay? Similarly, you have to create moving forward. And when we have 1 digit, we are going to stop at 9. Next, for 2-digit random numbers or 2-digit range will be created. And for creating it, you are going to multiply here 100. So this will give you 10. 10 minus 1 is 9. 9 is going to be the last number of the range. For 0.40 into 100 is 40. 40 minus 1 is 39. 0.70 into 100 is 70, minus 1 is 69. And that is how we are going to create the 2-digit random number range. And then for 3-digit, multiply 1000. Okay? So this will give you 100. 100 minus 1 is 99. Then this will give you 400 minus 1 is 399. And that is how we create the ranges. I have already written this here. You can refer it from here also. Now, it can happen that your x is given like this in the question. Like 0 less than 300, 300 less than 600, 600 less than 900. Now, if that happens, you're going to calculate the midpoint with the help of this and assume this as your x. How to calculate midpoint? Take the average of both the values which is given to you as the highest and the lowest value. 0 plus 300 divided by 2 will give you 150. 300 plus 600 divided by 2 will give you 450. 600 plus 900 divided by 2 will give you 750. And that is how we calculate this midpoints. Okay? So this is our range table, and now after understanding this range table, we are ready for solving the questions. A bakery bakes 100 cakes per day. So this is the production which we are doing on everyday basis, and sales of cakes depend upon demand, which has the following distribution. So demand is given to you and the probability of demand is also there. Probability is always going to be equal to 1. Now, there is no carry over inventory. The following details are given to you. Variable production cost per cake. For producing one cake, the variable production cost is 14, selling price per cake is 18. That means by selling one cake, we are going to earn a contribution per unit of rupees 4. Then there is a penalty attracted for unsold cake. Whatever cake you are not able to sell, there is a penalty of 3 rupees on that. Plus with that, if you are not able to sell, that means you have already produced but not able to sell. And if you have already produced, you have incurred 14 rupees also. That means for unsold cake, we are going to incur 17 rupees as the loss. Next, penalty attracted per unit of demand not met. If there was demand but you were not able to fulfill that demand, you are going to have a loss of 1 rupees. Now, when you will not be able to fulfill the demand, when you have not produced the cake. And hence, if you are not producing the cake, you are not going to have this 14 rupees as a cost. So, for demand unmet, we have a loss of 1 rupees. Okay? Random number range, if you notice, random number which is given to us is 2-digit random number. Hence, 2-digit range is what we are going to create in this question. Simulate and assess the profit or loss for the next 10 days using the above random numbers. So, first, we have to always create the random number range. As the question is already providing us the probability, we can directly calculate cumulative probability, which is 0.10, then 0.25, then 0.45, then 0.80, 0.95 and 1. Okay? After creating cumulative probability, create the range. By multiplying this particular cumulative probability with 100, this will give you 10. 10 minus 1 is 9. So starting from 0, our range is ending at 9. Then we are going to start at 10. 0.25 into 100 is 25. Minus 1 will give you 24. Then start at 25. 0.45 into 100 will give you 45. Minus 1 is 44. Then start at 45. 0.80 into 100 is 80. Minus 1 is 79. Then 80. Then 95 minus 1 is 94. 95, and then we are going to end at 99. This is the range which we calculated. Now with the help of random number and the range given to you, you are going to calculate what is the sales you are going to have under different scenarios. So 9 is the random number here. If I find out in the range, then in this range 9 is there. Hence for the first day, our sales is going to be 97. For the second one, we have 98. So 98 comes in this range. 103 is the sale of cake. So 103 will be considered as sale for the second day. Then 64 is in this range. Hence 100 is going to be the sale for the third day. Similarly, we can compare this random numbers and see in what particular range that particular random number is coming, and that particular sales will be considered as the demand of that particular period. Okay? So first we calculated the range. Exact same range is calculated here also, and after calculating the range with the help of random numbers, we are going to find out the demand. How to find out the demand? See where your random number is coming and then select that particular demand of that particular period. Okay? After getting your demand, now we are going to see what is the stock available with us. That is the production you are doing. As we are producing only 100 cakes, already mentioned in the question at the start, we are going to compare our 100 cakes which we are producing with the demand available with us. Now it's not like we can take the production to the next period. Like if I have produced higher number of units today, I can take to the next period. Answer is no. The cakes are going to be used in the same day itself. If you are not able to use, that will be treated as unsold cake. Okay? There is no carry over inventory. The question has already mentioned it. Hence you are not going to carry over the inventory to the next day. So if your demand was 97, you produced 100. So you will be able to sell only 97 because the demand is only 97. Then the demand is 103, but you produced only 100. Then also you will be able to sell 100 only, because even if the demand is higher, I have only 100 units to sell. Hence I will be able to sell only 100 units. So whenever you are comparing and calculating units sold with the help of demand and production, you need to take whichever is lower. Demand or production, whichever is lower will give you this units sold. And that is what we calculated for all of them. After getting your units sold from the demand, now I'll find out what is the number of units unsold. How to know the number of units unsold? You produced 100 units, but you sold only 97. Then 3 units are unsold. So if you sell lesser than 100, that means there will be unsold units, which is happening in this case also. Here we have 0, here we have 2, then 2, then 2. These are the units which are unsold. Now how to calculate unmet demand? Unmet demand means there was demand but you were not able to fulfill, and that will happen only when the demand was more than 100. So here if you notice, the demand is more than 100, hence we will be able to sell only 100. The remaining is unmet demand. Similarly, here also we have unmet demand of 3. Here also we have unmet demand of 3. For others it is lower than 100, hence there will be no unmet demand here. So this is the unmet demand, this is the unsold unit. Now what to do? Now we have to calculate the profit. How to calculate the profit? For profit, whatever units you sold, you are going to multiply that with the contribution per unit minus the unsold cake will be multiplied with the losses of 17 rupees per unit minus the unmet demand will be multiplied with the loss of 1 rupees per unit. Okay? So this is our sales multiplied by 4 minus 3 multiplied by 17 minus unsatisfied demand or unmet demand multiplied by 1. This will give you the profit or losses for all the scenarios. Then after that, calculate the total profit for all the 10 days given to you. Why we are calculating the profit? Because question has mentioned that you need to assess the profit or loss for the next 10 days using the above random numbers. So we calculated the next 10 days profit. Okay? Done. Now moving forward to the next question. Musan Limited, an international tourist company, deals with numerous personal callers each day and prides itself on its level of service. The time to deal with each caller depend on the client's requirement, which range from, say, a request for a brochure to booking the round the world cruise. If a client has to wait more than 10 minutes for attention, it is company's policy for the manager to see him personally and to give him a holiday voucher worth rupees 14 only. 15. Think about it. If the client is waiting for more than 10 minutes, then manager is going to attend, which is a good thing. But you are offering a holiday voucher of 15 rupees. What is this? The companies where they will go with 15 rupees, they'll not be able to move from their home to somewhere else also. Okay, what is the use of 15? The company's observation have shown that the time taken to deal with clients and the arrival pattern of their calls follow the following distribution. Time to deal with clients. This is known as service time. The time to provide the services to the clients. The minutes is given to you and the probability of this minutes happening is also given to you. Then we have time between arrivals. This is known as arrival time. For arrival time, what is the minute and what is the probability of that is also given to you. Now what to do? We are going to calculate cumulative probabilities. So whenever there is a probability, you are going to calculate cumulative probability. We have two different things here. Hence, two different probabilities will be calculated for both of them. Cumulative probability will be calculated and range will be calculated for both of them separately. Okay? So 0.05, then 0.15, 0.30, 0.60, 0.85, 0.95 and 1. Next, here we have 0.20, 0.60, 0.90 and 1. Okay? Next, calculate the range. So, for calculating range, you have to first refer to the random numbers given to you. And here, the random number is 2-digit random number. If you have 2-digit random number, the range is also going to be of 2-digit. Starting from 0, 0, here we have 0.20 into 100 will give you 20, minus 1 is 19. Then start from 20, 60 minus 1 is 59. then 60, 90 minus 1 is 89, 90, 100 minus 1 is 99. Okay? This is the range applicable here. Similarly, we can calculate the range for clients also, service time also, and this is going to be from 00 to 04, then 05 to 15, then 15 is the last number. 15 minus 1 is going to be the range, that is 14, then 15 to 29, 30 to 59, 60 to 84, 85 to 94, 95 to 99. Okay? This is the range applicable here. Now we have calculated the range for both of them. If you notice, this is the random number given. Let's see what question says. Demonstrate how you would simulate the operation of the travel agency based on the use of random numbers. What will be the simulated values? That is what you need to calculate. Simulate the arrival and serving of 12 clients and show the number of clients who will receive a voucher. Who will receive the voucher? The client who is waiting for more than 10 minutes. Then that particular client is the only one who is going to get the voucher. So how to know which particular client is waiting for more than 10 minutes? For this we need to calculate waiting time. Okay? So for calculating your random, with the help of random number, finding out your service and arrival time, for that the question says use line 1 random number below to derive the arrival pattern. So for arrival pattern, line 1 is applicable. For serving time, line 2 is applicable. Line 2 is applicable for service time. So after knowing the range, if this is the random number for arrival, 3 is going to come in the first range, hence we are going to choose 1 minute. Then 47 is in the second range, then 8 minute. 43 is also in the second range, hence 8 minute. 73 is in the third range, 15 minute. 86 is in the third range, 15 minutes. Similarly, we can calculate for service time also. 63 is in the fifth range and we are getting 14 minutes. 71 is again in the fifth range, we are getting 14 minutes. 62 is in the fifth range, we are getting again 14 minutes. 33 is in the fourth range, 10 minutes. Similarly, you are going to calculate for all the values. Okay? Take the arrival random number and calculate the arrival time with the help of arrival related minutes and range. Take the random number for services and with the help of range and minute of service time, you are going to calculate the service time. Okay? Now, after calculating service time, we are assuming that time is going to start at 8 AM and that there is only one counter which is available with us. This is the normal assumption which we take in our simulation answers. As there is a time period calculation involved, it is better for us to use a particular time period because it makes the question much more easier. So time is starting at 8 AM, that there is only one counter which is available with us. There is no time gap between finishing with one client and starting with the next client if the next client is already there in the queue. This is the normal assumption which we take in this arrival and service time related questions. Okay? Now, after this, so first we calculated the range, and after calculating the range with the help of random number of arrival, we calculated arrival time. With the help of random number of service, we calculated service time. Now after this, there are other calculations also. How to calculate this? Let's understand. First thing is, after calculating your random numbers, with the help of random number, after calculating your service and arrival time, the first thing which we are going to calculate is entry time in queue. We already have mentioned that our system has started at 8 AM. Okay? Plus with that, the first client is taking 1 minute to arrive. This arrival time is arrival time gap between one customer and the other customer. So before this customer, so there is no one else. Hence, our system has started at 8, but this customer is coming after 1 minute. That means he is going to come at 8:01 AM. Next client is going to come after 8 minutes. Hence, 8:09 AM is what time he is going to come. Then plus 8 will give you 8:17, plus 15 will give you 8:32, plus 15 will give you 8:47, plus 8 will give you 8:55, plus 25 will give you 9:20, plus 8 will give you 28, plus 8 will give you 9:36, plus 15 will give you 51, plus 8 will give you 59, and plus 25 will give you 10:24. That is how we calculate entry time in queue. After getting your entry time in queue, calculate the service start time and service end time. So before this customer, there is no one else. Hence, whenever this customer is entering the queue, we can start providing service at that time itself. So at 8:01 he is coming in the queue. At 8:01 AM only we can start providing the service. Plus 14 minutes of service time. 8:01 plus 14 minutes of service time will give you 8:15. Now the next client, even if he has already came at 8:09 and we have only one system, so as the previous service was completed at 8:15 and this client has already came at 8:09, he has to wait for some period of time and his service can only start after completing the service of the previous customer. Hence his service is going to start at 8:15 only. Okay? So whenever you are calculating service start time, you're going to compare the entry time in queue of this customer and service end time of the previous customer. Whichever is higher, that is what we take as service start time. So 8:15 is when the service is going to start, plus 14 will give you 8:29. Then even if the customer has already came at 8:17, the previous customer services are ending at 8:29. Hence we can start at 8:29 only. 8:29 plus service time will give you the service end time. Then again compare the entry time in queue and service end time. Whichever is higher is what you are going to write here. Then add 10 will give you 53. Compare 8:57 with 8:53. Whichever is higher is what you are going to write here. Then add 6, you are going to get 8:59. That is how we calculate service start time and service end time. Now why to calculate this particular thing? So that we can calculate waiting and time in queue. How to find out waiting time in queue? Whenever the customer is entering the queue and whenever the service is starting, whatever is the difference between both of them, that is what waiting time is there for the clients. So if a client is entering at 8:09 but his services are starting at 8:15, that means there is a waiting time of 6 minutes. Similarly, 8:17 to 29, 12 minutes of waiting time. 32 to 43, 11 minutes of waiting time. So we have calculated waiting time by comparing our entry time in queue with our service start time. Okay? After getting your waiting time, what we have to find out? What all clients are going to get the vouchers. The client who is going to wait for more than 10 minutes, that is the client for which we are going to give the vouchers. So these are the only 2 clients for which we are going to give the vouchers. Okay? So we can write this down that number of clients that will receive the voucher is 2 and the client number is 3rd and 4th client is the one who is going to receive the voucher. And we are done with this question also. Let's move forward to the next one. The output of a production line of Sonpim Limited is checked by an inspector for one or more of 3 different types of defects called defect major, minor and medium. If defect major occurs, the item is scrapped. If defect minor or medium occurs, the item is going to be reworked. Okay? So there are 3 different kinds of defect which can arise in our products. If major defect is there, you are going to scrap that particular product. If minor or medium kind of defect is there, we are going to rework on the item. And we are going to improve that item again for our normal use. The time required for reworking for a minor defect and a medium defect is 15 and 30 minutes respectively. So for your minor defect, the time period is for reworking, the time period is 15 minutes. For medium defect, the time period is 30 minutes. The probability of major, minor and medium defects are 0.15, 0.20 and 0.10. Now if you notice, if I take the total of this is not equal to 1. Plus with that, they are also providing us different random numbers for different types of defects. Now what to do? If you have different random numbers for different types of defect, that itself means that you have to create different range for each random numbers, for each type of defect. Okay? As we have 3 different types of random numbers, we are going to create 3 different types of range for each type of defects which we are going to have. So, how to create this? First, let's talk about major. I already know that if defect arises in major, the chances of the same is 0.15. So if the chances of arising major defect is 0.15, then no defect, I already know that the total probability is going to be 1. If my arising of major defect, the probability is 0.5, that means no defect will become 1 minus 0.15, which is equal to 0.85. This is our probability. And then with the help of this, I can calculate cumulative probability. So what is the cumulative probability? 0.15. 0.15 plus 8.85 will give you 1. Now with the help of this, we can calculate the range. So we are starting at 0, 0, and as it is 15, we are going to end at 14. Then 15, 100 minus 1 will give you 99. This is the range applicable for major. Similarly, we can calculate for minor also and for medium also. What is the defect arising in minor? 0.20 is the chances of defect arising here. Then the chances of no defect is going to be 0.80 because the total of probability is always equal to 1. Then we have cumulative probability of 0.20 plus 0.80 will give you 1. Then we are starting at 0.00, ending at 19. We are starting at 20 and 100 minus 1, we are ending at 99. This is the range applicable. Similarly, for medium, the defect Arising of defect, the chances are 0.10. No defect, the chances are 0.90. The total is 1. Cumulative probability is 0.10 and 1. And the range is going to be starting from 00 to 09 and 10 to 99. Okay? This is the range applicable for all the 3 different types of defects. After getting the range applicable, check what is the random number and find that particular random number in the range applicable. Okay? So if I look for major, then in major I already know that if the number is from 0 to 14, then only the defect is going to arise. If the number is higher than 14, there is no major defect which is going to arise. So let's see in our random number for defect major that if we have any number lesser than or equal to 14. Okay? This is the number lesser than or equal to 14. Hence here your major defect is going to arise. Only one place is there where major defect is there. In other places we have no defects, no major defects. Okay? In all these places no major defect. This is the only place where you are going to have major defect. Similarly for minor, if you notice, the range is from 0 to 19 you are going to have the defect. So if the number is up to 19, you are going to record that particular defect. Here we have 4, hence here we have minor defect. Next, here also we have 10, 13 and 9. In all these places you are going to have defect because they are equal to or lesser than 19. Then for medium defect you need to look for 9, up to 9 number. So up to 9. Here only we have. Hence there is one only place where you are going to have medium defects. The question has already mentioned that whenever you have major defect, you are going to scrap the product. So this is the place where you are going to scrap the product. For minor defect you are going to rework and this will take 15 minutes. Here also it will take 15 minutes and here also it will take 15 minutes. Here we also have medium defects. For medium defect it is going to take you 30 minutes. So for the last one, 15 plus 30, 45 minutes will be taken for correcting the defects. For 10 items coming off the assembly line, you are required to present the data table with the random number assigned and the existence of defect in major, minor and medium type separately. So we have first calculated the range. And then after calculating the range, we found out what particular defect is arising. Okay? So here we have minor, major, minor and medium. Where all we don't have any kind of defect, I have mentioned none there. Okay? After that we calculated the rework time for minor and medium kind of defects, and for major defect we have written here that the scrap is going to arise. So 90 minutes is the total time period of reworking and 1 unit is what we are scrapping. Okay? So now the question is asking us, this is something very important. It's not like you're going to only make the table, right? Writing the final answer is what is going to give you the full marks. So determine the number of items without any defects, with defects, the number of items scrapped and the total minutes of rework time. So number of items without defect is 1, 2, 3, 4 and 5. 5 without defects and we have total 10 items. That means remaining 5 is going to be with defects. Then number of items scrapped is 1. Total time of reworking is 90 minutes. Okay? Done. This question is also done and with this we completed our simulation. Now we are moving forward to the next chapter, that is network analysis. Now in this network analysis we make the network diagram, calculate our find out our critical path, calculate floats like total float, free float, independent float. All of these floats are calculated. Then there is PERT calculation, project evaluation and review technique, where you have to calculate the expected time period, variance and all other things. Then we have crashing. So there are total 5 different things in this particular chapter, but out of these things the most asked questions in your CMA final is mostly about PERT and your crashing. So we are going to focus on this PERT and crashing itself. With the help of PERT only, we will be able to understand how critical path method works. Okay? See what our question says. We are first starting with the PERT related questions. Bondtech Limited, a company is launching a new product and has made estimates of the time for the various tasks associated with the launch as follows. We have task and the immediate predecessors. Then the most likely, optimistic and pessimistic time. 3 different time periods are applicable for your network analysis when we are doing PERT related questions. Okay? First we are going to calculate the expected time, which is already asked in the question also, to calculate the expected task duration using the PERT methodology. And then we are also going to calculate the variance. Variance is nothing but standard deviation square will give you variance. How to calculate expected duration? For this the formula is 1 into optimistic time plus 4 into most likely time plus 1 into pessimistic time divided by 6 will give you expected duration. Okay? And how to calculate variance? For this you are going to take pessimistic time minus optimistic time divided by 6 का square. Okay? Let's first calculate this expected duration. For this we are going to multiply our most likely time with 4. 5 into 4 plus 4 plus 6 plus 4 plus 6 divided by 6 will give you 5. Then 12 into 4 plus 8 plus 16 divided by 6 will give you 12. 5 into 4 plus 4 plus 12 divided by 6 will give you 6. Then 3 into 4 plus 1 plus 5 divided by 6 will give you 3. Then in all the places we have 2. If you take the average also, expected duration also, you are going to get 2 only. Then 5 into 4 plus 4 plus 6 divided by 6 is equal to 5. 14 into 4 plus 10 plus 18 divided by 6 is equal to 14 into 4 plus 10 plus 18 divided by 6 is equal to 14, and then 20 into 4 plus 18 plus 34 divided by 6 is equal to 22. Now we can calculate variance also. For this, take your pessimistic time minus optimistic time. 6 minus 4 divided by 6 ka square is 0.111. 16 minus 8 divided by 6 ka square is 1.778. Then 12 minus 4 divided by 6 ka square is 1.778. Then 5 minus 1 divided by 6 ka square is 0.444. 2 minus 2 divided by 6 ka square is 0. 6 minus 4 divided by 6 ka square is 0.111. Then 18 minus 10 divided by 6 ka square is 1.778. And last, 34 minus 18 divided by 6 ka square is 7.111, and we are done. Okay? Now, after getting your variance calculations, let's see what the next thing question wants from us. To draw a project diagram and calculate the overall duration and its standard deviation. So, first we have to make project diagram, that is your network diagram. You need to understand how network diagram is made up of. Okay? First, we have 3 different tasks, and for this task there is no immediate predecessors. That means there is no one else before us. So, if I am starting the first one, then there is no one else before A, B and C. So, they are going to be the first activities. A, B and C. Now, what is the time period which you are going to use? As you have calculated expected time, you are going to use that expected time only, which is 5, 12 and 6. So, 5 is for A, 12 is for B and 6 is for C. After getting this, we are going to move forward, and then from A, B together, you have to draw D. B is required separately. B is required with C also. A, B has the same starting point and same ending point, and that is why we are going to use dummy here. If you notice, A is not required separately. B is required separately, but A is not required separately. Hence, while using dummy, why we are using dummy? Because the starting and ending point of both the activities is exactly same, and whenever this happens, you are going to use dummy. Dummy is used only in 3 different situations. Remember this always, that if you are having 2 activities starting from the same point and ending at the same point, then that ending point will be joined with the help of dummy. Or else, if you have the activity as single predecessor or individual predecessor at one place and joint predecessor at other places, then in that case, you are going to use dummy for that particular activity. Then the third scenario is, one activity is joint predecessors in 2 different places, like C is required with D and C is required with E. Then in that case, it is joint predecessor in 2 different places with 2 different people or 2 different activities. Hence, this is going to use dummy. Okay? So, first we need A and B together so that we can draw D. So, we started D with A and B. And D is requiring 3 as the time period. Now, after this, the next one is E. E is going to start from D. So, and E is required with D. So, I am directly making E here so that I can directly join it with D. Because E is not required separately, E is only required with D here, and the time period is 2. Then after that, we have F. F has to be started from C. And F is not required as such with anyone. So, this is our F, started from C, and the time period of F is 5. And then we are going to start G from B and C together. wherever you have B and C together. So B was required separately, C was required separately, and now both of them are required together. So we are going to use dummy for joining both of them together. This is the place where we are getting both of them together. After getting them together, this is the place from where you are going to draw G, and D, E and G are required together. So I am taking this G directly to D and E. And what is the duration of G? We have 14. Now, at the point where you have D and G and E together, this is the point from where you are going to draw H. And this is the point of F. We can't have two different ending points also. The starting point and ending point of the network diagram should always be one. And if that is the case, I have to join this particular thing at the ending point. Okay? So, our H is drawn from here and the duration of the H is 22. And we are done. Our diagram is ready. Now after making the diagram, it is important for you to assign the numbers here. And remember, the numbers should be forward moving. I can't assign 2 here. Why? Because if I assign 2 here, I am going to assign 3 here. But from 3, I can't go to 2. But our arrows are going to this particular event. Hence, what to do? Assign 2 here and 3 here. Then 4 here, 5 here, 6 here and 7 here. Always your number should be forward moving as with the arrows. If arrows are like this, your number should always move forward. Okay? Now, after drawing this, we have to find out the overall duration and its standard deviation also. For finding out what is the duration of the project, there are 2 different ways which we can use. The first one is calculation of E and L. Second one is writing the paths. Okay? So, I am going to show you both the ways so that if the question is asking you any of it, you already know how to calculate it. Here we are going to calculate E and L. And this E and L has to be calculated for all events. What is E? E is the earliest start time. What is L? L is the latest finish time. How to calculate? We are going to understand now. Okay? For every event, you have to assign this E and L. Remember, whenever you are drawing a dummy, that dummy activity should be drawn with a dotted line. As it is a dummy activity, it is not going to take any time period and that will not be assigned any particular activity name also. Okay? Now, whenever we are starting, we are going to start with the first event only and that first event will have E as 0. After this, we can move forward and calculate other E's also. Remember that whenever you are moving forward, you will move forward with the name of events. So, as I have calculated for 1, the next number is 2. So, I will move forward to 2 first. 0 plus 12 will give you 12. E of the previous event plus duration will give you E of the next event. Okay? Here we are getting 12. Now, if you notice, this E is calculated on the basis of what is the number of arrows you are getting. So, here we have only 1 arrow which is coming to 2. Hence, with the help of 1 arrow, we calculated this E. Now, if you notice, for 3, we have 2 different arrows coming. This is the first one and this is the second one. From both the situations, I will calculate what is the value of E here. So, 0 plus 5 will give you 5 or else 12 plus, as it is a dummy activity, there is no duration. So, 12 plus 0 will give you 12. Whenever we calculate E, we are going to write whichever is higher. Whatever E you calculated on the basis of arrows, whichever is higher is what you are going to write here. 5 or 12, 12 is what we are going to write here. Then let's move forward to the next one, which is 4th. So here though we have only 1 arrow which is coming here. So 0 plus 6 I can directly write here as 6. Then move forward to the 5th one. We have 2 different arrows. So 12 plus 0 I can write 12 here or else 6 plus 0 I can write 6 here. 12 or 6, whichever is higher is what you are going to write, and that is 12. Then after that we are going to move forward to 6, and if you notice in 6 3 different arrows are coming. 12 plus 3 will give you 5. 12 plus 2 will give you, okay, 12 plus 3 is 15, right? 12 plus 3 is 15. 12 plus 2 is 14 and 12 plus 14 is 26. Out of all of them, which one is higher? 26. 26 is what we are going to write here. Then for 7 also we have 2 different arrows coming here. So 4 to 7 is the arrow, right? So 6 plus 5 will give you 11. 26 plus 22 will give you 48. Whichever is higher, 48 is what we are going to write. Now we have calculated all the E's. For calculating L, you have to move backward. So first we are going to calculate the L for the last event. For the last event, always whatever is the E, that is the exact same amount is going to be L also. So here also we have 48. Now we have to move backward. So now we are going to calculate for the 6th event on the basis of tail. What is the tail you're getting? Earlier, whenever we are calculating E, we are going to see what is the number of heads we are getting of the arrow. But for calculating L, you're going to see what is the number of tails you are getting of the arrow. Here we have only one tail of the arrow. This is known as tail and this is known as head of the arrow. Okay? So we are getting one tail only. So 48 minus 22 minus, for calculating E, we take the E of the previous event plus duration will give you E. For calculating L, L of the next event minus duration will give you L. So 48 minus 22 will give you 26. Now for the 5th event, we have only one tail here. So 26 minus 14. 26 minus 14 is equal to 12 is what we are getting here. Now for the 4th event, we have two different tails coming. 12 minus 0 will give you 12 or 48 minus 5 will give you 43. Whichever is lower. For L you are going to take lower. For E you are going to take whichever is higher. Okay? So whichever is lower. We have 12 as the lower one. So that is what we are going to write. Then move forward to the 3rd one. Here also you have one tail. So 26 minus 3 will give you 23. Next, for the 2nd one, we have two different tails coming here. So 26 minus 2 will give you 24 or 12 minus 0 will give you 12. Whichever is lower is what you are going to assign here. So 12 is the lower one. Now for the first event, 23 minus 5 will give you 18. 12 minus 12 will give you 0. 12 minus 6 will give you 6. Whichever is lower is what you are going to assign here. So 0 is the lower. Now remember one thing, always your first event will have E and L as 0 and your last event will have E and L as equal. Now wherever you got E and L as equal, just find that particular events. Here we have E and L equal, E and L is 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 equal. Whatever event has E and L equal, you're going to just join all those events and that is going to be your critical path. So our critical path is 12 plus 0 plus 14 is equal to 26 plus 22 is equal to 48. Always your critical path will have the duration as written for the last event. Whatever is the duration written in the last event, that is the duration of the critical path and that is the duration of the project also. Now this duration can also be calculated by writing the paths. As the question was providing us alphabets, so I am going to write the path with the help of alphabets only. Okay? We have ADH as the first path. Second path is BDH. For dummy you need not write anything. Next we have BEH. Next is BGH. Okay? So from A we have only one path. From B we have 1, 2 and 3 different paths available. Then from C, G, H and from C we have F also. Now we are going to write the duration of these paths. So the first is ADH, which is 5 plus 3 plus 22, which is equal to 30. Then BDH is 12 plus 3 plus 22, which is equal to 37. Then BEH, 12 plus, okay, this is BDH, no? 12 plus 3 plus 22. 12 plus 3 plus 22 is 37 only. Next, BEH is 12 plus 2 plus 22, which is equal to 36. Then BGH is 12 plus 14 plus 22, which is equal to 48. And then CGH is 6 plus 14 plus 22 is equal to 42. And CF is 6 plus 5, which is equal to 11. Out of all these paths, whatever path is giving you the highest duration, that is the critical path. And here also we got to know that BGH is only the critical path here. And the total duration of the project is the duration which you are getting here. The question can say total duration, minimum duration, normal duration. All of them is exactly same. This is the duration which you are getting for the project. Okay? After this, the next thing is they want us to calculate standard deviation of the critical path. Normally standard deviation whenever we calculate for the project. And the project, for the project whenever we calculate standard deviation, that is going to be for critical path only. Even if the question is mentioning it or not, doesn't matter. Okay? So how to calculate standard deviation? Standard deviation is this. We already calculated variance. Remember that you're not going to directly calculate standard deviation. Always calculate variance first. then only take the total. We can't take the total directly of standard deviations. We first have to calculate variance and then take the total of them. So we are going to take the total of only critical path related variances. So BGH, B is 1.778, G is 1.778 and H is 7.111. Take the total of all of them. This is your variance ka total. Now I'm going to underroot this so that I can know what is the standard value, standard deviation value, which is 3.266, and this is your standard deviation. Now after calculating this, you need to calculate the probability of finishing the project in 54 days using the properties of the normal distribution based on the values from the table below. So probability of completing the project in 54 days. How to calculate this? For probability, we say we use this particular formula. Z is less than equal to x minus mu upon standard deviation. Now you need to understand what all these different things are here. This is the probability which you are going to get with the help of value of z. How to calculate value of z? With the help of x. What is x? X is already given days in which you want to complete the project. That is 54 days. Okay? That question will always provide what is the value of x. Minus mu. Mu is your expected duration. What is the expected duration which we got for the project? 48 days. So 48 is our expected duration. Divided by standard deviation. Standard deviation of your critical path, which is 3.266. So 54 minus 48 divided by 3.266 will give you 1.837 something. 54 minus 48 divided by 3.266. Okay? So probability of z less than equal to 1.1837 is what we are getting. Now you have to see what is the value or what is the probability of z score 1.837. How to see this? For this you are going to refer this kind of table which question will provide to you. Now you have to specifically see what the question is saying about the table. They are mentioning that the value which is given of z is from 0 to z. Now you need to understand one thing, that whenever we want the value, we are seeing the value from this normal distribution curve. And in this normal distribution curve, if we want of 1.837, if we want for 1.837, which is our z score, we want the probability of it. We want the probability of this complete area which is going to be there in the left side. Why? Because in 54 days, what is the project you are able to complete? That is what we want to know. And for that, we have to see the probability of full left side. Okay? But the question is only providing you the probability from 0 to z. This is a normal distribution curve which is divided with the help of one line in two different parts. These two different parts are exactly equal. This line is our mean, that is average duration line, which is denoted by 0. Okay? This is going to divide your normal distribution curve into two equal parts, and those two equal parts are mirror image of each other. So if the total area of this normal distribution curve is 100%, which is equal to 1, then this side is going to be 0.5 and this side is going to be 0.5. Okay? Now, after this, as I already told you that if this is your z score, which is 1.837, then you want the complete left side of the normal distribution curve. But the question is only providing us this part from 0 to z, and we want for 1.835. We have got 1.837, but as the nearest value is 1.835 given in the question, hence we are going to use 1.835 value only. Okay? But they are only providing this part. We don't want full this part. How to get that? So you already know that from 0 to all this part, the area is 0.5. And for this, the area or the probability is already given to you. Just add both of them and this will give you the complete this side of the area. Okay? So 0.4667 plus 0.5 will give you 0.9667. 0.4667 plus 0.5 is equal to 0.9667, and this is the probability of completing the project in 54 days. Okay? So the probability can also be written in percentage as 96.67%, and we are done with this part also. Moving forward to the next part, which says there is a evidence that the manager are poor at estimating extreme values. Optimistic and pessimistic. So whatever is your optimistic and pessimistic values, these are known as extreme values. I think that after shifting the table, everything got shifted. So let me just remove all of this. And this should go a little up. After this, the question says, there is a evidence that managers are poor at estimating extreme values. What are extreme values? Optimistic and pessimistic are extreme value, and this is the average or the middle values. Most likely is always your middle value. This is going to be the lowest value, and this is going to be the highest value. You can see that from here also. Okay? So these are the extreme values, and our management is not good at estimating these extreme values. It is suspected that in this project, the time given for task A, B, C and F, for task A, B, C and F, whatever is the time given as optimistic and pessimistic, underestimate the pessimistic time by 1 day. So our managers has underestimated the pessimistic time by 1 day. Now what does underestimation means? Whatever is written here is lower by 1 day, but in reality it should be higher than 1 day. This is lower than 1 day, lower by 1 day as compared to what it actually should be. Hence we should add 1 here. So this will become 7. 6 plus 1 is 7, 16 plus 1 is 17 and 12 plus 1 is 13, and here also 6 plus 1 is 7. Okay? So in your A, B, C and F, underestimation has happened of pessimistic time by 1 day, and they have overestimated the optimistic time by 1 day. This is our optimistic time and this is overestimated by 1 day, which is written here. So we have to reduce 1 day so that we can get the correct time. 4 minus 1 will give you 3, 8 minus 1 will give you 7, 4 minus 1 will give you 3, 4 minus 1 will give you 3. Okay? After that, in the case of task G and H also is going to change. The under and over absorption is put at 2 days. So the exact same kind of under and over absorption is going to happen. For pessimistic, there is underestimation, okay, of 2 days. Underestimation of 2 days in pessimistic time. So this is going to be 20. And here also underestimation has happened. So this is going to be increased by 2 days. And for your optimistic time, it is overestimation. So we are going to reduce 2 days. This will become 8 and this is going to become 16. Okay? You are required to calculate the new probability of completing the project in 54 days and to comment on the effect of the new probability. Now, what is the new probability now? How to know that? So if you notice, how we calculated this probability with the help of your mu, that is expected duration, and standard deviation. So if any of this changes, your probability is also going to change. So let's see what our mu is going to be. Mu is your expected duration dependent on this expected time period. So how this expected time period is calculated? 1 into optimistic time plus 4 into pessimistic, most likely time plus 1 into pessimistic divided by 6. Now if you notice, even if my optimistic and pessimistic time has changed, but the change is exactly same. If this is increased by 1, this is reduced by 1. If this is increased by 2, this is reduced by 2. That means whatever changes are happening in our expected duration, that is exactly same for optimistic and pessimistic time. And if that happens, then to your expected duration is not gonna change. Let's calculate and find that out. 5 into 4 plus 3 plus 7 will give you 30, divided by 6 again will give you 5. Then 12 into 4 plus 7 plus 17. 12 into 4 plus 7 plus 17 divided by 6 will give you 12 again. There is no changes which is going to happen in expected duration. This is a good thing. And this is happening just because whatever is the increase happening here is the exact amount of decrease happening here. And both of them has exact same weight in your expected duration calculation. If the weight was different, that is not going to happen because the formula is exactly same every time. But if the underestimation or overestimation is different, then though your expected duration can also change. But in this question, it is not changing. Hence, your expected duration is correct. And if your expected duration is correct, your project diagram is also correct. But if your expected duration has changed, you need to again draw the network diagram. Remember that it can happen in your attempt that they are changing the expected duration with the help of some different underestimation and overestimation. So you have to again create the diagram if your expected duration is changing. Okay? After this, as this is not changing, this is not gonna change, and if this is not changing, your mu, that is expected duration of the project, is not gonna change. But your standard deviation definitely going to change. Let's see what is the standard deviation going to be. Now, am I going to calculate all the standard deviation? Answer is very no. Why? Because I need only 1, 2 and 3. Why? Because these are the only variants which are there in our critical path. So now I'll calculate only the variance of the critical path so that I can calculate that standard deviation only and only of the critical path. I don't need all of them. Okay? So I'm calculating for 1, 2 and 3 again. How to calculate? Let me just keep the previous value here itself so that we can compare what is the correct one. Now, what is the value which we are getting now? Pessimistic minus optimistic time, 17 minus 7 divided by 6 ka square. Now we are getting 2.778 in place of 1.778. So this is changing. Next, 20 minus 8 divided by 6 ka square will become 4 in place of 1.778. And 36 minus 16 divided by 6 ka square is 11.111 now. So this is the variance which we are going to use. 2.778 plus 4 plus 11.111. We are getting 17.889 as the variance. Under root it and we are getting standard deviation of new standard deviation, which is 4.2295. So I can write it as 4.23. After getting this, again we have to calculate probability of completing the project in 54 days. So z is less than equal to x minus mu upon standard deviation. Here probability of z less than equal to x is what? X is 54 days. Minus mu is exactly same, 48 divided by standard deviation has changed to 4.23. So 54 minus 48 divided by 4.23 will give you 1.14418. Probability of z less than equal to 1.418. So we have to find that 1.418 in our calculation, and they are providing 1.42. But this is only from 0 to 1.42. But what we want the complete left side. So what we are going to do, add 0.5 to this particular value, 0.422 plus 0.5 will give you 0.922. Which is equal to 92.22%, and we are done. We have calculated the probability of this part also, and with this we completed this question. Okay? So our first probability was 96.67 and the next probability we got it as 92.22%. Now let's move forward to the next question. This is also an interesting one. An engineering firm is tendering for a contract to supply a steel fabrication with target duration of 46 days. The task have been analyzed as follows. So we have activities and the duration of them is given to you. Now if you notice, the duration is the normal duration. They are not providing us expected, estimate, most likely, pessimistic and optimistic time. The firm is awarded the contract and starts work with all activities on their earliest start time itself. But after working on the 15th day, there is a fire which destroys all the work in progress on task 2, 4, 2, 5 and 2, 6. Whatever work we did up to 15 days in this particular activities, this is completely destroyed. Hence, we have to again do the same work. Fortunately, no other completed tasks are affected, but it is estimated that your 5-6 activity is now going to need 14 days rather than requiring 14 days. Now this particular activity will require 20 days. Okay? The project manager feels that due to fire there will be variability in the task. Earlier there was no variability, we have fixed time period for different tasks, but now there is going to be variability and has made uncertainty estimates which are shown as task standard deviation in days. So they have provided a standard deviation. Now remember one thing, I already told you, you can't add standard deviations together. What you need to do, whenever you have standard deviation, you're going to first calculate the variance, then take the total of your variance of critical path, then take the root of it, and that is how you get the standard deviation. Okay? Never take the total of standard deviation directly. Prepare a PERT network diagram as originally envisaged. Originally envisaged means as per original calculation, what is the network diagram you're going to get. So let's make it. So if you notice, this is very simple diagram. Here already activities are given with the help of events. Hence this makes our calculation much more easier. So we have 1 to 2, then 1 to 3 and 1 to 4, then 2 to 4, then 2 to 5, 3 to 6, 4 to 6 and 5 to 6. So 1, 4, 1 to 2, 1 to 4 and 1 to 3. Then 2 to 4, then 2 to 5, 3 to 6, 4 to 6 and 5 to 6. Done. This is the diagram which we have prepared. Now after this, write the durations which are there. For 1 to 2 we have 10. Remember that when they are not writing any activities in between, you are also not going to write. But if they are not providing any event, they are only providing the name of the activities, then you are going to write the name of the events. Okay? But don't write the activity name by yourself. Then we have 1 to 3 which is 12. This is 10. 2 to 4 is 9, then 2 to 5 is 13, 3 to 6 is 17, 4 to 6 is 12, 5 to 6 is 14. Now after writing this is the original diagram which we have to prepare. We have prepared the same. Assess the new expected project duration and identify the critical path through the remaining activities. Now we have to assess the new project duration. That itself means that you need to also calculate the project duration of this particular time period. Now this can be calculated with the help of E and L. In this question specifically, calculating E and L is much more beneficial as compared to going for calculating the total, writing the total paths and then calculating. Why? Because for calculation of fire related things, your E and L will help you much more better way. So I've made the exact same diagram, written all the duration and find out all the E and L values. How to find out E and L? With the help of E of the previous period plus your duration will give you E for the next one. Similarly, here also I have one arrow. So 0 plus 12 will give you 12. Here we have two different arrows. So 10 plus 9 will give you 19. 0 plus 10 will give you 10. Whichever is higher, 19 is the higher one, which is what we are going to write. For the fifth one, 10 plus 13 is 23. For the sixth one, we have three different arrows as 12 plus 17. 12 plus 17 is 29. 19 plus 12. 19 plus 12 is 31 and 23 plus 14. 23 plus 14 is 37. Whichever is higher is what we are going to write, and then write the exact same thing in L. Now with the help of the tail, you are going to calculate L. 37 minus 14 will give you 23. For the fourth one, 37 minus 12 will give you 25. For the third one, 37 minus 17 will give you 20. For the second one, we have two different arrows. 23 minus 13 will give you 10, or 25 minus 9 will give you 16. Whichever is lower is what you are going to write. Then 25 minus 10 is 15, 20 minus 12 is 8, 10 minus 10 is 0. Whichever is lower is what you are going to write here. Done. After making this is the scenario before fire. Now what happened? Fire occurred, and now you need to assess the new expected project duration and identify the critical part through the remaining activities after the fire. But in this before fire situation also, with the help of E and L, we can calculate wherever you have E and L as exactly same. This is going to be your critical path. So we found out our critical path here. Okay? After finding out the critical path, we can also find out the expected project completion time, that is 37 days. But if you notice, there is something very important in this question, that is target duration. Target duration is given as 46 days. But if before fire everything was worked perfectly, we would have completed everything in 37 days. Now what happened? Fire occurred, and now you need to find out new expected project duration and identify the critical path through the remaining activities only. How to find out the remaining activities? So the question has mentioned that 15th day the fire occurred. So before 15th day, what all work would have been done? So we have started everything on the earliest start time, that is on 0 itself we started everything. 10 days have been taken for completing 1 to 2. Then 12 days are taken for completing your 1 to 3. For 1 to 4, if you notice, 0 to 10 is the time period here, 10 to 9 is the time period here. That means total 19 days are required. So can I say that after completing it for 10 days, we have completed the 2 to 4 activity for 5 days? We have 15 days. So we might have completed this 5 days activity here, but due to fire, this is completely destroyed. Similarly, here also we might have started for 5 days. Similarly, after completing this 12 days of work, we might have started this work also for 3 days. This is completed for 5 days. This is completed for 5 days. This is completed for 5 days. But this work might not have been started. Why? Because this work is going to start only after 19th day. We are only on the 15th day. Hence, this is not started yet. So this, and this is started. 2, 4, 2, 5 and 3, 6. And the question is mentioning that 2, 4, 2, 5, 3, 6 are the one which is completely destroyed. So whatever 5 days of work you have done here, 5 days of work done here, 3 days of work done here is completely destroyed. Hence, all this activities has to be done again with this full time period again. But other activities are not destroyed. That means this fully completed activities are not at all affected by the fire. Okay? The only activity which is affected is these 3 activities. Hence, these 3 activities has to be done again. And now the question says you need to find out critical path with the help of remaining activities only. As this is already done, I am going to assign 0 here. Okay? 0 time period. And now on the 15th day, I am starting everything again. And now from the 15th day, I am calculating what is the duration which we are going to take. So 15 is what I assigned E as here, because on the 15th day we are starting again after fire. and this is going to be 0 because these activities are already completed. No need to do that again. The question has specifically mentioned that after fire you need to calculate. Hence we assigned 0 here. 15 plus 0 will give you 15. Then here we have 15 plus 9, 24, or 15 plus 0, 15. Whichever is higher is what you're going to assign here. Then 15 plus 0 is 15. Then here we have 15 plus 13 as 28. Now after this, for 6th, we have 3 different areas. 28 plus 20 is equal to 48. 24 plus 12 is 36. 15 plus 17 is 32. Whichever is higher, assign 48 here. After assigning 48, L is also going to be 48, and then by backward calculation, you can calculate the remaining L's. Now we got to know that our project duration is now 48 days. Earlier we were able to complete everything in 37 days, but now we'll be able to complete only in 48 days. Now what happened? Evaluate the probability of the project being completed on time after the fire. On time, when they are mentioning, they are asking about this particular duration, that whether we will be able to complete in target duration or not. If there was no as such target duration given in the question, then on time will mean this expected project completion time, which is 37 days. But as of now, as they are providing us the target duration, this is the on time period in which we want to complete the project. But our expected duration is 48. So how to calculate? We'll say that the probability of z less than equal to x minus mu upon standard deviation. Probability of z less than equal to x is given to you as the target time, which is 46 days, and mu, which we are getting, is 48, divided by standard deviation only for your critical activities, which is 25 and 56. 25 and 56 is what we are going to consider. And for that, they are providing us the standard deviation. We can't directly take it, so we are going to do the square of it. So 1.33 into square of it is equal to 1.7689, and then 0.47 ka square will give you 0.2209. Then take the total of both of them together. 0.2209 plus 1.7689 will give you 1.9898. Now take the standard deviation of this, under root of this. So this is equal to 1.4106. Now after getting your standard deviation, you're going to put that particular value here. This is where we have written, right? So 1.4106. Now 46 minus 48 divided by 1.4106 will give you minus 1.417. Probability of minus 1.417 is what we have to see. So minus 1.42 is what they are providing as Z score, and the probability for the same is 0.422. Now you have to see that this is from Z is equal to 0 and Z is equal to minus 1.542. Now what does that mean? That if this is my normal distribution curve, then this is the 0 value. Whatever is the positive value of Z score, you get it here. But whatever is the negative value, you're going to get on the left side. And this is minus 1.42. Now when they are saying from 0 to minus 1.42, that means they are providing us the area of this particular part. But whenever we got the Z score, we want the value on the left side. We want all the values which are there on the left side only. Okay? We don't want this particular period. From this Z score, whatever is on the left side, that is what we want. Now how to calculate this? We already know the area of this particular part. From 0 to this side is 0.5. We already know the area of this particular part. So from this total, if I reduce this part, I can get the remaining one. So 0.5 minus 0.422 will give you the probability. So 0.5 minus 0.422. 0.5 minus 0.422 is equal to 0.778, which is equal to 7.78% are the chances of completing the project in the expected time. Okay? And that is what this question wanted us to calculate it, and we calculated the same thing. Now we can move forward to the last part of this chapter, and that is going to be project crashing. Now how to crash the project? For understanding this, we are going to refer this particular question. Anand Builders have been approached by Bharat Secondary School to build a computer room for the students. Work is going to start on 1st August 2023. The cost of the project is estimated at 1 lakh rupees, and the work is to be completed by 25th August. So we are going to start on 1st and we have to complete at 25th. That means total 25 days are what we are taking to complete the project, and the cost is 1 lakh rupees. Following data details pertains to the project. We have activities and the preceding activities with the help of which we can make the network diagram. Then planned time, which is your original days, is given to you, then the original cost in thousands is also given to you. If you take the total of all of this, 16 plus 10 plus 24 plus 12 plus 10 plus 18 plus 10, that is equal to 100. That means total 1 lakh is the amount which is given here. Before the work begins, the school approached the builders and requested them to complete the work by 20th August itself. Earlier, we decided to complete in 25 days. Now the school wants the project to be completed in 20 days itself. And they were willing to pay an escalation of 10% on the normal cost. This is the normal cost plus 10% is equal to 1,10,000. This is the maximum they are ready to pay. The engineer of Anand Builders reworked the duration and cost as follows. So as we have to reduce the time, we can reduce the time in all the activities, and what is the reduction happen in all the activities is given to you. That this time period can become 8. So 12 can be reduced by 4 days and we can complete this particular activity in 8 days. But whenever we reduce the time of any activity, we have to incur higher cost, and that is what is happening here. 16 was the cost earlier, now it is becoming 24. Okay? So whenever you reduce the time, your cost is going to increase. Similarly, 14 became 10, 4 days of reduction, 10 became 15, 5,000 of increase. Similarly, for all other activities also they have provided the same thing. Draw the network diagram and check whether it is possible to complete the work by 25th August as originally planned or not. So how to check this? With the help of network diagram and critical path, I can find out whether with the help of these activities, am I able to complete the work in 25 days or not. So first is activity A, B, C. There is no predecessor of all of them. A, array, B and C. Then from A you have to start D and E, and E is required with B. There is no as such other requirement of E, hence I can directly send E to B, and D is required separately. Then wherever you have B and E together, from there you are going to start F, and then from C you are going to start G. As there is no as such ending point of all of them, we had made an ending point for all of them together. Okay? So this is 1, this is 2, this is 3, this is 4, this is 5. After making this, we can write the planned duration. Whenever you make the network diagram, you have to write the duration which is given in the question for original days. 12, 14, 8. 12, 14, 8. Then D is 5, 4, 9, 10. 5, 4, 9 and 10. Now write what all paths you have. The first one is AD, second one is AEF, then we have BF, then we have CG. These are the only paths available with us. AD is 12 plus 5, 17, 12 plus 4 plus 9, 12 plus 4 plus 9 is 25, then 14 plus 9 is 23, then CG, 8 plus 10 is 18. So among these, AEF is the longest duration, and with the help of this we got to know that we can complete the project in 25 days as originally planned. Will it be possible to accept the request to complete the work by 20th August? For that, we have to crash the project and see whether with the help of crashing we are able to complete the work by 20th August or not. So how to crash? For crashing, we are going to follow step-by-step procedure. See, there are different types of questions under crashing. The first is this type of question where they are only providing us the direct cost of 1 lakh rupees. There is no as such indirect cost, but there are some questions where they also provide us the indirect cost. Whenever the question provides us indirect cost, that is going to be applicable on the number of days, like let's say 100 rupees per day. Okay? So if your days are 25, that means 25 into 100, this is going to be 2500, and whenever you're reducing the days, your indirect cost also gets reduced. But in this question, there is no as such indirect cost. So without indirect cost, we are going to see what is going to happen. So first, whenever you are going to have crashing, the first thing which you're going to do is calculate slope. How to calculate slope? For this, write all the activities which you have, their normal time, the normal cost. Normal time and normal cost is your originally planned time, originally planned cost. Then we write crash time. These are known as, revised time is known as crash time, and the crash cost. Crash time and crash cost. Then we are going to find out what is the number of days which we can do crashing off. So possible crash days. To calculate this, 12 minus 8, this will give you 4. 14 minus 10 will give you 4. 8 minus 8 is 0. 5 minus 3 is 2. 4 minus 3 is 1. 9 minus 8 is 1. 10 minus 8 is 2. After getting your possible crash days, you are going to calculate extra crash cost. How to calculate extra crash cost? Take your normal cost minus your crash cost. crash cost minus normal cost. Always your crash cost is going to be higher than the normal cost. So crash cost minus normal cost. And these are the different values which we are getting. After getting your extra crash cost, find out crash costs per day. Why to find out crash cost per day? Because these crash costs is for different types of days. Hence, it is better to convert it to per day cost. Okay? So 8,000 is for 4 days. 8 by 4 will give you 2. 5 by 4 will give you 1.25. 4 by 2 will give you 2. 4 by 1 is 4. 6 by 1 is 6. 6 by 2 is 3. This is the per day cost applicable for different activities if we are doing crashing in them. And this crash cost per day is known as slope. Okay? After calculating slope, we follow step-by-step procedure. The step number 2 is going to be, mostly whenever I teach this step-by-step procedure now, first we calculate the slope always, and then only in the step number 2 we make the network diagram and then write the paths. After writing the paths, we also write what is the number of days which we can crash for each activities and what is the total cost for crashing. Like for 1-2 activity, the total number of days for which we can do the crashing is 4 days. And what is the number of what is the cost on a per day basis? 2,000. Write the cost on a per day basis, but number of days for which you can do the crashing, write the total number of days here. Okay? Wherever you have 1-2 activity, 4 days and 2,000 is what we are going to write. For 1-3 activity, total number of crashing which we can do is 4 days and 1.25 is the cost. 1-3, 4 days, 1.25. Similarly, for other activities, 1-4, so there is 0 crashing. So 1-4 we have written 0 crashing. 2-5, 2 days of crashing and 2,000 is the cost. 2-5, right? 2 days of crashing, 2,000 is the cost. Then for 3-5, 1 days of crashing, 6,000 is the cost. Then for 4-5, 2 days of crashing, 3,000 is the cost. And we are done. Okay? We have written the duration, which was your normal duration as what we calculated here. The exact same thing is what I have written here. Now after this, I got to know that this is my project duration and this is the critical path. And the total cost is 1 lakh only. If we have direct cost and indirect cost both, then this is your step number 2, right? In the step number 3, I would have calculated the normal project cost by adding my total direct cost and total indirect cost applicable. I'll show you one question so that you can get an understanding about this also. Okay? So this is the total cost which we are getting. After getting the total cost, now we are going to do the crashings. How to do crashing and where to do the crashing? Crashing will be done for your critical path only. So this is the critical path. We'll crash this particular path to the next highest number, and that is 23. So I'll crash this only for 2 days. For crashing this for 2 days, I have these 3 activities where we can do the crashing, and these are the cost applicable for different activities on a per day basis. Wherever you have least cost, that is the option you're going to prefer. So here we have 2,000 as the cost, which is least among all other options. Hence this is the option which we are going to prefer. Now, as here we have 4 days and out of 4 we are using 2 days. So we are left with only 2 days here. So 2 days of crashing is done here. Now wherever you have 1-2 activity, you're going to have 2 days of crashing. So 1-2 activity is also here. Here also you're going to have 2 days of crashing. Others don't have 1-2 activity. Hence no crashing will be done in this path. They are going to be written as it is. Okay? After this, if you notice, the highest duration is there in 2 different paths now. So both of them become our critical path. Now how to calculate the cost of this path? For this, we are going to follow step number 3. That is crashing. For crashing, what is the activity which we are crashing? We crashed 1-2 activity for 2 days and the previous cost was 1 lakh rupees. Now there is an extra cost. We are paying 2,000 rupees for 2 days. That means 4,000 is the extra cost which we are going to have. If there was indirect cost, I was reducing indirect cost because that is applicable on per day basis. It was 25 days. Hence the cost was higher. Now the days are reduced by 2 days. Hence the cost will also reduce. Your indirect cost will also reduce. But whenever you don't have indirect cost, your direct cost though is definitely going to increase. And that is increased to 1,04,000. Now after this, we are moving forward to the next crashing. Because we have to reach to 20th August, that means we have to reach to 20 days. And for that, we need to again do the crashing. So in this 2 path, as both of them are the critical path, we have to do the crashings. Now what is the path where I am going to do the crashing, or what is the activity where I am going to do the crashing? Where you have the least cost. Now if you notice, there is one particular activity which is there in both the situations. That is 3-5. And if I took 3,500 and I reduce one day, with the help of this 6,000 cost, I can reduce the cost of both the days of both the activities. But this will cost me 6,000 rupees. There is one more option that I choose the least cost, that is 2,000 rupees from here. And here also I choose the least cost, that is 1,250. So 1,250 plus 2,000, this will cost me only 3,250. So this is a better option for us. But here I can do the crashing of only 2 days and here I can do 4 days. So as here only 2 days is possible, here also we will do 2 days of crashing only. Okay? So these 2 days are crashed. This 2 days, out of 4 days, 2 days are crashed. So out of this 2 days are, all the 2 days are crashed. That means we are not left with anything now. Out of this 4 days, we are left with 2 days. And here also as 1-2 activity is there, this 2 days will also get completely crashed. Okay? So this 1-2 has been reduced by 2 days. So this will get reduced by 2 days. This will get reduced by 2 days. Here 1-3 got reduced by 2 days. But here nothing was reduced. Hence this will remain exactly same. Okay? Now our critical path is these two and the critical duration of the critical path is 21 days. After knowing this, again we are going to calculate the cost of this particular crashing. How to calculate? What all areas you have done the crashing, what is the number of days for which you are doing the crashing, what was the previous cost, now add the current cost. So 2,000 into 2 days, 1,250 into 2 days will give you 6,500. So we are getting 1,10,500 as the cost applicable here, and that is what I have written here also. Next, we are moving forward to the third crashing now. For doing third crashing, we are going to crash in the critical path only, and in the critical path this is completely used, and out of all of them we are left with this and this. Now again, if I choose this option where both of them has the common activity, this will cost me 6,000 rupees. But if I choose different activities, 4,000 plus 1,250, because this is to completely used, I can't crash it more now. So I have to choose the next one, next least cost, which is 4,000 plus here the least cost is 1,250. So 5,250 is now again is least as compared to 6,000. Hence we are going to choose that option. Crash 2-3 for 1 days and 1-3 for 1 day, because we have to reach only up to 20 days. Okay? So we are crashing this for 1 day. 2-3 is not there, 1-3 is not there, 2-3 is not there, 1-3 is not there. Hence both of them will not get crashed. These are the only two activities which are going to be crashed. And after this, our duration is 20 days. That is what we wanted, and this is our critical path. Now to calculate the third crashing cost, we are going to write what is the number of days for which we crashed, then the previous cost, then the extra cost which we have incurred, and this is the total cost applicable. Okay? So we are getting that now we need total 15,750 extra rupees, because 1 lakh to the school was already given to us. We need 15,750 extra amount for completing the project in 20 days, and that is what is asked here. How much additional amount Anand Builder should ask from the school? 15,750 is what we should ask for. And we are done with this question, and we understood how to do the crashing. Now let me show you one more question so that you can understand how to deal with indirect cost. There we are not going to discuss more, but I'm just showing you so that you can get an understanding about what is happening here. Okay? So let me just open that question. This is the question which you should refer, because here indirect cost is also given to you. So we have calculated slope. This is going to be the first step. Second step is preparing the network diagram, writing the critical path, whatever is the cost and the days, number of days for which you can do the crashing, normal duration and the crashings. And then we write the project duration, critical path and total cost. Everything is exactly same as we have done above. But for normal project cost, I'll do the calculation here by adding the indirect cost on the basis of number of days which is required for your normal project. Then in the step number 4 also, I'm going to reduce my indirect cost on the basis of number of days which we reduced. So this is the number of crashing days. On the basis of that, your indirect cost is also going to get reduced. And that is how we deal when we have indirect cost also in the question. Okay? Now let's move forward to the next part, that is learning curve. Now what is this learning curve all about? In learning curve, what happens is, we humans, whenever we do something new, we are going to definitely learn something. Due to our learning, we are able to do, whenever we are consistently doing something, we are able to reduce the time which is taken for doing the same work again and again. Hence, that is what learning curve shows us. Okay? So, what to do in the learning curve? We are going to calculate what is the time period which is going to be taken for different types of units. And in this, we have two different situations. The first one is when production quantity is doubling. Whenever the production quantity is doubling, we are going to use cumulative production table to solve the problem. So let's say this is the question given to us. Time for first unit is 100 hours. learning rate is 80%. Calculate time for 32 units, time for 33 to 64 units, 9 to 64 units. Now what this learning rate shows us, that whenever your cumulative production is doubling, your average time per unit is going to reduce by 80%. Okay? So let me just show that to you how it looks like. So we make a table where we first write the cumulative production. So first we are going to produce 1 units. Then whenever cumulative production is doubling, just double the units. 2, then double of 2 is 4, double of 4 is 8, double of 8 is 16, double of 16 is 32, and double of 32 is 64. So whenever your cumulative production is doubling, your average time per unit is going to get reduced by 80%. So this 100, I can call it as average time per unit for the first unit, or I can also call it as the total time taken for the first unit, because for the first unit, average time and total time is exactly same. Now, the total time, the average time per unit is going to get reduced by 80%, right? So this will become 80. Then 80 ka 80% is going to be 64. Then 64 ka 80% is 51.2. Then 51.2 into 80% is 40.96. 80% is 32.768. Then again 80% will give you 26.2144. After getting the average time per unit, now you can calculate the total time applicable. So average time per unit multiplied by cumulative production will give you the total time. 80 into 2 will give you 160. 64 into 4 is equal to 256. 51.2 into 8 will give you 409.6. 40.96 into 16 will give you 655.36. So 32.768 into 32 will give you 1048.576. And 26.2144 into 64 will give you 1677.7216. Okay? Now, after getting this, they want us to calculate the time for 32 units. So for the first 32 units which we prepared, this is the total time applicable. Then they want us to calculate time for 33 to 64 units. How to calculate time for 33 to 64? So I already know what is the time period applicable for 32 units, and that is the total time applicable for all the 32 units is 1048. I already know what is the time period, total time period applicable for all the 64 units. If I reduce the 64 units time period with the 32 units time period, I can know what is the time period taken from 33 to 64 units. Okay? So take 1677.7216 minus 1048.576 will give you the time period applicable for 33 to 64 units, which is 629.1456. Then if you want to calculate for 9 to 64, then the total time period for up to 8 units is 409.6. For units up to total time period for up to 64 units is 1677. Reduce both of them to get 9 to 64 time period. 1677.7216 minus 409.6 will give you the time period for 9 to 64 units, which is 1268.1216. Okay? And this is what we do whenever the production quantity which is given to you is doubling. So whatever quantity here was given was coming in my cumulative production whenever I was doubling the units. But there is one more scenario, and that is when production quantity is not doubling. Before seeing this, let's first see a question related to this cumulative production when the quantities are doubling. But before seeing the question also, I'll suggest you to see this fixed overhead treatment, that what we treat or what we do with the fixed overheads under different scenarios. So if your fixed overheads is given in total basis, then whenever fixed overhead is given in total basis, we assume that it is marginal costing related calculation, that fixed overhead will be assumed as a period cost. But if the question is specifically mentioning that absorption costing is followed here, then you are going to calculate. If the question is specifically mentioning absorption costing is followed here, you are going to calculate rate per hour. Why to calculate rate per hour? Remember, in the third chapter, we have studied about absorption costing system, where we calculate a predetermined rate for charging the fixed overhead to our production cost. And that is what we are doing here also. We have to calculate rate per hour so that we can charge that rate per hour of fixed overheads on all our products which we are making. Okay? So in absorption costing, we charge a rate per hour for fixed overheads. How to calculate this fixed overheads? Take your total fixed overheads divided by total hours available minus whatever is the downtime given. You are going to reduce that, because for only productive hours we are going to charge this fixed overheads. Okay? Now, after calculating the rate per hour also, before charging the fixed overhead, first check whether the question is saying short of work, idle capacity or spare capacity. If any of these is mentioned in the question, that means you're not gonna charge fixed overhead, because these situations are like relevant costing type of situations. If you are having short of work, idle capacity and spare capacity, you'll assume that whatever order you're getting is a special order. And if it is a special order, in the special orders, we don't absorb the fixed overheads. Hence, we are not going to absorb the fixed overheads if we are short of work, idle capacity and spare capacity is there. But if the question is not mentioning any of these, that means you can definitely charge the fixed overhead on each and every order by applying this rate per hour given to you. Okay? Now, after this, if there is no absorption costing mentioned as such, I already told you whenever they are providing us the fixed overhead in total basis, no absorption costing is mentioned. That means it is a marginal costing system. And in marginal costing, we charge all the fixed overhead at once only and no need to charge from the next orders. So in the first order, the question itself will provide you that this is the fixed overhead which we already charged. Hence, no need to charge it from the second order. Okay? Now, if the question provides you rate per hour plus total or only rate per hour, rate per hour plus total is given or only rate per hour situation is there, that means they are following absorption costing, then only they will provide you a rate per hour, because rate per hour is calculated for absorption costing only. And if they are providing rate per hour, first check whether short of work, idle capacity or spare capacity is given. If given, no fixed overheads will be charged because this will be treated as a relevant costing situation. But if no short of capacity, idle capacity or spare capacity is there, you can charge fixed overhead on every order on the basis of rate per hour applicable. Okay? Let's move forward and see what is happening in this question. Even it is not necessary that always rate per hour is there. It can also be, your overheads can also be given as percentage of direct wages. That is also a sign of absorption costing, because in absorption costing only we charge it as rate per hour, percentage of direct wages, percentage rate per unit. So all of these are applicable in your absorption costing only. Okay? Let's see this question. Marine Engineers Limited builds pleasure boats made of fiberglass. The firm has now launched a new type of boat for the use of the children. The cost, data and selling price of the first boat built by the firm are given below. We have direct material, direct labor 800 hours at 5 per hour, then overheads 150% of direct labor. 150%, that means they are absorbing the overheads on the basis of direct labor. Absorption is happening, hence absorption costing is followed here. Okay? Whenever they are giving a percentage or rate per hour on the basis of direct labor or direct material or wages, doesn't matter, that is going to be absorption costing only. Then only we absorb at a specific rate. Now, this is the total cost. They have added a markup of 20% and we are getting a selling price of 18,000. An 80% learning curve is expected to apply to this type of production. The company's policy is to fix selling price by adding at cost plus 20%. A customer has expressed interest in buying the boat but thinks that 18,000 is too high a price to pay. He might want to buy 2 or even 4 of these boats during the next 6 months. He has asked the company to clarify the following. So these are the questions which we have to answer to our customer. Now, if you notice, there is no short of work, idle capacity or spare capacity is there. And there is rate per hour or percentage given of direct wages. And in that case, you're going to absorb the overhead because there is no as a short of work kind of situation. Hence, you're going to absorb the overheads in each and every order on the basis of this 150% of direct labor. Okay? Chalo. So let's see what our question wants. If he pays 18,000 for the first boat, what price he has to pay for the second boat? What is the price he has to pay for the second boat? Second boat comes in doubling. Hana? So if I know the first boat hours, which is 800, then for the second boat, I can say that it is a cumulative production and the learning rate applicable is 80%. So 800 into 80% will give you 640. 640 is the average time. Remember that. So if I calculate the total time, for the first boat it is 800 only, 640 into 2. The total time for all the 2 boats together is 1280. The customer has already paid 800 hours related cost for the first boat. That means this is already done. I want to know only for the second boat. Then what is the extra time period taken for second boat? 1280 minus 800 will give you 480. This is the time period taken for the second boat. Okay? So 480 hours are taken. I can calculate the cost for the second boat. First, though, we are going to charge the material which is applicable on every unit as 5,000. So 5,000 is applicable for second boat also. Then the hours taken is 480 multiplied by 5. 480 into 5 will give you 2,400 as the direct labor, and overheads is 150% of direct labor. 150% of 2,400 will give you 3,600 plus 2,400 plus 5,000 will give you 11,000. Then you have to add a markup of 20% to it, that is 2,200. So we are getting 13,200 as the price which we are going to charge from the customer for the second boat. Now they are asking that can the company quote the same unit price for 2 boats if he orders the 2 boat at the same time? So if they are ordering 2 boats at the same time, then the total hours for the 2 boats together is 1280. 1280 into 5 will give you the direct labor cost as 6400. Material for 2 boats together is 10,000. Then overheads is 150% of 6400, which is equal to 9600, plus 6400 plus 10,000 is equal to 26,000, plus 20% will give you the price of 31,200 applicable for both the boats together. And if I want an average price on a per unit basis, I can divide it by 2. I'm getting 15,600. Now this exact same thing can also be calculated by taking the total directly of the selling price of both the boats separately. So whatever separate selling price you calculated, 18,000 for the first boat and second boat is 13,200. So 18,000 plus 13,200, this will also give you 31,200 divided by 2. You'll get your average cost, which is 15,600. Okay? So this part is also done. If he buys 2 boats now at the same unit price, which is 15,600, what would be the price for the third and fourth boat if he orders them separately later on? So now we have to calculate for the third and fourth boat together. Okay? So double of 2 is going to be 4. 640 into 80% will get the average time of 4 boats together multiplied by 4. The total time is 2048. Now 2048 is taken for 4 boats together. We want only for the 2 next boat, third and fourth one. So 1280 is the time period for first 2 boats minus time period for all the 4 boats together will give you 768 as the time period for the third and fourth boat. Now if I have to calculate for third and fourth boat, so third and fourth, that means total 10,000 is the direct material. Direct labor is 768 hours multiplied by 5 per hour is 3840 multiplied by 150% will give you fixed overhead, which is 75760 plus 3840 plus 10,000 is equal to 19,600 plus 20% will give you 23520 as the selling price for both the products together. But they want us to calculate the unit price, same unit price. So divided by 2, this will give you 11,760 as the same unit price for the third and fourth boat. Okay? Now, can the company quote a single price for 4 boats together and 8 boats together if they are all ordered now? So you have 2 options. First, 4 boats. Second, 8 boats. It's not like after 4 boats you're getting 8 boats. These are the 2 options. Like if he buys all the 4 boats together, if he buys the first 8 boats together, what will happen? So for up to 4 boats we have already calculated. For 8th boat, 512 into 80% is going to be 409.6 as the average time multiplied by 8 will give you the total time for 8 boats together, which is 3276.8. Now we are calculating for 4 and 8 boats together. So for 4 boats we have 2048 as the time period multiplied by 5 per hour is going to give you 10,240 and 5,000 into 4 boats are there. This will become 20,000. Then your overheads is 150% of labor, which is 15360 plus 10,240 plus 20,000 is 45,600 plus 20% will give you 54720. This is applicable for 4 boats. If I divide it by 4, I am going to get 13,360 as the rate applicable for 4 boats together on a per unit basis. Now, for 8 boats, the time period is 3276.8 multiplied by 5 will give you 16384 multiplied by 150% is 24576. And as 8 boats are there, 5,000 into 8 will become 40,000 and the total cost is 80,960 plus 20% will give you 97152. Okay? Divided by 8 will give you the price applicable for per boat 12144 and we are done. Okay? We calculated all the prices which are applicable for this also. Assuming there is no other customer now, what replies will company give? Show working. So we calculated all the values which can given as the boat's price. So for the second boat only 13,200. For the 2 boats together, first and second 15,600. For the situation where we are making third and fourth boat, 11,760 on a per unit basis, and here we got 13,680 and 12144, and we are done with this question. And now we are moving forward to the question where the units are not doubling. And what to do in the case when units are not doubling? Let's first understand that. When production quantity is not doubling, then you're going to use this particular formula. This particular formula also helps us to calculate the same thing, but when units are not doubling, you'll not be able to calculate with the help of table. Hence, we use this particular formula, which is y is equal to ax to the power b. What is y here? Y is the average time per unit for x units. So, for x unit, what is the average time per unit is your y. A is the time for the first unit. Here also you need time for first unit. Here also you need time for the first unit. Then X is the cumulative units produced. Whatever in the total you are producing, that is X. Then B is the learning index or coefficient. To calculate this learning index, you are going to take B is equal to, let's say my learning rate is 80%. So how to calculate B for the same? Take your log of learning rate, which is 0.8, divided by log 2. Log 2 always it is going to be exactly same. Here you are going to write the learning rate applicable. Then calculate the value of this to get the B. How to calculate value of log? For that we have the formula which you can use for calculating the value of log with the help of calculator. But there are chances that in the exams they are going to provide you values, but it is always preferable to be sure from your side at least. It's not necessary that they are going to provide. There are chances that they are going to provide, but it is always better to remember these formulas related to how to calculate log and anti-log using your calculator itself. Both of them are required while calculating the things. You can refer this example. This example helps you to understand what happens when you use that y is equal to ax to the power b. Okay? Plus with that, we also have rules of log. What is the rules of log? First, log x into y is given, that can be written as log x plus y. Log x divided by y can be written as log x minus log y. Log x to the power n can be written as n log x. Log 1 is equal to 0. Log 10 is 1. Log 100 is 2. Log 1000 is 3. And log 10,000 is 4. Log 1 lakh is 5. Similarly, you can go on. Okay? And log 2 is 0.30103. At least this much you should definitely know. After this, we are moving forward directly to the questions which are asked in your exams. So, the first question is this question number 18. Gamma Electronics, which has just developed 100 units of a new type of fire alarm, has been asked to quote for prospective contract. Prospective contract means upcoming contract. So, we have already prepared this 100 units. Now, for upcoming contract, I am going to prepare new units. Okay? The customer requires separate price quotation for each of the following possible orders. So, we calculate cumulative production. So, cumulative production up to 100 units is 100 only. Then we are preparing the first order for 60 units. That means 100 plus 60, 160 unit is what cumulatively you have prepared. Then for the second order, you are preparing 40 units. Then 160 plus 40, you have cumulatively prepared 200 units. The firm has incurred the following cost per unit for the first 100 units. For the first 100 units, they are giving us the cost per unit basis, which it has just developed. Direct material is 500 on a per unit basis, multiplied by 100 will give you the total cost for first 100 units. Direct labor, department A has highly automatic labor. Now something is very important you need to understand, that this learning which is applicable only when the work is not automatic. Automatic means machines are involved. So machines are involved, machines are not going to learn like humans are learning. Okay? So the learning rates are applicable only when you have labors. For highly automatic work, there is no as such learning which is going to apply. Okay? So this is the average time per unit multiplied by 100 units is what we are producing. So the total time period for 100 units is 2000 hours. Then for skilled laborers, we have 40 hours on per unit basis, and this is not the first unit time. This is the average time for first 100 units. If they would have mentioned that the time for the first unit it is given, then I can take that the time for the first unit is 40. But this is not the first unit time. This is the average time per unit for the first 100 units. Multiplied by 100 will give you the total time period for the first 100 units, which is 4000. So in this question, we don't know the first unit time. We only know the total time for first 100 units and average time for the first 100 units. After this, they are providing us a variable overhead which is absorbed at 20% of direct labor. Then fixed overhead absorption is also happening. Department A and B, we have 8 per hour and 5 per hour. So this is absorption costing system only. So we are going to see whether short of work, idle capacity, spare capacity is there or not. So calculate the price per unit for each of the two orders. So these are the two orders for which we have to calculate the price. Assuming the firm uses a markup of 25% on all the total costs and allows for a learning rate of 80%. Now after that, they are providing us some table. In this table, extract for 80% learning curve table is given to you. There is value of X, and then they are providing us Y percentages. Now what is X here? X represents the cumulative total volume produced to date expressed as a multiple of the initial production of 100 units. Multiple of initial production of 100 units means this is multiple of 100. Just multiply 100 to it. This will give you 100 units. So for 100 units, what is the Y percentage they are providing? Then for 1.3 into 100, that means for 130 units, for 140 units, for 150 units, for 160 units, for 170 units, for 180 units, for 190 units, for 200 units is what they are providing. But what we need only for 160 units and for 200 units, because this is our second and fourth order. So 160 units and 200 units, second and third order, right? So 160 and 200. For this, our Y percentage is 86.1 and 80%. Now what does this Y percentage means? And Y is the learning curve factor for a given value of X expressed as a percentage of the cost of initial 100 units. If you notice, the formula which we use for Y is Y is equal to AX to the power B. This is the formula which we have seen. Here A is your 100 units. 100 units, mostly when we take the A, we take the time period for 1 unit. But as they are asking us to take for 100 units only, because they are not providing us 1 unit related information, what I am going to do, rather than writing the cumulative production in units, I'll write it in batches. So cumulative production in batches, and I'll assume that one batch is equal to 100 units. So 100 units here we are producing, that means one batch. If we are producing total 160 units, that means 1.6 batch, and 200 units, that means 2 batches. Okay? So this is the batches which we are going to use. So A is the time period for the first batch. And what is the time period for the first batch? 100 into 40, 100 unit. 40 was the average time. I need total time for the first batch, and that is 4000. Okay? Multiplied by X. What is the X here? X is the number of batches for which you want to calculate. That is 1.6 and 2. So the first situation we are going to take 1.6 to the power B. Okay? B can be calculated with the help of 80% learning rate, but the thing is, our question is providing us directly this value. 1.6 to the power B is directly given to you as Y percentage. So this Y percentage is nothing but your X to the power B value. Okay? So 4000 multiplied by X to the power B value here is 86.1%. And this will give you Y. Y is your average time per unit for 1.6 batches. Okay? So 4000 into 86.1% is equal to 3444. So I got to know what is the average time per batch. For the first batch it is 4000. For the second batch it is, for the 1.6 batch it is 3744. Now for the second batch, how to calculate? The same thing. Y is equal to AX to the power B. We want to calculate Y. A is for the first batch, which is 4000, multiplied by X is 2. 2 to the power B is already given to you as 80%. So 4000 into 80% will give you 3200. And for this one we got 4000 into 86.1%, right? So this is equal to 3444. And for the last one, what is the value which we got here? We got 4000 into 80%, that is equal to 3200. Okay? Now, after getting this, we are going to calculate the total time. What is the total time? 4000 into 1 will give you 4000 only. 3444 into 1.6 will give you 5510.4. Then 3200 into 2 will give you 6400. Now, what is the time period taken for the 60 units, which is your first order? 5510.4 minus 4000 will give you 1510.4 is the time period here. Then for the 40 units which you have made here, what is the time period? 6400 minus 5510.4 will give you 6400 minus 5510.4. We are getting 889.6 hours. Okay? And after getting these values, we can calculate the total cost. So for 60 units, which is your first order, and for 40 units. First, we are going to consider direct material, which is 500 per unit. Let me just remove all the kachra. And we have 500 per unit multiplied by number of units. So 500 into 60 will give you 30,000. 500 into 40 will give you 20,000. Then we have direct labor from department A and department B. I already told you that department A is highly automatic, hence no learning rate is applicable. Multiply this 20 hours directly with the 60 units, you will get 1200 hours. And 20 hours into 40 units is 800 hours. Then the rate is 10 per hour. So we are getting 12,000 here and 8,000 here. For department B only, we got the rates hours as 1510.4 and 889.6 hours. Okay? Multiplied by hourly rate, which is 15. So 1510.4 into 15 will give you 22656. And 889.6 into 15 will give you 13344. Now, after getting this, we are going to consider the variable overhead, which is mentioned as 20% of direct labor. For department A and department B, 20% of direct labor. So 12,000 into 20% is 2,400. 8,000 into 20% is 1,600. 22656 into 20% is 4531.2, and 13344 into 20% is 2668.8. Next, fixed overheads for department A and for department B. The rate applicable for fixed overheads is 8 and 5. 8 into 1200. 8 per hour into number of hours. 1510.4 into 5 is 7552. And 8,000 into 8 is 6. 800 into 8 is 6,400, and 889.6 hours multiplied by 5 will give you 4448. Now take the total. This will give you the total cost. 30,000 plus 12,000 plus 22656 plus 2,400 plus 4531.2 plus 9,600 plus 7552, which is equal to 88,739.2. Next is 20,000 plus 8,000 plus 13344 plus 1,600 plus 2,668.8 plus 6,400 plus 4,448 is equal to 56,460.8. Okay? After getting this, we are going to add the profit margin, which is mentioned as 25% of total cost. So 25% will give you 70576 here, and 88,739.2 plus 25% will give you 110924 here. Divided by 60 units will give you the rate applicable as 1848.733 on every unit, and 70576 divided by 40 units will give you the rate applicable as 1764.4. Okay, done. We calculated all the values. After getting this, we can move forward to the next question, which is question number 19. This is also an interesting question. Let's see what it says. Gangotri Limited is developing a new product. During its expected life, 16,000 units of the product will be sold for 102 per unit. So in expected life, that means in the whole life period, we are going to sell 16,000 units at 102 per unit. Production will be in batches of 1,000 units throughout the life of the product. The direct labor cost is expected to reduce due to learning effect for the first 8 batches produced. For the first 8 batches only, there will be learning effect applicable. Thereafter, the direct labor cost will remain constant at the same cost per batch as in the 8th batch. Whatever was cost per batch in the 8th batch, that is the same thing applicable for the further batches. No learning will be applicable here. What is the number of batches which we are producing? 16,000 units. Every batch will have 1,000 units. That means 16 batches. And this is the selling price. And for first 8 batches only, learning is applicable. The direct labor cost of the first batch is 1,000 units is expected to be 55,000. So rather than providing the hours, they are providing us the direct labor cost, and a 90% learning effect is expected to occur. The direct material and other non-labor related variable costs will be rupees 50 throughout the life of the product. There are no fixed costs that are specific to the product. Given the learning index for a 90% learning curve is minus 0.152. So B is known as your learning index. Y is equal to AX to the power B. B is known as learning index, which is already given to you, and other values are there. Calculate the expected direct labor cost for the 8th batch. Specifically for the 8th batch, you have to calculate. Now, how to calculate this? For this, first, either I can use for the 8th batch, so I have that table also. In the table, I'll get the 8th batch in cumulative production, or else I can directly use this formula also because the value is already given. So this will help me to calculate the things in a much more easier way. So y is equal to ax to the power b. For the 8 batches, I'm calculating for 8 batches together. I'm calculating this average time. By a is what? A is the cost for the first batch, which is 8,000, 55,000 multiplied by x to the power b. X is, we are producing 8 batches, to the power b. B is minus 0.152. Now, if you notice, rather than calculating this, the question is already providing us the value of this, which is 0.729. Now, remember that if the question is not providing you this, you need to use log. And how to use log, I have already shown you that before. And if you want to practice, you should definitely refer once your notes, at least the example which I have shown you, at least that example, if you refer, you will get an understanding about how the calculation happens when we use log. But as of now, in this question, I know there is no need as such of calculating log. I can directly use 8 to the power minus 0.152, which is equal to 0.729. Okay? So 55,000 into 0.729 will give you 40,095 as your Y. This is average cost per batch for 8 batches. I want the total cost for 8 batches. total cost for 8 batches. So this will give you 320760. We have to calculate specifically for the 8th batch. So if I know the total cost for 8 batches and the total cost for 7 batches, I can reduce both of them to get the total cost for the specific 8th batch. So I am calculating now for 7 batches. Y is equal to ax to the power b, y is equal to a is 55,000, x is 7 to the power, again b is minus 1.152, 55,000 into minus 7 to the power minus 0.152 is already given to you as 0.744. So 55,000 into 0.744 is equal to 40,920. This is the average time per unit for 7 batches multiplied by 7 batches will give you 286,440. So this is the total cost for 7 batches. This is the total cost for 8 batches. You want to know the cost for 8th batch specifically. So 320760. This will give you 34,320, the cost of 8th batch specifically. Okay? Next, assess the expected contribution to be earned from the product over its lifetime. Now this is interesting. So to calculate the total contribution, what we can do is, we already know that up to 8th batch the learning is applicable, and this is the cost up to 8th batch. So up to 8 batches, our cost is 3,20,760, and from 8th to 16 batch the question has already, from 9th to 16 batch, because up to 8th to the learning is already applicable and we got the cost, but from 9 to 16 batch there is no as such learning applicable, and the cost which is applicable for 8th batch is going to apply for the remaining 8 batches. From 9 to 16 we have 8 batches, directly apply this cost for this 8 batches. So we are getting the labor cost as 595,320. This is the labor cost applicable for total 16 batches. And what is the revenue you are going to have from the 16 batches? 102 per unit multiplied by 16,000 units. So 16,32,000 is the revenue. This is the labor cost. And we have one more cost which is direct material and other non-labor related cost, which is 50 per unit multiplied by 16,000 units. So we have 8 lakh rupees as the material cost. So if I reduce all the costs, 16 lakh minus 8 lakh minus 5 lakh 95. So we are getting 36,680 as the contribution. So this is the answer of the second question. Now the third question wants, infer the rate of learning to achieve a lifetime product contribution of 6 lakh rupees. So you have to find out a rate of learning with the help of which you can earn a contribution of 6 lakh rupees. Lifetime contribution should be 6 lakh rupees, assuming that a constant rate of learning applies throughout the product life. Now whatever learning rate you find out, you have to assume that this is going to apply for all the 16 batches. Okay? So now I have to do the backward calculation. In this case, they are providing us the contribution as 6 lakh rupees. I already know that my material cost is 8 lakh rupees. There is no as such changes which is going to happen in material cost. There is no as such changes which is going to happen in sales. Sales will also remain exactly same. The thing which is changing is your labor cost. So what will be your labor cost? Sales minus material minus contribution will tell you what is the labor cost. 16,32,000 minus 8 lakh minus 6 lakh. This is equal to 2,32,000 should be your labor cost. Okay? Now this labor cost is for 16 batches together. If I want to know average cost per labor for 16 batches, this is going to be 2,32,000 divided by 16. And this will give you 14,500 as the average labor cost for 16 batches. Now this average labor cost can be calculated with the help of y is equal to ax to the power b. I already got to know what is the average cost applicable for 16 batches, which is 14,500. I already know what is the cost for the first batch, which is 55,000. And what is the number of batches? 16. The only thing which is to be calculated here is b. Now B is to be calculated on the basis of learning rate applicable. So what I am doing is 14,500 divided by, as this is in multiplication, I can take it there into divide, and I am getting 0.2636 is equal to 16 to the power b. Now as the question provides you value of root over 0.2636, 4 under root of 0.2636. Now how to use this particular value? Let me just tell you that. So what is the value of b? B is log multiplied by learning rate, whatever is the learning rate, divided by log 2. Now what I am doing is I am taking log 2 here. So B log 2 is equal to log R. And I told you one rule of log, which is if you have log, let's say x to the power n, you can write it as n log x. Hai? If you have log x to the power n, you can write it as n log x. I already have n log x. Can I write it as log x to the power n? So can I write b log 2 as log 2 to the power b? what I have done, I've just taken this in power. We can definitely do this if we have log in between. Now, this is equal to log r. As both of them has log, I'm crossing both the logs. We are left with 2 to the power b is equal to r. If 2 to the power b is equal to r, can you tell me that 2 to the power 4b is equal to 2 to the power 4b is equal to r to the power 4. If I'm adding power 4 here, I also have to add power 4 here. And that is what we have done. Now, what is 2 to the power 4? 2 to the power 4 is 2 into 2 into 2 into 2. That is equal to 16. So, 16 to the power b can be written as r to the power 4. And if you notice here, we have 16 to the power phi. So, rather than writing 16 to the power b, I am writing r to the power 4 in its place is equal to 0.2636. Now, r is equal to, I have to remove this 4. So, I am taking it as a 4 under root of 0.2636. And for this, they have already provided us the value of 0.7166, which is equal to 71.66%. And this is your learning rate applicable. Now, let me just show that also, that how to calculate when you have log, so that this is completed completely. Whenever you have log, first though y is equal to ax to the power b is the formula. Y is equal to a is already given to you as 20 multiplied by x is the 50 units to the power b is minus 0.152. Okay? So now I am going to introduce log to solve this. Log y is equal to log 20, and whenever log plus log 50 to the power minus 0.152, and whenever log 50 to the power minus 1.52 is there, I can use log 20 minus 0.152 can be taken down is equal to log 50. Log x to the power n can be written as n log x, and that is what we have done here. Now log y is equal to log 20 can be written as 2 into 10 minus 0.152. Log 50 can be written as 5 into 10. Okay? Is equal to log y is equal to log 2 plus log 10 minus 0.152 into log 5 plus log 10. So whenever you have log x into y, you can write it as log x plus y. We have seen that formula also. Now, we already know the value of log 2, which is 0.30103. Log 10 is 1 minus 0.152 into log 5. We don't know the value of log 5. So you can use this particular formula for calculating the value of log 5. Okay? So after calculating the value of log 5, you are going to get 0.699. And for log 10, so we already know it is 1. Just calculate this and you will get the value of log y as 1.0428. But though we want the value of y, we don't want log y. So how to remove this? Y is equal to anti-log. Take the anti-log of the value 1.0428 and this will give you the value of y. Okay? How to take anti-log? You can use this formula, otherwise the question is going to provide you. There are more chances that institute will provide you these values. If they are not providing, you can use this particular formula for calculating it. Okay? Now, moving forward, and with this we completed this particular learning curve also. And now we can move forward to the next chapter, and that is business applications of maxima and minima. In this maxima and minima, we find out the maximum and minimum value with the help of our derivatives. So let's see what to do here. So here we can have two different kinds of scenario. The first one is unconstrained optimization, single variable. Only single variable is there. There is no as such constraint given in the question. So you have to first follow a necessary condition that your first order derivative should be equal to 0. With this, find critical values. And there is one sufficient condition also, that your second order derivative, if you want to reach to minima, your second order derivative should be more than 0. If you want to reach maxima, second order derivative should be less than 0. And if you are getting second derivative equal to 0, that means it is a point of inflection. Then you should know some terms, that is total revenue is price into quantity. Average revenue is total revenue divided by x. X is your quantity. So total revenue divided by quantity will give you average revenue, which is nothing but your selling price only. Marginal revenue is first order derivative of your total revenue. Total cost is total fixed cost plus total variable cost. Average cost is total cost divided by number of units. Marginal cost is first order derivative of the total cost. Profit is total revenue minus total cost. Average profit is average revenue minus average cost. Marginal profit is first order derivative of the total profit, or marginal revenue minus marginal cost can also give you marginal profit. After this, there is one case of equilibrium, but this equilibrium situation can also be solved with the help of multiple variable situation. So we are going to see only multiple variable as of now. Necessary condition: if x and y are the independent variable of function y, And multiple variable means you're going to have in the function two different variables, which is x and y. Only two different variables is what we see. So first we calculate first order partial derivative with respect to x, assuming that y is constant, and we are going to put that equal to 0. For the first order derivative with respect to y, we are going to assume x as constant, and we are going to put first order derivative of y equal to 0. Then there is a sufficient condition where you need to calculate second order derivative. When we calculate first order derivative of function with respect to x, we write it as fx. For partial derivatives, you can use this particular symbol. And for partial derivative with respect to y, you can write like this. Now, if I am doing double derivative, that means first I have done for x, now again I am doing for x, then I can write fxx. Okay? This is our a. Then fxy, that means first order derivative was for x. Now second order derivative I am doing for the same function with respect to y. Or else you can write fyx, because both fxy and fyx is going to give you the exact same value. We are going to definitely see the question for the same, and this is equal to b. Then you have calculated first order derivative with respect to y. Now again calculate with respect to y, this is going to give you c. And then d is nothing but ac minus b square. If your d is more than 0 and ac is less than 0, you will reach your maximum point. If d is more than 0, ac is more than 0, then minimum point. If d is less than 0, you reach saddle point. If d is equal to 0, test fails. That means to get a maxima and minima, our d should be more than 0 only. Okay? Now, after this, we can directly move to question. And the first question is we are seeing related to single variable function. So let's solve this particular question to get a better understanding. So whenever we have single variable function, we first calculate the first order derivative, which is nothing but d by dx of your function. Now, so first you need to see what is the objective of the question. They want us to maximize the profit maximizing output. That means you need to maximize the profit and then find out what is the profit maximizing output. So if you notice, they are providing us the total cost function. Cost is given as x cube by 3 minus 5x square plus 28x plus 10. And with that, C is the total cost, x is the output, that means the number of units, and a GST at the rate 2 per unit of output is imposed, and the producer adds to his cost. This is the cost of producer. Now he is adding GST of 2 rupees on every unit. Every unit and number of units is denoted by x. Okay? So this is our cost function. Then if the demand function is given by D is equal to 2530 minus 5x, where rupee D is the price per unit. D is not demand, D is rupees or the price. So price is given to you as 2530 minus 5x. But if I want to reach to profit, I need total cost, which is already available with me, and with that I also need total revenue. How to calculate total revenue? Total revenue is price multiplied by number of units. Whatever is the selling price multiplied by number of units gives you total revenue. So price is denoted by D. If I multiply x with this D, I am going to get the total revenue. If I am multiplying x here, I have to multiply x here also. So 2530x minus 5x square is what we are getting. After getting this, I need to calculate total profit, which is denoted by pi. Total profit. So how to calculate total profit? Total revenue minus total cost. What is the total revenue here? 2530x minus 5x square minus your total cost, which is x cube by 3. If I am multiplying minus to all of these, because here minus is written before total cost, I have to multiply minus for all of these values. So minus 5x square will become 5x plus 5x square minus 28x plus minus 10x minus 2x, and we are done. This is the total profit function. And if I take all the x related values together, and if you notice, minus 5x square and plus 5x square can be crossed, and we are left with minus x cube by 3. 2530x minus 28x minus 2x will give you 2500x and minus 10. This is what we are left with. After getting this, we have to calculate first order derivative of our total profit. So as we want to maximize total profit, so first order derivative will be calculated for total profit only. D by dx of total profit. Now what does it shows? It shows that we are calculating derivative for total profit with respect to x. Okay? Now how to calculate derivative? Minus x cube is given to you. Minus x cube. Wherever you have x, you are going to use the derivative function for the same. Okay? So 3. will be taken down and 3 minus 1 is going to be written in the power. Whatever is the value given in the power, that is what we take down, and x 3 minus 1, whatever was the value, do minus 1 always. This will give you x square now, and we are having 3 in the denominator also. 2500 x to the power 1 is there. Nothing is given in the power, that means we have 1 as the power, and if I take 1 down and 1 minus 1 will give us 0. So x to the power 0 will become 0. X to the power 0 will become 1. X to the power 0 is always equal to 1. So 2500 into x to the power 0, which is 1, will give you 2500 only. Wherever you have x, there only you can find out this derivative. What derivative tells us what is the change going to happen. And if there is no x, that means it is a constant number, and in constant number there is no change which is going to happen, right? This will remain exactly same. Wherever you have x, then only you can make the changes there. This will remain exactly same, hence no changes there, hence this is going to be 0. Always constant numbers, if they don't have the variables for which we are finding the derivative of, then that particular constant number becomes 0. Now after getting this, I can cross this 3 and this 3, and we are left with minus x square plus 2500 as our first derivative function. After getting first order derivative, the necessary condition is your first order derivative should be set to 0. And after setting your first order derivative to 0, you need to find out the value of x. Okay? So d by dx of total profit will be set to 0. What is the d by dx? Minus x square plus 2500 is equal to 0. And hence we are getting minus x square is equal to minus 2500. And x is equal to 2500 ka under root, which is equal to 50. And this 50, whenever we do under root, can be in positive or negative. But x is units, and units cannot be negative. Hence x is equal to 50 is what we are getting as our d by x value. Now this is something very important, that why we keep this first order derivative equal to 0, so that we can calculate the value of the variable. Okay? To calculate the value of variable, we keep x d by dx of total profit equal to 0. Now after getting this, we are going to follow our sufficient condition. What is the sufficient condition? That your second order derivative, as we want to maximize the profit, so second order derivative should be less than 0. So d square by dx square of your total profit. What is the d by dx value? Minus x square plus 2500. Now again do the again do the derivative of this value. This will become second order derivative. Okay? So minus x square, 2 will come down, 2 minus 1 will get x to the power 1. So minus 2x is what we are getting, and plus 2500 is a constant number, hence constant number will become 0. We are left with minus 2x. Minus 2 into 50 will give you minus 100, and minus 100 is a negative number which is lesser than 0, hence you reached your maximum point. So the second order or the sufficient condition is just about checking whether you are able to reach the point or not, maximum or minimum point. Okay? So we just check with the help of second order derivative what is the value which we are getting. And after this question is done. This is how you need to solve. And then after that, the question wants us to calculate profit maximizing output. So we got the output, which is x is equal to 50, and then the price at that level. So for calculating the price, it's nothing that we just have to put the value here. This is the price formula. 2350 minus 5 into x is 50. So 2350 minus 250 will give you 2100 as the price. And we are done. We can move forward to the next question. Price is, okay, we have 2530, not 2350. 2530 minus 250 will give you 2280. 2530. And this is 2280. And now we are done finally. Okay? We got our 2280 and x as 50. Now we can move forward to the next question, where we are going to see multiple variable function. Okay? And in multiple variable, you are going to have only 2 variables, not more than that. Let's see what our question says. A manufacturing company selling 2-wheelers X and 3-wheelers Y has the following demand function given as price of X. So we have 2 different products. For both of them, the selling price is given to you. For 2-wheelers, the price is 40 minus 0.02X minus 0.01Y. Okay? For the 3-wheelers, the price is given as Py is equal to 80 minus 0.06y minus 0.01x. Find the revenue maximizing level of output. You need to maximize the revenue. So rather than writing this, I can directly write the total revenue which I am getting from x. How to get? Price is already given to you. multiplied by the quantity. So price is related to x multiplied by the quantity, which is x only for two-wheelers. Okay? So 40x minus 0.02x square minus 0.01xy. Y was already there. I have just multiplied x here. So 40x minus 0.02x square minus 0.01xy. Then here also we have price for y. So I can calculate what is the total revenue for y. For this, you are going to take price of y multiplied by y. So 80y minus 0.06y square minus 0.01xy. After this, as we have to maximize the total revenue, right? So I'll take the total revenue of both of them together. This will give me the total revenue of the firm as 40x minus 0.02x square minus 0.01xy plus 80y. I have to take the total of both of them. Total revenue is what we are calculating. 0.06y square minus 0.01xy. Minus 0.01xy is there in two different places. I can add both of them. 40x minus 0.02x square minus 0.02xy plus 80y minus 0.06xy square. Done. This is your total revenue. This is what we want to maximize. So here you are going to use your function. What is the condition? First we have necessary condition. What is the necessary condition? As we have two different variables used in our function, we are going to calculate first order partial derivative with respect to x and with respect to y. That should be equal to 0. So first let me calculate the first order derivative and then we'll keep it equal to 0. So first order derivative of the function, which is our total revenue function with respect to x. So 40, we have x to the power 1. This will become 1 only. So we are getting 40, and then x square 2 will come down and x to the power 1 will only left. 2 into 0.02 will become 0.04 x. Minus here also we have x to the power 1 only. So this will become 0.02 y. Here though we have y and y. Whenever we calculate first order partial derivative with respect to x, we assume that y is constant. And if y is constant number, this both values will become 0. Now next is total revenue with respect to y. I am now calculating the second order derivative. Okay, so here also we have written x and y. But remember that this is only the value of total revenue. This is not first order derivative. This is the first order derivatives. I can also show it like this. D by dx of total revenue and d by dy of total revenue. So this is our first order partial derivative which we are calculating. Now 40 minus 0.4x minus 0.02y, this is what we are getting. Then for total revenue with respect to y, this is going to be 0, this is also going to be 0, this will become minus 0.02x, then plus 80, then minus 0.06x into 2 will become minus 0.012y. Now after getting this is the first order derivative. You have to assume this equal to 0. I hope the plus minus thing which we have written is correct only. Now after this, I am going to calculate, keep both of them equal to 0. This is our necessary condition. So after keeping them equal to 0, what I am getting is minus 0.04x minus 0.02y is equal to, if I take that 40 there, I am getting minus 40. And if I remove the minus, I am getting 0.04x plus 0.02y is equal to 40. After this, similarly, I can write this also as minus 0.02x minus 0.12y is equal to minus 80. And if I remove the minus, I am getting 0.02x plus 0.12y is equal to 80. Now after this is our first equation and this is our second equation. By solving both of them, we can get the value of x and y. So if I multiply this equation with 2, I can get here 0.04. And this 0.04 and 0.04 can be crossed if I reduce both the equations. So multiplying this equation with 2 will give me 0.04x plus 0.24y is equal to 160. And if I reduce this with this particular one, this is crossed. 0.24 minus 0.02 will give you 0.22y. 160 minus 40 will give you 120. So y is equal to 120 divided by 0.22, which is equal to 545.455. This is the value of y. Now we have to calculate the x value. How to calculate it? Put the value of y in any of the equation. I can put in this equation also. So in this particular equation, if I put the value of y as 545.455 into 0.02, this will give you 10.9091, and if I take it there, minus 40 will give you 29.09 divided by 0.04 will give you x is equal to 727.273. Okay, so we got the value of x and y. Critical values. These values which we calculate with the help of necessary conditions are known as critical value. 727.273 for x. Always write the value of x first and then write the value of y as 545.455. Done. After getting this critical values, now we have to use sufficient condition. In sufficient condition, we have to calculate A, B, C, D. So what is your A? Second order derivative with respect to x only. So of your function, I am taking second order derivative now with respect to x only. Previous one was also with respect to x. Now again I am taking with respect to x. So this constant number will become 0. This minus 0.04 x will become minus 0.04. And this is a constant number when we are doing with respect to x, hence this is also becoming 0. So we are getting minus 0.04. Then for b is fxy or f by x. Whatever you do doesn't matter, it is going to give you exact same value. So if I do this particular function with respect to y, this will become 0, this will become 0. Now I am doing with respect to y, so I am going to get minus 0.02 only. And if I do this function with respect to x, I am going to get minus 0.02. This will become 0, this will become 0. So both of them are giving us the exact same value as minus 0.02. Then for c, you are going to take fyy. So second order derivative also with respect to y. So this will become 0, this will become 0. We are left with minus 0.12. So all the values are available. Now I have to calculate d, which is ac minus b square. A is minus 0.04 and minus 0.12. 0.04 into 0.12 will give you 0.0048 minus b square is 0.02 ka square is 0.0004. So we are getting 0.0044 as the value of d. As d is more than 0 and a and c is less than 0, hence we reached our maximum point, and that is how you check your sufficient condition. So we calculated this also, and after this the question is asking us to calculate different things like the maximum total revenue, the prices, and done. This is the only thing which they want. So you are also going to, with the help of this x and y values, put these values in your price function. You will get the prices applicable and the prices are in thousands, and then put the value of x and y in your total revenue function. You will get your total revenue also. After getting this, we can move forward to our next chapter, that is activity based management and just in time. Now if you notice, after this business maxima and minima, we have the business forecasting models, but before that we are covering this, and then we'll cover business forecasting and cost of quality. Okay? Let's see what is happening here. So in activity based management, we first calculate the activity related cost, and to calculate this we are directly going to understand with the help of this question. Person manufacturers fourth product, namely A, B, C and D, using the same plant and process. The following information relates to a production period. We have A, B, C, D. Output in units is given to you, that what is the output which we are producing. The four products are similar and is usually produced in production run of 24 units. Whenever we produce in a production run of 24 units per production run. That means if I am producing 720 units of A, divided by 24 units per production run is 30 production run. 600 divided by 24 is 25 production run. 480 divided by 24 is 20 production runs, and 504 divided by 24 is 21 production runs. So in total we have 96 production runs here. Then the units which we produce in the production run of 24 are sold in a batches of 12 units. While selling, we sell in batches of 12 units each. So 720 units divided by 12 will give you 60. 600 divided by 12 will give you 50. 480 divided by 12 will give you 40. 504 divided by 12 will give you 42. And the total is 192. After getting this, the total overheads incurred by the company is given to you as machine related, setup, store receiving, inspection, material handling. During the period, the following cost drivers are to be used for the overhead cost. For setup, you are going to use number of production runs which we already calculated. For store receiving, you are going to use requisition raised. For inspection, also number of production run. And then material handling and dispatch is going to be used. Order executed is going to be used for material handling and dispatch. Now something very important, machine operation and maintenance cost should be apportioned between setup cost, store receiving and inspection activity in the ratio of 4:3:2. So this cost is not going to be directly charged in the products. This cost is going to be distributed between these three activities in the ratio of 4:3:2. Okay? So rather than distributing this to products, you have to distribute this to these activities and then only distribute this activities related cost to the product. Okay? So let's do this. 4 plus 3 plus 2 is 9. 63,000 divided by 9 will give you 7,000. 7,000 into 4 is 28,000. Consider it here. 7,000 into 3 is 21,000. And 7,000 into 2 is 14,000. So 28 plus 20 is 48. 15 plus 21 is 36. And 14 plus 10 is 24. 28 plus 21 plus 14 is equal to 63 only. Hence we have divided the 63 rupees of cost directly to the activities. Hence no need to divide this again to the products. Remember this. Now whenever you are dividing setup, store receiving and inspection cost to the products, you are going to take this cost and not these cost. Material handling and dispatch will remain 2592 only. Okay? So your setup cost is 48,000 now. This is 36,000. This is 24,000 and this is 2592. And the number of activities applicable is, for number of production run, the cost driver is, take the total of cost drivers whenever you are calculating cost driver rate. So this is our cost pool. This is the cost which we incurred and these are the cost driver applicable, which is 96 for number of production run. Here also 96. Then number of requisition raised on store is 50 for each product. We have 4 different products. For every product 50 requisitions are raised. That means total for all the products together is 200 requisitions. Okay? Next, and the number of orders executed is 192. We have already calculated that on the basis of batches of 12 units. 192 is the number of orders on which you are going to charge this material handling and dispatch. So with the help of this, we can calculate cost driver rate. This is the cost pool. This is the cost driver. Divide both of them to get the cost driver rate applicable. 4,48,000 divided by 96 is equal to 500. 36,000 divided by 200 is 180. 24,000 divided by 96 is 250. 2592 divided by 192 will give you 13.5. Okay? So these are the cost driver rates which we calculated. And whenever the question says activity based cost recovery rate, driver rate, this is nothing but this calculation. After calculating this, they want us to calculate total overhead cost per unit for each product using the activity based costing. So how to calculate total product cost per unit? You already know what is the cost driver applicable for each unit. If we have order executed, then this is the cost driver applicable for each unit. For your production batches, this is the cost driver applicable for each unit. For your requisition, the question says 50, 50, 50, 50 is applicable for each. Just multiply your cost driver, which is applicable for that particular product, with the cost driver rate. So 500, 500, 500, 500 will give you the setup cost applicable for each product. Similarly, for store receiving, you are going to multiply 180. Store receiving is dependent on requisition. So 180, 180, 180 and 180. Similarly, for your inspection, just multiply 250 with the production run. For requisition, just multiply 13.5 with the, for orders executed, just multiply 13.5 with the batches. And that is how you are going to get the total cost. Let me just show you. First, we calculated the apportion cost, which we already calculated here, 48, 36, 24. And then after calculating this, we calculated cost driver quantities. And after that, whatever is the recovery rate, that is what we calculated. And then we have calculated the cost on total and per unit basis specifically, because the question was asking us to calculate on per unit basis. Hence, I have calculated the per unit for all the overheads. Okay? Just multiply your cost driver rate with the cost driver applicable for that particular unit and you will get this total amount. And we are done with the first question related to activity based costing. Now this is something very important. Bond Limited manufactures 3 types of biscuits, FG and H, in a fully mechanized factory. The company has been following conventional method of costing. What is conventional method? Traditional method. Activity based costing is a modern method. Traditional method is also known as conventional method. Wishes to shift to activity based costing system and therefore wishes to have the following data presented under both the systems for the month. So for this particular month, they want us to calculate both under conventional and activity based costing. These are the different kinds of overheads given to you. These are manufacturing related and this is selling related. Prime cost per unit is there, selling price per unit is there. There is gross production, which is units per production run. What is the number of units which we are producing, and number of defectives, units per production run is also given to you. Now, if this is the number of units which I produce and this is the defect, that means good units will be 2500. Out of 2810, 10 is defective, that means 2800 is good. 3010 minus 10, 3000 is the good units. Inspection number of hours per production run it is given. See, whatever cost driver I need the total quantities of cost driver, not on the basis of production run, but they are providing us on the production run basis. Die cost is on production run, number of machine hours is on production run. Then sales number of units which you are selling on per month basis is 25,000, 56,000 and 27,000. Additional information is no accumulation of inventory is considered. All good units produced are going to be sold. So whatever good units which you are producing, that is the number of units which you are selling. So that means that if I want to sell this much units for the particular month and this is the production on per production run, then what is the number of production run which I am going to do? Number of production run. 25,000 divided by 2,500 will give you 10 production runs are required. 56,000 divided by 2,000 will give you 2,800 will give you 20 production runs. 27,000 divided by 3,000 will give you 9 production runs. Now after getting production runs, I can calculate the total amount of all of the cost drivers, like inspection multiplied by 10, because this is on production run, we want the total is 30. Here 4 into 20 is 80. 4 into 9 is 36. Similarly, die cost is also given on per production run basis. We want the total. So multiplied by 10, multiplied by 20, multiplied by 9. Number of machined hours, total is what we need. So multiplied by 10, 20 and 9. All manufacturing and selling overheads are conventionally allocated on the basis of units sold. Whatever is your manufacturing and selling overhead, on the conventional basis, we just take the total of all of them. And this is equal to 3,87,250 and distribute it on the basis of number of units which you are selling. Units sold is the base. 25,000, 56 and 27. So can I say the ratio is 25 is to 56 is to 27? 25 is to 56 is to 27. And this is the ratio in which you are going to distribute the overheads. So 38,000, 3,87,250, 25 plus 56 plus 27 is 108. 387,250 divided by 108 into 25 will give you 89641 applicable for F product. Next, 387,250 divided by 108 into 56 is 200,796. Next, 387,250 divided by 108 into 27 is 96813. 96813. The total should match with 387,250. Okay? After getting this, the question says product F needs no advertisement due to its nutritive value and it is readily consumed by diabetic patient of a hospital. Advertisement cost included in the total selling overhead is 83,000. So no advertisement is required for F product. Out of this 1,62,000 which is given as selling overhead, 83,000 is applicable for advertisement and no advertisement for F. That means this 83,000 is incurred for G and H only. Okay? Next, project G needs to be specially packed before being sold so that it meets competition. 54,000 was the amount spent for the month in specially packaging G and this has been included in total selling overhead cost. So in this total selling overhead cost, there is one more cost which is 54,000 specifically for product G only, not applicable for any other product. That means out of 1,62,000, 83 is applicable for G and H, 54 is applicable for G. That means remaining 25,000 is the only amount which is applicable for FGH together. Okay? But all of these are not considered in your traditional method. In traditional method, so the question has already mentioned that you are going to distribute on the basis of number of units. So we distributed on the basis of number of units. No need to do anything here. Okay? After this, present product-wise profitability statement under conventional system. So under conventional, that means traditional system, we have to find out the profitability. So whenever we find out profitability, we start with selling price or the sales amount for FGH together. What is the sales amount? 18, 14, 12 multiplied by number of selling units. 18, 14, 12 multiplied by number of units which we are selling, and that is 25,000, 56 and 27. So we are getting 12 into 27,000 is equal to 3,24,000. 14 into 56,000 is equal to 7,84,000. 25,000 into 18 is equal to 4,50,000. Now reduce the cost. First cost is prime cost. is what we are going to reduce. Now something very important. Even if your prime cost is given on a per unit basis, I can't directly apply it to the number of units which we are selling. Because think about it, in the gross production, you are producing the units which are defective also. And this defective units, I already know that what is the number of units which I am going to get as defective in every production run. And this is known as normal defect. Because normal defect is the defect which happens every time in the same fashion. Okay? Hence, whenever there is a normal defect related cost is charged on the good units only. So, this 12, 9 and 8 is applicable on all the units which you produced, whether it is defective or not. So, how to know that units? First, the rate is 12, 9 and 8 multiplied by number of units which you actually produced. So, there is 10 production run. In every production run, the total number of units including defective is 2520. 2520 into 10 will give you 25,200. Next, 20 production run, 2810 is the total units multiplied by 20 production run, 56,200. Then 9 production run, every production run has 3010 units multiplied by 9 will give you 27,090. So while charging your prime cost, you are going to consider these units including your defective. Now this is something very important of this particular question. Okay? After calculating prime cost, consider your overhead which you already calculated as 89641200796 and 96813, and this will give you the profit as per conventional basis. Okay? The same thing is done here. And then overheads, whatever you calculated, you can calculate separately for manufacturing or selling, or you can also calculate together as we have done before. You're going to get the exact same values, and this is the profit. And in the question, they also want us to rank the products. So on the basis of highest profit, we have ranked this as 1, this as 2nd, and this as 3rd. Okay? After doing this, now we have to follow activity based costing. For activity based costing, so we have to use cost drivers under different situations. So let me just remove the things which are applicable for traditional, and I'm also thinking of removing this, or I should reduce the size of it, because this information is required for your ABC. Now, your inspection cost is dependent on inspection hours. The total number of inspection hours is 30, 80 and 4 9s are 36. 30 plus 80 plus 36 is equal to 146. So 73,000 divided by 146 will give you a cost driver rate of 500. Similarly, for machine repairs, you are going to consider machine hours, which is 200, 240 and 270. 200, 240 and 270. That is equal to 710. So 1,42,000 divided by 710 will give you 200 as the rate applicable. For die cost, so they have distributed the die cost only. 2,000, 6,000 and 2,250 into 9 is 2250 plus 6,000 plus 2,000 will give you 10,250. So by multiplying your production run, you get your distributed die cost only. No need to distribute it separately. For selling overheads, I already know whatever is applicable for FGH, for applicable for G and H, applicable for G. But how to distribute the things which are applicable for 2 different or 3 different products? On the basis of number of units, because the question is not mentioning anything. So on the basis of number of units, I'm going to distribute this cost on FGH and this cost on GH. And this cost will be given to G only. Okay? So let's see our calculations. So the first note is related to number of production runs. Then we have calculated the prime cost thing. And then we calculated the cost drivers applicable, and then the cost driver rate, and then the product wise profitability under different situations. So sale and prime cost will remain exactly same as you have done in conventional, and then you can calculate this cost by multiplying the cost driver rate with the cost driver applicable for that particular product. You can directly distribute your advertisement on the basis of number of units and other selling overheads on the number of units. For packing, so this is applicable for G only. Okay? And these are the profits which we are getting, and these are the ranks allotted. And we are done with this question also, and now we are moving forward to just in time. What is just in time? Just in time is a production system where you buy the raw material when you need it and produce the products when the customer wants it. We are not going to buy material beforehand. We are not going to keep the units produced beforehand. Okay? So let's see this question to understand this. Ultra Video Company sells package of blank. Now in just in time, there are 2 different kinds of questions which are going to be there. The first category of question is where they are providing you the cost, all the cost which is applicable, all the income which is applicable for just in time. calculate what happens in just in time, and see what happens without just in time. Compare both of situations, whichever has higher profit or lower cost, that is the option which you are going to prefer. Now, the other type of question is, they only provide you what is the incremental cost related to just in time and incremental revenue related to just in time, or incremental benefit related to just in time. If incremental benefit is higher than the incremental cost, then you are going to prefer just in time. So let's see what is going to happen here. Ultra Video Company sells package of blank videotapes to its customer. It purchases videotape from Yash Tape Company at 150 per packet. This is our purchase price. Yash Tape Company pays all freight to Ultra Video Company. No incoming inspection is required because Yash Tape Company has a superb reputation for delivery of quality merchandise. Annual demand of Ultra Video Company is 15,600 packages is what we want, and every packet is going to be of 150. Ultra Video Company requires 10% annual return on investment. Whatever investment we are making, we want 10% return on it. The purchase order lead time is 2 weeks. The purchase order is passed through the internet and it costs 20 per order. So this is our ordering cost for every orders which we are going to make. The relevant insurance, material handling, etc. is 10 per package. This is your storage cost for storing the material in-house. Okay? And this is on a per year basis. Ultra Video Company has to decide whether or not to shift to just-in-time purchasing. Yash Tape Company, who is the supplier, agrees to deliver 100 packages of videotapes 156 times a year, 6 times every 2 weeks. So if you notice, we require 15,600 packages. If 100 packages are ordered or delivered to you once, then 156 times you have to take the delivery, then only you will get 15,600 packages instead of existing delivery system. This is as per just in time we are thinking of this. As per existing system, we are getting 1,200 packages 13 times a year. That means total 15,600 units here also, but the orders are lesser here, but orders are higher in just in time. Next, with an additional 0.05 per package. So as your orders are increasing, your Yash Tape Company is not charging you any kind of freight. So what they are thinking, Yash Tape Company is going to charge you 0.05 per package extra. So 150 was the price. Now they are charging 150.05 per package as the cost applicable for every unit, as they are the one who is going to handle all the freight and related things. Now, Ultra Video Company incurs no stock out under its current purchasing policy. It is estimated that Ultra Video Company will incur stock out cost on 50 videotapes under just-in-time purchasing. So, due to just-in-time purchasing, we are purchasing a lot of times and we are keeping lesser inventory. So, it can happen that stock out is going to happen, and stock out is going to happen for 50 units, and the stock out related cost is 8 rupees per package. Comment whether Ultra Video Company should implement a just-in-time purchasing policy or not. So here, up to this point, they are comparing Yash Tape Company with normal policy and Yash Tape Company with just-in-time policy. Now, there is one more company, that is Ram Company, which is also ready to supply us the videotapes on just-in-time basis. And for that, they are going to charge only 145. Think about it. Yash Tape Company is charging you 150.05, but this company is ready to give you at 145 per package. If videotape is purchased from Ram Company, relevant carrying cost will also get reduced. So carrying cost was 10 per package here. That carrying or storage cost will get reduced by 1 rupees. So we are getting 9 rupees per package as the cost here. However, Ram Company does not enjoy a sterling reputation for the quality. Ultra Video Company anticipates the following negative aspect of purchasing tapes from Ram Company. So if we are purchasing from Ram Company, we have to incur an inspection cost of 0.05 on every package which we are receiving. So 15,600 packages is what we receive. For every package, 0.05 is your inspection cost. Average stock out here is going to be 360 multiplied by stock out cost is 10 rupees. Returns are also going to be there. Out of all the units which you are receiving, 2% is going to be the return, and due to this return, you have to incur 25 rupees extra. Okay? Now, in this question, the most important thing is the calculation of carrying cost. When we say carrying cost, we are going to consider the storage cost, plus with that, the whatever amount is invested in the inventory which we are storing, we are not able to earn that 10% required return. Hence, that is also a kind of opportunity cost which will be considered under carrying cost. Okay? So, first opportunity cost is calculated on the basis of per package. So, in the current policy, the price is 150 only per package. In just in time, we have 150.05 with Yash Tape Company. In just in time with Ram, we have 145. Multiplied by 10% will give you the interest cost applicable. And there is material handling cost also, which is 10 rupees for Yash Tape. There is no as such changes for just in time with Yash Tape, hence this is also going to be 10, and just in time with Ram offers us at 9 rupees. Now if I add this interest and material handling cost, this will give us the total carrying cost on per package basis. This will be applicable on the number of packages which you are holding for all the year, for full year. So think about it. Let's say if I'm ordering 1200 units, as per my current policy, I'm ordering 1200 units at a time. But if I'm ordering 1200, I'm going to use it with the time and then again order 1200, then use it, then again order 1200 and again use it. And that is the same thing happening for just in time 100 units also. Hana? And if that is the case, that you're not holding any specific inventory for the whole year. So what we do, we assume that whatever inventory you're ordering, average of that is what you're going to hold for the whole year. So in your normal policy, you're ordering 1200 units, 50% of it that is equal to, or average of it that is equal to 600 is what you're going to hold. In just in time with Yash, we are ordering 100 units at a time. 50% of it is 50 units. What is this? That is what you're going to hold. For just in time with RAM, there is no specific inventory mentioned. Hence, we'll assume that with RAM also we are going to order 100 units at a time multiplied by 50%, which will give you 50. Okay? So 50, 650 is what is the number of units which we are going to hold for the whole year. That is what we are assuming. Multiplied by your carrying cost will give you the annual carrying cost applicable. Now we have to compare the cost applicable for all the three scenarios. For that, first I'm going to consider the purchase cost. So for your current policy, you have a purchase price of 150. Here we have 150.05. Here we have 145. Multiplied by the total number of units, which is 15,600. This is the number of units you are going to purchase for the whole year. Hence, multiply that to get your purchase price. After that, annual carrying cost, which you considered here, just write it here. After that, you're going to consider ordering cost also. Ordering cost, the question has already mentioned that this is going to be 20 per order. And the number of orders under your normal situation is 13. Number of orders under just in time is 156, whether it be of with RAM or Yash Tape Company. Okay? Then stock out cost. So stock out is not there in your without just in time policy. In just in time with Yash, we have a stock out of 50 units multiplied by 8 per package. In just in time with RAM, we have 360 units stock out multiplied by 10 per package. Okay? 50 into 8, 360 into 10. There is an inspection cost applicable only in case of RAM Tape Company, and that is 0.05 into 15,600. And there is a return cost also applicable only for RAM Tape Company, which is 15,600 into 2% into 25 is the rate applicable. Okay? And with this, we got the cost under different situations. And the first part of the question, if you notice, wants us to compare only whether we should go for just in time or not. Here they are comparing only Yash Tape Company with just in time and Yash Tape Company with current policy. So if I compare current policy and just in time with Yash, then out of these two, just in time with Yash is a better one. Then in the second part, they are comparing just in time with Yash and just in time with RAM. So out of these two, RAM is the better one if I compare on the basis of prices. But due to RAM related strategy, we are having returns also. And that return can lead to negative effect for the organization. Hence, you should definitely think about it whether we should go for that or not. Okay? Because 20%, 2% of defect is huge. That can lead to your image degradation even if you are able to save 67,075. Okay? Done. Moving forward to our next part, and that is throughput accounting. What is throughput accounting? So, in the chapter number 3, that is your decision making techniques, we understood what is absorption costing, we understood what is marginal costing. Let me tell you that our throughput accounting is like a little younger brother of our marginal costing. So, marginal costing is a younger brother of absorption, and throughput is younger brother of marginal. How? So in absorption, when calculating cost of production, we consider fixed and variable for full cost. Whatever cost is incurred in your production related, whether it be fixed or variable, we consider all of them in cost of production. In marginal costing, in cost of production, we consider only variable cost. In throughput accounting, in cost of production, we consider only variable cost. But the thing is here, variable cost is direct material cost only. All other costs, whether it be of direct labor, overheads, whatever kind of overhead it is, we are going to assume it as fixed. Why? Because think about your direct labor. Mostly direct labor are paid on an hourly basis or monthly basis, and if you are paying it like that, then they are fixed only. They are not variable. Direct labor are variable only and only when they are paid on piece rate basis, and the chances of that is very less. So if your question specifically says that direct labor is paid on piece basis, that what is the number of units they are producing, on the basis of that only we are paying to labor, then only consider it as variable. Otherwise, direct labor is assumed as fixed. So all other costs which you are incurring in the organization, in the factory, are your fixed cost only except your direct material cost. Okay? Now, in your marginal costing, if you notice, we calculate contribution. How to calculate contribution? Sales minus variable cost gives you contribution. Here we calculate throughput. Throughput can also be called as throughput contribution. You can also call it as return, and that is calculated by sales minus, here variable cost is direct material cost, so we are going to reduce direct material cost only. So throughput is exactly similar to that of contribution. Now in marginal costing, if you remember, we use key factor analysis. What is key factor analysis? Calculating contribution per limiting factor. On the basis of limiting factor, we calculate contribution. Why? Because if limiting factors are there, limitations are there, then on the basis of contribution, whichever is limiting factor is earning higher contribution, that is the one which we are going to prefer. That is the product which we are going to prefer. And that is the same thing applicable for throughput also. We call the throughput related capacity constraint as bottleneck situation. And whenever you have bottleneck situation, here we calculate return per hour. Mostly in your throughput, you will find it out that hours are the only limiting factor. And return per hour is nothing but your contribution per hour. Contribution is what? Throughput. Throughput can also be called as return. And return is calculated on per hour basis to know our contribution per limiting factor. Return is contribution per limiting factor. Limiting factor is R here. Okay? So this return per hour is calculated here. Plus with that, we also calculate cost per hour. What is cost per hour? Whatever is the total cost. Total, whenever we say cost here, we are specifically meaning total factory cost, which is not including your direct material cost. Okay? Direct material cost is not included in total factory or operating expenses or fixed cost which is given in the question. This is a cost which is variable, not to be included in factory cost, divided by number of total hours. This will give you cost per hour. So return per hour divided by cost per hour gives us throughput accounting ratio. Now what this throughput accounting ratio tells us, that if you are earning a return of, let's say, 100 rupees on a per hour basis, and you are incurring 80 rupees per hour to earn that return, that means you have 100 divided by 80, you have 1.25 throughput accounting ratio, which shows you are profitable. If your throughput accounting ratio is more than 1, that itself means that your return is going to be higher than the cost which you are incurring for per hour, and if that happens, you are profitable. Okay? Then if your return is, let's say, 80, your cost is also 80. That means throughput accounting ratio is 1, which shows that you are at a break-even point. Break-even point means your cost and your return which you are earning is exactly same. Then if your, let's say, return is 80 but your cost is 100, that means you are at 0.8. You are incurring 100 rupees cost on a per hour basis to earn a return of 80. This is not at all beneficial for us. So if your throughput accounting ratio is less than 0, that means your product is loss making. If your throughput accounting ratio is higher than 0, then higher than 1 specifically, then it is a profitable product for us. Okay? So we understood how to calculate throughput. We understood how to calculate throughput accounting ratio also, which is return per hour divided by cost per factory hour. Then there are 2 or 3 more things. Operating expenses are all the expenses which are incurred for running the business. You will not include material here. What is investment? Inventory, machine and equipment, building and land, whatever money you are investing here, that is known as investment. If you want to calculate net profit, take your throughput, because throughput has already taken the sales price minus material cost. If you reduce all other operating expenses from this, you will get your net profit. Then return on investment is nothing but net profit divided by investment. Next, productivity is throughput divided by operating expenses. This shows how efficiently expenses create you value. So whatever is your throughput divided by operating expenses will give you productivity. Investment turns. If you want to calculate how fast investment is converted into sales, take your throughput divided by investment. What is total variable cost? Totally variable cost is only direct material, but if labor is also paid on piece rate basis, that can also be considered as totally variable cost. Capacity constraint means the bottleneck. The one which is limiting our capacity is known as bottleneck center. Throughput time, that is the total time taken to convert the raw material into finished goods. Then there is throughput efficiency. This is important. To calculate throughput efficiency, you're going to take the throughput cost. How to calculate throughput cost? So whatever is the actual units, on the basis of that, if you calculate the cost, that is known as throughput cost. We'll see this, how to calculate this with the help of question. Then divided by the actual factory cost. This will give you throughput efficiency, showing if your efficiency is higher, that means you're using resources in a better way. If your efficiency is lower, you're not able to use the resources in a better way. What is throughput time ratio? Value added time, that means where you are actually doing something, divided by the total cycle time. What is total factory cost? Except material, all factory costs are considered as total factory cost here. Okay? And then the throughput formula we already understood, throughput accounting ratio we already understood. And after understanding all of this, you are ready to solve the question. Let's see this question number 36. A factory of Mobn Limited, a manufacturing company using throughput accounting system, produces product S&T for a month in 2025, details of which are presented below. So we have product S and product T, selling price per unit is given to you, direct material, direct labor, variable overhead on a per unit basis, production units and time on bottleneck resources, that is the hours per unit on your limiting factor. So first we calculate contribution, which is throughput per unit. How to calculate? Selling price minus direct material. 110 minus 50 is 60, 120 minus 76 is 44. Even if direct labor is given on per unit, variable overhead is given on per unit, till the time question is not saying that direct labor is paid on piece rate basis, which mostly the question is not gonna say. So you are going to assume it as fixed only. Now, total fixed overhead is given as 4,50,000. You have to calculate total factory cost. Total factory cost will contain labor, variable overhead and fixed overhead, all of them together. But this labor and variable overhead is given on per unit basis, multiplied by number of units, will get total direct labor and variable overhead. So 12 plus 20 is 32. 32 into 20,000 will give you 6,40,000 here. And 15 plus 10 is 25. Multiplied by 30,000 will give you 7,50,000 here. So 7,50,000 plus 6,40,000, the total is 13,90,000. Plus your fixed overheads, which is 4,50,000, will give you total 18,40,000 as the total factory cost. Okay? Then you have to calculate cost per factory hour. Cost per factory hour, for this you will take total factory cost divided by total hours. So 18,40,000 divided by 2,30,000 will give you 8 per hour. What is return per bottleneck hour for both product S and T? For both product S and T, you have to calculate return per bottleneck hour. To calculate this, you have throughput per unit. If you divide this by hours per unit, you will get the return per unit, return per hour, and that is what the question wants us to calculate. 60 divided by 5 will give you 12 for product S, and 44 divided by 4 will give you 11 for product T. Throughput accounting ratio, for this you will take return per hour divided by cost per hour. Remember that cost per hour is calculated exactly in the same manner for both the products. It is going to be 8 per hour only, but return can be different for different products. So 12 divided by 8, return divided by cost is 1.5 here, and 11 divided by 8 we are getting 1.375. Then throughput cost per month is to be calculated. When the question says calculate throughput cost, you are going to calculate on the basis of actual production which you have done. So 20,000 units, 5 hours is required for every unit, that means 1 lakh hours are required here. 30,000 units multiplied by 4 hours per unit is 1,20,000 hours. So in total, you require 2,20,000 hours multiplied by 8 per hour is the cost per hour. So 8 per hour is the cost per hour. 2,20,000 multiplied by 8 will give you 17,60,000, and this is throughput cost. Cost for the actual units on the basis of actual hours multiplied by cost per hour will give you throughput cost. After this, you need to calculate efficiency ratio. Efficiency ratio is nothing but throughput cost divided by actual factory cost, which is 18,40,000 multiplied by 100. So 17,60,000 divided by 1840 into 100 will give you 95.65%. And we have calculated each and everything which was asked in this question. Okay? So the first 18,40,000, then 12 and 11, 8 per hour, 1.5, 1.375, and 17,60,000 and 95.65%. Now we are moving forward to the next question. Bivon Limited, a manufacturing company, manufactures 3 products, VN, DN and XN. Due to scarcity of machine hours, management of Bivon Limited is planning to adopt throughput accounting in the company. The information pertaining to 3 products are as follows. So we have selling price minus material cost. This will give you the throughput, 2,500, 1,500 and 1,500. We have machine hours required on every unit basis. If I divide the throughput per unit with machine hours per unit, I can get return per hour, which is 2,500 divided by 5 is 500, 1,500 divided by 6 is 250, 1,500 divided by 4 will give you 375. Then there is a maximum demand given. This is not the production, this is the maximum demand which is available for the product. Total factory cost is 1 crore 5 lakh and available machine hours is 35,000. Bivon has to supply 2,500 units of a product to DN, product DN to beta as per court judgment, which cannot be denied. Now if you remember your key factor analysis under marginal costing, which we have discussed today only, so your key factor analysis under marginal costing, there also whenever we have limiting factor, what we do, we calculate what is the number of units which we should manufacture of different products. Here also you have to do the same thing. First calculate contribution per limiting factor, which is nothing but your return per hour. Return per hour, or else you can also calculate throughput accounting ratio, because both of them gives the same ranking. Okay? Throughput accounting ratio can also be calculated, return per hour can also be calculated. After calculating that, give the rankings, and on the basis of ranking we distribute the hours and find out the number of units which we are going to make. And there is one minimum demand case also under key factor analysis, and whenever there is a minimum demand, you have to fulfill it. You can't compromise on that. You have to compulsorily fulfill it first. So here also this court judgment is like a minimum demand which we have to definitely fulfill. So before distributing the hours on the basis of ranking, first I'll distribute the hours for fulfilling this requirement of 2500 units, and then the remaining hours can be distributed on the basis of rankings. So let's see what will happen. First I calculated throughput per unit, and then I calculated return per hour. I can also calculate cost per hour because factory cost and hours are available. By dividing both of them, you can calculate throughput accounting ratio. If you give the rankings on the basis of this will be the first rank, this is second rank, this is third rank. If you give the ranking on the basis of throughput accounting ratio also, then also your ranking will remain exactly same. Why? Because cost per hour is exactly same for all the products together. Okay? Now, statement showing optimal product mix and profitability if court judgment cannot be denied. So, as court judgment cannot be denied, we have to fulfill that first. So, whatever is the maximum demand, hours per unit is what I have written. Then allocating the hours. First, I am allocating the hours on the basis of court judgment. 2500 units multiplied by 6 hours per unit. This is as per court judgment, we have to give 15,000 hours to product D. Out of 35,000, 15,000 is given here. The remaining 20,000 hours is what we are going to distribute on the basis of ranking. So, the first rank product is VN. This requires 3,000 into 5, 15,000 hours. So, first we'll fulfill the requirement of this. Then the remaining 5,000 hours can be given to this product. Even if it requires 8,000 hours, I'll only be able to give 5,000 because that is the only left thing. And as this is the second rank, hence this is the product for which we are giving the remaining hours, because after that we don't have any hours left for DN. Now, this is the total hours allocated, and this is the units produced. Throughput per unit. We already calculated the throughput per unit. Just multiply that with the number of units to get your total throughput minus total factory cost will give you the net profit which you are earning. Now, after that, the question wants us to calculate whether court judgment has affected the optimum plan of profit of the company. If yes, by which amount? So, if this court judgment was not there, then what will happen? So, let's calculate that. If court judgment was not there, then I can distribute on the basis of ranking. So, this is the first product. This will get first all the hours. Then the second ranking product will get all the hours, and the remaining hours will only be distributed to DN. After this is the units produced and throughput per unit and the total throughput minus total factory cost. This is the net profit which you would have earned if there was no court judgment. But due to court judgment, we are able to earn only 25,000. So we are having a loss of 3,75,000 just because of the court judgment. And with this, we completed our throughput accounting ratio also, and with this we completed our chapter number 4. Now we can move forward to the last chapter of our practical part specifically, and that is chapter number 14. I know we are left with one more chapter, that is cost of quality, that we are going to discuss at the end. Mostly we are going to discuss only one question of that, but before that, let's first see what will happen in your business forecasting model. This is an interesting chapter. A lot of topics are there inside it. So we'll try to somewhat understand what is happening here. Solving all the questions here is like a complicated thing. It's helpful for you to just understand what is happening here. So first we have simple linear regression questions. Simple linear regression, here we have two variables only. The first one is independent, second one is dependent variable. Okay? Independent variable is the one with the help of which we will be able to find out the value of dependent variable. So we use this y is equal to a plus bx formula, where y is your, you can assume any of it because in the question they are not specifically mentioning what to use for what. So you can use any of it. Y is import, x is exports. If I do that, then I'm going to write the number of years, then the exports and the imports, which is x and y. Calculate x square, calculate xy. After that, take the sum of all of them. N is your number of observations. So we have total 7 observations. Then export, sum of x is sum of export, sum of import, sum of x square, sum of xy. These are the values which we are getting. And then you can use your normal equation. Normal equation is formed with the help of this regression line only. Sum of y is equal to na plus b sum of x, and sum of xy is equal to a sum of x plus b sum of x. square. This is the normal equation which we can solve, and for solving this we can put the values from here. Why we are solving these equations? To find out the value of a and b. Why to find out the value of a and b? So that if I put any value of x, I can get the value of y, and if I put any value of y, I can get the value of x. To get this, we should get first a and b. For getting a and b, we have to solve this normal equations. Put all the values which you have got here, form two different equations, solve them and find out the value of b and a. After finding out the value of b and a, put that in this particular equation, and this is your final answer. If the question says or tells you what is the export value, let's say export is 200, then what will be the import value? You can calculate that also. Okay? Now, after this, there is two different ways for calculating simple linear regression. The first one is this normal equation, or else you can use this formula directly. Directly put the values here in this formula, but for using this formula also you have to make that table. You can't compromise on the table. Table though has to be made. After making the table, you can use this formula for calculating b. What is the formula? N sum of xy minus sum of x sum of y separately divided by n sum of x square minus sum of x ka whole square. This is the formula used for b. After calculating the value of b, you can also calculate value of a by using directly the formula, which is y bar minus bx bar. What is y bar and x bar? Y bar is sum of y upon n, which is the average of y, and the x bar is sum of x upon n. Okay? After calculating these values, you can get the value of y a also. Whatever you use, whether you are using normal equations or you are using this particular formula, doesn't matter. You are going to get the exact same value. Okay? This is the equation which is getting created. We have just put the value of a and b here. Now after this, we have multiple linear regression. In multiple linear regression, the complication increases because here you have two independent variable x1 and x2 and one dependent variable. Okay? So here our table also becomes a little complicated. The number of workers is what I have written. Then x1 is the education, x2 is experience, in which our salary is dependent upon. So we have written the values of all of them. Now you have to calculate x1 ka square, x2 ka square, x1 into y, x2 into y, and then x1 into x2. Okay? After this, calculate the total of all of them. But this is not enough. You also have to calculate a lot of values here. First is your n, then sum of x1 bar, x2 bar and y bar. That is the average values of all of them, dividing all of them with n. Now after that, we have to calculate the capital values. This is like the deviation related values of x1, x2 and x3. If you notice, here when we calculated x and y related values, we are writing small x and small y. And now we are calculating capital sum of x1 square. How to calculate that? You will take sum of x1 ka square minus sum of x1 ka whole square upon n. Okay? Sum of x2 ka square. Here also you are going to do the same thing. Sum of x2 ka square minus sum of x2 ka whole square upon n. Okay? Sum of x1y. To calculate this, you are first going to take sum of x1y together minus sum of x1, sum of y separately upon n. Okay? For calculating sum of x2y, you are first going to take sum of x2y together, then sum of x2, sum of y upon n separately. Okay? Next, for calculating sum of x1, x2, you are going to take sum of x1, sum of x2 separately divided by n, and first you are going to take sum of x1, x2 together minus sum of x1, sum of x2 separately upon n. Now after calculating all these values, now we are going to put that in our beta 1 formula. For calculating beta 1, you are first going to take sum of x2 ka square. We are calculating one related beta. We are first going to put sum of x2 ka square here, then sum of x1y, the relationship of x1 with y. Then we are going to remove the relationship of x1 and x2 together and x2y. So we have taken sum of x2 ka square, sum of x1y together minus sum of x1, x2 relationship is removed, sum of x2y relationship is removed. Why? Because we want to see the relationship of x1 with y when we are calculating beta 1. Divided by sum of x1 ka square, sum of x2 ka square minus sum of x1, x2 ka whole square. Okay? If you put the values here, you can get your beta 1. Similarly, to calculate beta 2, the formula is exactly same. It's just that in place of 2, you're going to use 1. So when we are calculating beta 2, we'll start with sum of x1 ka square and we'll see the relationship of x2 with y minus sum of x1, x2 and remove the relationship of x1 with y. Okay? Divided by whatever you have divided here, the exact same thing will be divided here also. Done. After calculating beta 1 and beta 2, we are going to calculate beta 0. Beta 0 is y bar minus b1 x bar minus b2 x2 bar. So this formula is exactly same as you calculate a in your simple linear regression. A is your intercept, which is the value of y when x is equal to 0. Here also beta 0 is the intercept, value of y when x1 and x2 is equal to 0. So how to calculate a there? Y bar minus bx bar. Here as we have two different x, so we have a is equal to y bar, and rather than calling it as b, we are calling it as b1 x1 bar minus b2 x2 bar. So the formula is exactly same, it's just that here we have simple linear regression. So according to simple situation we have created, and here we have multiple linear regression. So according to multiple we have created this. Okay? Then after putting the values we can get our multiple linear regression, and we are done with this also. Now we are moving forward to the next thing, that is seasonal variation. What is seasonal variation? So in our time series analysis there are four different things: T, S, C and I. T is your trend, S is your seasonal variations, C is your cyclical variations, and I is your irregular and random fluctuations. So we have to consider all of them to get our expected values, because all your expected value has all these four things which are affecting your data: the trend, the seasonal fluctuations on an yearly basis, the cyclical fluctuation which happens in every business, and the irregular or random things like the COVID thing which happened. That was very random for the business. So all of these has to be considered. Now all of these can be considered in multiplication, that is known as multiplicative model, or all of them can also be considered by addition, which is known as additive model. Okay? So mostly we are not able to calculate this cyclical and irregular or random fluctuations, because random things we won't be able to calculate, and we assume that the cyclical fluctuation is already there in your trend. So the only thing which we calculate in seasonal is the trend and seasonal variation. We are going to understand both of them with the help of seasonal variation calculations only. Trend can be calculated with your least square method, which is nothing but your whatever you use for your regression, that is the same kind of method which you use for least square. Okay? Next method is moving average method, which you can use for calculating the trend. So these are the main two methods which we use for calculating trends. For seasonal, we have method of simple average, we have method of moving average, and we have trend ratio method. Okay? So let's see all of them. First though, I am starting with seasonal variation with method of simple average. This simple average method will be used when you are assuming that there is no as such trend available in your question. In the question which is given to you, we are assuming that there is no as such trend, and if the question is not providing you the method, you can calculate the trend, and if the trend is very small, then you are going to use simple average method. How to find out trend? Take the total of the sales which are there and find out what is the increase or decrease which is happening in the sales. And if you notice, the increase is there, but the increase is very small, and hence we assume that there is no as such increase happening, and we are going to use simple average method to calculate seasonal indices. Now you need to remember one more thing. If they are mentioning seasonal indices, that means they are following multiplicative model. Seasonal indices or seasonal index, they are following multiplicative model. But if they are mentioning seasonal variation or seasonal fluctuation, they are following additive model. Okay? Chalo. So after knowing all of these, now we have to calculate simple average with the help of simple average method, seasonal variation. So we are going to draw the exact same table here and then calculate the total of it. Then calculate average of your total values. How to calculate average? The total is for 4 different values. Hence, divide the total by 4 to get this average values. Now, whatever average you got, these are the 4 different average. Divide this 4 values, take the total, divide this 4 values by 4, and you will get this grand average. Okay? After getting your grand average, we are going to calculate seasonal indices. How to calculate this? Take your average of your particular quarter divided by grand average into 100 will give you seasonal indices. I understand that multiplying by 100 converts it into percentage, but we don't have to write percentage here. Whenever we write seasonal indices, we write it as 86.4. It's already known that this is in percentage. No need to specifically show it. Okay? Then for quarter 2 divided by grand average into 100, for quarter 3 into divided by grand average into 100, and for quarter 4 divided by grand average into 100. This will give you the seasonal indices, that what is the seasonal factor in your particular values which is there. After calculating this, these are the seasonal indices which we are getting. All the total of the seasonal indices should be equal to 400, and that is how you solve your simple average method using multiplicative model. Now if you are using additive model, then in that case you are going to take the average of that particular quarter minus grand average. Average of that particular quarter minus grand average will give you the seasonal variation. The total of seasonal variation when you are calculating through additive model should be equal to 0. The total of seasonal indices under multiplicative model should be equal to 400. Why we are getting 400 here? Because we have 4 different quarters. If we would have 12 months, then you should have the total as 1200. Okay? After this, moving forward to the next one, that is method of moving average. So here we are going to understand first how to calculate trend with the help of moving average, and then as in this question we are assuming that there is a trend also. So first we will calculate what is the trend applicable in these values, and then with the help of that trend we are also going to calculate what is the seasonal variation, seasonal fluctuation or seasonal variation we have. Calculate seasonal fluctuation. Whenever we say seasonal fluctuation, they want us to use additive model, and the question has specifically mentioned that also. Okay? From the following time series data obtained from a mini steel plant. So this is the time series data given to you. Use 4 quarterly moving average and consider additive model of the time series data and deseasonalize the given data set also. So first I have considered the year and the quarter and the output given for all the quarters. Now as we have to take 4 quarter moving average, always whenever even number related moving average is asked in your question, you are going to leave one line in between of all the values which are there. Okay? Then 4 quarter moving average, that means you are going to take the total of 4 value and write it here, then divide it by 4 to get your average. Whenever we calculate moving average, we are going to write it in between. So as these are the 4 values, the between value is this, between 2 and 3. We are going to write this, divided by 4 will give you this value. Then whenever we are calculating moving average, what we are going to do is we are going to leave the first one and then again take the next 4 values. Take the total and the average of it, then leave the next one, then again take the next 4 values. Take the total and average of it, then again leave the next one and take the 4 values, and that is how you calculate the 4 quarter moving average. Let's say if I reach this particular point where I have calculated for this one. Now after this, if I move forward, I am only left with 3 values, hence no need to calculate for the same. Okay? After getting this 4 quarter moving average, if you notice, we are getting it in between of 2 to 3, 3 to 4, 4 to 1. So what to do? We want the moving averages centered. That means beside a particular period. We don't want it between any 2 different periods. We want it beside a particular period. So how to make that? After calculating 4 quarter moving average, we have to center it. How to center it? Take the 2 quarters 4 quarter moving average and divide it by 2. Divide it by 2 every place to get the moving average in between or beside a particular period. After getting this, these are the trend values. This is how you calculate the trend. But here our motive is not to calculate the trend. Our motive is to calculate the seasonal effect here. So if I remove from the output, if I remove the 4 quarter moving average which denotes the trend, I can know what is the seasonal value here. So what we are doing is, we have this additive model. I'm only taking up to T plus CA, or we have expected sales. Expected sales is already given to you. We want to calculate the seasonal values. So what we are doing, we are taking our expected sales and reducing the trend value to get our sales, to get our seasonal fluctuations. So this is what is done here. Take your expected values minus trend will give you seasonal fluctuations. Okay? After getting the seasonal fluctuations for all the values, we are going to write it here. And if you notice, these 2 and these 2 are not available because we are calculating 4 quarter moving average, and that is what happens. Now after this, take the total of all the quarter related values and then do the average of it. How to do average? Because here only 3 values are there in each quarter. Divide the values by 3 to get the average and take the total of it. Whenever we are following the models, additive model, the total should be equal to 0. But here the total is 0.167. So whatever is the value, that value is going to be adjusted with all the quarters. So divide that particular value with 4. Because it is not equal to 0, we have to adjust our seasonal variations. So I am going to divide this by 4. Whatever adjustment has came, I'm going to reduce this particular value. Why? Because our values which I got is higher than 0. So we have to reduce this value to get the value equal to 0. Okay? And that is how we use our calculations for calculating seasonal variation. Now we are going to deseasonalize the given time series data. Deseasonalize means remove the seasonal effect from your data. So this is our output. This is the seasonal effect. So if I have to remove that seasonal effect, I'm just going to reduce the seasonal variation from the output which is given to us. Okay? And these are the values which are getting. Now if you notice in this particular question, we have solved the question with the help of additive model. Now we are going to see how to solve the same question moving average method using multiplicative model. So in multiplicator, what will happen? Your T into S will be there. So expected sales is equal to T into S. If I want to calculate S, I have to take expected sales, which is the output given to you, divided by trend. This will give you the seasonal variation, seasonal values. Okay? So the same thing is done here. For calculating our ratio to trend, we are going to divide our output with the trend values to get our seasonal values. And this is the seasonal values. Just multiply it by 100 because seasonal values is in percentages here. Okay? So after getting these values, we have put them here. Then take the total, take the average. As average is not exactly equal to 400, what to do? Here also we are going to adjust. How to adjust? We are going to say that 108.861 is for 400.111. Then what will be the value for 400? And that is how you are going to adjust all the values to get equal to 400. And then if you want to do deseasonalization, under your multiplicative model, you are going to take your output divided by your seasonal index multiplied by 100. And that is how you are going to deseasonalize the data. Done. Moving forward to our next method, that is seasonal variation trend ratio method. So trend ratio method, here we first calculate the trend. For calculating the trend, you are going to use the exact same method as you calculate your simple linear regression. But in simple linear regression, x and y can be anything. But in your trend ratio method or trend calculations, our x is going to be always the time period, the deviation from a particular time period. So if you notice, I have written the year and the quarter, and whatever is between 2022 second, if you notice, out of all the quarters which we have, total 12 quarters are there, I have to get the middle value. So middle is 2 and 3. So I have taken between 2 and 3 as my middle value, assuming that we are taking deviation from 2022 quarter 2.5. That is from 2.5 quarter, we are taking the deviation, assuming that 0.5 quarter is equal to 1. And if that is the case, then I'm getting -1, -3 and -11 here. And here we are getting all the plus values. If you take the total of this is going to be equal to 0. It is beneficial for us that whenever there is a time series related data, you can make sum of x is equal to 0. So if you are able to make that sum of x equal to 0, because this helps you, this reduces your calculation part. Okay? Then y, then sum of x square and sum of xy. Okay? N is 12 because 12 quarters are there, sum of x is 0, and then y, sum of x square and sum of xy is calculated. After this, how formula became a little small here. So exact same formula is used as you use in simple linear regression. It's just that your sum of x equal to became 0, and that is why the formula got reduced. So what is the formula which we use? N sum of xy minus sum of x sum of y divided by n sum of x square minus sum of x ka whole square. Now if you notice, sum of x became 0. So here also we got 0, here also we got 0, hence both of these values became 0. And we are left with this only. And this n and this n can be crossed, and we are left with sum of xy upon sum of x square, and that is how we are getting this value. Similarly for a, what was the formula? Y bar minus bx bar. Here also you have the same formula only. But the thing is, b into sum of y upon n, sum of x upon n. Sum of x became 0. So sum of x upon n will also become 0. b into 0 is 0. So you are left with sum of y upon n only. Okay? Now, y is equal to a plus bx. Just put the values here and you are going to get the value. Okay? And this is how you calculate the trend line using least square method. After getting the trend line, we calculate trend values. How to calculate this trend values? So you already know the value of x. Just put the value of x in this formula. You will get y for all the different values. Okay? Put this x and get trend values. After getting trend values, we are going to see, whenever we use trend ratio method, you need to remember that here you can't use additive model. Here only multiplicative model is applicable. And if multiplicative model is applicable, you're going to divide your output values, which is the real y values, with the trend values. So 165 divided by 155.68 into 100 is what we are going to do to get this ratio to trend. After getting this, just put these values in this particular table and take the total of this, take the average of them. And if the average is equal to 400, this is your final value. If it is not equal to 400, you're going to adjust it somewhat, as we have done in moving average also. Moving forward to the next one, and that is multiplicative model related question. On the basis of quarterly sales in rupees lakh of commodity cumin of Boxen Limited for the year 2024, the following calculations were made. We have this trend line given to us with origin. First quarter of 2020 is origin. That means first quarter of 2020 is taken as 0. Whatever is the origin, that is the thing which we are going to take as 0. Scale 1 unit of T is 1 quarter. So the difference is 1 only for 1 quarter each. Then where Y is quarterly sales, T is time units, and these are the seasonal variations given to you. You need to follow multiplicative model. Even if they are not mentioning multiplicative model, you can know from this values that the total is 400. So if the total is 400, these are seasonal indices. Seasonal indices are calculated under multiplicative model only. So using the multiplicative model of the time series, estimate the sales for each of 4 quarters. You need to estimate the sales. So what we are doing here is estimated sales. As multiplicative model it is, we are going to multiply T into S to get the estimated sales. How to get the trend value? For that they have given this trend line, with the help of which I can calculate the trend value. Multiplied by your seasonal index. Seasonal index is nothing but this particular values which we are getting in the question itself. You are going to multiply this. But we already know that this seasonal index is nothing but your percentages of seasonal values. So just multiply this as percentage. Whatever S percentage or seasonal fluctuation percentage is given to you. Okay? That is how you are going to get this expected or estimated sales. Okay? So how to calculate trend? So for 4 quarters, you need to estimate the sales of 2024. So for 4 quarters, we need to calculate the trend. What is T here? T here is deviation from first quarter of 2020. First quarter of 2020, if it is equal to 0, think about it. 4 quarters are there in every year, and the first quarter of year 2020 is 0. Then second quarter is going to be 1, third quarter is 2, fourth quarter is 3. So here we have assigned up to 3. Then 2021 we have 4 quarters, 2022 we have 4 quarters, 2023 we have 4 quarters. And for 2024, first I am going to calculate for the first quarter. If I take the total of all of them, this is going to be 20. 16. 16 is the total of all of them. So 16 is the T which you are going to take for the first quarter of 2024. 25 plus 0.6 into 16. 0.6 into 16 plus 25 will give you 34.6 as the value of Y for the first quarter of 2024. This value of Y which we got is the trend value. Then for second quarter, you are going to take 17 because that is the second quarter value. Then 18 for third quarter, 19 for fourth quarter of 2024. Put that here and get the trend values. So this is what we are getting. After getting trend values, just multiply this trend values with the seasonal index given to you. And this will give you the estimated sales. Now rather than following multiplicative model, if it was an additive model, then we already know that the total of seasonal indices should be equal to 0 if it is additive model. Plus with that, whenever there is an additive model, let's say for additive model, the numbers will be like 1.5, 2, 5, 4. Let's say these are the numbers. What you have to do, you have to just add these numbers to your trend values. Trend plus seasonal effect gives you estimated sales. So you're just going to add that number to get your estimated sales. As it is a multiplicative model, we multiply. If it was an additive model, we just add the particular value. Okay? Done. After this, we are left with the last topic of this chapter, that is exponential smoothing. In exponential smoothing, these are the actual values given to you. This is the forecast for the first quarter of 2023. So with the help of exponential smoothing, we are going to forecast each quarter's sales or the material unloading which is given to you, and with the help of the smoothing coefficient and with the help of first quarter's information. Okay? How to calculate this? They want us to assess the forecasted figure for the first quarter of 2025. For calculating this, we are going to start with the actual value given to you. For the first quarter, our actual value was 200, but when we estimated it as 195. So there is an error in estimation. Your actual value is 200, you estimated only 195. So the error is of 5. 5 is the error here. Now, I am not going to correct my forecast directly by the 5 amount or units. I am not going to directly add this 5 here. Okay? So whenever we do correction, we do correction with a specific percentage. So here they are asking us to use 10% or 0.1 as the smoothing coefficient. So if the error is 5, I'm going to do the correction only of 0.1 of it. So 0.1 into 5 will give you 0.5. So in this forecast, which is our previous forecast, I'm going to add this particular value and this will become my new forecast for the next period. Now in the next period, I'm getting the actual value as 198, but the forecasted value was 195. Hence the error is there, and error is negative here because your actual value is lower than the forecasted value. So we are getting negative 7.5 as the error, multiplied by your correction factor will give you negative 0.75. So this is what you are going to do the correction in your previous forecast. So previous forecast plus correction will give you 194.75. Then this will become the forecast for the next period. Again we are getting 179, which is lower than the forecast. So again we are getting negative value multiplied by 0.1 will give you this value. This particular previous forecast plus correction will give you this value. Again you are going to write this down and take this value, take the difference, calculate error, calculate correction, add your previous forecast with the correction to get your values, and do this continuously till the time you are reaching to the next forecast for 2024 fourth quarter. In the fourth quarter, I calculated this next forecast. This is the forecast for the first quarter of 2025. And that is how we use our exponential smoothing method. Okay? And with this, exponential smoothing is also done. And we are done with this chapter also. And we are left with the last chapter, that is quality cost management. This is the last thing we are going to do. We are also left with questions, that is theory questions, but we are not going to do this theory questions here. You can directly refer the theory questions from the paper analysis which I have uploaded. There I have suggested some theory questions which you can refer. Refer those questions, that much is enough, because theory, your SCM is fully practical subject. So you have to mainly focus on the practical part specifically, and that is what is our aim here. Okay? Quality cost management. For this particular chapter, we are seeing question number 6. Here they want us to classify the cost of quality into inspection or appraisal cost, internal failure cost, external failure cost, opportunity cost due to external failure, and total cost of quality. So for doing this, they are providing us that Nike Limited manufactures and sells one variety of sports shirt in India. Noted football clubs and supporters of this club are the main customer. Nike's products show some rectifiable defects. These problems can generally be detected and repaired during internal inspection at a cost of 15 rupees per unit. So by incurring 15 rupees per unit, you can repair these defects which can be identified in the internal inspection itself. During 2016, 50,000 shirts were produced, and after inspection, defect was detected in respect of 5% of the output. Now think about it. 50,000 shirts are there. 5% we detected the defect, and for every defect detected, we are going to incur 15 rupees for removing those defects. Then there is an inspection cost of 25 per shirt. Whenever we are inspecting, we are going to inspect each and every shirt. So 50,000 shirts are inspected. For every shirt, you incur 25 rupees as the inspection cost. After sales, customer reported defects in respect of 6% of the output. So output is 50,000. 6% of the output, the defect reached to the customer also. Even after doing the inspection, your defects reached to the customer. These shirts were received back from customer at a transportation cost of 8 per unit. 8 per unit is the transportation cost, and we already know that the defects are rectifiable. Hence, we can rectify these defects by incurring 15 rupees as the cost by getting the products from the customers back. Because of negative publicity due to defects, there will be a loss of sales in 2017 to the extent of 5% of external failure. What is the external failure? 50,000 into 6% is the external failure. 5% of it is going to be the loss of sales in the next period. Okay? Now, if you notice, they are also providing us the selling price and variable cost. Whenever there is a loss of sales, the actual loss which organization is bearing is the loss of contribution, because variable cost, so they have to directly pay whenever they are selling the units. Hence, we have to consider 25 into 40%, which is equal to 100 rupees is the contribution which we lost here. Okay? Now, these are the 4 different categories of cost which we are incurring. The first one is what? Your internal failure cost, the defect related cost. Hence, this is our internal failure cost. 50,000 into 25. This is your inspection related cost, which is called as inspection or appraisal cost. Next, we have external failure cost, which is the defects which reach to the customer. And then we have opportunity cost due to external failure, which is the contribution loss due to external failure in the next period. And the total of all of them will give you total cost of quality. After getting this, the question says if the selling price per shirt is 250, variable cost is 60%, fixed cost is 3,30,000, I think. 5 lakh 50 or 3 lakh 30? 5 lakh 50. Prepare a statement showing profitability of the product during 2016. You just have to calculate the profitability. For this, you will do 250 minus 60%, that is 100 rupees is the contribution for 50,000 units, minus your quality cost, whatever quality cost you got. Okay, so this is our quality, and the fixed cost also. Fixed cost is 5,50,000. You'll reduce that. You'll also reduce quality cost to get your final value. So this is how we calculated all the things. Huh? First appraisal cost, then internal failure cost, then external failure cost of transportation and repairing the defect, and then opportunity cost of external failure. After calculating this, we made our statement of profitability by taking the sales for 50,000 units, variable cost for 50,000 units, and the quality cost and fixed cost to get to our profit. And with this, we are completed. We have completed everything. Every other chapter, total we have completed 13 chapters. Think about it. 13? Yes, 13. Total 13 chapters is what we have reached today in around 10 to 10:30 hours. Think about it. We have completed all the revision of these 13 chapters. All the practical part is revised. I hope this video is going to help you. And the most important thing, you have done a lot of efforts. You have completely watched the video. That means you have revised each and everything. I hope this video has helped you. Plus with that, you have already done a lot of effort. You have also watched this video. You will definitely got a good marks. I'm sure if you have done this much hard work, you will get a good marks. Be very happy, excited for your exams, because these exams are going to lead you to great results. And I want to know that if you have watched till the end, then you're going to write in the comments that we have watched it. We have watched it and we have done it. We are going to score great marks in the exam. I want you to write this in the comment box. Then only I'll get to know that what all students have all actually watched till the end of the topic. And with that, I already told you that for theory questions, refer the paper analysis video. In that paper analysis video, I have explained what all theory questions you can refer. And with this, we are completed with everything. So let's meet in our next class. Till then, happy learning everyone. Radhe Radhe. Bye-bye everyone.